its risks has to go hand in hand with it. President Biden frequently talks about the fact that we're at a pivotal moment in history in which the choices that we make in the next few years are going to shape many, many decades ahead. AI for him is very much part of this moment. And that's why you've seen this administration move out so actively with urgency, starting by listening to all kinds of communities. We talked about the work that we've done with industry, but also we've had very active engagement with civil society.
Dr. Prabhakar, thank you so much for joining us.
It was a pleasure. Thanks for having me.
Anima and Kumar, thank you so much for joining us. So you're a professor at Caltech and you're senior director of AI research at NVIDIA.
Which actually makes you the perfect person to answer a question that we've had, which is really broadly, how is AI changing, or has it been changing the scientific process over the last couple of years? Let's begin with that.
Yeah, this is such an exciting time. Thank you for having me on this show. And, the world has seen ChatGPT and the power of AI when it comes to language models. But to me, that's just the beginning, because beyond language, we can think of all kinds of scientific processes. And by understanding that through AI, we can do everything better, faster, cheaper, more accurate, and really be able to come up with new inventions and discoveries.
Let's dig into that. What does an AI-enabled lab look like?
Yeah, to me, like AI will completely transform the scientific workflow the way we know it. Ever since the 17th century or even earlier, the way we came up with new inventions or discoveries was somebody has some intuitions, right? They went to the lab, they tinkered, they're like, oh no, this doesn't work. And okay, this works, let's move ahead.
Trial and error.
Right? Exactly. And now think about AI being able to do that in the virtual domain, like being able to accurately simulate many of the processes or learn from data, right? The observations directly. And with that, be able to come up with better design, better discoveries than what would have taken really long in the real world.
What's changing the most right now? When you look at the landscape, is there any particular field that you see evolving much more quickly than any other field?
I mean, one thing that we're working on heavily is the Earth-2 project at NVIDIA, where our goal is to build very accurate digital twins of this planet. Be able to predict not only short-term weather, but also long-term climate change eventually.
The digital twin of the Earth, what is being twinned?
Yeah, all the processes on this planet. Think of like the atmospheric processes of convection currents, storms, right? Even really like fine scale features of cloud turbulence, what's responsible for hurricanes, for instance, how would this hurricane paths change, and can we come up with the right risk assessment? Because these are chaotic systems. These hurricanes can go in so many different ways. Can we really hone in on what is the risk to different human populations based on what we see today? So these cheaper and faster weather forecasts with AI will also enable us to create better probabilistic assessment of extreme weather events.
Let's talk about some of the other fields that AI is making transformations in the scientific process. For example, genomics or even drug discovery. What's going on there?
Oh, it's such an exciting time there because, the same kind of generative AI that we see for language, you can replace the letters of the English alphabet instead with nucleotides. ATGC, if you recall, what makes up our DNA, right? And with that letters, you can now ask the language of the genome and have a model learn that.
So if there are tasks that artificial intelligence can make more efficient or even replace humans in a lab, what's kind of the vibe in the scientific community? Is there as much fear as there is in other industries that AI could take their jobs?
I don't think it'll happen anytime soon, and maybe never, because humans are such creative beings, right? We're always thinking of the, next unknown question, right? There's so many deep mysteries of the universe. There's so much we still need to understand, and AI is a tool. This will enable lab scientists to rule out a lot in simulation before they can go and do their experiments. So they only need to do a few. But then I feel like there'll be always things that'll be still unknown and to be conquered.
There's a lot of, I don't want to use an unpleasant word, but there are a lot of people who don't believe in things like climate change. And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we're doing will help towards this, because, this is not some model that's in some supercomputing facility, right? Not available to the public. You can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
It may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you.
Thank
It's been
you,
fascinating. Yeah. Thank you for taking the time.
Yeah.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have, sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are equally creative, and they've been able to take, tools and ideas that are available both in open source and the academic literature and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. Without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
Are we talking about superpowers, Clash of the Titans sort of stuff? It reminds me of back when the previous US administration banned
companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation, or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA. And they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, it's talent that drives, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, it's still really important to be physically proximate to other people who, are working with you in the office. I mean, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. We're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, can you tell, because we're all friends here.
Sure, go for it.
Do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years' time, those kinds of AIs are set loose on the open web in a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking, we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things, where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
how does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's not the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China. in terms of what you're saying?
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to, opt in to different uses. Of course, in China, there's always the exception, unless the security services, think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Economic lifeline. The U.S. issues a 60-day license allowing Iran to sell oil on the international market. This is as the two sides continue talks for a permanent peace deal. Asian stocks falling as traders watch those U.S.-Iran peace talks and tech losses on Wall Street. And SpaceX plunges for a third day after announcing the start of what is expected to be a massive AI-focused borrowing spree. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Red across the screen when it comes to equities this morning. U.S. futures are 0.4% lower this morning. That follows a negative session at the S&P 500 yesterday. And this is after a faltering that we saw in some of the mega cap names. I'll turn later to the terminal chart we're focused on and show you just exactly what is happening when it comes to semiconductors versus those hyperscalers. But for the time being, we're also focused on Micron. Its earnings are set to come out on Wednesday, and that's yet another gauge for the AI rally and what it is supposed to look like into the second half of the year. Now, the stock is already a whopping 300% up for the year. And yesterday we saw it gaining a little bit more than 6% after the tie-up that was announced with Anthropic. When it comes to Asian equities, led down by the Kospi in South Korea this morning, the tech trade is faltering 1.5% lower. We'll have Winnie in just a second to talk to us about the details there. We're also keeping an eye on currencies. The yen in Japan is heading to levels not seen since the 1980s, but it has to get through those lows that we saw in 2024. Again, Winnie in just a few minutes with those details. And then when it comes to Brent crude is at $77.5 a barrel. We continue to monitor those negotiations between the U.S. and Iran happening in Switzerland. Now, the U.S. did lift some sanctions on oil sales in Iran for the next 60 days until August 21st. That's when the 60-day period of the current negotiations will go through. And so we saw about 30 million barrels or so making their way through the Strait of Hormuz. That's a story to be in focus over the next week or so until those talks in Switzerland continue to take place, at least until Friday. And then the yield on the U.S. 10-note treasuries is declining slightly 2 basis points today. We saw movement yesterday after a bank holiday in the U.S. on Friday, catching up with those European peers. Now, if we flip the board, we take a look at a chart that really tells the story of what is happening between semiconductors and hyperscalers. And just take a look at it. This is normalized. This is U.S. technology is seeing a massive rotation into semiconductors from hyperscalers. And this is what our team in markets is pointing out. Micron has traded $62 billion yesterday. That is almost twice the entire turnover of the Kospi and 12 times of the FTSE 100. This just gets to show you that the semiconductor game is still very much in focus. The SOX has gained over 100% since the start of this year. Now, for details in the weakness that we're seeing in Asia this morning, let's check in on how markets there are doing. We've got Winnie Su in our Hong Kong studio. Winnie?
Good morning, Abir. As you mentioned, lots of weakness in the Asia session today. We have the MSCI Asia here down about 1.5%, and it is its biggest intraday loss in about 2 weeks. Now, just as you mentioned, we have South Korea's Kospi index leading losses down about 5%, but the HSCEI index, so the Chinese stocks listed in Hong Kong, it's actually down 1.2% as well, taking it to just about 0.2% away from entering a bear territory. Japanese yen hovering around that 161.5 level against the dollar. As you mentioned, it's close to that lowest level in about 4 decades, and investors are really closely watching out for intervention risks after Finance Minister Satsuki Katayama had a call with Scott Bessent about how they've agreed to potentially take bold actions if needed on the currencies. Now, flip aboard, we take a look at the technology sector because it is the biggest drag for Asia markets today. You have the infotech sector down about 2.3% after 8 days of gains. And losses are being led by SK Hynix and Samsung Electronics, both down more than 6% or so. Now, it is showing lots of overheating in the sector, especially as SK Hynix showing more expensive valuation against Samsung Electronics, but also, as you mentioned, lots of caution ahead of that Micron earnings expected later this week. Abir.
All right. All right, Winnie, with those market details today. Now, let's turn back to the regional story. The U.S. is giving Iran a 60-day license, allowing it to sell oil on the international market. It's an economic lifeline for Tehran as the two sides continue talks on a permanent peace deal. And despite Iran citing good progress, key issues remain unresolved, including the status of the Strait of Hormuz and clashes in Lebanon. Meanwhile, President Trump continues to reiterate that Tehran will not own a nuclear weapon.
We're doing very well with respect to the Hormuz Strait. We took in more oil yesterday than has ever gone through the strait. You probably see that. We have an oil gusher. The strait is totally open. You know that. And we're negotiating. We'll see how that all goes. But we have two things. We have an open strait, and we have a country that will never have a nuclear weapon. Will never, ever have a nuclear weapon.
Joining me now to discuss further is Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, good to have you on. Usual time for you. The discrepancies that we're seeing in the negotiations, especially yesterday between Iran and the United States, what can you tell us more about those ongoing differences?
I think it's in the same vein as what we've seen for several months now. In that one side will claim something, the other side will claim exactly the same thing, and then both sides will deny the reality of that. And I think the truth is that going forward, we should expect more of the same. I think it's in the same vein also as what we saw over the weekend, where Iran said we've shut the strait, and it was pretty clear from the satellite imaging, or at least the AIS signals coming from the tankers and the cargo ships and so on, that it wasn't shut. So I think we need to be careful about what both sides say and actually look at what's happening on the ground. And as far as what we can tell, what's happening on the ground is that ships are starting to move out of Hormuz. It's still a trickle. It's nowhere near what it should be or what it was relative to the levels pre-war. But it's not just an economic lifeline to Iran. This is also an economic lifeline to the global economy, and therefore, we should probably take that as a positive.
Yeah, and then that is when it comes to the oil, and that's at the heart of the conversation. But also, the other sticking point that we've talked about multiple times on this show is Israel's actions and the fact that we're seemingly hearing kind of contradicting statements from the Israeli side when it comes to this MOU between the U.S. and Iran. Israeli officials coming out saying they're not privy to this MOU and they don't necessarily agree with it. What is the latest on that?
Yeah, so, I think two things to look at for Israel. In terms of the hardliners versus, say, the more moderates, that is something that's reflected both in the U.S. political sphere and in the Iranian sphere and in the Israeli sphere. So you have this split in the camps at the political level in all of those countries, and I suspect more widely than that. But in terms of what's happening on the ground, we've had a relatively peaceful time in the last couple of days in southern Lebanon. I need to stress relative because it's an awful situation, but relative to what we saw in the run-up to that. And that has to be a positive because Iran has directly linked this to what's happening in Lebanon. So if it's more peaceful, that should be a positive.
Yeah, and something our teams continue to monitor in Switzerland over the next week or so. Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, Asian stocks are declining as a rally in technology shares falters. S&P 500 futures also retreating, tracking an overnight mega-cap tech slump on Wall Street. Joining us now to discuss further is Standard Chartered CIO for Africa, Middle East, and Europe, Manpreet Gill. Manpreet, good to have you on. It's been a couple of weeks, and so much has changed when it comes to the geopolitics of the region and the AI trade. But I want to focus on what's happened overnight, this rotation that we're seemingly seeing in the United States. Now, you're still overweight on U.S. equities. Walk us through what you think is going to happen over the next 6 months or so.
So that's absolutely right. I think we're still overweight U.S. equities. And I think for us, the single most important thing is earnings growth, because that continues to be one bedrock that supports not only the tech sector, but we think the broader market as well. But having said that, there's no doubt going into the second half of the year, we're going with a lot of optimism from an investor positioning perspective. So that makes the next couple of weeks a little bit challenging, may provide a great entry point for anyone looking to add exposure. But the other thing is we've seen a lot of concentration in very narrow parts of the tech sector. So the semiconductor rally and a few examples of that sort. We just think from an earnings perspective, that warrants a broadening of the rally, a catch-up of parts of the market which really haven't benefited to the same extent. And to us, that's the opportunity, whether it's broadening within the tech sector or even looking beyond that.
Manpreet, when you look at the valuations, when you look at the numbers in the S&P 500, they're really staggering. I mean, when you talk about a company, a semiconductor or a chip maker, Micron, for example, the 300% increase, those are numbers that are genuinely staggering. The SOX index gaining 106, 107 since the start of the year. How much of this AI rally is really driven by valuations, and how much is driven by liquidity and positioning, or fundamentals as well?
Sure. No, the challenge with rallies of this sort is that it tends to be a combination of all of the above. It's difficult without some support from fundamentals, but once the gains get going, momentum and liquidity do tend to take over. So there's no denying that. I think the point here, though, and exactly as you described, you've seen some eye-popping numbers in specific stocks or specific subsectors, I'd almost say, like semiconductors. But to our mind, when you step back and sort of take a bit of a perspective, you see the same level of earnings support, we look at the broader tech sector, because we say it's an AI rally, but actually semiconductors have really dominated. And you see that in Asian equities as well, with the difference between how Korea, Taiwan have done relative to the rest of the region. To our mind, if you apply sort of the technology adoption cycle, that my colleague sort of really leads on, the semiconductor rally points to, following on with areas like software or internet. When I look at the broader market, you sort of say technology, yes, but actually the broader, S&P, the X Magnificent Seven is where you're starting to see earnings growth start to catch up. So for us, not getting sucked into following, the short-term concentration, but actually reducing that, trying to broaden exposure, whether it's across U.S. equities or indeed adding on other regions, non-U.S. markets, to us, that's the real opportunity today.
So speaking of other markets, when we talk about the AI rally, it's either U.S. equities, the mega caps, the smaller chip makers, the Kospi in South Korea. One region seems to be missing from this, and that's Europe. Do you think it's missing on the AI race?
I think the sector composition of European markets means that to some degree is automatically happening. And I think it's not that Europe does not have a listed tech sector, and we think that, of course, can help provide catch-up to some degree. But Europe, of course, we have many other sectors that, in a broadening trade, start to look quite interesting. So financials, for example, is an area that has done well and we think can continue to do well. But Europe, for us, is what we call more for core holdings. So it's not our top overweights. Those are still focused in the US and Asia. And that's simply looking at earnings growth. That's where the numbers seem to be highest. We expect Europe will do well. We think equities in most regions will do well. So Europe a solid core holding. But I think the real opportunity is to add that as part of a broadening basket, looking beyond that narrow AI rally.
Okay, so let's turn to fixed income. You're also positive on EM debt, on EM bonds, corporate or sovereign, and would you add more exposure there into the second half of the year?
We would add exposure. And when we say EM dollar bonds, we're looking at, sovereigns and quasi-sovereigns. So I think you get a mix of both sort of state-linked corporates as well. The point here is more that it's the interesting thing about EM dollar bonds is unlike Asia dollar bonds, local currency bonds, or Asian equities, the sensitivity to energy prices, commodity prices in general, is a little bit lower. And that comes at alongside what we think is still a pretty attractive yield and credit spread compared to the other options out there. So in a fixed income basket, in the yield basket, to us, that's the top-ranked opportunity. But more broadly, I think our story is about looking for credit opportunities rather than adding a lot of duration, which is the part of we'd be more nervous about.
All right, Manpreet, thank you for your time today. That was a good chat on AI and everything it brings about. Manpreet Gill, CIO for Africa, Middle East, and Europe at Standard Chartered. Now, still ahead, as Iran cites major progress in talks with the United States, we'll get more analysis from Rachel Ziemba, founder of Ziemba Insights. But up next, despite Iran saying the Strait of Hormuz is shut, Gulf oil has been flooding out. We'll have more on that story next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. The flow of oil through the Strait of Hormuz is running at the fastest pace since the war in Iran began. For more, we're joined by Bloomberg's oil and shipping reporter Wei Loon Soon from Singapore. Wei Loon, the U.S. or the Treasury Department has waived some of those oil sanctions on Iran for the next 60 days at least. What does that really mean for exports generally and for those flows that we're seeing in the Strait of Hormuz?
Thanks, Abir. So with the waiver, I think what that could tell us is two things. So on the one hand, we can expect Iran to continue pushing more cargoes through the Strait of Hormuz. And the other one is really this confidence signal that it sends to the shipping and the oil trading industries, where they feel that a permanent or maybe a more long-lasting peace deal might come in place, which would bring about more confidence for them to send more shipments through the Strait of Hormuz. So over the weekend, from Friday to Sunday, our own ship tracking have told us that at least 20 million barrels of crude have gone through the Strait of Hormuz. That's a very, very high number for the duration of the war. But of course, as nowhere near what the pre-war levels have been. And also we have seen Tehran itself sending at least 3 supertankers through the strait yesterday. So already, even before the waivers, you have this growing confidence of sending ships through the strait, and we believe that the waiver is going to push that even higher.
But Wei Loon, when it comes to those 30 million barrels, a lot of those were blockaded crude shipments due to the naval blockade by the United States. And a lot of it is the exports on Kharg Island, in the main export hub by Iran. So once those are done and dusted, does the rate then go down and we go back to levels seen before the war?
It is quite likely, but for those 30 million barrels that we have seen from Iran alone, quite a few were actually sitting outside of the Strait of Hormuz, along Chabahar, which is close to Pakistan. So those have been the ships that were blocked, or rather prevented from sailing by the US blockade. And now that's lifted, they can sail onwards to their buyers in Asia. And then if you go along the route, all the way back into the Persian Gulf, there you can see that Iran has been loading some tankers at Kharg Island, which is actually its main oil export hub. So those loadings have been continuing over the past few days. And we can expect to see some of those ships starting to sail out through the Persian Gulf again. But as to how sustainable this can be, it remains to be seen, because at a historical level, to ship 2 million barrels per day for Iran is a relatively high number.
Yeah. All right. Wei Loon Soon, Bloomberg's oil and shipping reporter, with those details. Now, coming up, SpaceX fell for a third straight day, wiping out $600 billion from its market value. We'll tell you why next. This is Bloomberg.
you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Abir Abamar in Dubai. SpaceX shares slipped for a third straight day, shedding hundreds of billions of dollars in market value. That after the company said it was selling investment-grade bonds for the first time. For more on the story, we're joined by Bloomberg transport reporter Danny Lee. Danny, good to have you on. What is unnerving investors in this SpaceX debut that we saw last week?
Yeah, well, for investors, really, it's the kind of spending outlay that is the reality that investors have to just grapple with. The fact that SpaceX is going to start to raise $20 billion in this investment-grade bond, that will really help as it really looks to the future of huge spending commitments related to AI. But the fact that the fears are very much the shares falling, closing in New York, 16% lower on Monday. That closing price of just under $155 takes SpaceX to its lowest price since the IPO, which is really not that long ago. And so, yeah, the impact of the $600 billion wipeout through that 3-day trading decline, it's still, SpaceX has a market value of just over $2 trillion at the very least. But yeah, there's a lot for investors just to digest with this future spending commitments that SpaceX will have to make.
So $600 billion, 16% down for the stock, but it does appear that retail investors are still hanging in there. What can you tell us about that?
Well, investors, and particularly retail investors, are huge loyalists of not just SpaceX, but anything that Elon Musk touches. And the fact that retail investors really did come to the call and the cause of SpaceX through this IPO is being borne through the data. But ultimately, this is going to be a company that will be spending huge outlays in the years to come. And that valuation, the world's biggest IPO, frankly, for the retail investors who've got now a foothold in that, not many people were lucky to. Yeah, they are big believers, and it just helps that they have that exposure to AI, and a company which still for now is unprofitable and is sitting on roughly $100 billion of cash, has a long trajectory as it looks to the longer future in this AI revolution.
All right. Bloomberg's transport reporter Danny Lee with the latest on SpaceX. European car sales grew for a fourth straight month in May as consumers snapped up more affordable electric and hybrid models. The European Automobile Manufacturers Association says new vehicle registrations increased 3.6% to 1.15 million units last month. EV demand is getting a boost from high fuel prices, though rising inflation is starting to take its toll on demand. Now, a quick look into equities before we head into the break. Everything is in the red. S&P futures 0.6 lower after a negative session in the S&P 500 yesterday. Again, we saw this rotation continuing to happen from hyperscalers into semiconductors. The SOX index a whopping 100% higher this year. Nasdaq 100 futures dropping over 1%, and Dow Jones is also down, as well as the Euro Stoxx 50 futures 0.7% lower. Oil prices are dropping ever so slightly as we continue to monitor those talks in Switzerland between the United States and Iran. Now, coming up, a U.S. waiver allowing some sales from Iran is offering Tehran a crucial economic lifeline. We discuss the impact on the industry and the region with Rachel Ziemba of Ziemba Insights. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Economic lifeline. The U.S. issues a 60-day license allowing Iran to sell oil on the international market. This is as the two sides continue talks for a permanent peace deal. Asian stocks fall as traders watch those U.S.-Iran peace talks and tech losses on Wall Street. And SpaceX plunges for a third day after announcing the start of what is expected to be a massive aggressive AI-focused borrowing spree. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Everything is still in the red. Equities in the United States ticking lower by the minute, 0.6 lower at this point. Now, the S&P was 0.4 lower at the close yesterday after it came back from a holiday on Friday. We keep an eye for those Micron results later on Wednesday because they're really going to be yet another gauge for the AI rally in the AI trade. But we're seeing the faltering carrying through into Asian stocks, 1.8% lower at this point, driven down by the Kospi. And again, this is a return to a pause to the AI trade. It's causing this red on the screen when it comes to equities. And then Brent crude prices are 0.5 lower this morning at about $77.5 a barrel. We continue to monitor the developments in the negotiations in Switzerland, continuing this week until the end of this week. Now, the U.S. Treasury did waiver some oil sanctions on Iranian oil exports, and that is set to have a momentary impact on exports across the Strait of Hormuz. The yield on the 10-year notes is about 1 basis point lower. It was declining a little bit more earlier on. Again, we keep an eye on this hawkish tilt by the Federal Reserve, the meeting that we saw last week of Kevin Warsh. And then the market did come back to trading, catching up with European peers yesterday, again, after cash trading was halted due to a public holiday by the end of last week. Now, let's flip the board and take a look at where this tech story really is in the United States. And what you're seeing here is a rotation out of the hyperscalers and into the semiconductors. The SOX index, a gauge for chip makers in the United States, has gained over 100% this year. And this is a note that our markets team has put out about this. It says that Micron, which was in focus yesterday after a tie-up with Anthropic gaining about 7%, had traded $62 billion yesterday. That is almost twice the entire turnover of the Kospi and 12 times the FTSE 100. So you're seeing this focus on semiconductors, chip makers in the United States really turn back to focus, a big story that will continue to be a big story into the year. Now, for some details about the weaknesses we're seeing in Asia this morning, we have Winnie Su in our Hong Kong studio. Winnie?
Good morning, Abir. As you can see, Asian stocks tracking those losses from the U.S. overnight, with the MSCI Asia here down 1.8%, its biggest intraday loss in about 2 weeks. Now, you can see that the tech stocks are still leading declines, with the Kospi here down more than 5%. So that volatility still being driven by all these leveraged ETFs, but also worth noting that the HSCI here down 1.2%, really close to entering that bear territory, and it is in fact so far this year the second worst performing global gauge so far this year, down about 12%, and it is still being led by the lack of AI exposure and China's weak economic growth. Now, you flip the board and we take a look at the Japanese yen, because we are seeing that continued weakness in the yen, and it is getting close to those levels unseen in about 4 decades. 162.7 against the dollar is the level that we are closely watching out for, and we are also seeing higher risk for intervention after Finance Minister Satsuki Katayama and Scott Bessent had a call agreeing to potentially take bold actions on currencies if needed. But you can see it's not really supporting the Japanese yen at all, but worth flagging that it is, in fact, the best performing G10 currency so far this month. Back to you, Abir.
Winnie, thank you for those details. Now let's go back to the oil story. Oil has steadied after falling more than 3% in the previous session, following early progress in peace talks over the Iran war. A U.S. waiver allows some sales from Iran, citing, quote, productive talks and offering Tehran a crucial economic lifeline. Joining us now is Rachel Ziemba, founder of Ziemba Insights. Rachel, thank you for making the time for us, at your time especially. I want to start with oil and those waivers by the Treasury Department until the 21st of August, the 60-day period, really. How much momentum are those waivers supposed to carry when it comes to the actual physical movement of those barrels through the Strait of Hormuz?
Hi, Abir, pleasure to be with you this morning. So I see this as being a lifeline for Iran, but also a lifeline for the global economy, right? We actually already saw cargoes from Iran starting last week, as in a sense the military blockade was lifted. What the waivers do is that they make it easier to sell that legally and to use US dollars to do that. And in a way, that's one of the first times in decades that Iran has been able to sell in US dollars. But of course, it's always a bit harder to get the regulation working than it is in practice. And the key, I think, here is both the Iranian barrels, but also what happens to all the other supplies transiting the Gulf. This was an important down payment to make sure that other supplies could come onto the market. And that's what I think the oil market is responding to, not just the potential of a return of the 2.5 million barrels a day of Iranian oil, which we could ramp up to.
So one other thing, Rachel, that we have been monitoring over the past 2-3 months since the start of this war really is the Strait of Hormuz. Now, we heard from the Parliament Speaker of Iran, Ghalibaf, earlier saying that the Strait of Hormuz is never going to go back to the shape it was at before the war. What are the dangers of saying something like that? And what are the dangers, really, of the Strait of Hormuz being used as leverage in those tit-for-tat fights between the U.S., Iran, and Israel?
Well, I think Ghalibaf and I actually agree on that we're unlikely to go back to the status quo ante. It's hard to go back to normal. We will hopefully navigate to a new normal. What does that mean? It means that Iran is looking to monetize and maybe weaponize the Strait. This is one of several choke points that countries are looking to, as I say, monetize and weaponize. In practice, I think this also means that some of the bypass routes that have allowed some supplies to remain on the market, particularly from the UAE, via Fujairah, Saudi Arabia, through Yanbu and the Red Sea ports, these will remain in practice. Now, of course, as you've been tracking for months, it's not possible to send all of the fuel or even all types of fuel through those channels, let alone all of the other items like fertilizer and metals that transited the straits every day. But I think, if anything, those statements mean more investment in alternate supply routes and more different logistics investment from the Gulf and from countries in the broader region.
And Rachel, the start of all of this is the geopolitics. What do you make of the progress in those negotiations in Switzerland? And then what impact does all of this have on President Trump's numbers in the United States with upcoming midterm elections?
Yeah, so President Trump is really hoping that a lower gas price heading into driving season here in the United States will help him. Unfortunately, as we head into the summer months, this is also when certain, healthcare subsidies and other things also phase out. So we'll see how that plays out. As for diplomacy, things are moving. I'm still waiting to see whether the current process can translate over this 60 days into a lasting agreement. President Trump doesn't do a lot of lasting agreements. And we know that negotiations like the JCPOA took time. The U.S. is front-loading some sanctions relief right now, but I think there could be some frictions and speed bumps ahead.
And Rachel, just pivoting to a different area, U.S. and China relations, this tit-for-tat tariff confrontation, do you think we're about to see yet another tariff war?
So we're still waiting. The U.S. is set to announce its replacement for the current tariffs, these Section 122 tariffs that expire next month. It almost seems like July already. So waiting to see where those will land. What I'm watching now and where we've seen escalation is actually on non-tariff measures. The U.S. listing many Chinese companies as military-linked companies and China adding U.S. companies, including those involved in rare earth processing, to their unreliable entity list. And those are the kind of things that could make this new Board of Trade and Board of Investment go a little bit off the rails. I don't think we go back to last summer's and spring's tit-for-tat escalation that was damaging to both countries, but especially to the U.S. But it just reinforces it's difficult to get to some sort of lasting sort of grand bargain or sort of significant deal. So I think it leaves things in a bit of limbo, and it will reduce, it will limit the energy and agricultural exports that the U.S. was hoping to send to China.
All right, Rachel, we're going to have to leave it there. Rachel Ziemba, founder of Ziemba Insights. Now, for a look at some of the other stories that we're following, an explosion at Qatar's Ras Laffan industrial complex has killed 13 people and injured 66. However, Qatar says it doesn't expect liquefied natural gas exports to be impacted. Production has been halted at the world's largest LNG facility since the first week of the war after an Iranian attack. And Bloomberg has learned Saudi Arabia's central bank has withdrawn billions of dollars from at least 2 global asset management firms in recent months. We're told SAMA has reallocated at least some money to higher performing strategies and plowed back a part of the redemptions from one manager into fixed income products that offer more liquidity. Coming up, how the Iran war is putting billions of dollars in remittance flows from the Middle East at risk. We'll bring you that story next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abiyat Abu Omar in Dubai. The Iran war is exposing strains in one of the world's biggest remittance corridors. Months of conflict in the Middle East have disrupted jobs and trade, raising concerns about the billions of dollars flowing back to developing economies each year. Our chief Africa correspondent, Jennifer Zabasaja, joins us now from Johannesburg. Jen, good to have you on. How significant are Gulf remittances to economies across Africa, but also Asia? And who's really the most exposed to all this disruption?
Remittances, Abir, are a significant contribution, not just if we think macroeconomically, but also humanitarian. And they have been increasingly over the past few decades. If you just take a look at 2024, based on Bloomberg reporting, we saw about $124 billion that was sent globally by migrants and expatriates to some of these economies. And so remittances have really been a significant contributor over the past few years. We should also point out that unlike other foreign assistance that we see, like foreign direct investments or official development assistance, it doesn't always have to go through a lot of the bureaucracy. It's a direct cash injection to families. So it goes to basic needs like healthcare and education. And so for many families and for many economies across the world, it has been a significant lifeline, a financial lifeline over the past few years. And we've seen, as you can see there up on your screen, a number of countries have become dominant in terms of sending back money. But based on Bloomberg reporting, we saw the Philippines was significantly dependent on some of this remittance. Actually, remittances account for about 10% of GDP from the Middle East in particular. We also can take a look at other parts, South Asian countries like India, Bangladesh, and Sri Lanka, which across the Middle East supply about 9 million low-skilled workers. So again, just reiterating the point that remittances are very important to a number of these economies.
And Jen, if growth slows across the Gulf economies, and that's a real risk after this war, what would that mean for the flows of remittances and the countries that rely on them?
Right. And that's what we're hearing from a number of economists. The expectation is that growth will slow. That, again, could mean various things depending on where we look in the world. But concerningly, this could look like more financial pressure on a number of these families across the world that depend on some of these funds to come in. It could also contribute to or take a bit of a hit to things like what we've seen in terms of currency stabilization and also import in terms of spending. And so if we do, in fact, see a decrease in some of these remittances being sent back home, this could significantly contribute some of these economies. And the expectation, again, Abir, is that remittances have exceeded official development assistance and FDI over the past few years. There's some estimates that say about $5 trillion has been sent back home globally from migrants over the past 3 decades. And so we could really see a shift in terms of what families in some of these Asia, Middle East, and African economies are spending and what they're prioritizing.
All right, Jen. Jennifer Zabasaja, our chief Africa correspondent, with the latest on that story. Now, for the other big story of yesterday, Andy Burnham appears set to become the UK's 7th prime minister in a decade. That is after Keir Starmer said he stepped aside. The latest from London next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Abir Abamar in Dubai. Former Greater Manchester Mayor Andy Burnham appears set to become the UK's 7th Prime Minister in a decade. Burnham's path to 10 Downing Street cleared on Monday when Keir Starmer announced his resignation as Labour Party leader. Let's bring in Bloomberg Daybreak anchor Lizzie Burden. Lizzie, a treat to have you on 2 days in a row. But speaking of Andy Burnham, how did he go from being Greater Manchester Mayor to the clear favourite to become Britain's next PM?
Well, Abir, I was meters away from Keir Starmer as he resigned in Downing Street yesterday, setting out that timetable for his departure. And at first it felt like it was going to be until September until we got a new leader and Starmer would be staying on as caretaker. But then, not long afterwards, Burnham threw his hat into the ring. And then we had the former Health Secretary, Wes Streeting, endorsing Burnham, so ruling himself out of the race and effectively giving Burnham his own votes. So we report that Burnham's team now don't expect there to be a contest at all. And even if you had a Starmer ally like Darren Jones, the Chief Secretary to Starmer, running to test Burnham's ideas, he wouldn't likely get the votes to qualify. So one of Burnham's team has said that his allies are now in a frantic rush to prepare to take over the next month. Burnham seen as a popular and effective antidote to Nigel Farage's Reform UK. He just now needs the backing of the party, and so he could be installed as soon as July the 17th if no other challenger surfaces. So that's just 2 days before the World Cup final. And we had relief in markets yesterday at the prospect of a faster transition. Burnham perhaps not so relieved that the transition could be swift, because his team would have liked to prepare for government and had a bit more time for that. But this timetable might actually have been Starmer's last small act of revenge on the guy who's taken him down.
And there's so much chatter around who the Chancellor would be. So who's likely to be Burnham's Chancellor?
Yeah, and this is really the key question for markets, right? Once Burnham's the name that was confirmed to be the Prime Minister, who's going to be in his team? And lots of names floating around. There's Ed Miliband, who of course was previously the Labour leader. Red Ed is his nickname. He's to the left of the party, and so could be a bit of a worry for markets. He's currently Energy Secretary, by the way. You've also got Wes Streeting, as I say, having thrown his hat into the ring. Is the price of that a job at the Treasury, we ask? And if it is him, he's more to the right of the party than the soft left like Burnham. So he could perhaps suggest that fiscal discipline remains a priority for Burnham. There's also the Home Secretary Shabana Mahmood, another potential Chancellor, but her economic views less clearly defined. it's said that she would like to stay at the Home Office to give Burnham credibility on immigration. And there's a whole host of other names that we could throw into the mix. But interesting that the guy who stood aside for Burnham to clear the way for that by-election, that special election in Makerfield, Josh Simons, is probably waiting in the wings to be his chief of staff. It seems pretty obvious that he's going to be rewarded with a top job in Burnham's cabinet.
All right. Bloomberg's Lizzie Burden, who'll be anchoring Daybreak in just a few minutes. Now, moving on to my favorite story of the day, Lionel Messi has become the top scorer in World Cup history with 2 more goals for Argentina. Messi scored both goals in his team's 2-0 victory over Austria, giving him a total of 18 World Cup goals. The record was previously held by German striker Miroslav Klose, whose mark of 16 was also matched by Kylian Mbappe with 2 goals in France's 3-0 win over Iraq. Now, for a look at what equities are doing before we head towards the end of our show. Still in the red, S&P futures 0.8 lower, NASDAQ, Dow Jones, and Eurostoxx 50 futures are also edging on the downside. Oil prices are ticking lower this morning as we monitor those negotiations between Iran and the United States in Switzerland until the end of this week. Now, that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stick around with us for Daybreak Europe. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Tech takes a tumble. Asian stocks fall from record highs, with Nasdaq futures also pointing lower after a session that saw SpaceX slump for a third straight day. Brent crude, meanwhile, holds below $78 a barrel as the US gives Iran a 60-day sanctions waiver to sell oil on the international market. Plus, Coronation Street. Labour MPs in the UK rally around newly elected MP Andy Burnham, paving the way to Downing Street as soon as next month. Well, a very good morning. Welcome to the programme, everybody. 23rd of June today, Tuesday, 10 years since the Brexit vote. We're going to start this morning in Asia because stocks are dropping from that record high as the tech rally cools. The MSCI Asia Pacific Index down 2.3%. As I say, yesterday, stateside, we already saw SpaceX shares slipping for a third day, shedding hundreds of billions of dollars of value. And this morning, Nasdaq futures are down 1.3%. European futures also down nearly 1% on Euro Stoxx 50. Now, if we flip the board over to the cross-asset picture, we can factor in the geopolitics, the latest from the Middle East. Brent is now down 0.4% at $77 a barrel on both Washington and Tehran, citing progress in the first round of talks in Switzerland towards a lasting peace agreement. Treasuries gaining a touch now, but yesterday they fell after that Juneteenth holiday on Friday, as strategists said that markets were processing that hawkish messaging from the Fed. So now we look ahead to the core PCE number tomorrow. And finally, we've got the yen on the board for you there. 161 per dollar is where we trade, near its lowest level since 1986, as investors weigh the prospects of that US-Iran peace deal. And we have currency traders on alert for yen intervention after that call between the Japanese finance minister and the US Treasury Secretary. Let's take a look at the risk events on the agenda for today. From 8:15 a.m. London time, we'll get global flash PMI numbers. 2:35 p.m. London time, we'll be hearing from the ECB Vice President Boris Vujicic. He'll be speaking alongside later on some Bank of England central governors as well. So we'll be hearing from MPC members Alan Taylor and Swati Dhingra, two of the BOE's doves. A busy day ahead. Let's get started. We begin in Asia with a tech sell-off dragging Asian stocks lower after they came from record highs. And we could go straight to Winnie Su in Hong Kong for more. Winnie, what stands out to you?
Yeah, good morning, Lizzie. Asian stocks really tracking those losses from the U.S. overnight. We're seeing lots of weakness with the MSCI Asia here down more than 2%, and it's in fact seeing its biggest intraday loss in about 2 weeks. Now, the loss is being dragged by South Korea's Kospi index here, extending further losses down more than 6%, as you can see how these leveraged ETFs continue to amplify volatility in the market. Now, when it comes to Chinese stocks listed in Hong Kong, you can see the gauge here down 1.5%, getting close to entering that bear territory. And worth noting that this is, in fact, the world's second worst performing stock gauge so far this year, down about 12% on the lack of AI exposure and also China's weak economic outlook. Now, flip the board, we take a look at the sectoral moves because, as you mentioned, tech stocks leading declines. You have the tech gauge here down 3.7% after 8 days of gains, actually. And you can see losses being led by SK Hynix and Samsung Electronics. Now, we are seeing a bit of overheating in these names, especially after valuations of SK Hynix top that of Samsung Electronics. But overall, a bit of caution ahead of the Micron earnings expected later this week. Now, flip the board, we take a look at the Japanese yen. As you just mentioned, that continued weakness on the back of a stronger U.S. dollar. And now the weakness approaching levels unseen in about 4 decades. 162.7 is the level that we are watching out for. And yes, that intervention risks that we are also closely monitoring after that call between Finance Minister Satsuki Katayama and Scott Bessent, saying that they have agreed to take bold actions if needed on currencies. Now, you can see it hasn't really supported much when it comes to the yen's strength. And also worth noting that the yen is, in fact, the strongest G10 currency so far this month. Back to you, Lizzie.
Winnie, thank you for the update. That's Winnie Su in Hong Kong. Well, you mentioned SpaceX shares slumping for a third straight day. They dropped 16%, shedding hundreds of billions in market value. This after the company said that it was selling investment-grade bonds for the first time. And we can speak now to our Bloomberg senior strategist, Neil Campling. So, Neil, clearly investors unnerved.
The stock obviously had done very well from the IPO. Part of the factors behind the move yesterday was also that at the end of last week, some of the passive funds were positioned into the index positioning, and then on top of that, you then had the fact they're coming back to the market so quickly after raising money through equity to say they're looking for debt investment as well. So it's a very quick move, and it also, I suppose, it highlights the fact that there's a lot of capital required for this company going forward because it's got obviously huge ambitions. A final factor as well, I think, at play is that a lot of the activity around this stock is in the leveraged ETFs, a similar situation to what you've just been talking about going on in some of the Asian names.
Yeah.
But also, I think, in terms of options positioning, a lot of the activity in the options market on SpaceX as a stock are very short-dated. So that's in terms of where investors are making short-term bets on where the stock will move in 2, 3, 4 days, as opposed to in terms of months.
So is it too soon to say the honeymoon's over for SpaceX?
It's well, it's certainly an interesting factor to watch.
Coming back down to earth.
It's obviously opening itself up for many a pun, clearly, Lizzie, obviously. But I suppose the fact is, as far as longer term investors are concerned, I think they buy into that opportunity and what they're trying to do. But for shorter term investors, it's really about momentum, isn't it? In terms of whether that's good or bad. We'll have to wait really until the middle of August until we get to earnings, and then lock-up expiries to get to see what the next moves are. But clearly, volatility is a factor that's going to be at play for this particular stock for quite some time, I think.
I won't make a joke about the bumpy ride then. Neil, thank you for the update. Bloomberg's Neil Campling there. Well, turning to broader markets, Chicago Fed President Austin Goolsbee says that he's concerned that inflation has been going the wrong way, his words, questioning whether all the factors driving prices higher are temporary. Goolsbee described rising services inflation as disturbing and said that pressure there could be more persistent. Let's go to Bloomberg MLive strategist Ven Ram now for more. Good morning, Ven. So how much of a headwind could central bank policy be for markets going forward?
Morning, Lizzie. I think it's going to be a very significant factor going forward because, you've got the Fed where Kevin Walsh's hawkish was pronouncedly hawkish last week. And, the Fed's core PCE has been revised up from 2.7% to 3.3% for this year. That's a significant upward revision, and the Fed needs to be going much higher with those rates. And with the Fed raising rates, you will see European rates and German rates and gilt yields, as well as JGB yields also rising in correlations, partly because the ECB is also raising rates. And the Bank of Japan, of course, has no choice but to continue raising rates because they are hugely behind the curve. Now, we've got all the 4 major central banks raising rates, and that leads you to ask the question, what is going to happen to stocks? Obviously, stocks are going to feel the pressure because they hide the discount rate, and the discount rate stems from the 10-year Treasury yield. If the Fed keeps raising rates and the 10-year Treasury yield keeps going higher, the discount rate applied to stocks is obviously much higher, which will produce lower valuations. And even now, Nasdaq 100 and the S&P are more than fully valued. So I think the stage is ripe for a correction. When exactly it will happen is hard to tell.
OK. And meanwhile, here in the UK, it's looking like Andy Burnham could be walking through the door of Downing Street in just a few weeks' time, Ven. We didn't see a huge amount of market reaction to the political drama yesterday. We did see a bit of relief in markets at the prospect of a faster transition. But as we get more information about a Burnham cabinet, if he's going to be Prime Minister, for example, who is his Chancellor, do you think there's a lot of room for market reaction here?
I definitely think there's plenty of scope for the markets to sell off. particularly if we get a Miliband kind of someone who is left-leaning towards reforms, that kind of person, that kind of a profile will set up 30-year gilts for considerable sell-off. Now, we need to keep in mind that, 10 and 30-year gilts are already trading at considerable discount to the Treasury yield and the German yield. So that means that there is a steep discount embedded into gilts, and that will continue to show in the coming days, especially if we get, as I said, if we get someone who is left-leaning towards reform.
OK, well, we'll wait for speculation on that and hopefully an announcement in the coming days. But for now, Ven Ram, Bloomberg MLive strategist, thank you very much. Well, still ahead on the subject of the UK, it's been 10 years since the Brexit vote. So we'll discuss what the latest political upheaval means for UK assets with Saxo's Neil Wilson. But first, former Mayor of Manchester Andy Burnham returning to Parliament as the overwhelming favourite to become the next Prime Minister. We'll dive into the latest on UK politics next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe, 6:13 a.m. here in London. Well, the US is giving Iran a 60-day licence, allowing it to sell oil on the international market. It's an economic lifeline for Tehran as the two sides continue talks on a permanent peace deal. We can go to our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar, for more on this. Abir, good morning. How significant is this energy waiver for Iran? And really, what are the key challenges left on the table? Because we're hearing conflicting statements, it seems, from both sides, but oil holding a decline on the signs of progress.
Good morning, Lizzie. Yeah, lots of discrepancies still in place. But when it comes to the waiver, the U.S. Treasury did give a waiver to Iran to export its oil until August 21st, at least. This is the 60-day period in which the negotiations that already commenced on Sunday will carry through until. And so how significant is it is a good question. What we're seeing right now is about 30 million barrels of Iranian oil going through the Strait of Hormuz. And so those are oil barrels that were either blockaded lifted by the U.S. naval blockade that was in place until late last week, and those exports from Kharg Island, which is its main export hub. And so our expectation, or our energy team's expectation, is that once those are done and dusted with, the rate of Iranian oil exports will likely go down. And then our teams point out that 2 million barrels of daily oil exports for Iran was already a high number pre-war. And so it's quite significant for the time being. Iran will be able to sell its oil even to U.S. refineries, theoretically. Now, the EU does have its own sanctions in place, so it's unclear how those oil sales will carry through, but much needed oil supply because of the shutdown that was effectively in place over the past 3-4 months, Lizzie. And when it comes to the negotiations that are taking place in Switzerland this week, we already know that the high-level negotiators, that's J.D. Vance and the Parliament Speaker of Iran, Ghalibaf, are set to go back, and then lower-level negotiators set to continue talking in Switzerland. The discrepancies are really on some of the concessions that were already in place. For example, J.D. Vance says that the discussion on the nuclear weapon has taken place. Iran says no discussions on nuclear have taken place. J.D. Vance says that Iran will use its frozen assets, or the unblocked frozen assets, to buy U.S. agricultural products. Iran hasn't confirmed that. And then the issue of Lebanon continues to be in place. Israel maintains that it's not privy to this MOU and that it will continue tackling Hezbollah in southern Lebanon. And so those issues continue to be in place for the time being. President Trump did say that oil was gushing out of the Strait of Hormuz and that prices are coming down, which to him is a win. He also reiterated Vance's statement about Iran allowing nuclear inspectors to go into the country to inspect those highly enriched uranium the places that hold the highly enriched uranium. Again, Iran says not really. They will be talking to the IAEA with ongoing procedures to sort of have that take place. And so some discrepancies there. We're still waiting for these negotiations to happen. They are continuing to happen in Switzerland. They're set to continue happening into the end of this week at least. So something to keep an eye on. But as you mentioned, the back and forth continues, Lizzie. The only positive thing that we're seeing is that at least oil is making its way through the Strait of Hormuz. A trickle, but still better than the situation that was in place over the past 2-3 months.
Abir, thank you for that latest from the Middle East. That's our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. She'll be back at 5 a.m. London time tomorrow with the show. Well, let's come to the UK now. The former Greater Manchester Mayor Andy Burnham appears set to become the UK's 7th Prime Minister in a decade. The Makerfield MP's path to 10 Downing Street was cleared yesterday when Keir Starmer announced that he would step aside as leader of the Labour Party. Let's go now to our London Bureau Chief, Ruth David, for more. So, Ruth, good morning. Has Starmer hurt Burnham with the timetable for the leadership contest? He set it out at the podium yesterday. Surely there's going to be a vacuum until Burnham's crowned. Do you think that the National Executive Committee of the Labour Party could be persuaded to bring forward that deadline if it is indeed a one-horse race?
I think that's a great question, but the issue is, does Starmer and does the party want to be seen as moving timelines around and going back on the things that they have decided? I thought it was also very interesting. I mean, today, of course, is the 10-year anniversary of Brexit, and we've already seen reports that the European Council leaders said they wanted to postpone the EU-UK summit, which Starmer was going to do. So I completely take your point that at least on a global stage, you might see world leaders and you might see organizations saying, we want to now deal with the new leader of the United Kingdom as opposed to dealing with Starmer. But I think Starmer would probably also want to give any other contender, even though we've heard that there may not be any others, the chance to put their hand up if they would want to do so. And even with this timeline, we could have a new prime minister announced by July 17th, which is a month away, or even less than that, actually.
Yeah. Yeah, and of course we've also got the NATO summit on the horizon as well. The other key question, though, for markets is who's going to be Burnham's Chancellor if he's the PM. And I'm wondering if you think Burnham will have told Rachel Reeves outright that it isn't going to be her so that she can decide her next steps. Because I noted she was absent from Downing Street yesterday when I was looking at all the supporters of Keir Starmer when he was resigning yesterday.
Which is ironic given, all the times Keir Starmer has supported Rachel Reeves. I think Burnham has literally had 3 days, right? And the focus was all on whether Starmer would actually say, I'm stepping down, which on Friday, it didn't seem like that was the case. It's very, very... Based on what we are hearing, Rachel Reeves' name has not come out as much as Ed Miliband, who, of course, we've discussed the markets may not be as favorable to, but we're streeting. And yesterday, after he said he's going to back Burnham, that name has come up as a potential chancellor. Shabana Mahmood has come up. And I think that is one thing that investors are going to be very closely watching, right? Who is the next chancellor going to be and what does that mean for policy? Yesterday, we were speaking to some top investors in the UK, and the key thing they said was, we still want to invest in the UK. We still think this is an attractive destination, but we're going to be seeing if there are any policy changes. And if you have a leader who's telegraphing that, I think we're going to then see nervousness, and we're going to then see maybe people saying, well, our pool of capital can go somewhere else. It doesn't have to be in the UK.
Yeah, and Ben Ram telling us earlier on that there is still room for gilt yields to spike if it's, for example, Ed Miliband. Ruth, thank you for your analysis. That's our London Bureau Chief, Ruth David. Well, coming up on Daybreak Europe, ready to roll. Tank maker KNDS prepares to announce its IPO as soon as today. We'll get you the details next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Now, the European tank maker KNDS is expected to announce its IPO as soon as today in what would be one of the continent's largest listings in years. It comes after France and Germany confirmed a joint governance framework under which both governments would hold equal stakes in the Amsterdam headquartered company. I'm joined now by Charles Capel, Bloomberg's European Equity Capital Markets Editor for more. Morning, Charles.
Good morning.
So what does, first of all, France and Germany's agreement mean for the IPO?
Well, look, it paves the way for it to go ahead. Crucially, this is such an important company to the European rearmament effort, and having this joint ownership by both the French and the German governments means that it can go ahead as a public company, with both governments and Europe as a whole confident that it will remain as a European defence company. And it also allows the business itself to really focus itself as a business that's focused on the European rearmament effort. It can fully commit to that as its public identity.
So what kind of valuation are they targeting? Because I'm thinking about the CSG IPO, and I'm looking on my screen at a chart of the price just tanking ever since it listed.
Yeah, valuation has been the really tricky point with this. And CSG obviously listed at a 25 billion euro valuation. It went up to 30 billion euros on its first day of trading. And now it's trading somewhere around 13, 14. And it's and that's the thing that's really been the sticking point, especially when there's been the negotiations between the German government and the family shareholders when they're trying to buy this stake. Because of course, the family are saying, OK, well, we want to get as much as we possibly can. The German government saying that we need to get value for taxpayers. At the same time, you've had a sell-off in publicly traded European defence companies, which throughout the year has been slowly bringing this valuation down. It really spiked in January, and then it started to reverse course, which has been making things really, really difficult in those negotiations.
So let's say this IPO comes any minute now, or the announcement of it. What does it mean then for European markets?
Well, look, it means that in equity capital markets for Europe, the first half of the year is going to be bookended by these two massive defence IPOs. And that actually really tells the story of European ECM. It is defence, it is space, it is industrials, it is things connected to AI, data centres and power. Anything else hasn't really come. There are a couple of IPOs in the software space, in maybe the holiday space, in other areas of the market that were expected to come, and they haven't yet emerged. It's really focused on these hard assets so far this year.
OK, really interesting. Thanks for bringing us that story. That's Charles Capel, Bloomberg's European Equity Capital Markets Editor. Now to some other top corporate news we're following for you this morning. Apollo is again limiting withdrawal requests from its largest non-traded private credit fund for retail investors. The asset manager capped withdrawals at 5% of outstanding shares after investors asked to redeem nearly 17%. Elsewhere, Oracle reduced its workforce by 21,000 employees over the last 12 months, a bigger number than previously known. A regulatory filing reveals that global headcount shrank to 141,000 full-time staff, and the company says the adoption and deployment of AI may continue to lead to job losses. So those are some of our top corporate stories this morning. But coming up on Daybreak Europe, in the aftermath of Keir Starmer setting out his resignation timetable, we're going to turn to the latest in UK markets. That conversation coming up next with the Saxo UK investor strategist Neil Wilson. Stay with us. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Tech takes a tumble. Asian stocks fall from record highs, with Nasdaq futures also pointing lower after a session that saw SpaceX slump for a third straight day. Brent crude, meanwhile, holds below $78 a barrel as the US gives Iran a 60-day sanctions waiver to sell oil on the international market. Plus, Coronation Street. Labour MPs in the UK rally around newly elected MP Andy Burnham, paving the way to Downing Street as soon as next month. Well, a very good morning. Welcome to the programme. If you're just joining us, 6:30 a.m. here in London. This is the picture in markets this morning. We've got Asian stocks dropping from a record high as the tech rally cools. European futures also down more than 1%, and Nasdaq futures down 1.5%. After yesterday, we already saw SpaceX shares slipping for a third day, as we discussed with Neil Campling. And today, US futures as a whole pointing lower this morning. Now, let's turn over to our front pages, and we have the Financial Times leading with the EU's decision to postpone a summit with Britain next month. It says that the move has caused irritation in London as Brussels waits for Andy Burnham's arrival in Downing Street. The Wall Street Journal also leading with the UK this morning, exploring the forces that broke the two-party system. It says that British politics is now utterly maverick. And if we turn over to the Times, they're saying that Andy Burnham will look to boost his economic credentials in a major speech next week, where he's expected to vow to protect the economy and stick to the government's fiscal rules. Well, you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Now to some European data, because the Euro area PMI surveys are expected to show a pickup in economic activity when the data drops later on today. As negotiations between the US and Iran provide relief on higher oil prices, markets are going to be looking to see how the conflict has weighed on business sentiment. Here with a preview is our Bloomberg Western Europe economy lead, Zoe Schneeweiss. Good morning, Zoe. Just talk us through what we can expect from this PMI data.
So we get the flash PMIs for Germany, France and the Euro area. A reminder, the number we're looking here are the numbers above or below 50. 50 delineates, above 50 means you're growing, but below 50 mean you're contracting. We've had contractions here from all three of those over the past months, and though all of those numbers are supposed to get edge closer to 50, unfortunately, economists are predicting that we'll stay under 50. As a reminder, the UK at the same time is squarely above 50, so some interesting UK versus Europe dynamics here.
And are we seeing much impact from the US-Iran peace talks in Europe in any of the data that we've had so far, Zoe?
So these will really be the first important ones. The way PMIs work, they have quite a big window normally to survey these purchasing managers. So we do hope that part of them will be after the peace deal emerged. The one thing, though, we have to keep in mind is purchasing managers read the same news we do. As we know, there's so much uncertainty about the whole situation in the Middle East and about Hormuz. So let's see how much they can actually give us and how much they'll actually know if, like us, they're in the dark in a lot of aspects.
Yes, of course, they're glued to Bloomberg TV, aren't they? Bloomberg's Zoe Schneeweiss, thank you very much for that preview. Those numbers coming out throughout the morning. Well, coming back to the UK, the former Mayor of Greater Manchester, Andy Burnham, appears set to become the UK's next Prime Minister following Keir Starmer's resignation yesterday. As the country awaits another transition of premiership, another one, yes indeed, investors are scrutinising how a Burnham-led government is going to impact the economy and markets. Let's speak now to Saxo UK investor strategist Neil Wilson. Good morning, Neil. Thank you so much for coming on the show early this morning. So what's the best case scenario for markets under a Burnham premiership when he is inevitably going to be just as fiscally squeezed as all his predecessors?
Yeah, so I mean, obviously the market reaction was not massively over the top yesterday. We actually saw a bit of improvement in bond yields and in bank shares, for example, as Wes Streeting announced his. That he was backing Andy Burnham, and I think that goes to something of where a best case scenario might look, and it might be that you see Burnham rather than potentially heading off in the direction where he gets everyone that's from his camp to form the cabinet, that he actually seeks to build sort of bridges across the Labour Party, and you actually see a sort of more of a spread of opinion across the Labour Party, and Wes Streeting on the sort of right of that party could be a very positive candidate for the chancellorship. So I think best case scenario might be, in terms of the city, in terms of the markets, someone like Wes Streeting coming in as chancellor, and also I think if you see a more creative approach to some of the aspects of fiscal policy. And we are seeing that Andy Burnham's brought in the likes of Richard Hughes or Jim O'Neill, these sort of people that could make a significant impact in terms of the thinking of how they go about fiscal policy. So I think that the best case scenario would probably be a chancellor that gets the economy. And maybe some more creative thinking around what to do about getting growth going.
But you mentioned Wes Streeting. There's been talk of him looking to potentially go for a wealth tax. Do you think that it really matters to markets how a Burnham premiership raises revenue? As long as he doesn't borrow more, does it matter if he taxes more and spends more and raises taxes?
Yeah, I think how they go about it is important. I think tinkering on the margins of the tax regime has never really worked, and I think that's one of the reasons that Starmer's failed. Really, is a failure to go confidently along certain policy lines. So, as much as anything else, this is about Andy Burnham being able to persuade the Labour Party to go along with him. Which is something that Starmer would repeatedly fail to be able to do, and hence all the U-turns. So, the presentation, the sort of feeling among the Labour MPs is important here, and so how they do the taxation is important. And I think there's maybe going to be a more clear-cut push by Burnham, maybe to potentially even look at raising income tax, for example. So potentially breaking a manifesto pledge, which I think is something that hasn't. He's obviously been careful not to be talking about these sort of things. But I think he's looking at everything. I think he's looking at all potential avenues. Clearly, the market wouldn't particularly appreciate extra borrowing, given the state of the UK's fiscal position. But I think, as I said earlier, there's a potentially a creative way of looking at this. And I think there's been talk about specific war bonds, for example, to raise money for defence. So that's sort of the way of thinking that I think Andy Burnham's taking, and it's going to have an impact on the market, but we can't say for certain in what direction, because he is capable of doing. He's got a wide menu of options at the moment. I think he's going to be looking at them all.
Well, he hasn't got long, so let's hope he can be creative quickly, Neil. Just turning from fiscal to monetary policy, interesting that you think the market's wrong and the BOE's next move is going to be a cut. Has the politics changed your outlook at all?
I don't think the politics has necessarily changed our outlook. I think we've been looking at this for the last sort of a few weeks and months, and really I think the market was way too swift to price in hikes as a result of the war in the Middle East and the rise in energy prices, and we always felt that was it wasn't going to spike nearly as much. This is, and the crucial thing is really that the labour market's not where it was in 2022. The demand side is not where it was then in terms of wages and demand for services and so on. So the UK economy is not really in the position, I don't think, to weather those hikes. And I think the divergence in the UK versus the US has been quite interesting as well, because we've seen quite a sharp hawkish pivot in the US, just as markets were starting to, I think, realise that the UK wasn't heading towards a hike quite as quickly. And I do think that the next move is more likely to be a cut, and I know that's not necessarily what's being priced in the forward curve, but I think that's where we're heading. I think it's probably going to be another weight, another potential drag on sterling, as I see popping up the price of cable at the moment.
OK, really interesting. I also just have to flag the Kospi this morning, Neil, down more than 8%. And it takes me to your thoughts on tech broadly, how you're feeling about tech in global markets.
Yeah. Well, it's been such a hot trade. I think the problem with it is in terms of pricing some of these shares is becoming more difficult, because you've seen such a hot flow of cash into them, and they are. I mean, that market in particular, the South Korean market, is incredibly concentrated in really two shares. So, and they're both incredibly leveraged to the AI trade. So that particular market's one that does show higher beta to some of the moves elsewhere, if you look at the Nasdaq or whatever. I think in general tech is still the place where where are we going to be in 10-20 years time. It's all going to be led by tech. So I still think tech is the key underlying asset or sector for global stocks. But some of these stocks that have been highly leveraged to the AI trade are constantly being reassessed and are liable to pullbacks, and that's just the way it is. But overall, I still think broadly that tech is the key cornerstone asset for investors.
OK, Neil, great to see you this morning. That's Neil Wilson, UK investor strategist over at Saxo. Thank you very much. Well, the EU and UK are reassessing the timing of a planned summit next month, as we say. This as key players on both sides of the channel wait for another change of leader in the UK. Andy Burnham, the man most likely to be Britain's next Prime Minister, has publicly backed much closer alignment with the EU and a desire to eventually rejoin the bloc. The political shifts come exactly 10 years after the UK voted to leave.
There are certain days that change the world. Brexit was one of those days.
British people will have the final say in an in-out referendum.
Watch out, here we go.
One story dominating the news today, and it is Brexit. Brexit. But what has been one of the most divisive votes.
It was staggering.
History unfolding before our very eyes.
The population at large doesn't trust the establishment.
The bastion of independence.
Brexit changed the way that politics is done, not only in the UK, but beyond that too.
People want to take their country back.
Passions that are not unique to Britain.
Vote out, NHS!
It was a real once-in-a-lifetime moment, but also sort of manifestly an act of economic self-harm.
Thing is, not everyone and their dog arrived at the polling station with an economics textbook in hand, or poor.
It was not even the main thing that mattered to a lot of people who voted to leave.
A cosmopolitan elite had been trying to redefine Britain as a multicultural, multiracial, multi-ethnic society. And the Brexiteers said, no, we are a particular people, a product of a particular history, with a particular set of roots.
We need our country back.
And so on the 23rd of June 2016, more than 33 million people cast ballots on a relationship that had shaped Britain's laws, trade and politics for almost half a century.
Yes is now showing at 67%.
The British people have spoken, and the answer is we're out.
By a margin of 52 to 48, they said Britain should exit the European Union.
Huzzah! Independence Day!
It might have felt shocking, but it wasn't quite as surprising as I think a lot of people look back and say that it was.
But it was a political earthquake whose aftershocks were felt around the globe.
It shifted the world from a world which seemed to be getting ever closer, in which globalization was the dominant theme, into a world that was becoming ever more fragmented.
Brexit has ushered in a decade which has left Britain, Europe, the West in a worse shape than it started it. The issue is, would it have done much better without it?
And it is possible to work that out. To understand what happened, we can compare it with a model of what didn't. This is that story. Why Brexit emerged, what it cost, and what might come next.
And you can watch the full cut on the video hub at bloomberg.com/videos. Do also join me for a live Q&A today on the question, are the UK and Europe finally getting over Brexit? I'm going to be joined by Bloomberg's Brussels Bureau Chief Suzanne Lynch and UK reporters Joe Mays and Phil Aldrich. So to everyone to listen in, terminal subscribers and digital subscribers can send in questions to us all for answering in real time. So don't miss that at 2 p.m. London time. Well, coming up on Daybreak Europe, new car registrations continue to grow in Europe, but how much will rising inflation impact the market? We'll break down the numbers for you next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Now, European car sales grew for a 4th straight month in May. Let's get some analysis with our Bloomberg Autos and Aviation reporter, Danny Lee. Danny, just run through the numbers for us.
Hey, Lizzie, good morning. So sales for May up to 1.15 million units. That's the number of new car registrations across Europe and the UK, which really shows still some momentum, although a slower momentum over previous months, that consumers are still buying, particularly EVs and hybrids, as the fuel price, the high fuel price, is seeing consumers balk and look at alternatives overall. However, we did see a slowdown, and that really is being driven by higher inflation overall. And that higher inflation is kind of creeping into concerns around consumer sentiment. And obviously, of course, we saw the ECB hike rates for the first time since 2023, really also affecting things. But when you look at the manufacturers, everyone, all the manufacturers, the European manufacturers, all did see various levels of performance, but it's the Chinese manufacturers who really saw outsized gains, continue to see outsized gains, and that's really putting pressure on the European automakers, the legacy automakers overall, and really does shine through in the results. But as we have heard from the likes of BMW overall, they are concerned about the overall sales performance and the consumer sentiment, which is why they put out a warning of their future results. So yeah, it's a bit of a mixed picture, but clearly the Chinese are leading the way here.
OK, those numbers out earlier on this morning. Danny, thank you so much for running us through them. Now, let's turn to our big take of the day. Weight loss drugs have turned the 150-year-old drug company, Eli Lilly, into a $1 trillion pharmaceutical giant. Today's big take explores how Chief Executive Dave Ricks needs to prove that boom now can last. And I'm joined by Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence. So the big question, Sam, is you've had this boom and bust cycle in pharma, but can Ricks defeat it?
Yeah, that's a tough one. You know, pharma companies, there have been examples of pharma companies where they've tried to do that. A lot of the times what happens, if you take all the way back to Pfizer with Lipitor. Lipitor was the blockbuster of the time. Then the next blockbuster of the time was AbbVie's Humira. Pfizer had a tougher time managing it because you really have to kind of think about in 5 or 10 years' time, this drug will eventually become generic. How am I going to refill that bucket of cash? I'm going to have new drugs or stay in the same business and make better drugs and make sure that they all come online at the right sort of time when I'm trying to manage that dip, right? So get rid of the bust. And if you think about that, you can't legislate for it. You can try your best. I mean, honestly, I don't think anybody expected tirzepatide, Mounjaro, to be the drug that it is, because the mechanism that they used in it isn't supposed to work the way that it, at least at the time, was a bit surprising. So biology always throws up little hurdles for you. They are doing quite a lot of M&A, as you've seen. They've done a lot of work in there. They've got follow-up drugs in obesity, which are looking strong. So can they? I mean, they're definitely trying their absolute best, and they have the cash flow to do it, right?
Well, you and I were just talking about how ubiquitous these weight loss drugs have become. Is Eli Lilly going to be able to sustain its GLP-1 dominance, though?
Currently looking at the data sets that we see, comparing the efficacy of these drugs, remember, it's not just about efficacy. We were just talking offset about the needle size and the issues, thinking about if you're taking an oral drug, do you need to manage your breakfast timing, etc. Those also come into play. It's not just about efficacy. Does a person know if they've lost 15% or 18% of their body weight? You know, when you're starting from 90 kilo, you look good after that. You look fit. Your health is benefiting from it anyway, whether it's 15 or 18. So if you put that aside and just think about efficacy, Lilly's drugs seem to be on the more efficacious side in the way that they've been trying combining molecules like tirzepatide is 2 actives, retatrutide is 3 actives, and these seem to be giving them that efficacy edge.
OK, great story on the terminal. It's our big take, as I say, today, available on the terminal and Bloomberg.com. Sam Fazeli from Bloomberg Intelligence, thanks for bringing it to us. Well, plenty more coming up still on the programme, so don't go anywhere. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
People obsessed with the Fed, whether it's 50 basis points higher, whether it's right now. What's the difference? The key story is tech boom, and that's going to be the most important first-order impact of anything else.
Muriel Rubini from Rubini Macro Associates on the importance of the tech story for markets. And that takes us to our first terminal chart here that I want to flag for you, because it's indeed hard to overstate just how big that US equity tech trade is in the US. Micron trading $62 billion yesterday. So that is almost twice the Kospi's entire turnover. It's 12 times the FTSE 100. And this is a one-way street. You can see the two lines here. You've got a one-way street of flow from hyperscalers to semiconductors, a massive bet that there's going to be demand for frontier AI. Now, flip the board over because, of course, not sorry, Dr. Doom, we do obsess over the Fed here on Bloomberg TV, and for good reason, because independence remains a key market theme. As you can see here, long-end yields still sensitive to any challenge to Fed credibility, and the spotlight is still on Fed credibility because we've got that legal fight around Fed Governor Lisa Cook, so that keeps the spotlight there. Just finally, one more term chart to show you. It is on the euro this morning because, speaking of central banks, you've got the euro floating around this 114 level, but vulnerable to a break as the ECB's long-running hawkish tone does run its course. So maybe that's a good thing for luxury and for car exports here in Europe, as we were discussing with Danny Lee. I just want to also check in on these markets before we go, because we've seen some outsized moves on the Kospi this morning. Take a look at where we are right now, down more than 8% because of the tech sell-off. And we're seeing losses expected both here in Europe and for Nasdaq futures as well later in the day, down 1.7% there as we head towards the Wall Street Open. The opening trade's coming up next. Anna, Guy and Tom will take you all the way to the European cash session. That does it for Daybreak Europe. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. It is Tuesday, June the 23rd. Here's what's on the agenda. Stocks drop as hyperscaler spending angst weighs on tech. We are on yen intervention watch after US-Japan FX talks. And with Burnham poised to be the UK PM, investors speculate on his pick for Chancellor.
OK, let's talk about this tech sell-off that we are watching around the world, Tom, and it is brutal out in Asia, in particular in Korea. The Kospi had a circuit breaker not that long ago. It's reopened. It is down by 8% this morning. It is pretty brutal. It gets a little less brutal, but still quite brutal if you think about the scale of the market when it comes to the Nasdaq. Nasdaq 100 futures are down by nearly 2% this morning. Keep an eye on that. And where does that take us? That takes us to Europe. Eurostoxx 50 futures, less tech, but still in effect. We are down 1% when it comes to what we are watching here in Europe. Keep an eye on the big names that we watch out of Europe. ASML is going to be interesting. Look at Nokia this morning. Look at these kinds of names to see what is going to happen when we get to that opening trade. We are going to start the countdown to it right now.
Welcome to the programme, everybody. It is Tuesday the 23rd of June, and we have an hour to go, just under, until we get to the start of the trading day. And let us put the focus squarely on what is happening in technology and a number of dynamics that are in focus. And Tom and Guy, you both touched on this already, but the extent of the selling over in Korea, the place to start, I think, this morning. So down by 8%. We had that circuit breaker. The trading has resumed. There are specifics around ETFs tracking both SK Hynix and Samsung that are causing officials some concern there. And they're thinking about bringing in some stabilisation steps to limit the potential fallout from some of the really sharp swings that we've seen on the Kospi as a result of this. So that is one of the dynamics that we are watching. We are also watching, of course, Nasdaq futures weaker after the Nasdaq was down yesterday by more than 1%. And there we're seeing an interesting rotation story out of hyperscalers towards the semis because there is an understanding, a fear in some quarters that hyperscalers are spending so much money, and are they passing some of the benefits of this AI rollout onto the memory companies?
We have a chart that illustrates that gap, and it's like a crocodile mouth shape now in terms of the move higher for the SOX and the semiconductors index in the US versus the hyperscalers. Interestingly, that hasn't filtered across, obviously, to the Asian session, because you do have the chip companies that performed well in the US session yesterday. Yeah. The likes of Micron, and we've got those earnings on Wednesday. Maybe Micron rise to the rescue. But that strong session for the chip makers in the US has obviously not been fed across to the Asian session. You're seeing the likes of SK Hynix and Samsung under a lot of pressure.
Starts with debt. A lot of this is debt funded. Then, obviously, these hyperscalers spend a lot of money, and they spend it on the chips, and the cost of compute goes up. And the AI companies have then got to figure out what they do with that epic cost of compute. Can they pass it on to the final consumer, which sits at the other end of the story, to the debt story? Can they pass it on? And the answer appears to be no, because the cost of compute is epic, but the cost they're charging to businesses and everything else is significantly lower. There's a gap there somewhere. Where does the gap in that chain sit? Where does it break, and what happens when it does?
Absolutely. So a lot of focus on the pricing and the ability to get back the revenues that these companies need if they're going to be doing all this investment. And meanwhile, the debt raising continues. We had at the back end of last week announcements about SpaceX raising debt capital. Well, now they are going to do it today. We understand that they are readying this first investment-grade bond today. They want to raise $20 billion, which doesn't sound like a huge amount in the scale of everything that has been invested. But it's raised a lot of eyebrows because of the investment grade rating that this has been given by at least 2 of the ratings agencies.
Yeah, the rating agencies seem to be pretty relaxed about the makeup and the fundamentals of this company as they go to the debt markets. And again, we'll see how well received it's been. The likes of Anthropic have raised, of course, Google have raised, and Google, in fact, Alphabet are raising in the debt markets, not Anthropic, and that's been well received. And so we'll see if the same. But that is a very profitable company with a solid balance sheet. We'll see what the reaction is when SpaceX goes to the market with $20 billion.
There is a fight on for debt, though, and it's beginning to emerge. Governments need you to invest in them. AI needs you to invest in them. Companies need... the fight is on, and it's going to be interesting to see who ultimately wins that fight. We're going to get PMI data today out of Europe, which I think is going to be really interesting in terms of what it's going to tell us about the data that is coming through and what it tells us about the European economy. Christine Lagarde yesterday, I thought, sounded quite dovish. The market's taken some weight out of the fact that we expect still further rate hikes to come through from the ECB. Do we still get one? Do we get none? Are we done? Was it one and done? I think it's going to be a question that I think the data today may help us with. But you get to the kind of the currency narrative. Lizzie was bringing us a chance in just the last few minutes talking about the fact that could the euro break if we start to see that dovishness beginning to increase. Currencies are on the move. You've got a really interesting story developing in Japan where you've got the currency at its weakest level potentially in 40 years. You've had an overnight conversation between the US and Japan. What happens with intervention? Are we going to see it there? Back to Christine Lagarde. Real concern about what is happening in terms of the yuan exchange rate. She thinks that maybe actually that's part of the tools that the Chinese are using to push their goods into Europe. All of this coming together. Last week, Friedrich Merz talked about a Plaza Accord. That's back on the table again. These imbalances are beginning to get really interesting in the FX landscape.
And we have an economist with an FX background to talk to about some of these themes as we go through the programme. So that is interesting. And let's linger on the Japan story that you nodded to there, Guy, because the Finance Minister, Katayama, confirming that she'd had a conversation, had talked to Scott Bessent. There's an understanding, there's cooperation, there's alignment, all of those words coming out of that conversation. Is it still difficult to push against dollar strength for the Japanese? We are through, perhaps, the bulk of the dollar strength attached to the Iran war, but there are other reasons why the dollar has been strengthening, to do with the Fed and, of course, to do with AI.
And if Austin Goolsbee and his view and his concerns about inflation continue to be latched on by other members of the FOMC, that's a problem, arguably, for Japan. Further dollar strength, then maybe more increases in rates coming through for the Fed that, of course, turned hawkish, arguably, last week. Fed's Austin Goolsbee saying he's pretty concerned in terms of the direction of travel and really focused on services, the services prices as well, saying they are disturbing. So a fairly kind of hawkish commentary from Austin Goolsbee. As we think about currencies, interesting that JP Morgan have come out and reiterated a bullish take on the pound. As investors now, it seems like by the end of yesterday, in terms of UK politics, the kind of consensus was, as we look at the different directions of travel and how the politics actually lines up, very difficult to see anyone other than Andy Burnham becoming Prime Minister, potentially as soon as July the 17th. So the focus then shifts to, OK, what does the cabinet look like? Do we get a general election? The Chancellor, it seems unlikely Rachel Reeves is going to be in place. Is it going to be a Wes Streeting? Certainly Gilts rallied when Wes Streeting kind of threw well, at least removed his hat from the ring and backed Andy Burnham. So the focus on the Chancellor, focus on of course, what the tax agenda is and whether or not we get we have to get a general election at some point this year.
You haven't mentioned Ed Miliband. Is
another name in the fray.
Is he still in the running?
Yeah.
Because that seems to be the fight now. Is it Ed Miliband, Yvette Cooper, possibly? Ed Miliband, Wes Streeting. How would the market react? We're beginning to get an idea. Wes Streeting, good. Ed Miliband, not so good.
Yes, and Nomura, when Wes Streeting was in the running, had described him as a sort of more market-friendly candidate. Would that still apply if he were Chancellor? He, of course, says there's been no deal. I didn't back Andy Burnham to get Chancellor. I thought it was really interesting. We have not seen a transition of power away from Keir Starmer formally to anybody else, but you watched it moving yesterday, didn't you? The selfie in front of those Labour MPs, the fact that we had helicopters in the sky tracking his train as it came from the northwest down to London, tracking his taxi as it went from Euston Station to Westminster. I mean, that tells you a lot about what you need to know about where the power really lies now.
I think that's a given now. It is Burnham. But how much room for manoeuvre does he have? How much power? OK, how much power does he have?
Yes. Whatever power exists, though, we were watching it transfer. Is that
it feels like it's a very small amount of power. Assuming that his ability, unless he significantly changes the rules, the fiscal rules. He has almost zero room for manoeuvre when it comes to the fiscal space that he's operating with. Sonia Martin from DZ Bank, call it what you will, is going to be joining us. She's now chief economist there. Matthew Amos, Aberdeen Investment Director, joining us, I think, from Scotland. Mark Dowding, RBC Blue Bay Asset Management Fixed Income CIO, is a great person to talk to. And Marco Argenti, Goldman Sachs Chief Information Officer, not CIO, Chief Information Officer, joining us a little bit later. But the perfect person, Tom, to talk to about this whole token cost, how much does AI cost story that we're trying to grapple with right now.
Yeah, the pushback against token maxing and what it means for the models, whether there's more of a focus on open source versus the frontier models and the closed source, and, of course, how jobs are adjusting across the world of finance. So a really good voice on that. Let's look ahead at what else we are thinking about through this Tuesday then. 9 a.m. UK time, we will get Euro area PMIs. 9:30 a.m. UK time, UK PMIs. 2:45 p.m. UK time, we're going to get US PMIs. So, yes, a lot of macro data for you in terms of how we think about these economies. US earnings, FedEx, aftermarket, Amazon Prime Day begins. Guy Johnson's getting his orders in. Amazon's annual deal event on June the 23rd to the 26th. Maybe new wellies for Guy Johnson.
Got those. Done that.
Kitted out
always
with the wellies.
always buy wellies in the summer.
Well, I mean,
that's already done.
But what season is this? But which season is this? I don't know whether to buy wellies
definitely summer.
Or sunscreen.
It's definitely summer.
But you needed both in the last 24 hours, didn't you? Coming up on the programme, we will be watching the auto sector at the market open, this after European car sales grow for a fourth straight month, powered by EV and hybrid models. Plus, one of Europe's most important defence companies could announce plans for its IPO as soon as today. We'll get the details on that listing by KNDS later in the show. Up next, Andy Burnham is back in Westminster, but what would a new face in Downing Street mean for investors? We will break down the challenges ahead. If you have questions, if you want to get involved in any of these conversations,
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
I swear by Almighty God that I will be faithful and bear true allegiance to His Majesty King Charles, his heirs and successors, according to law. So help me God.
Andy Burnham there, the former Greater Manchester Mayor, returning to Parliament yesterday. He appears set to become the UK's 7th Prime Minister in a decade. Burnham's path to number 10 Downing Street was cleared yesterday when Keir Starmer announced he would step aside as leader of the Labour Party, and the most likely other contender stepped aside. Let's bring in Bloomberg Daybreak anchor Lizzie Burden, and who's obviously been following this for us. And I'll just say that at the other end of that clip, you know where I'm going with this, the other end of that clip, somebody heckled, he's not the Messiah, and Andy Burnham shouted out naughty boy, which is a quote from Life of Brian. And I suppose the contrast on day one with the style of somebody like Keir Starmer and the style of somebody like Andy Burnham was very evident and very clear to see. That's not policy, that's not a change you can pin down, that doesn't tell you anything about fiscal rules. But I just thought it was really interesting to see on the first day.
Yeah, and vibes matter. Do you remember when Starmer and Rachel Reeves came in and they were talking about the economy? They talked down the economy, and that doom and gloom weighed on the economic data. So a bit of vibes might be welcome in UK politics. And I was metres away from Starmer when he was resigning yesterday. And when you listened to that speech, he struggled even to articulate a vision of what his achievements had been.
They've been other people's achievements, basically, as far as I could tell.
And yet they were not credited in that speech, which just speaks to the reason why that premiership failed so fast.
OK, so he's got the style. Does he have the substance, Burnham?
Well, we'll have to see how far vibes can take him. We're going to see more details coming out because there's going to be a vacuum, right? If there are no other candidates to challenge Burnham, then all of the media attention in the UK is going to be hounding him for details on what's your policy and who's in your team. And at the moment, it looks like because Wes Streeting, the former Health Secretary, stepped aside and backed Burnham, no one else is really going to have the numbers to challenge him. And actually, Burnham might not like that. He might have liked to have the summer to set out his policy agenda, to think about what he's actually going to do.
Please tell me he's already done that.
Well, you would hope all those
we
years
hoped
in
that
Manchester.
in 2024, didn't we?
But this could have been the parting shot of revenge from Starmer to Burnham, to the guy who basically ousted him.
Yep. We will watch. Lizzie will watch very carefully. Burden on Burnham. Thank you very much indeed. Joining us now, Sonia Martin, Chief Economist at DZ Bank. Sonia, good morning. You are watching British politics from afar. Do you buy or sell the pound on what you've seen thus far?
I think I'd rather sell in the short term. There's so much uncertainty. Andy Burnham is not tested. The fact that he doesn't have to go through a leadership contest is already being criticized as raising potential problems later on. There's a comparison being made to Theresa May, sort of sailing through to premiership and then, having to deal with a bunch of issues. So we'll see how he does. But ultimately, I think we can all agree that he's going to inherit the same problems that Keir Starmer had to deal with. And there are really no easy answers to those problems.
Isn't the easy answer just to change the fiscal rules?
Well, I think that's definitely a risky move to make, given the focus that there is on fiscal policy already and the experience that the UK has had. So I think they'll have to take a really long, hard look at the situation and come up with some credible answers and, revive the economy, revive the labour market. There are a lot of issues on the table, including apparently a look back towards Europe. So that's going to be interesting.
Yes, I wonder what the take is over where you are, Sonia, on that kind of theme. I mean, we don't know much about what Andy Burnham as a potential Prime Minister would be about, but we know that Wes Streeting stepped aside and described the differences as small, and he is somebody who's definitely talked about a much closer and possibly one day going back into the EU. He's talked about a whole host of different tax changes as well. So there is a policy vacuum. We don't know where this goes, but on Europe, what difference would that make for the pound?
Well, I mean, I think there's wide agreement now that Brexit was considerably damaging to the UK economy. Maybe not in the immediate effect that some people had predicted, but I mean, there are many studies now that have really confirmed that it was, for the UK in many ways, the wrong move. So looking back towards Europe makes sense, but it's of course a very difficult move given that Nigel Farage is sitting on the sidelines hoping to become Prime Minister in the next general election. So any move towards Europe is going to have to be very careful. And of course, from a European point of view, while I think in many ways we would like to welcome the UK back into the embrace, there's going to be some concern that this may not last depending on how the general election next time goes. So I think any discussions that we're going to have there are going to be quite difficult and fraught with potential problems.
Yes, I suppose it's worth noting, Sonia, that question was to mark the 10-year anniversary since the vote. Tomorrow, of course, the 10-year anniversary since the result, but the vote. Let's move on to Japan. That said, let's move on to Japan, because there we've had some overnight news surrounding the yen, or at least conversations between the Treasury Secretary in the States and the Finance Minister in Japan. Are you expecting further intervention, Sonia, in the yen? And will it be easier if the war in Iran is in the rear-view mirror to some degree, at least in the short term?
Hi, can I ask, can you still see me?
Yes, we can. Yes.
But you appear to be not moving.
No, because my computer screen just gone blank. I don't know what's happened here.
OK, well, do you want to give us the answer? What are your thoughts on the yen? We'll
try.
See what we can do about the picture, Sonia.
Okay, so as far as the yen is concerned, I mean, obviously we're pushing to levels that we haven't seen in a very, very long time. The MOF and the BOJ are going to be massively concerned about this. There is a high chance of more intervention anyway. But the problem with intervention we've seen before is that it doesn't really have a lasting impact. So what we're seeing is some movements in the short term, and then investors just jump back on the strong dollar trend. So I think there isn't really an easy answer to that issue of the weak yen.
Sonia, is it for the BOJ and for the yen, in fact, any intervention either without the BOJ hiking or without the Fed turning a little bit more dovish, which seems unlikely given the hawkish tilt last week, that any intervention will be short-lived then in terms of the impact, in terms of potential yen strength on the back of that move?
Yes, absolutely. I think that, and the BOJ is hiking. I mean, that's not, in a sense, not really the problem. I mean, the BOJ is doing what it's meant to be doing. I think the problem is always a little bit that the BOJ has a tendency to garnish its rate hikes with some fairly dovish language and very cautious language, and that I think often results in the yen failing to really take much of a boost from those rate hikes. And yes, as you said, there's the contrast. You know, the Fed quite hawkish these days. We'll see how that plays out. I'm not necessarily convinced they'll hike, but yeah, that's all leading to more dollar yen strength, and there's a strong speculative element in there as well, of course.
So we have Eurozone PMIs. I want to switch from Japan to Europe. We have Eurozone PMIs out later this morning. Does Europe need a weaker euro at this point?
No, I don't think that a weaker euro is the answer to our issues. I mean, sure. I mean, when we look at Germany, the export sector has been suffering from tariffs imposed by Donald Trump. We have an issue in that we are exporting a lot less to China, whereas we're importing a lot from China. So there is a trade issue there, an export issue there. I don't think a weaker euro is the answer to that issue. I mean, where we are right now, the euro is far from being overvalued. I think that's not the solution. I think we definitely don't want a very strong euro. I can agree with that. But I think a much weaker euro, while good for the export sector in theory at least, also comes with some side effects. You know, we'll have to import a lot of goods at a higher cost. So it's not like that's going to resolve the issue.
Sonia, why don't you think the Fed's going to hike?
Well, yes, he was hawkish. The Fed was hawkish, definitely. But when we look at the labor market, I think the robustness that the recent data seems to suggest is superficial. When you look at the data that's underlying the ISM, when you look at how willing companies are to hire, open jobs, etc., you see that the labor market, while far from very weak, is certainly not as stellar as maybe some people had interpreted after those numbers. So I think the labor market isn't that strong, and the inflation is going to come down prospectively. So I think the Fed has no cause to hike rates. The language, the hawkish language, sure, I can understand, and maybe it was a signal, to the White House as well that they'll do what they want to do. But I think ultimately they won't have to hike rates this year.
Okay, Sonia Martin, Chief Economist at DZ Bank. Thank you very much indeed.
OK, let's move on and figure out what else we need to know this Tuesday, the 23rd of June. Apollo is once again limiting withdrawal requests from its largest non-traded private credit fund for retail investors. Apollo Debt Solutions, which has roughly $25 billion in assets, capped withdrawals at 5% of outstanding shares Monday. The move came after investors asked to redeem nearly 17% of the fund. Oracle has reduced its workforce by 21,000 employees over the last 12 months, a bigger number than previously known. A regulatory filing reveals global headcount shrank to 141,000 full-time staff, and the company says the adoption and deployment of AI may continue to lead to further job losses. And European car sales grew for a fourth straight month in May as consumers snapped up more affordable electric and hybrid models. EV demand is getting a boost from high fuel prices, with the conflict in the Middle East choking parts of the global oil supply story. Sales have been helped by more affordable models from manufacturers such as Volkswagen, Stellantis, as well as Chinese brands led by BYD. And in some ways, this takes us back to the Chinese story. Lagarde's getting concerned about the weaker currency. Obviously, you are seeing the Chinese government. There's a great story on the Bloomberg Terminal talking about this morning, not pushing consumer demand in China, in fact, going in the opposite direction with the fiscal policy. And therefore, they're pushing exports out to places like Europe.
Yeah, there's been a lot of anger in parts of Europe around that absolute same thing. And a really great piece over the weekend about the car industry and the changing nature of the car industry in Europe, and how, not everywhere at all, but it just in pockets now, we're starting to see it just become a contract manufacturer for Chinese car companies, as we've talked to Chinese companies about.
Yeah, and we're seeing in the data, the EV numbers in terms of Germany, for example, an increase of more than 30% in terms of EV sales, offsetting what was essentially flat in terms of the traditional engines, combustion engines, and a big part of that is coming through from the Chinese brands. Because if you want cheap electric vehicles that have some tech in them, then Chinese brands are competing quite strongly. So they continue to build out that market share. That's what the data is showing.
And if you're a European car company, do you try and compete against that, or do you try and play along with it and provide services to those Chinese manufacturers? That's the car story. We'll continue to watch what's happening there. Shall we have a moment to reflect on what's going on with the tech story once again, because Nasdaq futures are now down by more than 2%. So setting us up for not drawing a line in the sand after yesterday's selling, effectively. Another day of negativity on the tech story.
It's not clear what exactly the catalyst is at this point. It's the spend questions around the hyperscalers.
SpaceX debt raises,
issuance.
At the margin, one thing.
I'm always slightly wary of sort of tagging narratives onto story. Is the SpaceX debt story the reason for the SpaceX sell-off, or is the epic rally that we saw in SpaceX stock the reason for the retreat? I don't know.
Well, we're going to get back to the macro after the break, because coming up, as the ECB president says, the bank doesn't need to react forcefully to the Iran war. We're going to talk markets with Matthew Amos from Aberdeen Investment Management. That is next. This is Bloomberg.
anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Minutes to go. The equity market's going to be interesting this morning, isn't it? There are dips and then there are dips. The Cosby is certainly having one of those dips this morning, down circa 8%. It's a big move lower. US futures are moving sharply to the downside as well. Europe, in some ways, protected, but not completely. We are likely to see some of the big tech names here in Europe come under pressure. We certainly are seeing that in the rest of the world. The 50's down by 1.25. The FTSE's down by 1.1. The CAC's only down by 0.8%, but yesterday had a very tough day when it came to the luxury names. What's happening in the bonds?
Yeah, absolutely. The luxury focus was on the market, on the equities yesterday. Let's talk about bonds, and we've talked a bit about how they don't necessarily provide the same kind of haven when you're seeing stocks selling, but we are seeing a bit of bond buying at least today, but maybe not for those reasons. We are seeing some bond buying across Europe, but very small moves, just 1-2 basis points really at the 10-year horizon.
Yes, we did see that rally, didn't we, certainly in German debt yesterday, on the back of the comments from ECB President Christine Lagarde, who says the central bank does not need to act aggressively in response to the Iran war. Speaking to lawmakers, Lagarde expressed confidence that inflation will still return to target.
The shock is too large to look through without jeopardizing our target. But we see no evidence yet of de-anchoring of inflation expectations or second-round effects that would warrant a more forceful policy response at this stage.
Well, Matthew Amos, Investment Director at Aberdeen Investment Management, joins us now. Matthew, do you get the sense that this is a dovish kind of tilt from the head of the ECB? Do you see opportunities in sovereign European debt if this is an ECB that's turning at least a little less hawkish?
Yes, I think so. I think obviously we had the hike 2 weeks ago from the ECB, and I think that was largely factored on where we were with Iran, where the Straits of Hormuz were, where the price of oil is. If we see the continuation of the kind of de-escalation in geopolitics, which we all hope we do, and the oil price continues to move lower, then the ECB have the ability to kind of sit on their hands here. So from our perspective, we kind of look at front ends across Europe, including the UK, and we think too much is priced in here. Obviously, that's caveated massively on what happens in the geopolitics. But yeah, I think there's an opportunity across the piece in Europe here.
OK, opportunities at the front end, and you mentioned gilts. You like gilts. You would be buying gilts at this point.
Yeah, absolutely. Of all the central banks which we think is mispriced, the Bank of England for us is number one. We look at the kind of where we started in terms of restrictive policy. The Bank of England think they're restrictive. They still think they're restrictive, even with inflation expected to go higher. We look at the statements from the various different Bank of England members last week, and from our perspective, two members might have voted for a hike last week. But if we look at the detail of the other members, the people we need to vote for a hike, they seem to us to be pretty dovish. I think from our perspective, as long as oil continues to go lower, then we think that the Bank of England can be very comfortable sitting on the hands for the rest of the year and potentially go back to rate cuts in 2027. The disinflationary kind of trends that we saw pre-Iran still going through. We see that in the inflation data, and crucially, we're not seeing any, as with Madame Lagarde said yesterday, we're not seeing any second round effects. We're not seeing any pickup in inflation because of the move higher in oil. And if that continues, again with the right politics, again we can talk about politics after, but the right politics, then I think gilts are a good buy here, especially at the front end of the curve. Those kind of less than 5-year gilts look attractive to us here.
That's interesting. So, Matthew, you talked there about the reasons you're positive on gilts, and yes, I will come to politics in a moment, but is it very much a Bank of England story for you, actually, the gilt market? Do we focus too much on the politics?
I think if you look at the kind of the shifts, the large underperformance in gilts, obviously we've had volatility over the last 5 years. But when it's been politics, it's gone in and then the gilt yields come back. If you look at Liz Truss, the yields went higher and then they came lower because politics can change direction on the politicians are prone to a U-turn. The things that the gilt market can't react to, and the things that policymakers can't react to, is when we have inflation. Inflation takes a long time to get into the system and get out in the system. We're still kind of not quite recovered from the impact of 2022. So as long as we don't have that inflationary impact from this conflict, which we don't think we are, then yeah, I think we need to focus on the Bank of England, and that should drive gilt yields lower.
Yeah, and you said with the right politics, what message would you have about the right kind of politics right now that would keep volatility muted in gilts?
I think so far Burnham has obviously got off on the wrong foot this time last year with his various comments about in hock to the gilt market, but we've got past that. He has confirmed, or his people have confirmed, that he's going to stick to the fiscal rules, which I think puts a lot of people's fears to the kind of the back shelf for the time being. The idea of when Andy Burnham was talked about at the start of the year, that we were talking about nationalisation, the idea of big gilt issuance to bring private sectors back in house. I think we've moved past that. The fiscal rules are key. He probably could amend the fiscal rules if he wanted to, but I think the fact that he's confirmed the fiscal rules should buy him some time over the summer before he becomes Prime Minister.
If Ed Miliband was Chancellor, would you continue with that view?
I think Ed Miliband probably wouldn't be the gilt market's first choice of Chancellor, but it's all about the rhetoric that he comes to when he comes to the job. If reports are true, it was Ed Miliband who was advising Burnham to weigh down on the fiscal rules, to stick to the fiscal rules, to get out and to talk to people, to say that the fiscal rules are key. Yeah. So I think, Miliband, the proof in the pudding is going to be in the eating. So we'll wait to hear what Miliband has to say.
Matthew, you are basing this, it seems, all on the idea that he is going to stick to these rules. How far can he stray from these rules before there are problems?
Yeah, so I think the fiscal rules, every Chancellor rewrites the fiscal rules. The fiscal rules have been rewritten more times than we've had Chancellors in the last few years. So the fiscal rules are key at this moment because it gives the investors some confidence. But if the new Chancellor and Burnham wanted to change the fiscal rules, then I think he has the ability to do that, but he has to do that from a position of strength. He has to do that from winning the gilt market over. So if, for example, he wanted more money to invest best long-term investment. I think that would be acceptable for the gilt market. But that has to be that on the other side of that, we have to see a kind of chancellor that's willing to make some tough decisions when it comes to spending, kind of day-to-day spending. So there's some big ticket items which weigh heavy on the kind of the UK. If we have a chancellor who on an anti-Burnham, someone who is willing to kind of look at those issues, tackle those issues, then that will buy him some kind of grace at the back end to increase, to spend more, to create some kind of growth policy in the UK.
So, Matthew, just to be clear, the gilt markets, you think gilt market investors would be relatively comfortable with an Andy Burnham and whoever the chancellor is expanding spending if it's carved out on capex, things like defence. That would be the gilt markets and investors would be okay with that.
I think that if that's offset with day-to-day spending cuts. I think we've kind of dodged some of the big decisions in the UK over the last couple of years. Numerous chancellors have dodged the ability. So I'm kind of thinking about the benefit system. Last year, the Labour Party had a go at amending that, but we failed that. We kind of look at a kind of pension structure, things along those lines. If we're willing to kind of tackle some of the big decisions, some of the day-to-day spending, to reduce the day spending, so the kind of the fiscal rule that we talk about a lot, then I think that would buy some grace to kind of to amend the debt rule that Reeves created to allow greater spending to kind of to allow investment, to allow growth in the UK.
Matthew, thank you so much. Thanks for joining us. Matthew Amos, Investment Director at Aberdeen Investment Management. 7:39 here in London. Coming up on the programme, crude extends declines after the US allows Iran to sell its oil on the international market. We will get the latest from the Middle East.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Well, we're doing very well with respect to the Hormuz Strait. We took in more oil yesterday than has ever gone through the strait. You probably see that we have an oil gusher. The strait is totally open. You know that, and we're negotiating. We'll see how that all goes. But we have two things: we have an open strait, and we have a country that will never have a nuclear weapon. Will never, ever have a nuclear weapon.
President Trump speaking at the White House late yesterday. The president, of course, speaking a few hours after the U.S. issued a 60-day license, a waiver, allowing Iran to sell oil on the international market in dollars. The move gives Tehran an economic lifeline as the two sides continue talks for a permanent peace deal. The technical talks, I think, have ended today, but we will get more of them coming. Joining us now is Bloomberg's Abir Abu Omar, joining us from Dubai. This waiver seems really significant, and it tells us a lot about what is happening in these markets. Is the fact that Iran is able to empty its tanks, deliver oil, particularly to Asia, going to keep these talks on track?
Good morning, Guy. Well, yeah, certainly. I mean, what we've seen after the Treasury waived its sanctions on Iranian oil sales, those oil sales, by the way, are primarily crude that was blocked in the Strait of Hormuz due to the U.S. naval blockade and some exports from Kharg Island, which is Iran's main export hub. So our teams have been tracking what has been going on in the Strait of Hormuz, and there's about 30 million barrels of those crude exports that have made their way to Asia. So that's much needed supply, Guy, that has been quite stifled over the past 2-3 months due to the shutdown of the Strait of Hormuz, or the double blockade of the Strait of Hormuz by both the Iranians and the United States. And over the weekend, Saturday and Sunday, our teams have also tracked about 8 million barrels that have been making their way through the Strait of Hormuz. Now, that still compares to about 20 million barrels per day pre-war. So we're seeing a movement in the Strait of Hormuz, or as President Trump has said, oil is gushing through the Strait of Hormuz a little bit more than what we've been seeing over the past few days or so. So positive movement. Now, just one thing to keep in mind, a few caveats, if you were, is that those 30 million barrels, the rate of that movement will probably go down because, as I mentioned, those are blockaded barrels that once we're done and dusted with those, we'll go back to rates seen before the war. And even before the war, 2 million barrels a day for Iran was already high numbers over the past few years. So that, again, good movement in the Strait of Hormuz, what President Trump had wanted in terms of the biggest concession. But when it comes to the state of the talks, and you did mention technical talks, we're set to end today. We know that the high-level negotiators, that's Vice President J.D. Vance and Ghalibaf, the Iranian parliament speaker, are set to go back home, while lower-level negotiators remain in Switzerland for the remainder of the week to negotiate some other concessions. But, Guy, we've been seeing back and forth yet again in this MOU discussion. One primary thing is Vice President Vance did say that that the sides had gone into discussing nuclear abilities in Iran. The Iranian side came out and said, actually, no, that hasn't been the case. Vice President Vance also suggested that the blocked frozen assets that were unblocked by the United States will be used by Iran to buy U.S. agricultural products. Iran has not confirmed that. And then the main sticking issue remains Lebanon and Israel's hostilities on the southern part of Lebanon and Hezbollah's hostilities on the northern part of Israel. Those remain key issues. Now, the situation in southern Lebanon has been a little bit more muted over the past couple of days, but the aggression there still remains. And so it's still unclear what exactly will happen to the Lebanon clause in the MOU, but definitely some conversations going to the direction of trying to end it and reopen the Strait of Hormuz fully, and then continue those negotiations into the next 60 days or so.
Yeah, meanwhile, we have a $76 handle on Brent. We haven't seen those kind of prices since the end of February, beginning of March. Abir, thank you very much. Abir Abu Omar with the latest there from Dubai. Let's broaden the focus and talk about the markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. And Mark, we have to start with tech selling over in the Asia session, down at one point by 10%, in fact, closing just shy of 10% lower on the Kospi. Some people putting a lot of focus on the role of ETFs in the Korean market, some pointing to newspaper reporting around one particular company maybe moving more to DRAM away from HBM. What does that tell us about AI? What's catching your attention in the tech sell-off in Asia?
Yeah, there are a host of potential inputs, and we know that the backdrop of retail enthusiasm or euphoria for the Korean stock market has been extreme for some time. So it's been ripe for some painful volatility. I think what's really notable today for someone who was kind of watching it live was this is the first session in Korean stocks in more than a year that I remember where the bounces were so tepid. So even in other large sell-offs that we've seen over the past year, because we've had a couple of other large sell-offs, we've had very volatile price action. So it would sink and then it would suddenly bounce 4%, and then it would go back down, and then suddenly bounce another few percent and back down. Today, we really just were not getting any kind of bounces at all. It just seems like there was no ammo to buy the dip. And that was a real notable change in price action that made it seem quite bleak. And that's why I think that there's more to go in this.
Yeah. OK. We've seen margin calls. Obviously, they tend to come through later. In terms of the kind of the backdrop to this, how extreme is the leverage situation in this market? If it gets going, how much more juice, as you say, could there be?
I mean, a lot. Look, we know we've got an AI capex bubble. We know that we've got a bunch of stock markets that are leveraged to play on that. And we know that there's massive retail participation and there's a lot of leverage. And therefore, these losses can snowball on the downside and then they can feed into the real economy. Is this the bubble blowing up? That's way too big a call to make. I would say that, as you guys know, I've hated this market since mid-May. I think we are in the end game. But as we've discussed a lot, the end game can normally last several months and involves lots of kind of really volatile periods. It's about a higher volatility phase. So I could see this being an extreme sell-off that lasts for maybe a week or a few days, whatever it is. And we could see 15, 20% drawdowns. But it won't necessarily be the end of the bubble, because I just think we're in that volatile final stage. I'm open to the idea of being the end of the bubble, but I wouldn't be convinced yet.
Is there support, Mark, that maybe comes through from central banks? I mean, yields are down, oil is down again. Maybe we're getting a dovish tilt at the ECB. Maybe the BOE can stand pat. Maybe it looks to cut in 2027. Is that where the support comes through, maybe in the months ahead?
I think it's too marginal. I think that's ultimately correct, that we might have seen the end of the kind of inflationary impulse from the war, assuming that deal continues to hold and talks proceed, which looks very likely. There seems extreme determination from the US side to keep this kind of peace going. So therefore, I think there will be some relief on the yield side, but I'm not sure it's sufficient. Maybe that provides enough for people to have another reason to buy the dip and we get one more big leg up in the bubble.
Yeah, for now, that dip is not being bought, to your point. Bloomberg Markets Live Executive Editor Mark Cudmore, thank you, of course. Remember, you can up-to-date analysis and insight from Mark and the rest of the team. Just go to MLive Go on your terminal. Let's get your stocks to watch this Tuesday and bring in Charlie Wells standing by. Charlie, you're starting with autos.
Yes, I am, Tom, and that is on the back of that news that we have this morning that European auto sales increased for the 4th consecutive month. Now, this could give a potential lift to the sector that has been struggling in the past couple of weeks, because last week we got a warning from BMW about potential softness out of China that really hit the sector. So these sales in Europe could help in this market. And what we know is that EVs have actually been giving a lift to this sector. The sales were up, particularly in Germany. So again, that is on the back of some of this oil price pressure that consumers have been facing. But look into the numbers from some of these European auto sale figures, because what we've actually seen in the numbers this morning is that BMW and Mercedes saw growth from the same period last year, whereas Stellantis and Volkswagen actually actually saw decline. So look for a little bit of divergence at market open in just a few minutes. Let's flip and take a look at Hermes, because this really speaks to a broader story about luxury. Hermes had a bad day yesterday. Their shares dipped some 6.2% at one point. You can see that dip there. Now, that is related to two separate analysts warning about profitability ahead of their earnings next month. So again, we've also got this morning HSBC downgrading Hermes. So this is one to watch. Do they head in the same direction or not? And we see some of this analyst commentary talking about how they were maybe a little bit premature on analysis of Hermes. In January, of course, we did not see a lot of the geopolitical tensions coming at that point. And the key question for the luxury sector really is, if that conflict in Iran wraps up, do we see a recovery for the likes of Hermes, for the likes of its competitors, or are there structural problems that continue? That's really what a lot of investors are reckoning with right now and in the weeks ahead. Let's end on Sanofi, because they had a really bad day yesterday too. Their shares were down actually to a 6-year low. I want to bring that up because you can just see them really down, struggling there. That again is related to AbbVie, one of their competitors, buying a firm that could actually eat into the drug pipeline for Sanofi, particularly one of their blockbuster drugs. Now again, we've got news this morning from Sanofi that the EU has approved a treatment from Sanofi for multiple sclerosis. Do we see dip buying? Do we see a little bit of upward movement on the back of that EU approval? That's a really big question as we head into open.
Charlie, thank you. Bloomberg's Charlie Wells, of course, with some of the individual stocks we're focused on. If we take a step back and look at some of the sectors that could be in focus, it does look as if it's shaping up to be a bit of a tough day for Europe. Of course, the inputs from Asia look tough, but sometimes that really cross into tech is not all that pronounced. But we do see DAX futures down quite substantially, down by more than 1%. AEX futures down by more than 1%. And we also have a weaker oil price, which means that London won't necessarily provide any counter, and FTSE futures are also under pressure this morning.
At an index level, do you just sell at this point? It's kind of a lot of this selling will be sort of program trading at that kind of upper level. Single stocks, it's going to be interesting to see how it feeds through and how personal it gets, almost kind of on the individual
do you
stock
do that?
level.
Do you do that before Micron earnings come through?
Yeah, that's an interesting point.
And PCE as well, of course, on Thursday. I think that's when the PCE data comes through. Micron at the end of the day on Wednesday. But currently, the European tech sector looks to be set for a challenging day after, what, a 10% drop right now over in Korea.
And how much of this is fundamentals around the AI trade, and how much of this is the functioning of ETFs in Korea having a kind of risk?
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Okay, here we go. We're a couple of minutes away from the opening trade here in Europe. This was yesterday's session over in the United States. We drop early and then we go sideways. This morning, though, you look at what's happening with futures and they are still and increasingly negative. And that tells you that the dip is not being bought. This has legs. Potentially this is being driven by something out of the States, so it's definitely being driven by something out of Asia as well. But the combination of the two points to a negative picture, Tom, here in Europe.
So brace for that sell-off then, with European stocks 50 futures pointing lower by 1.2% right now. We focus, of course, on the tech story, but also maybe the miners as well, given what we're seeing in terms of selling coming through for the likes of silver and copper and gold as well. FTSE 100 futures then, in that context, pointing lower by 107 points, a full 1%. DAX futures looking to drop 300 points, currently pointing lower by 1.2%. The handoff from Asia, to your point, Guy, has not been pretty. Anna, what are you looking at?
Yeah, well, let's pick up with that thought, because we could see some negativity around the tech names here in Europe as a result of that heavy selling on the Kospi, down by 10% towards the end of the trading day over in South Korea. So what kind of impact will that have? And plus, of course, the rotation trade that we saw yesterday out of hyperscalers into semis over in the US. So a couple of themes going on there. What does that mean for European tech stocks? We'll watch the AEX, we'll watch the DAX. Oil stocks in focus as well, as oil prices are weaker. Signs of tentative progress, that Iran waiver signalling peace talks, making some progress, signalling also more energy into international markets. And so the oil price is down by 1.4%, 76 the handle on Brent. And autos in focus then, guys. We've had European car sales. Growth has slowed as inflation pressures have been mounting, but maybe that's the story in the rearview mirror.
Got a lot to fold in this morning, haven't we? Let's talk about what we're going to see. Let's give you some numbers, give you an idea of what is actually happening. Are the futures telling us the right picture, giving us the right picture? Let's show you what is happening. So the FTSE 100 expected to drop this morning. Got an oil price story. You don't have much tech, but you've got a narrative around the world of equities under pressure, which I think is an interesting one. So the FTSE 100 just beginning to drop a little bit. The Stock 600 is already down by 0.5%. We're looking for more than 1% or around 1% in terms of the drop that we are going to see across these European markets. Yesterday, the CAC was under pressure as a result of a big drop in Hermes. Today, you could see Remy under pressure. It's going to be interesting to see how that story develops as well. The CAC is down by 0.8%. But look at the AEX. We're down by 1.25%. How much of that is ASML? How much of that relates to this chip story, Tom, that we are seeing out of Asia?
ASML is currently down a little over 4%. So it's amongst the biggest laggards across your sectors, technology, as we expected. So tech as a sector amongst the biggest losers, down 2%. And ASML is certainly playing that part on the downside with that loss of 4% right now. Basic resources also taking a big hit. That sector is the biggest loser. 2.7%, 2.8%, so almost a 3% drop for basic resources. Again, we've been seeing that pressure coming through, particularly in terms of silver, gold, copper and iron ore as well. The three sectors that remain in positive territory: personal care up 0.3%, food and beverage up 0.2%, healthcare up 0.2%, slightly defensive tilt then. Just three sectors so far in positive territory. The biggest losses coming through for basic resources, tech and autos.
Yes, the basic resource trade quite substantially lower, down by 4.6% on the likes of Antofagasta, down by nearly, 3.8% on Anglo American. In terms of the individual movers then, we'll pull up some of those, take a look where we are are there. Yeah, defensive flavour to the upside with British American Tobacco and Sanofi, the two that have popped up on that board. There's the tech sell-off in the shape of ASML, linked to Schneider Electric via AI as well. And then there's the basic resources story for you. And interestingly, another day of negativity, and apologies if you mentioned this already, Tom, another day of negativity on the luxury story with Hermes down by 2.7% in this morning's session then, Guy.
Yeah, it's fascinating. SML is easily the biggest points drop by a mile on the stock 600, down by 1.2 points in terms of the drop that we are seeing. So, yeah, we're seeing significant loss. It's a really obvious trade this morning, isn't it? You head for the defensives, you head for the pharma stocks, you head for the food producers. All these kinds of names are doing relatively well, and you get out of banks, it seems. Banks are under a little bit of pressure, but as you say, it's the resources story, but mainly it's the tech story this morning.
Yeah, mainly it is the tech story. So let's start there in our conversation with Mark Dowding, fixed income CIO at RBC Blue Bay Asset Management. So with your fixed income lens, Mark, I wonder what this tech selling means to you. There are so many themes going on here. There's a lot of volatility created by ETFs in Korea on single name stocks. There's a focus on the Hynix product mix, which is being attributed for some of the selling over in South Korea. There's rotation within the US tech trade. I don't know what if any of that matters to you. What are you watching from your perspective from this sector?
Yeah, look, if you stand back a little bit, I think what you would say is that some of the recent performance in stocks has been highly speculative, fueled by a passion from retail investors for short-term gains, looking at momentum. This is the way the markets have been behaving and operating. And you see that, I guess, writ large in something like the behaviour of the SpaceX IPO and the big move up and the correction back down again. And this is what we're seeing in terms of market behaviour. But the one thing that I would say as a fixed income investor standing back from this just a little bit now would be it's not fashionable to remind retail investors of this, but actually stocks with very high multiples, very high PEs are long duration assets. And long duration assets are going to be sensitive to changes in the long-term discount rate that we see coming through from the bond market. So where you do end up with bond yields moving higher, where you do see those discounts rates moving higher, inevitably this is something that should weigh on the valuation of stock markets. It should actually cause financial conditions to tighten somewhat. This is effectively how monetary policy is meant to work, and we can't just be going to the party, going crazy all summer, sending the S&P to 10,000, can we?
So this is good for us?
I think it's healthy long term, yes. We may not like it this morning, but actually it's healthy behaviour because you don't want to have a build-up of speculative pressures run ahead of itself too much, because then if prices do run up too high, then the correction back down to earth will be more painful as and when it comes. So from an economic point of view, steady as she goes is always better than this crazy behaviour that we've been seeing in the course of the last few weeks.
Mark, can I just show you a chart? I want to bring up dollar yen. We're getting a move this morning. You can probably see it here on my screen. Would it be surprising to see the Japanese in the market this morning?
In many respects, no. I think ultimately the Japanese authorities are under pressure here. Ultimately, the story on dollar yen at the beginning of the year was that the yen's a very undervalued currency, but there was a hope that actually Japanese interest rates would be gradually moving higher as interest rates elsewhere in the world were moving gradually lower. But that's not now the backdrop. You now have a case that you have this gradual normalisation in Japan, but other rates elsewhere are moving upwards as well. So that rate differential is not closing, and without that closing you continue to see pressure on the yen, and intervention can hold it to a point, but clearly north of 160 we've been in this intervention zone. There was a meeting yesterday with Besant and the Katayama, the Japanese Ministry of Finance official, speaking to the idea of intervention. So they probably need to do something, would be the message from the markets. Whether this is actually intervention that we're seeing this morning, right here, right now, it's more maybe the threat, the idea of intervention that's got markets guessing, but we're certainly in that zone here and now.
Right here, right now, to quote Fatboy Slim. Thank you for that. Do we just repeat this cycle then? So they intervened in April. They may intervene again now, the financial authorities, the finance ministry in Japan. Until that rate differential closes, do we just get a repeat of this? Because the kind of consensus view is that intervention is only works for a short period of time until that changes. Is that what we see now for weeks and months ahead, until that dynamic changes, until the rate differential closes?
I think effectively so. Either you see the Japanese authorities agree to actually accelerate the pace of monetary policy normalisation, but that doesn't seem likely because Prime Minister Takaichi wants to run a dovish monetary policy stance, and so is in no inclination to actually hurry up. But the one thing that's interesting here is if the yen starts sliding again, that's really going to hit Takaichi's popularity. And if it hurts her popularity, her position within the LDP will be weakened, and she can't afford this to occur. So she may end up becoming persuaded that the BOJ should be allowed to normalise rights more quickly, but that may happen only after we see another bout of yen weakness. So from that point of view, whereas earlier in the year we thought that the yen had good asymmetry, you should be buying the yen north of 160, betting on that intervention. Here and now today, I think it's anyone's choice, and I'd rather not be playing in the yen just at the moment.
OK, so not playing in the yen just at the moment. What about gilt markets? Are you interested in buying gilts? The yields have actually come down in the last few. Well, actually, no, yesterday and today. Today, the gilt opened down 3 basis points at the 10-year horizon. Friday looked different. We saw yields across Europe going a little bit higher. And last week, in fact, we were pricing in the more hawkish Fed. So things looked a little bit different. So what's the gilt view at this point?
So, on the one hand, I'd actually say that the valuation in gilts looks interesting, and certainly at the front end of the curve, you're pricing a couple of rate hikes in the context of the UK, and against a weak economic backdrop, those rate hikes may end up not being delivered. So, from a valuation point of view, I think gilt looks interesting. The problem that we have is the politics, and we need to remind ourselves that the reason that Starmer is out, Burnham is coming in, is because there's a desire to change policy. That desire to change means more investment, it means more spending, it means more taxation. And I think we're kidding ourselves if we think that we're going to end up with Wes Streeting in as Chancellor and nothing's going to change and therefore the bond markets don't need to worry, because you wouldn't be sort of changing tack with PM in the first place if the status quo was what the party wanted. I actually think that you're going to see more decisive break to the left. I do think that there'll be a desire to tweak the fiscal rules, to do other things to move money off balance sheet. And I think that bond market at some point may end up testing the credentials of Burnham here. And so from my point of view, particularly at a time when a lot of other investors are long and wrong in gilts, I think the market could be vulnerable to more of a correction. So I'd stay away from gilts at the moment and only be a buyer on more material weakness would be my idea. OK,
and a buyer on reassurance around the fiscal landscape and the naming of a chancellor that may be more bond market friendly, would that not be enough?
I'm not sure that's going to be enough. I think that we need to see what is actually done, not what is said. It's the substance over the style is going to be what matters. And I don't fundamentally believe that Burnham's going to be coming in here and doing nothing. So what is he going to be changing? We need to see the substance of that. Are we going to see an agenda where some of the spending delivers growth? Because in the past, spending hasn't delivered growth. So it'll be a question whether Burnham can get markets on his side. And I want to wish a new Prime Minister well, but I just think we need to be cognizant of the fact that in the country, the taxation burden is already very high. We need to be aware of the fact that higher spending on benefits has not been doing anything to actually help growth. So can we get more of a pro-growth agenda? In that case, he may get more of a pass. But I guess my concern is that markets could well be in a situation where they don't want to extend too much trust to a new PM.
We're a few minutes away from French PMIs. They're going to be interesting. Did Lagarde sound dovish to you today? Yesterday?
So I thought Lagarde was a bit dovish, and from that point of view, I think this comes on the back of Philip Lane speaking just before, seeming to acknowledge that maybe 2.5 is the within the zone of where neutral rates are in the context of the Eurozone, and that may point to another rate hike to come. We're obviously at 2.25 at the moment. But I think that Lagarde's comments yesterday that no sort of additional severe sort of policy action was warranted, to me, very much is telling us we're not going to be getting back-to-back hikes. We won't see a hike at the July meeting. It'll be more a question when we come to the September meeting, whether inflation has peaked and is starting to move a bit lower, or whether at that time inflation pressures are still elevated and they want to go again.
from the ECB to the Fed, you were telling us in the break that the Fed arguably is the most dispersed set of views, and we're not going to get that forward guidance that we have been getting, and that's a change, and that makes it more challenging for the Fed. I mean, things could go either way. How much clarity do you have on the Fed's next steps at this point?
So when it comes to the Fed, I think the difference in the US economy compared to what we're seeing in Europe and elsewhere is we've got a strong economy. We've got inflation that's been above target for more than 5 years. You look at the economic data in the US, there's nothing to tell you that monetary policy is currently restrictive. I mean, look at the behaviour of stocks. It's very symptomatic, if anything, that monetary policy is relatively accommodative at the moment, not restrictive. So in many respects, it's very understandable that the narrative should be around tighter monetary policy being warranted. And if you took Walsh at his word and he really wanted to drive inflation back to 2%, back to the target, you could see how you might need to price in a series of rate hikes, maybe as much as 100 basis points over the course of the coming year. But on the other side of this, there is maybe this thought that actually Walsh is less worried about getting inflation to 2.0. Anything with a 2 handle will suffice. There's also this, he cares about the left of the decimal point, not the right of the decimal point. That's what he's told us. Furthermore, I'd also say that when you look at the inflation dynamics, if oil is coming down, inflation may be peaking. So if he's able to defer with his task forces for the next meeting by September, if inflation is starting to come down again, you could see how the Fed chair could actually use the excuse that inflation's now moving in the right way, and he could actually continue to sit on his hands and defer action. So it's making policy more uncertain. But the other thing that I'd say about this is it means that every meeting we go to now is effectively a live policy meeting. And so that's making things a little bit more exciting for us over the summer, I'd suggest.
Nice to see you, Mark. Thanks for stopping by to see us.
Thank you
We appreciate it. Got through a lot of ground there. Mark Dowding, Fixed Income CIO at RBC Blue Bay Asset Management. Let's take a quick look at the markets. I just want to show you ASML and just show you what is going on. First of all, give you an idea of what is happening with ASML and Schneider. As you can see, they are both under pressure. They're off their lows. Let's go to the individual stock story. Charlie.
I look at all of this red in the tech space here in Europe. So what we're seeing this morning really is that Asian tech sell-off spilling over into Europe. You can see some of the biggest names. Some of those names that have been linked to that AI trade in the red this morning. I'm looking at ASML. We've got BE Semi, Infineon as well, all in the red. So this really seems to be the dominant theme emerging here in Europe this morning, that Asian tech sell-off spilling over into Europe. Let's flip and take a look at something else that's been a little bit surprising this morning, the auto sector. I want to bring that up because we're actually seeing a lot of red here. Now, this is not necessarily expected, right? Because we just got those numbers out this morning showing that 4th consecutive month of growth in the European auto space, but we're not seeing that reflected here, right? Is this risk-off sentiment? Is this something else? Is this concerns about that consumer? Again, this is not what we would have expected going into this morning, but we're seeing a lot of red in the auto space. I want to turn and look at another really important European industry, luxury. Let's bring that up because, again, a lot of red here. Are we seeing risk-off sentiment across the board? I think that's the question to ask as this day continues. Hermes and L'Oreal, they both got downgraded from different houses this morning. There's been concerns about European luxury. There's a concern if this Iran war ends up wrapping up, which has really been hitting these brands. Do we see more structural problems beneath? Do we see slowness from the Chinese consumer? Do we see inflation concerns hitting? So again, these downgrades really seeming to hit these luxury companies. Flipping to Sanofi, because this is that French drug maker. They had a bad day yesterday. They hit a 6-year low. They're in the green this morning, so not necessarily expected, but they just announced they got approval from the EU for a multiple sclerosis drug. Is this that, or is this dip buying? That is the key question.
Charlie, thank you very much. Charlie Wells with a breakdown of some of those stocks on the move. Also on the move, the French macro story and a little bit of improvement at the edges on the services side, but still in contraction territory. So we've improved from 44 prior was the reading on French services to 47.4 now. That takes the composite up a bit as well from 44.9 to 47.6. So that is an improvement, but it's still below 50, still in contraction for services. The manufacturing story looks a little bit more robust in France.
Frail, fragile. I think those are the numbers that are being used by Bloomberg Economics. This is a diffusion index. Yes, it's getting better, but it's still contracting. It's just contracting at a less fast rate. And that's the point here. The French economy is still under pressure. Services are under pressure. Takes us back to the ECB. What does the ECB do with this? Can it hike? in this kind of environment.
Yeah, euro dollar currently 114, very modest move higher in the single currency, not significant. 114 right now on euro dollar. Coming up, let's get back to the tech story because SpaceX falls for a third day.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back. So tech and the sell-off there is front and centre for us this morning. It's been a brutal day over in Asia, with particularly the lens on the Kospi, which is down around 10%, and the read across then to European tech, and you're seeing the losses coming through then for the likes of ASML down close to 4%, Infineon dropping around 4% as well, ASM, ST Micro, all the big tech names in Europe taking a hit as a result of this turn in sentiment under pressure then. Let's bring in senior strategist Neil Campling for the take on what is driving this reversal. Doesn't seem like the dip buyers are back, and they're not in force, certainly. We've seen the ripple effects. Is this going to be sustained? What is? We haven't really pinned down what the catalyst is. Is it a multitude of factors, or is it one thing that stands out to you?
Overnight, since the US went home, I think there's one story, which is primarily coming out of local South Korean press. And it's talking about Hynix basically moving some of the focus of capacity to the more commodity end of DRAM memory, as opposed to these high-valued, called HBM4 chips. So if Hynix is increasing capacity in commodity and taking capacity away from these super high-margin, super high-priced AI chips, the big question investors are saying is, why is that? Is there is there signs that the AI trade or the momentum side of things or the cost dynamics aren't quite as rosy as they were first predicted. So this, to pardon a pun, but is this the sort of a canary in the AI chip mine? That is a question investors are going to have, and I think it's why the Nasdaq futures have taken a significant leg lower this morning. So it could put even more pressure on Micron's numbers tomorrow night.
Is it a tech problem or is it just a market problem? What goes up must come down. We'll talk about SpaceX in a moment.
Yeah, well, it is certainly these momentum factors. A lot of these momentum names and these baskets are up triple digits year to date. So we've had huge amounts of rises. Now, if you look at the Mag 7 stocks, they've become a funding trade for the semis and the AI on the other side of the AI trade. So it's kind of like the AI buyers, who are these hyperscalers, versus the AI sellers, who are the chip companies selling to them. There is something going on within this dynamic, so it's something to watch for. When we've got token prices as well that have been coming down quite significantly from highs, when companies like AT&T and Uber have been telling their own employees to slow the spending on the tokens because costs are getting out of control.
Yeah, absolutely. So that pricing on tokens coming down, and that has an impact on those hyperscalers. And we've had Masayoshi-san, I know, talking about how he doesn't think that the answer is data centers in space, which maybe undermines some people's thinking around what SpaceX is valued. Let's talk about SpaceX, because they are that is a company that is now going to be issuing investment-grade bonds. This is for the first time. There's lots of other companies in this space doing it. It's a trend. Is that also potentially causing some volatility for stocks?
It certainly causes volatility around the hyper momentum in the sector. I think the big question, again, that investors will have around this particular instrument is why are they coming back to the market for debt and bonds when they've just raised all this money through equity? Why not do it all as part of the same package? It just shows that the spending is going to be significant and for many years, I think, for this particular ecosystem. And that's causing some concerns.
Yeah, that's Steve. Thank you very much, Steve, for stopping by. Neil Campling joining us on the tech story. Let's talk about the tank story. European tank maker KNDS is expected to announce its IPO possibly as soon as today. Could be one of the continent's biggest listings in years. It comes after France and Germany confirmed a joint governance framework under which both governments would hold equal stakes. I'm joined now by Charles Capel, Bloomberg European Equity Capital Markets editor. So getting over that kind of deal with France and Germany appears to have unlocked this. Are we good to go now?
Yeah, we are just waiting for the intention to float statement, and it is essentially a matter of time. The bankers, the advisors running the deal, they're going to be looking at the markets, they're going to be trying to find the ideal moment to do it. The thing that they do have sort of at the latter end is that the slowdown amongst investors, amongst bankers over the summer is sort of looming. Yeah. And IPOs are quite a long, burdensome process, and so you need enough time to complete that entire share sale process and the listing before everyone logs off for the summer and heads to the south of France.
What? That's a nice idea, isn't it?
Why do you need to go to the south of France? Is my question.
It's hot enough here. I'm going to Scotland.
This is the revival of the UK summer tourism story. That's quite the shift, isn't it, from tanks? Let's get back to the tanks. Yes. What is the valuation, Charles, that they're aiming for? How does that compare to peers? The structure is interesting, given the government ownership. Yeah. What is coming through in terms of what they're targeting?
It's really interesting. The number that's been mentioned a lot recently is around the 15 billion euro mark. Now, that's it's tricky because generally, when you have an IPO, you offer it as a discount, and generally you want to offer a discount to their peer. Now, their main peer is Rheinmetall, which has been on a bit of a tear this year. But as I said, it's a moving target. And at the start of this year, we had a big rally in the European listed defence space. That's come off the top quite a lot now. And so when you look at, for example, CSG, who might be another peer, they listed right at the start of the year when European defence stocks were quite hot. They listed at 25 billion euro valuation. They're now trading at around 13.75 billion euros. So not quite what they were, and KNDS is going to have to factor that in. And we've seen that in some of the estimations around the value. At one point, we were looking at 25 billion euros for KNDS. Now it's more around the 15.
OK, Charles, thank you very much indeed. So that tells you a broader story about sentiment towards that sector, doesn't it, on KNDS? We'll watch that story throughout today as well. Charles Capel, Bloomberg's European Equity Capital Markets editor. Coming up, we discuss how AI is changing the banking landscape with Marco Argenti, Chief Information Officer at Goldman Sachs. Marco's with us around the desk.
just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome back. This is the Opening Trade. We are 30 minutes into the Tuesday session. Risk off across the equity markets. Then the handover from Asia has been rough. Currently across the benchmark, drops of 0.9%. Tech, basic resources, the miners are under pressure. The autos are under pressure. The selling is pretty broad. Right now, the DAX is down 1.3%. Amongst the biggest losses coming through for that index then. The CAC currently down 0.9% over in France. 0.7 is the drop here in the UK, 74 points. So that is the read across the markets. Again, the sell-off, the anxiety about tech, with the cost be down around 10%. We have some economic data as well to factor in on the macro level. We have Germany PMIs coming through. We had the French numbers. Now we have Germany updating in terms of June composite PMI falling to 48. The forecast had been for 49.7. The improvements had been there for France. Services still in contraction for France. Manufacturing ticking up a little bit. But again, this is pointing to, as you said, Guy, fragility when it comes to the data out of Europe.
Yeah, so much for that German fiscal stimulus story driving an economic recovery. We're not seeing that. We're also not seeing a recovery as a result of what we are getting out of the Gulf. OK, let's turn our attention back to what we're seeing in terms of the European landscape. Tech is under pressure. Tech is under a lot of pressure. Index selling, we're certainly seeing that as well this morning. The ratio isn't particularly good. 123 up, 458 down. So you're looking at a 4-to-1 ratio on the downside. What is interesting as well is that the volume was big in Asia. So the selling was substantial in Asia in terms of the volume story. A little less here in Europe, but nevertheless something to keep an eye on as we work our way through the session, that AVAT function on your Bloomberg. Let's talk about the leaders. Food and beverage is doing relatively well today. Heineken's got a new CEO. That stock is up by 2%, but that whole space is kind of doing well today. Frontline is up as well. The shippers are doing better. Look at Roche this morning. I use it as being emblematic of a defensive bias in a market this morning. You're looking at healthcare doing well. Food and beverage is doing well. That's the picture on the upside, but there isn't much upside in Europe this morning. There's a lot of downside. Let's talk about ASML, the giant. It's by far and away the biggest points drop when we see what we've got here in Europe today. ASML is down by 4.4% right now, and really driving the point story down. The miners are also under pressure. Look at Glencore, down by nearly 4%. The car makers are also under pressure despite slightly better data out of Europe this morning. Stellantis is down by nearly 4%. So there's a lot of downside this morning out of the European equity space. Maybe not as much as we've seen out of Korea, but certainly some significant moves to the downside, Anna.
Yes, Guy, let's get up to date on some of the other stories we're covering then this morning. Oil has declined after the US issued Iran with a 60-day license allowing it to sell oil onto the international market. It's an economic lifeline for Tehran as the two sides continue talks on a permanent peace deal. Iran welcomed the waiver to allow energy sales after years of punitive sanctions. Apollo is once again limiting withdrawal requests from its largest non-traded private credit fund for retail investors. Apollo Debt Solutions, which has roughly $25 billion in assets, capped withdrawals at 5% of outstanding shares on Monday. The move came after investors asked to redeem nearly 17% of the fund. And Oracle reduced its workforce by 21,000 employees over the past 12 months. A bigger number than had previously been known. A regulatory filing reveals global headcount shrank to 141,000 full-time staff. And the company says the adoption and deployment of AI may continue to lead to job losses. Tom.
Well, meanwhile, global tech stocks, of course, as we've been discussing all morning, pulling back on growing concerns over the unprecedented AI infrastructure spending by US hyperscalers. This as companies continue to roll out AI that is changing, of course, how employees work. Goldman Sachs among them. Join us now, very pleased to say, is Marco Agenti, Chief Information Officer at Goldman Sachs. Marco, you've put out an essay on the Harvard Business Review talking about how to adjust and how to change around your job, how employees should be thinking about adopting AI, what it means for their work. We want to get your views on that, but I want to start with what's happening in terms of the broader sell-off today. Do you think, are you worried, does AI have a cost problem?
I think AI right now is at the stage in which obviously you need to weigh the cost versus the benefit that you're getting from it. In our case, we've seen definitely a clear impact, for example, on developer productivity, which happens to be one of the largest spends for most banks, but for us in particular, we have about 12,000 technical staff, over 45,000 employees total, and that's really where we started to see real advantage. So to me, the point is not too much about how much you spend in absolute terms. Of course, the number of tokens is growing, but at the same time, we're seeing productivity going up actually more than proportionally to the spend.
So you're spending more on tokens, you're not cutting back on tokens at Goldman?
We're definitely spending more on tokens than we were spending like a year ago, for example. But at the same time, we're also seeing way more productivity gains than we were seeing before. And so I think for us, the real question is not too much about how much you're spending with tokens, but what are you spending tokens for? Are you actually doing it for doing more productive work, or are you spending it to mostly do experimentation that might not yield to tangible results? And so the very first thing that we look at is, okay, what is the token spend by application, and are those applications actually translating into positive ROI? And that's really the calculation. One thing that I always think about when we talk about token spend is also the following. There is a sort, you might think you're saving money now if you're using, for example, a lesser model, but you might be accumulating technical debt, for example, by having code of lesser quality that you might have to fix in the future. So there is a net present value of essentially like your token investment, which needs to come into the equation. So it's not as simple as just looking at the money and the bill coming in. You really need to look at the long-term effect of your spend.
Do you think closed models or open models, open source models, will ultimately win? Just in terms of the efficiency?
I think there is no tyranny of the or there, meaning that there is a place for both.
Okay.
And as you know, today, you're not just using one model when you do work. You're using what they call a swarm of agents. And so each agent is generally specialized on a specific task. And so generally what it's called the orchestrator, like the master model that decides which agent should do what, you generally want to have the maximum capability there, and you might want to use the latest frontier model. But then some of the other agents might do work, for example, I don't know, refactoring some code or putting a new design on 100 websites, etc., things that are more repetitive, which are well within the capability of models that might be slightly less capable, but definitely much more cost-effective.
Coming back to the kind of the cost argument at the moment, it seems there's inflation rate within the chip space at the moment is epic. There's a limiting factor there. There's a limiting factor when it comes to electricity. What do you think the limiting factors are going to look like? Do you think we get past those limitations? Do you think we get to the point where costs can come down quite sharply, that we can... And do we need to go through that kind of, it gets very expensive and then it comes down again, for AI really to fulfill its purpose?
I honestly think they were still pretty early in terms of AI capabilities. Even if they look incredible today, if I just look at what they were a year ago and what they are today, so I think there is still a lot of space to be claimed by the frontier for sure. And with regards to what is the biggest bottleneck. Definitely energy. I think it's what generally is perceived as the biggest bottleneck. But let's look at how token efficiency has evolved over time. And if you see like the latest chips, they are roughly like 10 to 50 times more efficient than the previous generation. And so the question is, is that going to go down faster than the limitation that you have? I have to say that this is kind of the moment of right sizing token spend. Like I would say, there is a lot of optimization that companies didn't do at the beginning. There is an old saying that's like, choose when to optimize. You don't want to optimize too early, but now it's time to optimize.
So what do you mean by that? What does that look like?
Look like that at the beginning, when you're launching something new, you want, for example, developers to be excited about changing their habits, like back to kind of what I wrote in the article. You kind of want to give them essentially like free choice of which models to use. Then when it comes to, you're now into processes that are more defined, you're now into a phase where you can afford to optimize and say, hey, for this particular job, let's actually use a different model, which might be less expensive. So you go from let's maximize the impact of AI and let's maximize adoption into more like, okay, let's now rationalize and optimize your spend. And that's generally... I've seen that, in the cloud, for example. There was a moment where cloud spend was a little bit, like, let's say, a little bit free for all. And then every company put guardrails in place to say, okay, we're using, particular services in the cloud that might be less expensive than others, or we're doing some stuff on premise. And so you get into an optimization phase. Okay. So we went from... the sort of a maximization to optimization, and that's what we're living today.
And does that mean, good morning,
good morning
to you, Marco, does that mean that token prices fall then, if lots of companies are optimizing in the way that you described?
Let me give you, so the answer to that, I would say that probably the average token price is going to fall. I'm not sure if the frontier token price necessarily will fall, because at the end there will be more and more use cases that require the absolute best, but then at the same time there's going to be more expanding use cases that can actually do really, really well with other models that are less expensive. So I would say lower average, but I'm not sure about the peak.
Okay, interesting. And you mentioned that energy is the bottleneck. This is interesting because Masayoshi Son overnight was saying data centers in space, that's not the solution. Actually, we're going to solve this here on Earth. I mean, how are you thinking about this? What are the conversations that you're exposed to about where the energy need comes from? Because this is a sector that's going to require a lot, and a lot of people are investing a lot of money on the future being energy coming from space.
I think we're still at the very early stage of demand. I think the demand, if you look at the penetration of AI, every company right now is still, in the introduction phase of AI. Developers are probably the use case that is more developed at the moment and more expanded at the moment. But then process optimization, companies are just getting started, and then you even like business growth type of use cases like quant research or trading or there is entire industries that are not touched by AI. For example, biology is just starting, material sciences is just starting. And so I'm seeing that the demand curve, if I can kind of judge from our own demand curve, that's actually not showing any signs of slowing down. And at that point, depending on where the efficiency of producing tokens versus the energy capacity are going to go, you might be in any of those scenarios. So I think at the moment it's very hard to predict whether there's going to be we're going to hit the energy wall or not. And if I judge from the actual consumption and everything that is not being realized yet, I think the answer is most likely yes.
Marco, can I take it back to the Goldman story and a comment you made at the top of the conversation about the ROI piece? To be clear, you are finding that ROI at Goldman through productivity, through efficiency, additional revenue streams. That is more than offsetting the cost.
It is, but not for every use case.
Okay.
So use cases that are mature, you can drive them towards positive ROI. That we have proved, for example, in the developer community, where we see, we said that publicly that we see at least a 20% efficiency on a group of developers that is large enough for that to be very meaningful economically. Others that are more in the experimentation phase, they're not tuned enough. You might still not be in the ROI phase, but then you kind of follow a curve for which, with a mix of model optimization, with techniques like caching prompts, with, for example, right sizing the right model to the right use case, etc., you can definitely drive it towards positive ROI.
And a mindset shift amongst employees, it seems.
Yeah, absolutely. The mindset right now is, I think we went from fear to more about, the question is right now, how do I do my best work using AI? That's really the question that everybody is asking themselves.
Data. What goes in? How big a bottleneck is that? Are the data sets good enough? I imagine they probably are at GS, but
I love this question.
Yeah. Sorry, I left it to the end.
Please.
But that's got to be one of the critical factors here. I hear a lot of companies talking about the fact that their data is not good enough. It's not organized enough. It's not ready enough to be able to make this work properly or efficiently.
Data quality is really I think the most important factor that determines the quality and effectiveness of AI. There is no question about that. I have this saying, obviously garbage in, garbage out. Sure. Everybody knows that. But in this case, it's almost like garbage in and what comes out might actually not look like garbage, because with bad data, AI can make it plausible. Yeah, and that's really even more dangerous. And so that's why one of the things that we've been investing on is a data platform that we call Legend, which is essentially like technically a lakehouse, but it's consolidating all our data needs into a place that makes it really easy for the AI to understand. And then we instruct AIs before they give us an answer to really ground themselves onto data. So there is explicit instructions that say, before you say something, just show me the data. And the platform has an ability to create a lineage so that at every single step, you know where the data is coming from. And I think that was a fairly massive investment. And one of the things that I tell people when they ask me, okay, what is the first thing that I should do to get ready for AI? My answer is always like quality of data. The quality of data is really your groundwork, which will determine the success of your AI and ultimately the return on investment.
Okay, Marco, really fascinating insights. Thank you for joining us around the desk this morning. Marco Agenti, Chief Information Officer at Goldman Sachs Group. Coming up, Andy Burnham, of course, looking set to be on the road to Downing Street. We're going to look at
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is the opening trade. Let's dwell on the UK politics story for a moment. Newly elected MP Andy Burnham appears set to become the UK's 7th Prime Minister in a decade. Still some process to go, but he is on that path to 10 Downing Street. The path was cleared on Monday when Keir Starmer announced his resignation as Labour Party leader. For more on the economic impacts of all of this, let's bring in Matt Bunny, who is from Bloomberg Economics and can give us his thinking on what happens next. Matt, we want to come to a question that we ask of lots of people, but we come at it from lots of different assets. So let's get the economist's take. What kind of room for manoeuvre does he have around these fiscal rules? Because he's committed to them, but then there's been a lot of chatter as to whether that's really settled.
So, I mean, committing to the fiscal rules was a sensible move, I think, given bond market's nervousness about Burnham. But he is quite constrained. So he's also committed to Labour's manifesto commitments on tax, which eliminates any of the major revenue raises. So as a more left-leaning leader, we expect he'll want to lift spending. So how he does that will be challenging. I mean, the kind of key targets we've seen kind of discussed looks like land or wealth taxes. These are typically difficult to implement and also might not raise the revenue that they hope for. So the other path he may take is raising a loosening policy in the near term and tightening at the back end of the forecast period that the OBR targets. But any effort to loosen policy in the near term might be received with nervousness by markets.
Let's talk about how you get growth. Cut spending maybe, but that delivers a short-term hit. How do you get potential growth up in the UK? How do you lift that number?
It's the big problem that the UK has been trying to address for a long time. The thing economists would always typically point to is lifting investment spending. Doing that under the current restrictions will be quite challenging. The other thing that's worth noting is that typically the returns you see on this kind of spending take many years to materialise. And Burnham is going to want to have a win, obviously, in the near term as he makes his mark, presuming he becomes the next Prime Minister. I mean, there is hope out there that AI will save the day. Certainly there's great potential there, but it remains to be seen how much that will actually boost productivity in the UK, and in particular then how much that will flow through to government revenues. So there's a real tension there when it comes to the timelines for Andy Burnham.
Yeah. If AI doesn't save the day, or if at least it takes some time, could the BOE save the day for Andy Burnham?
Well, I mean, obviously we've seen oil prices come off, and that's going to create some more space for the BOE not to hike rates. Our baseline call at this stage is for the BOE to remain on hold over the coming year. That will certainly be welcome news. Will it be enough to lift economic growth in the way that Burnham would like to see? Perhaps not.
OK, Matt Bunny, thank you very much indeed. Economist for Bloomberg economics. And 10 years after the UK voted to leave the European Union, join us for a live Q&A hosted by Daybreak Europe anchor Lizzie Burden. Anyone can listen in, but digital subscribers and terminal clients have exclusive access to ask questions during the audio broadcast. That is at 2 p.m. London time.
Tech. Let's talk about tech. Tech's down, pretty much across the board, to varying degrees. That's what it looks like in Europe this morning. And it's actually reasonably ugly in some of the tech names that we've got here. But look at the bottom of that board. That is where Korea closed. That's a sell-off. Now, that's a kind of standard deviation, what is it, probably 2, maybe even 3 move that we are seeing in Korea, have seen in Korea today. Skylar Montgomery-Koenig joining us around the table. What do you think of that?
I mean, yeah, it's a very big sell-off. Maybe you need to put it in context of how big was the rally leading into that. So,
Yes.
you know, you've certainly not undone the significant gains that we've seen so far this year. What I will say is it's a little bit more concerning the price action in terms of, yes, it's big, but also there's been less dip buyers. You're seeing people more hesitant to come in. And I think, you know, maybe it's more encouraging that there's not a specific reason for it. It seems more like it's just froth coming out of the market. What makes me more worried, though, is that we have a couple of event risks this week in the form of Micron earnings tomorrow, which, you know, the markets had a very high bar for earnings to surprise to the upside for that to boost tech. And then you have PCE data later this week. And I think the worry is that yields are weighing on equity markets. I don't think we're quite at the point where in 2022 you had this worry around a massive Fed hiking cycle kind of popping the tech bubble, because we don't expect a huge number of hikes. But it's certainly more challenging from a valuation perspective.
Yeah. Is there something, to your point, I suppose, kind of picking up on it, is there something about this sell-off that doesn't make sense in that over in the US yesterday we saw a rotation out of hyperscalers into some of the chip makers because there's a concern that hyperscalers are passing on sort of, you know, those profits to them in the shape of orders for chips. And then in the Asia session, we see chip makers under pressure. I mean, there have been reasons reported in the South Korean press, but there's something about that doesn't kind of fit together with the Nasdaq down another 2.4% right now in futures.
Yeah, and I mean, perhaps this is just, you know, the big involvement in the market. Generally, you have retail especially buying a big bit of the tech theme, and so you just see tech stocks and you get a little bit more worried about the frothiness in the market. And I think maybe my concern more broadly is that tech is so much of everything right now, right? You have a greater weight within credit markets because there's been so much IG issuance. Within EM is now a tech trade, essentially, right? If you look at the MSCI EM index, the biggest stock in it is Taiwan Semiconductors. That's 14% of that index versus NVIDIA being something like 6% in the MSCI World Index. The top 10 stocks in MSCI EM make up 40% of its weight. So as soon as you have tech going poorly, regardless of what the driver of that is, it creates this kind of broad sell-off that's very worrying.
And yet bonds are gaining, yields are down, oil prices are down, lower yields, that could provide some relief to tech maybe in the days ahead. That's not a dynamic we're seeing right now, obviously.
Yeah, I mean, I think the issue is there's a limit to how much yields can decline. Partly it's, are we going to get enough demand destruction from equity markets selling off to this extent in places that we don't look at as closely from a developed market perspective, in terms of maybe you need to see a lot of downside in U.S. markets, but perhaps that link is more broken than previously because of the inflation issues, because you have a more hawkish Fed. And I think this is very much the issue in that bonds aren't protecting you in the way that they used to. You have a bond equity correlation that's now positive. Yes, you get a rise on the day, but there's a floor because you have hawkish central banks, because you have inflation so high. So you need a lot of downside, I think, in the equity market for that feed through to be more positive.
OK, Skylar, thank you very much. Springback's Skylar Montgomery-Koenig with us with the latest on the markets. And we link it there on the US futures picture because it looks pretty negative. Nasdaq futures down by 2.4%. E-mini is down by 1.5%. So setting us up for a fairly negative baton exchange between Europe and the US.
Dollar's up. Is that the place to hide? Is that the story? You can see euro-dollar weakness this morning and maybe on the back of the PMIs, but is the dollar the place to hide?
Dollar index up almost 0.2% right now. So that is it, the opening trade. The Pulse is up next on a turbulent day for these equity markets. Stay with us.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Well, global stocks slump as investors rotate out of tech. $600 billion wiped off the market cap of SpaceX in 3 days. Now, Andy Burnham, the man most likely to become the UK's next Prime Minister, returns to Parliament and could be in Downing Street by mid-July. Plus, German business activity unexpectedly worsens and the French private sector shrinks again as the Iran war hurts confidence. So there is quite a lot going on in markets. Let's bring you up to date with what cross assets a lot of these boards are doing. Look, stocks are definitely being hit by this big sell-off, dragging global equities lower, I would say much lower, led by this retreat in chip makers that have been at the forefront of an unprecedented AI-driven rally. You can see NASDAQ futures down 2.6%. They were tumbling already yesterday, 2.4%. Attention now shifting to Micron Technologies' quarterly results on Wednesday. We also look at Japan, yen 161.46, and Brent crude 77.15. A couple of things I'd also pay attention to. Look, some of the stocks really that have been heavyweights, whether hyperscalers such as Alphabet can actually justify their colossal AI spending. And you can see that pessimism coming from the US because of AI stocks also filtering through to Europe, with the DAX, the FTSE and the DAX down between 0.9% and 1.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, in a moment, we'll be talking about the faltering tech rally and what else, of course, is moving markets. We'll be joined by Ludovic Subran from Allianz. But first, the latest on SpaceX. Shares down in pre-market trading after slumping for a third straight day, dropping 16%, shedding hundreds of billions in market value. Now, this comes after the company said it was selling investment-grade bonds for the first time. So let's get the latest with our Charlie Wiles. Charlie, good morning. So what's going on with SpaceX?
Good morning, Francine. So we are seeing this share price come back down to earth. This was the most hotly anticipated IPO of the year so far. And we're seeing just yesterday that share price slumping some 16% in a single day. Now, why is this happening? This was so hotly anticipated. Debt has a lot to do with it because the company yesterday said that they are seeking to raise investment-grade debt for the very first time. Bloomberg News has reported that they are seeking some $20 billion in debt. Now, this is an unusual move. This is early in the lifespan of a company to be seeking that sort of debt. Again, the company is not profitable yet. They have been burning through cash. And some of the language that they have used to talk to debt investors, let's take a look at that because it's very similar to what we saw in their IPO prospectus. It is very grandiose. This company is talking about how our mission is to build the systems and technologies necessary to make life multi-planetary. Now, that sounds all fine and well if you're trying to drum up excitement for equity investors. Debt is a very different instrument. Some of these investors could be with the company for up to 30 years. They get paid at maturity. They get that interest as well. Now, what we know about SpaceX, it has been given investment-grade ratings from a lot of these agencies, from these major agencies. But there are questions here. There are bigger questions about the tech space right now. How much these companies, Apple, Amazon, are raising in debt markets. JP Morgan has estimated that those large hyperscalers have raised some $300 billion in debt since November. A lot there. And another big question here, why this debt question feeds back into that share price. OpenAI and Anthropic, they are also thinking about going public later this year. They're keeping a very close eye on the equity performance of SpaceX.
Charlie, thank you so much. Charlie Wells there with the very latest on SpaceX. Now let's talk more about the global tech trade, inflation, of course, and much, much more. We're joined by Ludovic Subran, Chief Investment Officer and Chief Economist at Allianz, and Parmi Olson, Bloomberg opinion columnist, also author, I have to admit it, of one of my favorite books, Supremacy. So thank you both for joining us. First of all, Ludo, when you look at the markets, I mean, it's AI and inflation, but if AI is having a bad day, I mean, it's just complicated to see what happens next.
Yeah, and you know what you just mentioned about how you talk to bond investors, not the same way as you talk to equity people. You know, to bond investors, you cannot promise to raise 20 billion when you just got a 70 billion budget to play with on the equity side. So I think that's where the inflation tech nexus is. I think in the US, there's this narrative that AI is super deflationary. I think in Europe, it's not there yet because adoption costs may be frictional. So there is a bit, you know, the super tense market. I mean, everything is a bit, I would stretched on the valuation side on the equity. And you mentioned it, the earnings season is going to be one to watch because a lot of people are expecting some calming down, back to earth type of rationale. And on our side, and I would say on the American side, there is still this very sticky inflation and central banks seem to be a bit behind, yeah? We have one hike for all central banks, but markets are pricing zero for almost all central banks, from the ECB to the BOE to the Fed. I think there is something that is wrong between what we expect, given the 3% inflation everywhere, and what markets are expecting.
Yeah, and we'll come back to that, and whether it's AI, maybe some kind of overhang that they think we're going to be more productive. But I also want to speak to Parmi. Look, you have some really great columns almost every day on SpaceX, Anthropic. What is the question that you want to ask today on valuations?
Yeah, the big question that's on my mind is how much longer can AI coding continue to carry this AI boom that we've experienced over the last 2 to 3 years? The reason I say that is if you actually talk to companies who are spending money on AI, the lion's share of the use cases is for coding, for their software developers to be more efficient, to be more augmented in what they can produce. That takes up anywhere between 30 and 50% of enterprise token usage, according to some studies. And consultants that I've spoke to also say it makes up the lion's share of the revenue. Now, that's fine. It does seem like things like customer service, back office functions like accounting, legal, marketing, all these things are using AI too, but nowhere near as much as AI coding. And the question is, if that continues for the next 2 to 3 years, is that use case alone enough to continue to carry these valuations, particularly when companies are realizing that maybe if they are using AI for coding, they might be spending too much on it? So we saw examples recently of Walmart and Uber who maxed out their token budgets and had to start putting limits in how much their own developers were using AI to not spend as much. So I think that's a big question, particularly as some of these smaller AI models are becoming more popular. Microsoft just recently made China's open source model, DeepSeek, available on its own platform, which all of these things together could be a problem for the bigger frontier labs like OpenAI and Anthropic.
Parma, we also spoke to Nouriel Roubini, and this is what he had to say about tech and inflation.
People are obsessed with the Fed, whether it's 50 basis points higher, whether it's right now. What's the difference? The key story is tech boom, and that's going to be the most important first-order impact of anything else.
Do you agree with Nouriel Roubini, Ludo? Do we obsess too much about inflation, where actually AI could be game-changing, or do you go to Parmi's point and saying, well, we don't still know, how much of capex will be this return on investment will actually be realized?
Look, I think both have a point. I think to Parmi's point, what is very interesting in the roadshow, the pre-IPO roadshow of these AI companies, they actually start to show these pixels where coding is less than 5% of the addressable market, and then financial services is 18%. And so they're actually trying to go ahead and say, oh, it's not only about coding, don't worry, we have everything else covered. And they talk about replacing 80% of the jobs in some of the sectors by, the next 22 months. So then to Nouriel's point, I think it is an inflation game, not only for what is purchasing power, what is in the pockets of people if their wages are really affected by this. Social protection is very much indebted in most of the countries, and so it's an inflation growth nexus. So somehow, I do believe that we need to keep an eye on this inflation ramification of AI, because this is going to be where markets are going to be pricing, the Darwinian effect of AI. Those that are going to be defaulted, those are going to be getting the super win, those that have pricing power and those that don't. And I think that's really the crux, yeah.
Ludovic, when do you expect AI to actually have a real impact on the economy? Because we're not seeing, we're hearing about maybe people, spending more on capex, but not really changing their hiring patterns. Is it going to be like a seashed moment where we lose jobs, but we become more productive?
The problem is, ex ante, you could try to do models. The problem is policy interventions. Because I guess policymakers will have to get in the game. Everybody's going to have to actually situate themselves pro or against AI, pro or against policies that facilitate AI adoption, or ban some form of layoffs related to AI. So ex ante, I would say it could take 2 years, maybe less. Ex post, I think it could take 5 years, because policymakers are going to be super interventionist, because they're going to be worried about the scattering effect of this on the overall economy and compact of the society.
Parmi, you wrote a wonderful column that really caught my attention, which is basically the AI crisis no one is talking about. Where do you see it? You've seen a shift actually from Dario Amodei, but also Sam Altman, in the way that they speak about the impact of AI on the economies.
Yeah, I think one of the questions is actually, yes, maybe jobs will be disrupted, but to what extent will jobs actually change? There was a great book that came out called We Are Not Machines by an FT journalist, and it talks to a number of people who had been increasingly using AI in their own work, whether they were truck drivers that were now helping self-driving trucks. And it sort of talked about actually the kind of the joy of work and the fulfillment that people get from work is kind of being squeezed out because of all this automation. Now, this is a kind of soft and fluffy and abstract way of looking at the world of work, but I think it is something that can affect how companies do decide to integrate these systems into their systems and processes. So, yeah, I think that's one thing that people aren't talking about. And of course, with the IPOs coming up, this is, I think, the ultimate question is whether these incredibly high valuations can continue, particularly when there's been so much commitment in the spend and the infrastructure build out. We're talking about $8 trillion in commitments to spend and create and build these data centers. And these companies, tech companies, will need to make something like $800 billion in profit just to cover the interest.
Pardon me, I mean, also a question on, Anthropic and the Mythos kind of nightmare or fakes. I mean, are these really too powerful to export to foreign nationals? Like, what, or is it, just the U.S. trying to land grab?
Oh, I think that in a lot of ways, Anthropic has talked itself. It's kind of written this script because a huge proportion of its public statements about AI have been talking about the risks of AI. And they themselves said they didn't want to release Mythos until they made sure that all the guardrails were in place. Dario Amodei has done, you could arguably call it doom mongering about the impact on jobs. So I think in a lot of ways, they sort of talked themselves into this situation, you could say. And so now I think they're sort of paying the price for that. I think there is a real question, though, about the extent to which these AI tools really are a cyber threat. I was talking to a cybersecurity specialist yesterday who actually talks to ransomware gangs on the black market, and they were saying, the extent to which they can integrate these tools and make money from them is still very much unknown. So I think there's a very interesting parallel there with companies, legitimate companies, trying to integrate AI, finding these bottlenecks because their systems are so old, these legacy systems. And you're actually seeing a similar situation on the dark web with cyber criminals who want to use these AI tools, but are finding a real bottleneck in making money off of them.
Yeah. Parmi, thank you so much. So interesting. Parmi Olsen, they're a Bloomberg opinion columnist and, of course, author of Supremacy. We're back with Ludovic Subran. Ludo, when you look at, there's a million things to talk about. There's US-Iran. We don't really know where the price of oil goes. The market seems to have moved past. When you look at the markets and the economies, what do you actually worry about?
I'm worrying about delayed effects because I think markets have priced peace, but the economy is still paying for war, right? I think it will take I think we calculated 4 months for the oil market to normalize and up to 4 quarters for inflation and purchasing power and corporate margins to normalize. So it takes up to a year, right? So there is this delayed effect. Of course, in this delayed effect, a lot can happen because we have this round of elections, we have this political uncertainty, we have also this potential for disappointment from AI. So I think I'm still, bracing or fastening the seatbelt for the end of this year to see how we land. I think we are more optimistic now with what's happening in Iran, but I think a lot can happen, and clearly there are still some scaring effects that have not been fully priced in. Yeah.
But is this a problem with the markets? The markets used to be not the doomsayers, but they used to price risk, whereas now is it money that is too scared to miss out? Is there FOMO?
I think there is a bit of mispricing, at least on the credit market. I'm very concerned about credit risk because I see a lot of insolvencies in the small and medium enterprises going up, and we see spreads super tight. That doesn't make sense to me. There is something wrong. Of course, the public-private credit risk is also a big issue because there are not really good reality check on what's happening on the private market credit risk. On government, it's a bit trickier. I think what's happening in the UK is very telling for me. The markets have not really been worried about Andy Burnham becoming the next prime minister, mostly because there is very little discretion and autonomy. So there is a bit this straitjacket, and I think this is a bit where the problem lies because people are electing people to do some things. So I could say maybe the government risk is also mispriced in some places. That's where
the UK is strange because some of it was maybe priced in where there was rumors of leadership challenge, but actually this is a small open economy. It could really unravel quite quickly.
Yeah, and you saw that a bit on the 30-year. I think on the 10-year, the big issue is the Bank of England. For us, they're a bit behind.
Yeah.
The gilt is one of the 10-year government yield that didn't come back to pre-Hormuz kind of level. There is still a lot of inflation. So the Bank of England is pushing through, which is quite interesting. I think it is a form of disciplining also about fiscal in the UK, but it is really where the main gross inflation nexus play is going to be in the next 6 to 9 months. And a lot of people are going to be watching this space, right? So we expect still a hike by the Bank of England in September just for that reason, just to calm down market, a bit like what the ECB did. It's an insurance hike. I think that would calm down. But on the 30-year, people are quite happy, I would say, with Andy Burnham taking the lead of the UK for the next months.
Let's see what happens when he's in charge and we hear about policy. Ludovic, as always, thank you so much for joining us. That was, of course, Ludovic Subran, Chief Investment Officer and Chief Economist at Allianz. Coming up, the former Manchester Mayor, Andy Burnham, returns to Parliament as the overwhelming favourite to become the next Prime Minister. So we'll have plenty more in UK politics next. And this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Andy Burnham, the former mayor of Greater Manchester, appears set to become the UK's 7th Prime Minister in a decade. Burnham's path to Downing Street was cleared on Monday when Keir Starmer announced he would step aside as leader of the Labour Party. Well, with us now, Rosa Prince, Bloomberg opinion columnist, and we're also joined by Victoria Honeyman, a professor of British politics at the University of Leeds. So thank you both for joining us. Rosa, I love your piece. Good luck, Andy Burnham. You'll need it. I mean, it's simple, to the point. I mean, if he takes, is there a done deal that actually becomes a prime minister? And what will be his hardest task?
Yeah, I think it's pretty much a done deal. There are still some rumblings of people who might launch a challenge, but they're figures who don't really have a great deal of support in the party. So I think it's almost certain he will become Prime Minister, perhaps even as soon as mid-July. If not, there'll be a contest. It'll run until September. The big challenge always is the economy. Those problems that bedeviled Keir Starmer are not going to go away. The reason I said good luck, and of course he needs it, but I also think he's got a chance to seize those opportunities. It's because the great politicians thrive in adversity, right? They can look at a difficult situation and turn things around. So I certainly think he's got the charisma and now the backing of his party, and he's popular in the public, polls show. So why not? Why not make a success of this?
Yeah, Professor, I find him, quite impressive. He's charismatic. He's untested. So, Professor, what do you think his biggest challenge is? Does he have to call an election, actually, general election, I guess, to have more legitimacy, or can he just continue and get the economy back in shape?
He doesn't have to call an election. There is no requirement within the Constitution for him to do that. He can call an election if he feels that it's to his benefit to do so. But I think he's probably going to give it some time, see if he can turn some of the dials on the economy. In terms of Andy Burnham, he isn't that untested. He's been a cabinet member before. He's been a member of the House of Commons before. So he's had big jobs in reasonably successful Labour governments before. So he might only be a few days into this time in his career as a House of Commons MP, but this is actually the second time around for him. So I think he's going to give himself some time to settle into the job before he thinks about a general election.
Rosa, what do you think?
Yeah, I would tend to agree. I think he might not let the whole Parliament run its course, but he's going to want to go in there and have some achievements to his own name. So I think he'll go in, as you say, kick the tyres and see what he can do. The next few days, I think his big missions are to set out his policy platform and get to know his new colleagues. But he's going to need to form a cabinet. He's going to really need to sign up backbench Labour MPs to get difficult measures through the House of Commons. So, yeah, I think he has the tools to do those things, but not easy.
No, not easy. Professor, what do you think are the kind of policies that we'll see from Andy Burnham on the economy? Again, it's a very volatile bond market. It's, fiscal spending is what it is. So how radical can he be? And will he govern as centre-left or more left?
It's very difficult at the moment to know exactly what his policies are going to look like. When he ran in the Makerfield by-election, he was very keen to stress that that was a local by-election on local issues, that he was running to be their local MP. Anything above and beyond that was a debate for a different day. So we know a bit about his views on issues related to the economy. We know that he suggested that he's going to be a bit more left-wing than Keir Starmer. We might get some more spending on things like social care. We might see some moves. But he's very constrained. The Labour Party only won a general election less than 2 years ago on a manifesto. If he is going to veer away from that manifesto massively, then those calls for a general election are going to be much, much louder. He's also got a number of MPs whose seats will be very dependent on him making a success of what happens now. So he really does have a number of limiting factors to what he's going to be able to do. So at the moment, we're not 100% certain. And don't forget, who he has as his chancellor is going to be a massive issue for him and for the rest of the party. That will really set the tone of his direction.
And Rosa, maybe we can take a bit of time to just reflect on what Keir Starmer was plagued by, which he wasn't really liked. He didn't have the popular support. I mean, there was no, I don't know what the exact reason is for him to step down, apart from losing the confidence of his party, that see him and deburn him someone that can actually win the next election. Is that it?
I think that's a big part of it, and not just because all political parties want to win elections. Obviously, that's kind of their reason for being.
You'd hope so.
You would hope so. But I think this time around, the opposition wasn't the Conservative Party, the other big mainstream political party, who kind of swapped power between each other. The alternative was a very aggressive right-wing form of populism that Labour MPs in particular see as anathema. And I think that they felt that the country would go in quite a dangerous direction if they could not mount a credible challenge to that. So I think that was the main reason. I mean, that's what Keir Starmer said himself in his speech. He said, my colleagues thought that I could no longer command the support of the electorate in the general election. I think history might be a bit kinder to Keir Starmer. He did seem to be incredibly unpopular among the public. I never was quite sure why, because he seemed to be someone who was an honest, good person trying his best. But yeah, the poll ratings for him had got really horrible, and I think by the end of the last few days he realised that his time was up.
And Professor, do you think Andy Burnham's first job is to fix the economy or unite the country?
I think those two things are things that will go hand in hand. I would agree with Rosa entirely. I think that Keir Starmer will be treated probably more kindly by history than he is currently. There's a limited amount that he can do, really, and he's done it to a certain degree. I think that there will be those that are looking for Keir Starmer's successor, which will probably be Andy Burnham, to look very much towards the economy, that if they can improve the economy as a government, they can unlock the electorate. The economic issues are really feeding into that more right-wing narrative that Rosa mentioned. So I think that those two things will go hand in hand. There are some difficult decisions that will go along with that. So, for example, the issue of the triple lock on pensions is something that could be electorally very damaging, but economically might move some of the issues for different groups within society. So it's not an easy path, but I think that he'll be looking to the economy in order to gain more electoral support.
Rosa, how radical do you think Andy Burnham will be actually with the economy, given there's so many boxes if he sticks with the current Labour manifesto?
Yeah, well, during the run-up to all of this, he sort of talked a lot of talk about being pretty radical, being quite left-wing. There was that famous quote he gave where he suggested that the government shouldn't be in hock to the bond markets. Well, the bond markets made clear what they thought about that, and there was quite a lot of uncertainty over the Labour conference period in November, which is when he gave that interview. I think he's learnt from that. He's kind of tapped back in recent weeks. He's said that he's signed up to the fiscal rules now. He sort of seems to like the markets again. I wonder if he will do something around the fiscal rules in terms of borrowing to invest. One of his economic advisors, Jim O'Neill, has been talking about that. So I would guess that if he does something radical, it will be in that direction rather than, going for hell for leather and suddenly ramping up borrowing.
All right, Rosa, thank you so much. Rosa Prince there, of course, from Bloomberg, and Victoria Honeyman, Professor of British Politics at the University of Leeds. Coming up, we'll discuss the UK's banking landscape and the impact of AI on the sector with Anthony Jenkins, founder and chief executive of 10x Banking. That's coming up next, and this is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Global stocks slump as investors rotate out of tech. SpaceX slides further in pre-market trading after falling for 3 consecutive days. Andy Burnham, the man most likely to become the UK's next Prime Minister, returns to Parliament and could be in Downing Street by mid-July. Plus, business activity in the euro area shrinks less than expected in June, but Germany slides deeper into negative territory as the Iran war jolts confidence. So we do have a little bit of data. Always good to look at data to have a temperature of the economy. It is in the UK that June composite PMI falling to 49.4. Now, anything below 50 means it's a contraction. At 49.4, I wouldn't make a huge deal, but we were forecasting a 50.5 figure. I know sterling has maybe bigger things to worry about, i.e. a new prime minister, but for the moment you can see it's at 132.19. So with Andy Burnham tipped to be the next prime minister, attention now turns to his plans for the economy. The former Greater Manchester mayor is seen as an unknown quantity by investors, some of whom are worried that he could back a little bit of turmoil, but it looks like he doesn't have any challenges. He could be in place even by mid-July. What kind of economy in the UK do you need? What can the new prime minister do?
Well, of course, in the short term, what businesses care about is stability. And so anything that creates instability is concerning. Now, the markets reacted relatively calmly yesterday. I think it was kind of priced in. But what we can't have is a prolonged period of uncertainty. That's bad for business. But the bigger challenge is, of course, growth. Like many mature economies, we just don't have enough of it. And if we had greater economic growth, we'd be able to pay for better public services, et cetera, et cetera. So that's the big thing. And, of course, business is a key driver of growth. So we need the right conditions to drive growth in the economy.
But Anthony, I mean, I guess the problem is that to drive growth, you also maybe have to step away a little bit from the fiscal rules, right, or the fiscal spending rules that are in the Labour manifesto. So what's the right way? How inventive can you be, given the market volatility, the market pressure, you know, where NHS is on all the spending on defence that's needed?
Yeah. So let's look at this from, you know, what's really going on in the underlying economy. And I saw the tech stocks sold off yesterday, but you know, I've been through so many of these tech shifts that that's not at all surprising. They always get overblown in the short term. But what's really happening with AI now is incredibly powerful. And we can debate, you know, how much the impact will be in the short term and the long term. So the UK, we sit in this, you know, incredibly privileged position. We have great universities, we have a great financial sector, we have a great tech sector, and we're the world's 3rd largest leader in AI. So job one, harness those things to drive growth. If you want to drive growth, you need two things, really. You need access to capital, and you need access to human capital. And we have to make sure that businesses have access to those things. And what that means is, the government needs to create the conditions for that, but it's businesses' job to grow things.
But, I mean, concretely, what does that mean? More immigration with visas? Does it mean less regulation?
I think we've got to be very careful about, immigration, obviously a controversial topic. We've got to be very careful about that. But what we don't want to be doing is excluding talent at all levels. So when people come here to do PhDs in artificial intelligence, we want them to stay on and work in this country and contribute to our economy. I think it's the same with capital. We need to create the conditions where it's not disadvantageous to deploy capital in this country.
But that's what tax is?
Well, of course, it is concerning. Now, people always say, everybody gets nervous when governments putting taxes up. And of course they do. But it goes back to my first point. It creates uncertainty. Oh. What we need to do is we need to grow this economy at a faster rate. You can't do that by ramping down on all economic activity. We need to grow that. I mean, I founded my business 10 years ago. So I've been playing this game as an entrepreneur for 10 years and 30 years before that in big banks. And I know what it's like day on day to grow a business. Our business is a global business. We do business across Australia, New Zealand, Southeast Asia, etc. So we see what it's like in other parts of the world. And we just need to be sensitive and mindful to creating the right conditions. Business doesn't expect a free pass. They're quite happy to pay their way. But as we go through this tectonic shift in technology, we need to make sure we're positioning this economy to prosper.
So what's been most frustrating, actually? So 10 years you've built the business, 10 years since Brexit. We're close to 7 prime ministers in 10 years. What would have helped you out?
Well, I mean, it's true, of course, we had Brexit, which is unique to the UK, but we also had a lot of other exogenous things. We had COVID, we had the Ukraine war, etc., etc. So it's not been an easy 10 years. I don't know if there are ever any easy 10 years. But I think the first thing we have to have is consistency, right? So what I think business would like to see is a government that is focused on growth and focused on a consistent set of initiatives to prosecute that growth and is mindful of the consequences. Every action has a consequence, right? So, yes, we need to raise more tax to pay for public services, but the way you do that has a consequence. So I think a consistent application of policies that are pro-growth would be the most helpful thing. And that, again, goes to things like immigration, because you need to be able to attract the best talent to your universities. You need to be able to employ them after they complete their studies so that we can continue to lead in AI, because I believe AI is going to be the single defining force of the next decade in terms of competitive advantage.
How dangerous is Mythos? So it's unclear, I don't know if they're a victim of their own success because they played it out too much, or whether it's very dangerous, and whether Europe is at a massive disadvantage because European banks haven't been able to play around with the model.
Well, as ever, you have to pass out the hype from the reality here. But the first thing to say is, remember that what these programs are finding exists already. The vulnerability is there. So in the long run, it's good that these things are being discovered. Most organizations operate 3 types of software. They operate software they buy from third-party vendors, they operate open source software, and they operate proprietary software that they build themselves. Now, as Mythos is deployed in the United States, it's flushing out those vulnerabilities in third-party software and open source. And that's already creating a kind of wave of patching that's going on across the industry. And that's got to be a positive, right? The third thing, though, is do you get to apply those tools or similar tools to your own software? Now, when you roll this all back, of course, it's like any security matter, physical security, cyber security. If you have good basics done well, like do we understand who has permissions to access various parts of our software, who can change the code fundamentally, do we keep our software up to date, do we deploy the most recent versions, all of those things. Are we conscious of what our attack surface is in the outside world, do we manage that effectively? All of those good hygiene things, if you're doing them already, you're going to be in an advantaged position. Of course, it's much harder to do that on older software, which is why the things we built at 10x are well positioned for this.
Are you worried that Europe, I mean, there's US and China, I know you say UK is the third country in this, but actually we just don't have the LLMs, we don't have the hyperscalers. So is there a real danger that the UK and Europe is just too reliant on foreign models?
Yeah. I mean, one of the things that we have to acknowledge is economies of scale, right? We all learned it at university. you've got a massive economy in the US, you've got a massive population in China, and these software is naturally borderless, right? So all of these technologies are prone to be deployed where you've got scale. So what we need to do is strike the right balance between benefiting from those things and protecting ourselves where we need to.
Thank you so much, as always, for joining us. That was Anthony Jenkins, the Chief Executive and founder of 10x Banking. Now, the EU and UK are reassessing the timing of a planned summit next month. This comes as key players on both sides of the channel wait for another change of leader in the UK. Andy Burnham, the man most likely to be Britain's next Prime Minister, has publicly backed much closer alignment with the EU and a desire to eventually rejoin the bloc, while the political shifts come exactly 10 years after the UK voted to leave.
There are certain days that change the world. Brexit was one of those days.
British people will have the final say in an in-out referendum.
Watch out, here we go.
One story dominating the news today, and it is Brexit.
Brexit.
But what has been one of the most divisive votes?
It was staggering.
History unfolding before our very eyes.
The population at large doesn't trust the establishment.
The bastion of independence.
Brexit changed the way that politics is done, not only in the UK, but beyond that too.
People want to take their country back.
Passions that are not unique to Britain.
Vote out NHS.
It was a real once-in-a-lifetime moment. But also sort of manifestly an act of economic self-harm.
Thing is, not everyone and their dog arrived at the polling station with an economics textbook in hand, or poor.
It was not even the main thing that mattered to a lot of people who voted to leave.
A cosmopolitan elite had been trying to redefine Britain as a multicultural, multiracial, multi-ethnic society. And the Brexiteers said, no, we are a particular people, a product of a particular history, with a particular set of roots.
We need our country back.
And so on the 23rd of June 2016, more than 33 million people cast ballots on a relationship that had shaped Britain's laws, trade and politics for almost half a century.
Yes is now showing at 67%.
The British people have spoken, and the answer is we're out.
By a margin of 52 to 48, they said Britain should exit the European Union. Huzzah! Independence Day!
It might have felt shocking, but it wasn't quite as surprising as I think a lot of people look back and say that it was.
But it was a political earthquake whose aftershocks were felt around the globe.
It shifted the world from a world which seemed to be getting ever closer, in which globalization was the dominant theme, into a world that was becoming ever more fragmented. Brexit has ushered in a decade which has left Britain, Europe, the West in a worse shape than it started it. The issue is, would it have done much better without it?
And it is possible to work that out. To understand what happened, we can compare it with a model of what didn't. This is that story. Why Brexit emerged, what it cost, and what might come next.
And you can find out what comes next by watching the full documentary on the Video Hub at Bloomberg.com/video. I watched it all, and it was very, very good. So I urge everyone to go and have a look. Now, Bloomberg is also hosting a live Q&A today on the question, are the UK and Europe finally getting over Brexit? Lizzie Burden will be joined by Susan Lynch, Bloomberg's Brussels bureau chief, and UK reporters Joe Mays and Phil Aldrich. It's open to everyone to listen to. Terminal clients and digital subscribers can send in questions for us to answer in real time. That's at 2 p.m. London time. Now, business activity in the euro area shrank less than anticipated in June. While Germany slipped deeper into negative territory, France exceeded expectations thanks to a stronger than anticipated rebound in services. So to unpack the latest from the data, let's bring in Zoe Schneeweiss, who leads our economic coverage for Western Europe. Zoe, as always, great to have you on TV. So run us through the numbers we got.
So, yeah, as you said, we got these flash numbers for France, Germany, and the Eurozone. Eurozone numbers still is below that level, that 50 level that delineates growth and contraction. What is encouraging here, though, is that it's the closest to the 50 level that we've seen since the numbers actually were positive. So that was back in March. Then we got April, May, and now the June number is also much stronger than economists had anticipated. And the commentary we got with these new numbers, also said that it looks like the Eurozone was going to avoid a recession. As a reminder, the first quarter actually is a contraction. That's because of Ireland, but still, even if it's a technical thing because of Ireland, 2 consecutive quarters would have been a recession. So that's good news for all of us that it looks like that will be avoided.
So we've also been hearing from the ECB chief economist, Philip Lane, saying that inflation risks being above 2% for quite some time. What else has he been saying?
Yeah, those comments from Philip Lane were quite noticeable, especially as a comment like that always will have to be seen slightly hawkish. And if you compare to what Lagarde said last night in the same venue, so yesterday she was speaking in the European Parliament, today he's speaking in the European Parliament, she was gave us more of a dovish message. So really, if you take the two together, it does indicate that the ECB is showing us, okay, don't overdo it with your rate bets, but at the same time, we are very willing to act. And generally, the message that Philip Lane is trying to convey today is just don't expect the ECB to hold back if inflation does look to be breaching or not to be coming back to that 2% target.
So what does that mean in terms of where we're thinking about interest rates?
Okay, so before there was the peace deal, or the memorandum regarding the peace deal, policymakers had indicated to us right after the rate decision quite strongly that July was very much on the table. So I wouldn't completely exclude July, but now it does look very much like September would be the one where they would go. It overall would fit the ECB plan to have or the ECB's kind of, shall we say, traditional instincts to have new economic forecasts at the same time when they make a rate hike. But overall, and if you look at market bets, they also are more. There's one hike is in there, other one maybe a little bit, but overall that going to one hike, September does look to be the more likely date than July.
Zoe, thank you so much. Zoe Schneeweiss there with the very latest, of course, on the Eurozone and the ECB. Now, coming up, Mounjaro and Zepbound have helped turn Eli Lilly into a $1 trillion pharmaceutical giant. Every blockbuster drug eventually faces competition, though. So our deep dive is next, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The conversations that matter, the insights you need. This is a pulse, and I'm Francine Lacroix here in London. Now, European tank maker KNDS is expected to announce its IPO as soon as today. I'm sure that's not how you pronounce it. In what would be one of the continent's largest listings in years. Now, it comes after France and Germany really confirmed a joint governance framework under which both governments would hold equal stakes in the Amsterdam headquartered company. We're now joined by Charles Capel, Bloomberg's European Equity Capital Markets editor. Charles, I mean, this is exciting. We don't know how to pronounce it, but it's listing. What does the France and Germany agreement mean for now that, will be run?
Yeah, exactly.
How do you pronounce it?
It's KNDS.
KNDS, there you go.
It's one of the, I would not attempt the full name. It's German and I would only cause offence, so we call it KNDS. And it's really interesting because it is now, and when it lists, it will be a pan-European defence company.
Yeah.
It's going to have a 40% stake from the French government, 40% stake from the German government. The rest is going to be, we expect, publicly traded, and it's going to be a real champion for the European rearmament drive. And, this is a model that's been replicated across different industries. For example, you have Airbus, which has government stakes in that as well, ST Micro in the semiconductor space. So now they're taking this model through to the defense industry. And, for KNDS, this paves the way for an IPO, which allows people and institutional investors to buy into that company, whereas it also preserves a bit of European sovereignty.
Yeah.
It is going to give the governments control over this key asset to European defence.
So what kind of valuation are they targeting?
The valuation has been a moving target, right? If anybody who has been tracking European defence stocks in over the last 6 months, they will know that at the start of the year, it basically went up, and then it started to change course, and it's gone down a little bit. And that has been the story of this IPO, where they were expecting around a 25 billion euro valuation, and then that expectation has started to be revised a little bit.
Yeah.
The latest figure that's a bit of an anchor that we're hearing is around 15 billion euros. Now, of course, you offer IPOs at a discount. You always want to entice investors to buy into them. So it's likely to be offered at a discount to its peers, the likes of Rheinmetall, or in some areas CSG Group, which listed at the start of this year. So we are expecting it around that valuation. But that's going to be one of the key things that we're going to be looking out for if and when it does launch its intention to float, which we expect sort of in the coming days. It was as soon as today.
So, Charles, what does it change anything for the IPO? Because one of the things, if you look at defense, it's the big thing, right? It's changed everything in Germany, how much they're spending. There's still, there's not going to be many cross-border because there's a lot of government sovereignty attached to this because of, but does having such a big new player change the capital markets?
Look, for KNDS, it's going to really enable them to operate with authority as a reputable defence supplier that is supported by Europe's governments. Previously, they were 50% owned by the French state. They also had some German family shareholders. Now, this is going to make them very, very unequivocally a pan-European defence company.
Yeah.
For IPOs on the whole, it shows defence, hard assets, AI plays, anything to do with those key themes is going ahead. Everything else, software, holiday, those other industries, perhaps they're not going ahead so much.
Charles, thank you so much. Charles Capel there, Bloomberg's European Equity Capital Markets editor. Now, it's less than a decade since Dave Ricks became chief executive of Eli Lilly. In that time, he's turned into the most valuable healthcare corporation in the world with its blockbuster diabetes and obesity jabs, helping it to hit $1 trillion market cap. Well, today's Bloomberg Big Take really looks at whether Dave Ricks can defeat pharma's boom and bust cycle and make the boom last. Let's get more from Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst at Bloomberg Intelligence. Sam, thank you so much for joining us. So first of all, how does Lilly actually compare now with what it was 10 years ago?
Always nice to spend even 3 minutes with you, Francis.
Oh, this is 5. This is like epic on TV.
Look, does Dave Ricks have a magic wand? Perhaps, right? When you look at the performance of the company, valuation coming up to $1 trillion, the first $1 trillion company ever in pharma land. So maybe you can imagine that he does. But the reality in drug development is that you do your absolute best. I don't want to use the phrase bet, but let's use it for argument's sake today, You place your bets on the drugs that you think are going to be the ones that are going to make it for you in 5 to 10 years' time. You assume biology will play a game. You assume the market's there for the way that you think it's going to sell versus competitors, etc. 5 or 10 years' time comes, then you figure out, see which one of them has won. And that's the problem in that, therefore, the best you can do is to make the best judgment today. And clearly, they've done the right things. But I don't know if it's a given. Okay. What Lilly has going for it is the enormous cash flow, and therefore they can make a lot of these bets.
So what are the problems that Lilly faces today?
Well, today's problem is selling as much as possible of its obesity, weight. I mean, I don't like calling them that because at the end of the day, they do a lot more than they are. Yeah. But to sell those drugs. So what we're going to have to wait and see is how do they think about managing that eventual patent cliff that comes with these things, whether that's 2035, 2030, or 2040. And of course, the way to deal with that is to put follow-on drugs behind it, which they're doing, and they've got good drugs. Retatrutide is one that's I'm really excited by in terms of the efficacy. Yeah. And also expand. That's the triple, they call it, triple G, right? It's the next generation. It's the most powerful weight loss effect that we've seen so far.
Okay.
And the rest of the thing they have to do, which is what they're doing, is acquiring assets, building the background to see which one of these comes through to make the difference up. It's a big ask.
I mean, I find this incredible, Sam, because last week I was actually in Paris when we were speaking to the deputy CEO of L'Oréal, and they were saying because of GLP-1s, I mean, it even changes the way people like perfume, and so it's not only appetite, it's like how you look, and it changes everything. I mean, how much is this going to grow, this industry? Are we even underestimating how many people will be on this in 5 years?
Well, we've got the models. Sell-side's got the models. Bloomberg Intelligence has got the models. We get up to even with a modest penetration, let's say 10, 15, 20% of the population who should be taking it, i.e. those who need it because of overweight, not recreational use, let's put it that way. You were getting up to $130, $140 billion. Wow. So that's how far it can go. But if you think about this drug as I want to use this phrase, pleiotropic effect. Yeah. Stuff that does much more than just weight loss. Reduces your risk of cardiovascular disease, reduces your risk of cancer, partly related to the loss of weight, reduces your risk of developing certain neurological issues. Then you start thinking, well, actually, this could be a lot more. This could be like a future aspirin once it's generic, etc., that a lot of people take to maintain their physiology.
Yeah. So interesting. Sam, as always, thank you so much for joining us. Sam Fazeli there from Bloomberg Intelligence with kind of like a deep dive. And then we're going to take another 5 minutes next week to really understand what's underneath all of this. Now, let's also check in on SpaceX again. Shares extending declines in pre-market trading. And this is a day after the company saw the second largest single session drop in market value on record. The stock fell as much as 5% to about $147, below its first day opening price of $150. Well, it puts the Elon Musk-led rocket, satellite, and artificial intelligence company on track to slip below $2 trillion in market cap. The decline also came as a sell-off in technology stocks dragged NASDAQ 100 futures lower. Coming up, Roland Busch, the chief executive of Siemens, is on Bloomberg Tech. That's at 4 p.m. London time. But up next, a Bloomberg Brief, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
there's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time
We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Anand, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tech rout deepening. A global sell-off dragging stocks lower, with South Korea's Kospi sliding 10% from its record. On high alert, Japan's Finance Minister Katayama and U.S. Treasury Secretary Bessent speak again as intervention risk for the yen rises. And oil drops as activity picks up in the Strait of Hormuz. Washington and Tehran reportedly wrapping up technical talks. All right, it's been a busy Asia session. Let's get straight over to Winnie Su in Hong Kong for the latest. A red day, Winnie.
Yeah, good morning, Vonnie. What a day. It really started off pretty calm, but then losses really accelerated in the afternoon in our region. Now you can see that the MSCI Asia is down about 3.5% and headed for its worst day in about 3 months. And leading the losses today, you can see is South Korea's Kospi index down about 10%. Now there are many factors contributing to it, with the forced liquidation and also a volatility driven by these leveraged ETFs, and also some concerns around how SK Hynix might be shifting its HBM production to DRAM. Now we also have HSCI and also MSCI China in that bear territory. Now flip the board and take a look at where the yen is trading. Yes, it is edging slightly higher in the afternoon session, but overall still hovering around those lowest level since about 4 decades ago. And that is coming despite those talks between Finance Minister Katayama and also Scott Bessent on the potential the coordination around the currencies.
161.95 is the level to beat, I believe, Winnie. Thank you so much, Winnie Su there in Hong Kong. Let's get over to London now for day 2 post-resignation announcement of Keir Starmer. Justina Lee has the latest for the London session.
Good morning, Vonnie. Now, it's another kind of classic risk-off session in Europe, just like the rest of the world. Now, we're seeing the stocks Europe 600 down about 1%. Of course, a lot of those tech stocks are today's worst performers, but also a lot of these mining names, as we've seen a sell-off in both precious and industrial metals. Now, you mentioned the UK earlier, Vonnie. Now, of course, we talked a lot about the resignation of Prime Minister Keir Starmer yesterday, and today we're seeing kind of further decline in the pound against the dollar. Some of that is reflecting strength in the greenback, but also today we got some bad economic data out of the UK. Another potential kind of month of the economy shrinking, according to the flash PMI numbers. Now we flipped the board here. Today, we also got some PMI numbers out of the Eurozone more broadly, and it also kind of signals a little bit more weakness all across the region, and that explains kind of a further decline in the short-end German bond yield. Yesterday, we also had kind of the ECB President Christine Lagarde kind of telling people that, maybe there isn't a need for kind of much more forceful action to tackle inflation. She still sees a lot of those medium-term inflation expectations pretty anchored And so that kind of explains quite a bit of a slide in terms of those bond yields. And I think we're probably also seeing the same picture in terms of U.S. Treasuries today, Bonnie.
Justina, thank you so much. Justina Lee there in London. And indeed, the risk mood is souring. You can see it here in futures. Nasdaq 100 futures pointing to a decline of 2.6% at the open. Do bear in mind, though, that the Kospi dropped more than 12% back in March, and the following day it rebounded almost all of that drop. So we'll see if this actually holds throughout the session. For now, memory chip makers are what's taking the brunt of it. As they did in South Korea, so goes it in the early going in the United States. Let's take a look at some of the risk barometers. The VIX is above 20 right now, so a sharp increase from yesterday. And then there's a little bit of indiscriminate selling. You see it in gold, which is just above $4,100 an ounce, and Bitcoin just above $62,000 a coin. Now, just in terms of gold, we're seeing Deutsche Bank now also add its lowering of its price target for the next couple of quarters after Goldman Sachs did it last week. So Deutsche Bank down 17% on its fourth quarter target for the gold price to $4,800 an ounce. So those gold targets coming down across the board. And then if we take a look at oil, because obviously we continue to have news about Iran and the United States, and we continue to see a little relief in oil markets. Brent crude below $78 a barrel now, and that 2-year yield still elevated, down about 3 basis points though. Okay, let's get some more information on individual movers in the early markets now with Chloe Melly in London.
Good morning, Bonnie. This sell-off in AI-related and tech stocks that we have seen here in Europe and over in Asia is very much hitting the U.S. as well in pre-market trading this morning. We have those concerns around the AI trade and this uncertainty around the Iran peace talks really weighing on all of those stocks that we've got up here on the board, with Micron and SanDisk in particular down more than 8%. We also have Micron earnings later this week on Wednesday, so that's something to keep an eye on. Moving on to IBM, which is actually doing pretty well this morning. It is up slightly in pre-market trading this morning. It has been upgraded to a buy rating by JP Morgan and is also benefiting from recent executive orders signed by Trump about accelerating quantum computing and the development of some of that technology. And that is something that IBM is very much at the heart of. And finally, let's go over to SpaceX, which is down this morning in pre-market trading and set to open below its first-day opening price. This is the 4th consecutive session of decline for the company, and it means that now SpaceX has shed billions in value. So definitely also a stock to keep an eye on as we move forward in the session.
Chloe, thank you. Just one more statistic that just took my breath away today. Micron traded $62 billion worth yesterday, and that's almost twice the entire turnover of the Kospi. So you're right, Micron could have a massive impact after the bell tomorrow. Chloe Belly there in London. Coming up this hour, more on this market volatility with Amy Silverman of RBC Capital Markets, and we'll get a closer look into some of these tech companies with Kevin Mann of Hennion and Walsh Asset Management. So that global tech sell-off then dragging US stock futures down. Bloomberg's Skylar Montgomery-Koning joins us now for more. Skylar, it's too early to say whether this will hold throughout the session, but for now we do see some selling in gold and Bitcoin and some other asset classes. Where would you go at this point? Where are people going to look for a little place to hide, perhaps?
Yeah, I mean, I think this is really the worry, is that AI has become so much of the market, right? You have huge issuance when it comes to IG and credit markets, even within EM. You have tech being a really big part of it. So MSCI EM, for example, those 10 top names in that index represent 40% of it. And it's a very similar setup in the US. And you're seeing even equity markets like Europe that don't have high tech exposure also be under pressure. And the only place that there really is to hide is in the dollar. And that's a bit of a weird contention because, yes, the US is exposed to tech, but because you've had such a resilient US economy, you can still have the dollar be your safe haven. And I think what we've seen too post-Iran is that with commodity prices elevated for so long, that fundamental shift in the backdrop in the US where growth is still quite strong but inflation is very high, and the hawkish shift we got from the Fed last week means that, yes, safe haven credentials are in the dollar's favor, but so are momentum and fundamentals.
Well, that's just it. I mean, you know, yields are lower today for sure. There is a little bit of treasury buying, but there has to be a cap on that given the Fed's change in stance, right, Skylar?
Yeah, absolutely. And it's not just the Fed, it's pretty much all developed market bond markets that are limited by this idea that we have a stagflationary impulse that's come through. Yes, it's a weight on growth, and so that means equities are maybe struggling a little bit more, especially in your energy importing economies. But at the same time, it already means that we have higher inflation. And the U.S. inflation is expected to come in on PCE this week at twice the Fed's target. And that means there's a limit to what central banks can do. They're still in their hawkish bias, and that means there's a floor on where yields are.
Skylar, thank you so much. We'll monitor the session throughout the day. Skylar Montgomery Koning there for us. The Japanese yen hovering near its weakest against the dollar since 1986. Traders on high alert for a government intervention once again, especially after Japanese Finance Minister Satsuki Katayama and U.S. Treasury Secretary Scott Bessent agreed to take, quote, bold steps if needed. They had another call. Bloomberg's Winnie Su joins us now. Winnie, last time the call itself seemed to be enough to calm things, at least for a little bit, and then we got some intervention. Might that be enough this time?
Yeah, exactly. You can see that this is something that traders are actually quite familiar with, right, Vonnie? You just mentioned how previously we actually had earlier this year that the U.S. propping up the yen as well with the rate check from the New York authorities, and following that you had the Japanese authorities really stepping in late April with that record buying of Japanese yen, and that really did little relief for the Japanese yen when you look at where it is trading right now. We're talking about the yen hovering around those lowest levels in 4 decades, and it has in fact weakened by about 10% or so in the past year. So it really goes to show that at this point, this yen weakness for now is likely going to continue. We are hearing investors saying that they are expecting the yen to go to 162 or so if there is just no coordinated intervention or authorities stepping in firmly from both sides, from both the U.S. and Japan.
Well, you know, partially this is because traders don't think the BOJ is acting fast enough. Is anybody out there talking about a potential emergency move from the BOJ?
Yeah, so for now, we are hearing retail investors are actually preparing for a potential step in from authorities. And that's why we are seeing them actually adding up more of those bets, expecting the yen to strengthen a little bit, just because how much the yen has really already weakened past those levels that we saw the previous intervention coming in. So those are the expectations from the retail investors. But again, at this point, something very interesting that I really like to point out is that when we look at how the Japanese yen has done so far this month, in fact, it is the strongest performer out of the G10 currency in the past month. And some investors are saying that that's also partly the reason why we're not seeing intervention just yet, because when you look at the relative performance with some of the other currencies, it's actually not performing as badly because it's really being driven by the broader strength of the US dollar.
Yeah, absolutely. And of course, the elevated price of oil caused turmoil across Southeast Asia, in particular for those currencies. Winnie, thank you so much. Bloomberg's Winnie Su. Turning to the Middle East, and traffic in the Strait of Hormuz picking up. The semi-official Mehr news agency reporting that the talks to implement the US-Iran MOU have concluded. The report says the sides agreed to form 4 working groups focused on issues including sanctions relief and nuclear issues. Joining us now from Dubai is Bloomberg's Abir Abu Omar. So Abir, while these working groups are working, is the Strait wide open?
Good morning, Vonnie. It seems to be that way now. The latest reporting that we have from our energy teams is that as of yesterday, there's about 68 million barrels of crude and condensate in the waterway. Although there's a caveat there, 80% of that volume does not have a specific destination. Now, Bloomberg did report that over on Saturday and Sunday, the past weekend, we've seen about 8 million barrels of crude make its way out of the Strait of Hormuz. That compares to about 20 million barrels pre-war. So we're seeing this trickle come steadily, and it is there. So the statements that we had from President Trump on Friday, and then the statements by the Iranians as well about the openness of the Strait of Hormuz seem to ring true. And again, what we've seen also in the Strait of Hormuz is that there's about 30 million barrels of Iranian oil exports coming out of its Kharg island, which is the main export hub for Iran. And then a part of those shipments have been sitting in the waterway because they were blockaded by the U.S. naval blockade. So those are also making their way out to Asia. We don't have a specific country they're going to, but making their way out of Asia is the assumption that we have in mind. And so, yes, you're seeing movement in the Strait of Hormuz. Still doesn't compare to the levels that we had pre-war, but it is it's out there. The shipments are making their way out and in the Strait of Hormuz.
And of course, we can track all of this on the Bloomberg because the ships are not in the dark anymore. They have their radars turned on. Abir, thank you so much. Bloomberg's Abir Abu Omar in Dubai. Now, two other top stories trending on the terminal this morning. SoftBank founder Masayoshi Son says there is little merit to Elon Musk's idea to build. Qualcomm is in advanced talks to buy AI infrastructure software company Modular. The deal values Modular at about $4 billion. A final agreement has not been guaranteed, but a transaction could be announced in the next couple of weeks. Coming up, volatility. More on the tech market swings with Amy Wu Silverman of RBC Capital Markets. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. A tech sell-off globally, leading U.S. equity index futures lower this morning. Joining us now is the perfect guest to explain to us what's going on and how the market is expressing its emotions. Amy Wu Silverman, head of derivative strategy at RBC Capital Markets. It is a little emotional at the moment, Amy. We had a more than 2 standard deviation move in Korea overnight. What's the probability that we'd see a 2 standard deviation move anytime soon in U.S. equity indices?
You know, it's interesting, Bonnie, because we actually have 2 metrics that we look at. The first is the probability of a 1 standard deviation move, and the second is the probability of a 3 standard deviation move, essentially the skew and the tails of the market. And prior to this move, I will tell you that it was quite low. We were actually looking approximately at 5-year lows. I know you and I have talked about this before, but the cost of protection, the cost of hedging going into this was almost nil. People were not focused on it.
So last time, which was only in March, that Korea pulled something like this, right? The index was down more than 12% that day. It rebounded the next day, but also the U.S. didn't quite respond in the same way. The U.S. sort of did its own thing, right? Are we following Korea? What is the story here? It's memory chip makers selling off, but what is it really?
Yeah, I think that's a really good question. I think there's a few things to pay attention to here. The first is we're heading into kind of a structurally volatility pothole-filled time of the month. What do I mean by that? You know, we're heading into the summer months. This tends to be a liquidity vacuum anyway. If you recall, maybe 2 years ago in August, you know, we were getting VIX spikes from something innocuous, initially a yen carry unwind, but it bled through because just one, there's lower liquidity in the market, and two, you know, these aren't new risks that the market is thinking about: concentration risk, heavyweightness. These were all here before, but there was far more of a chase to the right tail, as we've discussed in prior months. But as we head into kind of the liquidity vacuum months, these become something that the market begins to focus on again.
Skew inversion, Amy, what have you been seeing just in recent sessions? You know, have you been seeing anything out of the ordinary? Any red flags that we should be aware of?
So what I would say is really retail has come in again and again, and it has saved the day. It has been the buyer of that dip. It did that April 2nd of Liberation Day. It's continued to do that, you know, essentially in the post-COVID volatility regime. What I would say is we've had these velocity type moves where, you know, investors have seen a 1 standard deviation, 2 standard deviation drawdown. But what have we seen post that? What has the playbook been? It's been that we've seen buyers the dip. So I wouldn't be surprised if that happened again. What would start to concern me is we start to see these multi-standard deviation drawdowns without anyone there to save the day, and then a sharp rise in correlation, which, you know, we've talked about this paddling duck. The low correlation has saved us too. If these kind of mechanisms start to break, then I would start to be concerned when there's this absence not only of skew inversion, but put skews, so the demand for hedges picks up sharply and then sharply again.
So that would mean that perhaps the fear of missing out was diminishing just ever so slightly, at least. It's still pretty strong, as you've been saying. Is there any correlation between the amount of corporate debt issued and anything that goes on in equity markets these days?
100%. And you're seeing that in individual stocks. You know, that was kind of the narrative that we saw for a company like Oracle, you know, call it even to last year. But, you know, I have to bring back this meme of the surge protector plugged into itself. It's one that investors really like to pass around. But, you know, the point of that just being that there is a lot of circularity in the market. There's a lot of incestuousness. And I think there is kind of this 10,000-foot view appreciation that a lot of these trades are connected. What has saved us again is, you know, you have semis zigging in one corner, but another, you know, the IGV zagging in the other corner. So you've had this cancellation broadly on the index volatility side. But we've continued to say, you know, you have a guy who's limboing and the limbo stick is 12 inches off the ground, just meaning, you know, how much further lower can we go for a lot of these metrics like correlation before we see a reflation? And we know that does pick up metrics like volatility, which can cause spikes, especially in the summer months.
Great analogies. I love them. Amy, are you seeing any more hedging these days? And if so, how are investors expressing themselves?
Yeah, I think one structural issue, Vani, that has come up is even when you see hedging, it tends to be short-lived. So I'll give you an example. When we did get a drawdown kind of going into March 30th of this year, which was, you know, essentially the low prior, you saw hedging, but it was very nimble. So investors were essentially saying, I'm going to deploy some quick, cheap protection, but the minute I see a rebound, I'm going to take that off. Why do investors follow this playbook? Exactly because of what happened in April 2nd and exactly what has happened essentially in every dip that we've had since the post-COVID regime. You haven't seen anything sustainable. And the second part of that is just hedges have gotten shorter and shorter. You have 0 data expiry as something that investors can do. You have weeklies. You know, you're not seeing as much of this longer dated hedging as perhaps you did 5-10 years ago.
Amy, we have to leave it there, but so grateful to have your context. Thank you for taking us through this market. Amy Silverman of RBC Capital Markets. This is Bloomberg.
look at the more successful economies in the region, the key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Shaping up to be a down day here in the United States following a global tech sell-off that started in Korea with the Kospi down 10%, having triggered a circuit breaker at one point. Nasdaq 100 futures pointing to a lower open, the dollar index strengthening, and a little buying of treasuries. The two-year yield just below 4.19.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. And what a day it's going to turn out to be. The tech rout is deepening. A global sell-off drags stocks lower, with South Korea's Kospi sliding 10% from its record. On high alert, Japanese Finance Minister Katayama and U.S. Treasury Secretary Bessent speak again as intervention risk for the yen rises. And oil lower as activity picks up in the Strait of Hormuz. Washington and Tehran reportedly wrapping up technical talks. So let's take a look at how it's shaping up. It looks to be a very down day. Now, the Kospi did drop more than 12% back in March, and it rebounded the following day. At the moment, though, memory chip stocks are what fueled the Kospi's decline, and they're what's fueling early trading here in the U.S. as well, with the Nasdaq 100 pointed to a decline of 2.4% when that opens. Let's take a look at some of the barometers of risk, really, I suppose. The VIX just below 20. Some selling in gold and Bitcoin as well. I wouldn't quite at the moment call it indiscriminate, but definitely perhaps a little bit of seeking liquidity. Gold just above $4,100 an ounce, and Bitcoin below $62,500 a coin. Now, Deutsche Bank did also lower its target for gold for the end of the year. It sees bullion at $4,800 an ounce now in the fourth quarter. Last week, Goldman also cut $500 off its year-end forecast, so it could be partially in reaction to that as well. If we take a look at oil, we're also seeing just a further drop in oil as things seem to be progressing somewhat in the Strait, and then a little bit of treasury buying, safe haven buying. The dollar is also stronger today as well. So let's get to some of those individual movers now and what could be a very down market today. Here's Chloe Melly in London.
Good morning, Vonnie. Those concerns around the AI trade, around the sustainability of this AI rally have hit chip makers in Asia very hard, and then that spread over to some weakness in Europe. And now, as we can see up here on the board, it is set to really impact those U.S. stocks as well, with all of those AI-related names very much in the red this morning. It's also worth noting that we are waiting for earnings from Micron later this week, and that could potentially be a big catalyst, whether positive or negative, for this AI trade. So we are very much in the red this morning there. Moving on to IBM, which is having a pretty good day this morning, up in pre-market trading about 3% after being upgraded to a buy rating by JP Morgan. It is also benefiting from Trump signing some executive orders about accelerating the development of quantum computing technologies, and that is something that is going to be very beneficial for that company because it is very much at the heart of developing those quantum computing technologies. So we're up there. And finally, SpaceX is down this morning. It is set to open below its first day opening price. It has shed billions of dollars in value over the last few days, set for its fourth consecutive decline. And so this is very much a reversal in sentiment from what we had seen at the beginning with this really blockbuster debut for that company.
Absolutely. Chloe, thank you so much. Chloe Melly there in London. U.S. tech stocks set to open in the red then this morning. This as South Korean chip makers hold off, leading the Kospi to tumble 10%. Joining us now is Kevin Mann, President and CIO of Hennion & Walsh Asset Management. Perfect day, Kevin, because you have a lot of strategies at Hennion & Walsh Asset Management, but your primary focus, at least in your equity-based strategies, is AI-oriented stocks. So what are you selling today?
Yeah, I mean, investors appear very concerned with the rally in technology stocks, at least today, particularly as it relates to this perceived notion that there's a bubble in the AI revolution, almost hoping that that bubble bursts. And this particular concern seems to stem from Korea once again, particularly as it relates to SK Hynix. SK Hynix, of course, is a major competitor to Micron, who reports earnings tomorrow. But as I understand it, SK Hynix indicated that they may be shifting away from high bandwidth memory chips, HBMs, back to DRAM. That's a concern to some investors because we know how much of an insatiable demand there is for these high bandwidth memory chips. But Micron could save the day tomorrow because they're anticipated to forecast or actually report earnings growth of over 900% over the last year and revenue growth of over 270%. Will that be good enough for investors? I'm not sure, but I wouldn't want to assume that this current sell-off is going to last, because what we saw the last time this happened was a significant bounce back in the days thereafter.
Yeah, and I should point out that the amount of Micron traded yesterday, the amount of turnover was twice the entire Kospi, right? So we're talking about hugely different sizes of markets and very different characteristics to some of these markets. Nevertheless, you say investors almost want the AI bubble or whatever it is to pop. That may not necessarily be true, but they may be getting more and more afraid, and if something does happen, it can very easily spiral, right, Kevin?
Yeah,
I mean, we went from having great earnings that investors cheered to having great earnings that investors didn't care about.
And a lot of those concerns aren't necessarily misplaced. But I would just recommend to those investors to focus less on all the hyperscalers who are spending the billions of dollars, because they may not achieve a return on that investment for years to come. Focus more on who's receiving the money. And if Jensen Huang is correct, and by the end of this decade, there'll be somewhere between 3 to 4 trillion spent on AI infrastructure, well, we got a long way to go. And the AI infrastructure play is still intact. Now, there's going to be more volatility with the chips and the semiconductors and the software companies, but the data centers, the data center construction, electrical connectivity, cooling solutions, power solutions, I think if you build a diversified portfolio, checking all those boxes, you'll have a much smoother ride.
Sure, but it's very moody, isn't it? I mean,
it's very moody.
The company that started all this, NVIDIA, hasn't really gone anywhere, right? It's still trading sort of where it's been trading for most of the year. I mean, it had that dip and it came back a little bit, but it hasn't seen the massive gains of the memory chip stocks, for example.
They're almost a creature of their own success. If you look back over the last 3 years, they've gone quite a ways, right? To me, they remain the hub of the AI ecosystem, and they've been very smart, because not only do they sell more chips than anybody, but now they get over 80% of their revenues from data centers. So they're leaning into that AI infrastructure play as well, giving themselves a diversified base. In fact, I think NVIDIA is a strong buy right here.
Yes, you do. You also, though, think that Taiwan Semiconductor is a strong buy, and that had a horrible night.
Yeah.
I mean, what do you do? Do you just stay invested in these for the long term because you believe in the long run thesis?
This is a long-term secular trend here. If I could just borrow a baseball analogy, since we're here in New York right now, what inning are we in? I still think we're in batting practice, and we have a doubleheader of games ahead. Those doubleheader of games will benefit the hardware and the software plays for the most part. The infrastructure plays benefit during batting practice. So you want to build a diversified portfolio. Include utility companies. Utility companies hold up very well in the face of volatility. They pay good dividends, and they become a backdoor play into the AI revolution. Who would have thought you can actually offset technology exposure with utilities? But you can.
We don't speak about innings in New York anymore. It's games, and it's always game 5, no matter. Talk to us a little bit about some of the plays around AI that may or may not hold up, depending on what happens with the whole AI orientation. But Digital Realty Trust, for example, Vertiv Holdings, American Electric Power.
Sure. So Digital Realty, the largest operator of data centers in the world, with 300 data centers in 31 different countries. They are a REIT. They pay a decent dividend, and they continue to expand their global reach. But we know those data centers run hot, and they demand a tremendous amount of power. So that brings in Vertiv Holdings, which is an industrials company, an HVAC provider to provide the cooling solutions that these data centers need. But on the power front, how about a utility name like American Electric Power? They supply electricity now to over 5 million customers in 11 states, including the state of Virginia, which we know is the data center capital.
Now, how have you been choosing these companies? There's a lot of data center companies, right? There's a lot of HVAC companies, and there's a lot of power companies. Are these on valuations that you're choosing them, or what?
Yeah, we drew our Air 7 names from 2 of our portfolios at Smart Trust, AI Ecosystem and Power Solutions. We're looking for strong balance sheets. We're looking for histories of dividend growth where possible. We're looking for those companies that have an attractive moat and appear to be leaning into the AI revolution. That involves combing through company reports, websites, public filings, and of course, what their actual stated revenues are.
Kevin, what's next? Because at some point, the narrative is going to move on, right? AI either works and we all use it and incorporate it into our daily lives. We either have jobs or we don't have jobs.
Yes.
But there has to be something that comes after that. And if your portfolios equity-based at least, are all AI-oriented. What are you sort of looking at for the future?
Yeah, you and I, Vonnie, will always have jobs. But what I'm looking at for the future, there's other things that are working right now if you follow the money. How about aerospace and defense? Have we forgotten about SpaceX? SpaceX, which has pulled back significantly, which they should have given their valuations where they were and where they are right now. But there's still other opportunities in space as it relates to space infrastructure, satellite technologies, and even drone technologies. How about biotech? We're seeing a pickup in M&A activity in biotech right now. And if you're a high net worth investor and you want a high level of tax-free income, municipal bonds are very attractive right now at these levels.
Final question. So you're not selling anything today. Would you be buying if we see a dip?
I mean, I look at a name like Micron Technologies, which is only trading at less than 10 times forward earnings. I expect they're going to report record results tomorrow. If they pull back 5–10% right here, I think that's an attractive entry point.
All right, Kevin, thank you so much.
My
He always
pleasure,
picks
Bonnie.
the right day to come on. Kevin Mann, President of Henyon & Walsh Asset Management. Now to other top stories trending on the terminal this morning. Iran says $12 billion of its frozen funds are set to be released as part of ongoing talks with the U.S. According to Iran's semi-official Mehr news agency, the country will get 2 installments of $6 billion each. The unfreezing of funds and the waiver on oil sanctions have provoked criticism of President Trump from Iran hawks. Apollo is once again capping withdrawals from its largest non-traded private credit fund for retail investors. According to a shareholder letter, Apollo Debt Solutions, which has roughly $25 billion in assets, capped withdrawals at 5% of outstanding shares Monday after investors asked to redeem 16.8%. Wimbledon investors cash in, a niche financial instrument that grants the holder some of the best seats at Wimbledon, are now changing hands for more than $500,000. Selling the debenture doesn't attract capital gains tax because it's structured as a type of corporate bond. Coming up, defense contractors gearing up for a meeting at the White House this week amid a stockpile strain from the war with Iran. More next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Crude extending its decline as traffic in the Strait of Hormuz picks up. Technical talks on implementing the US-Iran MOU have concluded, according to the semi-official Mehr news agency. The report says 4 working groups will be formed to discuss sanctions and nuclear matters. Bloomberg's Kasia Klimashinska joins us from Washington. So, Kasia, is that the end of the bellicose rhetoric? Are we on a good path now with 4 working groups? Can we expect an output at some point?
Indeed, the U.S. and Iran announced that there will be 4 working groups focusing on the details from now on. But beyond that, U.S. and Iran have a slightly different readout of what exactly has been agreed over the weekend in Switzerland. And Iran especially is playing up this angle of unfreezing some of its assets. The country says that it will receive $12 billion in 2 $6 billion tranches. U.S. Vice President J.D. Vance spoke about this cash a little bit yesterday as well, but said that this is still not decided, that both the U.S. and Qatar will have to approve any release of the funds. And then he also added that Iran will have to buy U.S. agriculture products, soybeans and corn and wheat with this money. Iran doesn't mention anything about that. Beyond that, obviously, the most important part is this critical waterway, the Strait of Hormuz. As you mentioned, there is increased traffic, and so oil prices are going down, perhaps also because Iran did get this crucial waiver from the U.S., where the U.S. Treasury will allow the country to sell not only some of its oil, but also petrochemical products, and Iran is already loading some of those energy products onto tankers and shipping them onto the world. Obviously, the concern is what will it do with the revenue, with the dollars that it will get from selling those products.
Kasia, on the domestic front, there's obviously a big housing push, everything from affordability to mortgage rates, obviously, but there is a bill now that has passed the Senate. Explain to us what's in it and whether it's likely to ever become law.
An important development here, Congress is back this week, and the Senate passed the housing bill yesterday. House has to take it, and then President Trump has to sign it as well. But Trump has expressed support for measures like the ones in this bill, which include limiting the exposure of institutional investors. The bill aims to limit the amount of houses that those large investors can purchase, therefore freeing some of the supply for individual buyers, for retail buyers. And those are the measures that Trump has been supportive.
And then we're hearing that President Trump is set to host some weapons and munitions makers in the White House. Now, we had heard from various generals and leaks and so on that stockpiles were potentially a problem for the United States, with a couple of different wars being aided by the U.S. What is the situation, Kasia?
Clearly, the Trump administration is concerned about this. Trump has already used the Defense Production Act to try to increase the supplies. He ordered a Pentagon chief to develop some action plans to make sure the U.S. is producing more. He will host those munition producers here at the White House on Wednesday. We know that RTX will be attending. And Trump also has been pressuring the auto companies, saying that they perhaps have some spare capacity and they could also help produce munitions. So we might hear, for example, more from General Motors about that.
And we're also hearing from the president on quantum computing again. He wants the U.S. to speed adoption of quantum computing. It's not maybe quite there yet, but also to boost cyber defenses. Can you tell us more about what he's been ordering?
President Trump is very interested in the latest technologies. So yesterday, Trump signed 2 executive orders on quantum computing. This is, a very early technology, not fully developed yet, but the U.S. is seeking to lead in this area in the same way as it is aiming to lead in AI and perhaps stay ahead of China. So those 2 orders, what they will accomplish, one of them will create a quantum computer that will be able to perform some critical scientific calculations as early as in 2028. And the other order will focus more on protection, especially cybersecurity. It will it is urging U.S. Agencies to make sure it's using those quantum technologies to protect the U.S. As I said, this technology is in early stages, but there is concern that ultimately it will be able to break some of the protection that is used now to keep, for example, the banking payments and money transfers secret. So this is it's not only the Trump administration, the previous Trump administrations were looking into that to make sure they are staying ahead of the curve and protecting the U.S. against potential cyber attacks and cyber risks.
Kasia, thank you so much. Kasia Klimischlinska there in Washington, D.C. And we'll stay on tech now. Oracle reducing its workforce by 21,000 employees in the past 12 months, according to a company filing. It wrote, quote, the adoption and deployment of AI technologies across our operations have resulted and may continue to result in reductions to our workforce. Let's get more with Bloomberg's Neil Campling. Was this number a surprise, Neil? Does it represent, a much greater number than normally would, see attrition over the course of a year in a company that size?
Morning, Bonnie. Yes, I think to a degree it does. I think there's two factors at play, one of which you mentioned in terms of the AI ecosystem, in terms of efficiencies that you have with AI, which obviously, given that Oracle competes in that hyperscaler market, there'll be a reason for that. The second aspect to this is that when they acquired Cerner a couple of years ago in the health tech space, it came with a lot of employees. So there's probably an element of natural attrition from that acquisition as well. But certainly this is another tech company that's talking about AI efficiencies in terms of some of those job cuts, and that will certainly make the headlines for sure.
Yeah, absolutely. I have to ask you about the Qualcomm deal. It's potentially near a deal for the software firm Modular. What does Qualcomm see in Modular, and will it get done?
Sure. So Modular, what that's bringing to the table really is enabled to use that software to basically go into a variety of AI systems. So it means that you don't have to rewrite the code each time for each of the AI modules. So it's a complementary deal that enables Qualcomm to get into other AI stacks, and is a push for Qualcomm, again, to diversify away from the smartphone market.
There's so many things I want to ask you about today, Neil, not least the tech sell-off that we're seeing, but I have to ask you about Masayoshi Son and his comments about Elon Musk. He was very complimentary of Elon himself, but he did say that the idea for orbital data centers didn't make that much sense efficiency-wise, because anything you'd save by being in space, you'd spend on the transportation. Will he be taken seriously?
It remains to be seen, because obviously he has done an incredible job of investing in many of the tech infrastructure systems very early on, and this is one that he didn't partake in. And the question of whether it will be expensive to launch these into space for data centers, well, one company that has managed to do that very efficiently in terms of space efficiencies clearly is SpaceX. So it does remain to be seen. One thing that he did mention within this interview was that he did admit that AI is becoming a lot more competitive in terms of the ecosystem. So that's something with wider ramifications for sure for the tech sector.
And then I suppose briefly, Neil, if you don't mind, we're seeing a massive sell-off. Potentially it'll bleed into the US. Right now it looks like it will. Do we get the dip bought again?
Well, I think the key obviously is into tomorrow's Micron's numbers, and given this story that came out in Korea overnight in terms of Hynix, in terms of changing focus for some of the chip output, that's what's cause for concern, I think, into the memory sector in particular, because Micron is the single biggest contributor to the S&P gains this year. Nearly twice as much as Nvidia's contribution. So when you've had such high moves, anything that is potentially a negative, even if it's only short term, is caught on by investors and traders alike. So it's one to watch, definitely, into tomorrow's numbers.
All right, Neil, thank you so much. Yeah, Micron up 325% year to date. That is Neil Campling there. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. It could be a big day, but we also have data. So first up, ADP employment data coming at 8:15 Eastern, and that's followed by PMIs at 9:45 Eastern. We'll also get some earnings. Carnival comes before the bell, and FedEx is after the close. It's the first report since FedEx spun off the freight unit, so investors will be looking to see how it's doing on its own. Plus, Treasury Secretary Scott Bessent set to speak to the Economic Club of New York at 7 p.m. In terms of your micro movers, we are keeping a very close eye on memory stocks today, including Micron, which obviously reports tomorrow after the bell. But this is after memory stocks sold off in South Korea, so SK Hynix and Samsung and so on. For a variety of reasons, SK Hynix moving to a different type of memory chip for some of its production. But that stock in the pre-market down 7.6%, so quite the move. We'll see if it drags all of the ecosphere with it. SpaceX below its IPO first print, let's say, not its IPO price, but the first print on the first day. And then IBM up 4%. It's going to be one of the companies that benefits from the cyber security push and also the quantum push from the president. Let's take a look at your macro setup as we head into this Tuesday, which could be a pretty wild Tuesday. Futures pointed lower. The dollar index is stronger.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable.
We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's
very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The key story is tech boom, and that's going to be the most important.
The market can still go up.
I can't just tell you to sit here and hold your nose and sell.
The question mark around potential bubble euphoria does continue to build up.
We have to be wary that it's not going to last forever.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, NASDAQ futures slide. High-flying tech stocks in South Korea plunging more than 10%, following an ugly three-day market rout for newly minted SpaceX, heading into quarterly earnings from Micron due out later this week. Those numbers just a day away.
And there clearly is a lot of nervousness given the fact that Micron is up 880% over the past 12 months. And there's nervousness more broadly throughout the entire tech sphere just because there is a hope and a prayer that the demand for the most expensive AI products will continue, which has been part of what's fueled the semiconductor bet. Now there's some pushback you're getting from certain clients. Can that continue with the same profitability from the semiconductors? That seems to be some anxiety.
We've talked about this massive wealth transfer from the hyperscalers to the chip players. Look at the pushback you're seeing to the big spenders right now. Microsoft, Meta in bear markets, Amazon, Alphabet down double digits in just a month or two. Some big pushback emerging.
And Dan Curtis from the Bloomberg Television team put out a great chart talking about how the hyperscaler stocks have directly correlated with the amount charged for each token that companies are spending to try to use large language models. You've seen places like Uber push back on the cost of what these tokens are really amounting to. So if people are starting to look at the practical uses, how much are they going to push back at some of the most expensive aspects that have fueled and packed the coffers of these hyperscalers?
I briefly spoke to Dan Ives this morning, who's talking about he thinks all of this bubble concern is stemming in South Korea because SK Hynix overtook Samsung. He says a lot of cultural issues with this, and it's a little bit of a psychological issue. He said it's like basically the Yankees doing better than the Mets in October. And that is why there's all these fresh bubble concerns in the market right now, even though he doesn't agree with it and pushes back.
It's 602. It's not even 602.
Just taking jabs, taking.
I'm quoting Dan Ives.
But it's totally kosher. Okay, whatever.
Take it up with Dan.
Yeah.
Take it up with Dan.
Yeah, right. That's right.
Jeez, you two already. 2 minutes into the program. Fighting over sports.
I mean, she went there. This
what are we doing baseball for?
I mean,
I'm quoting Dan Ives, and I think it puts into perspective what's going on in South Korea.
Deep breaths, everybody. Live TV. Okay. We good? We're good. Futures negative. We're down by 2.5% on the NASDAQ. On the S&P 500, down by 1.2. Check out dollar yen. We're talking about a 10% move over the last 12 months. On a currency pair, that's a big move. We're talking about a 40% plus move over the last 5 years. 161 on dollar yen. And the prospect of intervention.
Yeah, with a discussion with the Foreign Minister and Treasury Secretary Scott Bessent overnight, this is potentially reaching the weakest level for the yen going back 40 years. What kind of intervention could they engage with? And frankly, what would it do? I think that they blew some $72 billion earlier this year trying to intervene with the yen. And that was evaporated within a couple of days. So at a certain point, what can they do other than just to hike rates more significantly?
One thing is that they said that this meeting was a follow-on on the G7, maybe to temper some concerns, but at the same time said that they would be willing to, quote, take bold steps on currencies if needed, and that they align on foreign exchange policy. So that obviously gives a little bit more of risk momentum that potentially they could intervene.
Dollar yen coming in about 0.1% so far this morning. Let's get some good news as well. Crude, Brent and WTI comfortably in the 70s now. WTI at the moment about 73, Brent crude around 77, yet still the rate hike debate getting extra fuel from several Fed speakers, including Goolsbee, in just the last 24 hours.
Yeah, coming out and saying, look, this is a real problem. They haven't hit their inflation goal. And really leaning into this idea of forward guidance not necessarily being the panacea, seeming to support the new Fed chair, Kevin Warsh, as he talked about how inflation is, quote, going the wrong way. If you get all of the Fed members lining up behind Kevin Warsh, not only with respect to a hawkish tilt, but also with respect to a lack of communication or forward guidance, that will be pretty powerful.
When it comes to oil, we are seeing prices continue to slump because not only is the Strait of Hormuz open, yesterday the U.S. Treasury, we haven't seen this in decades, is allowing Iranian crude to hit the oil market. Even U.S. refiners, likely won't happen, but U.S. refiners could buy Iranian oil, something we have not seen since 1991.
Brent crude 77 this morning, yields lower across the curve as well. Two's down 4. Your 2-year at 4.18. Coming up this hour, we'll catch up with Julian Emmanuel of Evercore as tech stocks slump. We'll speak to Jayati Bharadwaj of TD Securities with the yen hovering near a 40-year low. And Pierre Farragut of New Street Research as SpaceX sheds $600 billion in value in just 3 sessions. We'll begin this hour with stocks sliding as the tech sell-off deepens. Julian Emmanuel of Evercore remains constructive, writing, "We remain steadfastly bullish, led by AI names and themes. Stocks remain on course for 77.50, and the 9K bull case is still operational." Julian joins us now for more. Julian, good morning.
Good morning.
Sounds somewhat contrarian after the few days we've had.
Well, first I want to say is, given the sports intro, we should start talking about Messi again, which we were doing prior to the top of the hour.
We're going to make some time for that a little bit later, I think.
Fine. So I liken this to the beginning of the year when you started to have the accumulated worries around software and the initial concerns around debt, which obviously the debt pile has gotten much larger, which earnings are supporting. And you got this intense negativity around technology stocks. And we felt like we were contrarians coming into the beginning of 2026, sticking with the call. And frankly, we saw the progression into the most hedged position we had ever seen in 30 years at the lows in March. And the market isn't hedged to that degree, to be sure, but the skepticism is there. And frankly, when you think about it, you're just sort of transitioning this wall of worry away from the malign effects of high oil and into the potential concerns around supply and less transparent monetary policy.
So you say the bull case is operational, yet we started the program by pointing out a couple of names. The likes of Microsoft and Meta deep into bear markets now. Can you have 9K on the S&P, operational, so to speak, without those names participating in any way, shape or form?
Mathematically, you can't, okay? And when you look at it, the chip names, have done a great deal of the heavy lifting. You will need a refreshed attitude towards the Mag 7. And we think that comes in time. And if you look at it, over the course of this bull market, now almost 3 years old, there have been certain periods of time where essentially earnings and price have, caught up to each other. And we think that's one of these periods in these larger names, and that you will have price start to advance once more.
What will it take for people to have a refreshed attitude about the hyperscalers?
It will likely be a little bit more churn, a little bit more volatility, a little bit more negativity. And then ultimately, the proof of the pudding, that was the proof of the pudding that caused this furious rally to begin with in April and May, earnings. You're going to see good earnings.
Are we starting to see the beginnings of pushback from the adults in the room, the bond investors, saying, hold on a second? And we're talking about this particularly with SpaceX, not necessarily leading off the entire sell-off, but not helping exactly. This company that just IPO'd, coming back to market for $20 billion. It's investment grade, even though it's been burning cash and it has, a prospect of getting to the moon, literally, and beyond. How much is this the beginning of something that's important to watch?
Well, again, this is the point where we will figure out how supply and demand interact, because clearly the message is, well, you IPO'd and maybe you should have waited at least till you got included in the NASDAQ 100 before marketing debt, but here we are. And to us, again, when you look at the market action, it's just a much more significant volatile churn. And again, with that name in particular, you're still comfortably above the IPO price. So, I mean, they may send people to the moon and to Mars, but stocks don't go to the moon and Mars indefinitely.
For now, at least, we're down another 4% at the pre-market. Headline, hardly talked about, small caps, record highs. What's going on there? The small caps move, which is where the outperformance has been so far year to date.
So, during the course of the entirety of this bull market, small caps have been the default short for active managers. And that really kind of faded as the year started. Again, partly as a function of the concern around technology that started the year, but more presciently about this fact that we may be having agitation about where the short end of the interest rate curve is going to go. But guess what? The long end is incredibly well anchored around 450. And oh, by the way, the labor market it's adjusting. And all of those are positives for small caps, as is the price of oil. And then last point here is that, again, this tends to be around the Russell rebalance, the time where you get your maximum small cap outperformance. We wouldn't be surprised by a little bit of reversion as the third quarter starts.
I understand small caps will like the depression we're seeing in the oil prices, a bit softer. But what about the fact that the Fed is raising interest rates?
Well, again, I think, and this has been a lot of our conversations, is that there tends to be this glass half empty view of where the Fed is going, okay? But if you think about the one thing that Warsh did that in our mind is a very distinct positive is he absolutely established the concept of Fed independence, okay? We've been worried about that essentially since 2018. We are no longer worried about that, and this is a contrarian point of view, but that 9-9 vote, in a lot of ways, does Warsh a favor. If he needs to raise rates, he's got the cover to raise rates.
I think there's also some good news with regards to the potential for rate hikes. The fact we're not talking about labour market weakness anymore. The way that a lot of people on Wall Street are framing the potential for hikes right now is taking back the insurance that was taken out last year and the year before because of the weakness that emerged in the labour market. It's the firming up of the labour market that's allowed them to focus on the inflation side of the mandate. Now, I know that for markets that might not be good, whatever, but for the economy, the signal you're getting from the economy is a green light to address the inflation situation because you don't have to worry about the labour market in quite the same way. I've got to say, that's kind of good news.
That's the reason why you're not seeing stocks sell off in response to this. That's the reason why you're seeing some of these small caps outperform. I will add, though, what Juliet is talking about here is fascinating, which is by potentially hiking rates, they're easing the policy rate on the long end, which is essentially what you've seen. They've anchored the long end of the yield curve, which has actually helped ease financial conditions for a number of companies.
If you're looking to borrow to buy a house, for instance.
Correct, which is exactly what people point to as a potential weakness in our economy.
Futures right now, erasing some of the losses this morning. We're down by about 1.2% on the S&P. Julian Emmanuel of Evercore will stick with us. We'll get some World Cup commentary from him in just a moment as well. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, good morning, John. Iran is trying to sell oil to Asia's largest buyers as the U.S. sanctions waiver takes effect. Tehran is eager to find a wider range of buyers and to clear oil currently in tankers, with at least 80% of the volume on the water not having a clear destination. SpaceX shares declined for a third straight day, falling to its lowest level since the company's first day of trading, and erasing more than $600 billion in value over the same time. Shares now on track for a fourth day of declines, dipping below SpaceX's first day's opening price of $150. In sports, Lionel Messi is now the all-time leading goal scorer in World Cup history. After missing a penalty shot against Austria, Messi scored twice to power Argentina to a 2-0 victory. He now has 5 goals in 2 games so far in the tournament and has 18 all-time in his World Cup career. And that is your Bloomberg Brief, John.
Bonnie, thank you for the update. 39 years old tomorrow, playing elite football. It's just amazing to watch, Julian. I was getting goosebumps watching this guy yesterday. Score those 2 goals, just absolutely phenomenal. Still hungry. That team is an absolute unit, a unit full of assassins.
No question. I mean, greatness is something to behold.
Don't you feel
it really is. Totally.
You really do feel like you're watching that, experiencing that at the moment.
I mean, honestly, you know, when I was 39, I could do that. But now...
I was watching that yesterday thinking early 40s, not too much older than him.
Oh, my gosh.
How's he still doing this?
Yeah, I mean, honestly, he is absolutely a beast. Maybe it's just, you know, something in the water.
Let's see what Ronaldo's got a little bit later. Up next on the programme, leading in quantum.
Quantum technologies represents the next generation of innovation across computing, sensing, and networking. We're already the leader by a lot, and we're going to be now the leader by a lot more.
Up next, we'll catch up with Bloomberg's Tyler Kendall down in Washington, D.C. Live from New York City this morning. Good morning.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The Kospi down 10% at the close. Equity futures this morning negative by 1.3% on the S&P 500. On the Nasdaq down by 2.55. On the Russell coming off record highs down by 1.5% so far this morning. Into the bond market, crude lower, yields lower too. Two's out to 30s. Two's down by 4 at 418. Goolsby of Chicago sounding somewhat hawkish in the Fed speak we got in the last 24 hours. Governor Waller not offering anything. President Williams, the next one to watch coming out of New York.
Yeah, I was looking at Governor Waller's speech and I'm thinking, like, really, none of us care what you think about the dollar and the role of the dollar over the next 20 years. I mean, we care.
Chris,
sure,
if you're watching this morning, I care.
Chris, I mean,
great speech. Fantastic. Carry on, please.
All right, I'll leave that there. But meanwhile, Goolsbee actually did come out and started talking about how inflation has been well above target, has been going in the wrong direction. And also, again, was sympathetic to this view that maybe people speak too much and forward guidance can sometimes be more of a problem than it is actually helpful.
I know Governor Waller tunes in around now, so good morning. Some of us enjoyed
I think it's great. I just think that that's not what we were looking for, just because we all want to hear what you have to say about inflation. So, Chris, please come join us.
Noted, he's scheduling the speech right now and the appearance. Crude, as I mentioned, we're down by 0.5, 77 on Brent. Talks go on and on and on. The barrels are moving. That's what people are focused on. We've got some waivers. Iranian crude, they're going to be moving Iranian barrels. The US refiners going to buy Iranian barrels?
Don't know yet, but legally it looks like they are going to be allowed
to consider
in terms of this license until the end of August, when the 60-day period is up for. Yeah, it actually is wild to think that U.S. refiners could actually start purchasing Iranian crude. Do I think that's really going to happen? Probably not. It might extend their customer base outside of China to other countries in Asia, but they have a waiver now to pretty much sell to anyone. Other issues might come up, like EU has sanctions on Iran, so maybe the European Union is going to be a problem for them, but right now, not OFAC.
WTI this morning down by a third. We're at 73. Let's focus on Washington, D.C. Under surveillance this morning, leading in quantum.
Quantum technologies represents the next generation of innovation across computing, sensing, and networking with enormous significance for our country's economic growth. We want to keep that positive momentum going. In America, we're already the leader by a lot, and we're going to be now the leader by a lot more.
So here's the latest this morning. The president signing executive orders to boost U.S. dominance in quantum computing. The administration announcing major equity stakes in 9 quantum computing companies just last month. Bloomberg's Tyler Kendall has the latest. Good morning, Tyler.
Hey, John, good morning. Well, that announcement last month came alongside $2 billion worth of funding and means that the U.S. government now has equity stakes in more than 20 private companies, which the Trump administration says is all about bolstering U.S. national security. But at the time of the announcement, the U.S. Commerce Department told the Wall Street Journal that it was, quote, spreading out its bets among these 9 quantum computing companies, and acknowledged that it could take some time to pan out because analysts tell Bloomberg News the industry has made some pretty major breakthroughs recently, but is still working to overcome some pretty large challenges to actually use the technology at scale. The simplified idea here is that quantum computers, which are capable of solving problems much faster than traditional ones, complement the advances that we're seeing in artificial intelligence, which is part of why the president put out these executive orders yesterday, one of which would seek to have the federal government work alongside private sector companies to build a supercomputer that can do scientific research by 2028. And the second executive order was geared towards bolstering against cybersecurity risks. John, we saw some pretty significant investment, of course, from the private sector, and executives yesterday from IBM and Alphabet joined the president for the signing. You also, of course, heard President Trump talk about the idea that this is all going to be incredibly instrumental in helping the U.S. compete when it comes to China.
Tyler Kendall with the latest in Washington. Tyler, thank you. IBM in the pre-market up by 4%. Julian Emmanuel still with us. Julian, we have a new whale in the tech sector, and it's the U.S. government. How are you thinking about that?
Well, look, again, there's the concept of picking stocks and getting national champions, and you've seen it with a number of names, very old line U.S. technology names. In the bigger picture, anointing winners and losers has its own issues in terms of the government level. But frankly, the fact that the government is as, forcefully behind the AI revolution as it is a positive in our mind for investors broadly.
Well, we see this administration do it with Intel and a number of rare earth mineral companies. Do you just have a list of potentially the next company the U.S. government might take a stake in, and then the stock is off to the moon?
We did that a number of months ago. I would say it was very well received and certainly worked. But again, I think we're far enough along. And again, this is also part of the investment problem in general, that when you look at the major sectors, it's now 58% of the S&P 500, the top 10 stocks, 40% of the S&P 500. that there is a little bit of psychological crowding out in trying to find companies with smaller market caps.
But the heavy hand of the U.S. government, does it distort the market?
Classical economics would tell you that it does, okay? But again, I go back to this idea that the bigger picture in terms of making sure that the U.S. is front foot versus the rest of its global competitors in technology is a positive.
There's also a sense that there's a rolling ball of money that is racing to the next corner, the next big thing that could potentially take off as this build out in tech continues, and that people aren't sure what the ultimate goal is, what the ultimate form of AI is going to take in terms of the way it's displayed throughout economies. At the same time, it's just racing to get there, whether we see it in SK Hynix and Samsung or whether we see it in the semiconductors in the United States. How does that destabilize markets? I mean, how much is that something that you're watching?
Well, it just shows you that volatility works both to the upside and the downside. And actually, for us, is very interesting. And the reason we don't think we're in a bubble right now is because for the last 6 weeks, clients have been asking, how do we hedge AI? How do we deal with the fact that the AI trade is everything? It now dominates emerging markets. It's changed the relationship of gold as a hedge. It's changed the relationship of bonds as a hedge versus stocks. And our answer is actually this is a very interesting time. On a day-to-day basis, there's a larger universe of stocks in the S&P 500 that are moving inversely to the S&P day in and day out. We call them negative beta names. That really act as a portfolio diversifier. People are looking for reasons to hedge, yet stay invested.
Are stocks the best hedge to stocks versus bonds being a good hedge to stocks in this environment?
Well, in an environment where we're concerned about higher inflation broadly on a sustained basis, history tells you that stocks are the best hedge.
Can you describe those stocks? Where do we find those stocks?
They are across, an entirety of industries. Energy, obviously, the narrative of this entire year has basically been energy moving inversely to the S&P 500. But you also see it in consumer names. You see it in utilities. And of all the strange places, you actually see it in select financials. In our mind, that is definitely different behavior.
Yeah, what do you make of that, the banks trade? Because they were meant to be the big beneficiaries of all of this technology.
I think, again, what it is sort of a preference. I remember years ago at a different shop, our oil analyst said to me in the midst of a massive rally in oil, when are my stocks going to start rallying? And I said, they're going to start rallying when they start selling technology. OK, and so when I think of financials, that's likely going to be the outcome when we take some chip. If you look at yesterday, financials traded very well in a negative tech tape. And that's kind of the narrative.
Julian, good to see you, as always. Thanks for dropping by. On tech, on a World Cup, Julian Emanuel of Evercore, with equity futures down about 1.2% this morning on the S&P 500.
Yeah, a key question is going to be Micron, right, coming out tomorrow. And can they continue to deliver with their plans for the most expensive chips? Are those hopes and dreams of powering the race to space and beyond?
You don't sound convinced, Bramo, I have to say.
I mean, 880%. You know, it's pretty good for now.
Coming up on the program, we'll catch up with Jata Banuaj of TD Securities as the yen nears a 40-year low.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Equities declining this morning. We're down by 1.3% on the S&P. On the Nasdaq, tech stocks under pressure. We're down by 2.7%, declining to start the week following 2 weeks of gains on the S&P 500. Within the S&P, notable loser in the last 24 hours. Alphabet under pressure. Some key talent departing for the likes of Anthropic. We can touch on that story a little bit later. Outside of the index, SpaceX not exactly helping the tone around tech stocks yesterday or this morning, for that matter. In the bond market, check out the front end of the yield curve. Twos at the highest level in more than a year. At the close as of yesterday, this morning we're down by 4 basis points. 418 on a 2-year. As we get more and more Fed speak, supporting the idea that maybe we're moving towards rate hikes of this Federal Reserve.
Yeah, Chicago Fed President Austin Goolsbee coming out yesterday saying that inflation's moving in the wrong direction. We see now a 98% chance of a Fed rate hike by September. That is before the midterm elections, most notably. So interesting kind of timing. And we saw the 10-year real yield reach the highest level in a year yesterday. So you look at all of these confluence of events and you start wondering, is this going to draw people back to the bond market this morning? Yes, it is.
It's kind of interesting, isn't it? We've talked about this a few times over the last month. How dependent or independent is this Fed call on what happens with crude? And yet we've gone from triple digits on crude down into the 70s, and still rate hike bets are firming, they're not fading. And that tells you this is more than just about energy.
There are two aspects here. On one hand, there are lag effects from the energy experience and the idea that some of the deliveries haven't come for a while, and people are expecting that to continue. But inflationary inputs have been increasing from a whole host of different areas, in particular from those expensive semiconductors that SK Hynix is maybe pulling back on. So some of these inflationary pushes have come from far beyond the oil trade, and that's what's getting people nervous.
Brent is 77.64 this morning. Let's finish on the FX trade. The currency pair of the moment, dollar-yen. Big move in the last 12 months, major move in the last 5 years. Dollar-yen this morning, 161, very close to 40-year lows for the Japanese yen, and very close apparently to intervention from the Japanese, and maybe in coordination with the U.S.
And this comes after a phone call that you had the Japanese finance minister have with the Treasury Secretary, a follow-on of a conversation they had recently at the G7 when it comes to that meeting in France. And this is what the quote. The finance minister said that they agreed to take, quote, bold steps on currencies if needed, and said the nations are increasingly, quote, aligned on FX policies. So now everyone is on high alert that potentially you could see this coordination and some sort of intervention. Or right now, is it just strictly rhetoric to try to have the jawboning do the work?
Just a little bit of yen strength in the FX market this morning. That's the cross-asset price action, 3 hours away from the cash open. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. The tech sell-off is hitting some of this year's biggest winners the hardest. The chip and memory names like Micron, SanDisk, and Intel all falling sharply in the pre-market, and it mirrors what we saw in South Korea, where memory names led the 10% sell-off on the Kospi, particularly SK Hynix. There was this report out there saying that it may slow its AI memory business, shifting to DRAM, and that is sparking fresh concerns about demand just in time
for Micron earnings tomorrow, so dramatically raising the stakes for that name, which is down 9% in the pre-market. Meanwhile, the tech sell-off is also hitting the newest entrant to the public market. SpaceX shares are falling 4.25%, on track for a fourth straight session of losses. Yesterday alone wiped out $400 billion in market value, the second biggest one-day loss in stock market history. And if we maintain these levels, SpaceX will open with a market value of below $2 trillion. But I managed to find one bright spot in tech, and that is IBM. Shares are up 3.25%, and it's really on three positive developments. First off, it announced a cybersecurity partnership with OpenAI. It picked up an upgrade by analysts over at JP Morgan. And as Tyler mentioned earlier, its CEO received high praise from President Trump at a White House quantum event yesterday. John?
Stock up 3% in the pre-market. Yahira, thank you. More from Yahira in the next hour. On our radar this morning, the US granting Iran a 60-day license to sell its oil on the global market as peace talks press on. The measure marking the most sweeping rollback of Iranian sanctions in decades, unlocking billions in potential revenue for Tehran. Elsewhere, Apollo imposing another cap on withdrawals from its private credit fund for retail investors, limiting redemptions to 5% of outstanding shares after investors aim to pull nearly 17. And finally, SoftBank founder Masayoshi Son saying there's little merit to the idea of building data centers in space, dismissing one of the key ambitions for Elon Musk and SpaceX. Some pointing to the high cost of the concept, saying the AI race will be won on the ground.
He who strikes first wins. These are some of the incredible wisdoms that we heard from Masayoshi Son as he talked about this, talking about Elon Musk as an incredible investor, but saying ultimately you have to focus on what's going to happen in the next few years, not the next few decades, and that the AI race will be won in the near term, not the medium and longer term, which is clearly the ambition of SpaceX. SoftBank hasn't always been right, although they have been a huge backer of a lot of the technological prowess that we have seen. Really interesting to see this cohere with the fall below $2 trillion for SpaceX.
Shocking.
Oh, my goodness. How will we survive, and whether that will continue its descent or whether people will continue to rally around this name?
It's not Elon Musk. It's also Jeff Bezos, who feels that they can build these data centers in space. It's a place that you can get cheaper compute. You can rely on solar power to do all this, and then it beams back to us here on Earth. In the past, he's put at 10, 20 years. I know recently he said the timeline very unsure of, but it's not just Elon Musk who thinks this. I actually once caught up with Jeff Bezos' brother, who told me it was either high school or college. He literally wrote a paper about how he wanted to start Amazon, to build a company so that then he was able to have all this money and knowledge to then put data centers in space, something these people have been thinking about for decades. It didn't just all of a sudden happen in 2026 when everyone's obsessed with compute.
The real passion project. Yeah. For these big tech players.
I did that in high school, too. Who didn't write some paper?
I was very focused on football.
Yeah, I don't think so. Yeah, I don't think that was...
Space,
I mean, I actually admire the people who have these passionate visions since very little.
The thing is, they actually do really think it's realistic. I know it sounds out there, but they truly believe it's realistic, and they are working on that every single day. And it's part of the reason why Blue Origin decided not to do commercial flights anymore.
Look, when it comes to Elon Musk, we've been proven wrong time and time again. The focus today, that $20 billion debt offering, should get some details of that a little bit later.
Yeah, some pushback, because on one hand, you can talk about the hopes and dreams being baked into the stock price. You're potentially compensated for that because you've got the upside as well as the potential downside. With bond investors, they just want their money back. And so if you're looking at someone who is hoovering up as much cash as they can and borrowing a lot to do it, you have to start wondering, how about that payment back a certain time later? And what do I get to be compensated for that?
Pretty vanilla and very boring, isn't
it? Well, I mean, I kind of like that.
You don't get the upside in the same way, to your point.
Yeah, but you want your money back, so it's about counting beans.
Without a doubt. Look out for those headlines, potentially a little bit later on. Let's talk about foreign exchange. The yen nearing its weakest level in almost 4 decades. Intervention risks are rising as US Treasury Secretary Scott Bessent and the Japanese finance minister agree to take, quote, bold steps on currencies if needed. Joining us now is Jayati Bharadwaj of TD Securities. Jayati, welcome to the programme. Good morning. What do bold steps look like? Can you describe for us what you might be expecting?
Thank you so much for having me. Unfortunately, Japan is running out of options. Already, this has been a very tumultuous year. They've tried everything. They've had Bessent do the soft rate check in January. They've tried aggressive verbal intervention. They've tried a real intervention. They've tried a hike. None of that has worked. I think credibly, it's all about interest rate differentials, which is where Japan, even if they hiked, did not signal credible future hikes or any sign that they are now on a path to hiking interest rates more credibly. Whereas now you had a very hawkish Fed last week, which sort of threw them in the spanner because now US interest rates have clearly risen, which has always been the pain point for yen. Now, I think their main concern is hopefully that the conversation that leaked out, and I always say leaked with air quotes, is that it does the jawboning for them and establishes now maybe 162 as the next 160. But short of a coordinated intervention, the only durable way to relieve pressure off of yen is either Japan gives up its very cautious bias, or to their benefit, for some reason, US data starts surprising to the downside so that the hawkish pricing for the Fed comes down a little bit. Short of that, it's only coordinated intervention, which historically was done during the 2011 earthquake. Yep. But these are not those times. And I'm not sure the US wants to send a signal globally. We are willing to sell dollars outright to help out one nation with the currency when there's no active, natural disaster or liquidity crisis.
You went there. There are always policy trade-offs. And Japan has decided that they don't want to go on an ambitious rate hiking cycle for other reasons. Why is that our problem and not just theirs?
So I think a little bit of it has been political, which is why a lot of people did start getting into the short yen trade, especially around elections, which is where Besant, helping out Japan as a very strong ally, said that let me help you out here and let me do the soft rate check on your behalf. So I think the similar thing we saw with Besant in Argentina last year, it seems like the treasury market and, the head there is showing a little bit of a more activist approach to this. And he's definitely a lot more geopolitical than previous Treasury secretaries have been. So I think it just signals to me that Japan is the largest holder of US Treasuries at this moment. We've all heard of the debasement trades, Asian central banks wanting to move away from Treasuries. China, we know, has been selling for, a long number of years. Japan is now the largest holder of Treasuries. So that also, helps you understand that backdoor relationship quite a bit.
Why wouldn't the Bank of Japan just hike rates more significantly? Because part of the reason why you saw the sell-off persist was because they were somewhat dovish in their rhetoric relative to market expectations.
So there were a couple of things. So first, unfortunately, Ueda, who is more hawkish on the board, was hospitalized. So the second in charge did the press conference, who is a dove, so he sounded more dovish. Secondly, Japan, you could say for conservative reasons and also political reasons under Takaichi, who has not always been a strong advocate of the Bank of Japan hiking interest rates. In fact, she comes from the understanding that you should keep policy interest rates low to keep fueling the economy, and that should fuel inflation. So she comes from the opposite mindset. She's not looking at it from the fact that bond investors are now demanding Japan to hike. Inflation is running, rampant. You have enough credibility now that wages have been moving in the right direction for the last couple of years. Growth is on a better trajectory. But it's some political reasoning there why BOJ is also not moving so aggressively. And ultimately, she did stack the board with doves rather than hawks.
I wonder how much the strength of the dollar and the newly hawkish turn of the Federal Reserve is going to pressure currencies around the world in a way that people are not expecting. This was more of a shift than people thought. You are seeing some significant dollar strengthening. How disruptive is this going to be globally?
I think that's a very active debate that Warsh has set up recently in markets. Is that what he's talking about is clearly a move towards a shift in the bias of the Fed towards hiking. And you can see that from the dot plot as well, and also from the innumerable number of times he mentioned price stability this time around. But I think the question is that coming from the fact that the Fed members as a whole, as a board, thinks that neutral rate in the US is higher, which means that the debate that we've been having with the US is that US policy rates are in restrictive territory. If they think R-star is higher, then that's not true. Then rates have not really been in restrictive territory. So then that actually raises the long-term, R-star projection and the long-term interest rate path for the Fed, where you could be like the 375 is actually not restrictive. It's at neutral, basically. The second debate is that, so right now there's so much confusion in markets because Warsh has been very, very still guarded with his opinions, which is why markets are now pricing close to 2 hikes, followed by some easing next year, which is also very unique. So there's some mismatch there where markets think that he's talking about hikes, but it's more short-term solution to the inflation risks from, the Strait of Hormuz. But markets are still expecting interest rates next year to then come off after the bump higher in interest rates. So I think the move lower interest rates next year is the one which, if that's challenged, if Warsh in future meetings signals that no, at 375 we're not restrictive, or potentially he says we're somehow stimulative because of AI, CapEx, I think that will shake markets. That will be a big move, not just in hike pricing this year, but next year, and that will induce a lot of volatility in global asset prices.
Jyoti, it's good to see you. As always, could be quite a summer. Jyoti Bhattacharya there of TD Securities with the 2-year very close to the highs of the year. Yields down across the curve so far this morning. With an update on stories worldwide this morning with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Andy Burnham under pressure to outline an economic plan for the United Kingdom. He's the front-runner to replace Keir Starmer, who announced yesterday he's stepping down as Prime Minister. The BBC reporting 2 Labour MPs are considering challenging Burnham. Iran says $12 billion of its frozen funds are set to be released as part of ongoing talks with the US. Tehran is reportedly set to receive 2 installments of $6 billion apiece, but the US has yet to confirm the Iranian reports. Chicago Fed President Austin Goolsbee remaining concerned about inflation and questioning whether the factors driving up prices are truly temporary. Goolsbee calling out a rise in services pricing, quote, disturbing, and saying pressures there can often be more persistent. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, SpaceX falling back to earth.
The key story is tech boom, and that's going to be the most important.
Everybody knew SpaceX was going to be big.
Demand was off the charts.
They're totally overvalued, and it's so obvious.
Up next, we'll catch up with Pierre Ferragut of New Street Research, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the 3rd floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
So typically when I wake up in the morning, the first thing I look at is the Treasury curve. Over the last few months, I've looked to crude. I wonder how many of you wake up first thing in the morning stateside and look to this, South Korean equities, because so many people have piled into two names. The Kospi, another wild ride overnight, triggering circuit breakers, dropping as much as 12% at one point, closing lower by 10%. And in many ways, that sets the tone for today's session. Equity futures stateside, rolling over. Nasdaq futures underperforming. On the Nasdaq this morning, we're down by close to 3%, negative 2.8 so far this morning.
Yeah, and if you look at SK Hynix, which is one of the two names really driving the Kospi, it's down more than 13%. It speaks to a concern of how high-flying some of the performance has been of these stocks, that any little rumor that potentially they can't keep accelerating their earnings to the same degree will cause the momentum to just fade, and that is what we're seeing this morning.
SpaceX, one of those names under pressure, under surveillance this morning. SpaceX falling back to earth.
The key story is tech boom, and that's going to be the most important.
But we have to be wary that it's not going to last forever.
Everybody knew SpaceX was going to be big.
Demand was off the charts. They're totally overvalued, and it's so obvious.
Here's the latest this morning. SpaceX shares dropping for a third straight day, erasing $600 billion in market cap as the aerospace giant announces plans to sell investment-grade bonds for the first time. Pierre Ferragut of New Street Research maintaining a buy rating on the stock, a 165 price target. Pierre joins us now for more. Pierre, welcome to the program. The difference between correlation and causation, what's the connection, if there is one, between that debt offering and this stock performance?
Well, I don't think the debt offering is like a significant trigger on investment sentiment. We knew SpaceX had like a bridge loan of $20 billion and was set to refinance it ASAP. Same thing for the acquisition of Enisphere, the owner of Cursor. These things were well known, so I don't see that as being a direct connection, to be honest.
So, Pierre, what do you think is the reason for the underperformance over the past couple of sessions, albeit still above where it first traded or where it was first sold, and albeit still above or just around $2 trillion?
Yes, exactly. So I think like the initial reaction of the market was very positive. There was like a lot of demand for the stock. Everybody wants to participate to this dream. What a beautiful story. This is space exploration. This is like throwing data centers in orbit. And these two things, really, space exploration, throwing the data centers in orbit, are 2/3 of what makes that stock worth close to $2 trillion, or take like the valuation above $2 trillion. And only 1/3 of the stock in the way we value the company really relates to much more tangible and near-term businesses, which are basically Starlink, like the telecom business. So you look at sentiment on AI. These days, I think investors are concerned. They are hearing about companies like blowing up their token budget and reining back on AI spending. So there is like a negative, like a cautious AI trade around that probably weighs on the stock. And then, approaching like almost exceeding like $3 trillion at some point in valuation, of course, triggers profit taking, because investors know that most of the valuation is a very, very long-term story.
Does it concern you, Pierre, that all of the tech names are kind of trading in tandem this morning? That yes, you've got semiconductors down, but you also have hyperscalers down. You also have SpaceX down. Even though some earnings are better than others, there has been the delivery on some side, even if you still haven't really seen the numbers in the likes of SpaceX.
Yeah, it's interesting to see that, as you say, numbers are probably going to look very, very good. We're very, very confident, like the near-term outlook for all the tech space is actually looking very, very good. The issue really is sentiment, and sentiment doesn't wait for numbers. That's usually how it happens. It anticipates numbers. So sentiment, as I said, is really about, we've been going through 6 months during which like AI frontier labs were adding several $1 billion of additional recurring revenue every week. And now we hear like the CEOs of very large, very tech, advanced tech companies like Uber talking about having to rein back on AI spending. And that's, I think, going to cast like a shroud of of concern and caution in the space environment. The good thing is that as we go through numbers, they're going to be reassuring. But that's going to be this quarter's numbers, the guide for next quarter, and I think the concern might hold on a longer duration.
Pierre, when it comes to SK Hynix and Samsung, this comes at a time when last week Apple said they were raising prices because of, quote, unsustainable memory shortage. Then why are these companies lower?
That's a very good question. That's where the market is being smart. When you hear Apple complaining basically about memory pricing and saying, well, I'll have to increase the price of my iPhone because memory prices are too high, what does that mean? That means they're going to destroy demand. They're increasing the price of iPhones. Less people are going to be able to buy iPhones, and that's going to reduce memory demand. And so memory as a business overall remains what it is. You have a certain amount of production capacity. If you have more demand, prices go through the roof, and if you have less demand, prices collapse. And even if you have like this very strong demand from AI, you still have like a very, very large portion, nearly half memory demand in volume still comes from PCs, smartphones, the broader like data center and compute demand. And if you have memory destruction in these markets, there is a risk that we see like a pause in the very, very high pricing environments that we see at memory. And when you look at where these stocks are trading, you know, at like double-digit multiples of their COGS. So if you forget like the outsized profits they're doing at the moment, stocks in memory are actually very, very expensive. So investors know that, and that makes them very, very cautious about it.
Yeah, is that one of the reasons why you're neutral on Apple, neutral on that stock?
On Apple, we're neutral just because it's very, very healthily valued with very limited upside potential. That's the reason why we are neutral on the memory stocks, yes.
Pierre, appreciate it. Thank you, sir. Pierre Ferragut there of New Street Research using the phrase demand destruction with regards to Apple.
So that's what I've been thinking about. Since he said that, I was thinking, can I use that excuse with my kids? Can I excuse it? I'm sorry, it just destroyed my demand when I saw that ticker price. I mean, at what point does Apple have pricing power, and at what point can they pass along the extra costs of memory chips?
Wall Street Journal, after they had that interview, did the pricing, and the iPhone 18, if it comes out Pro, would cost $1,299 because of the higher cost in memory chips. $1,300 for a new iPhone? I mean, that is going to be a bit of a tough sell, but I'm not sure.
You know what happened to me? We went to the Apple store. I mean, you might load up early because ultimately, you know, get ahead of that. Look, I don't know. Let's see if that actually happens.
Is that what you actually did?
Hoarding. You're buying holiday gifts now in the summer.
Like what I think,
really inflationary behavior there.
Well, to get ahead of it.
Yeah.
But I don't know that I'm alone.
Starts the spiral. I know.
You're already creating wage spiral single-handedly, so there you go. So I'll just do the other side.
I did my best to do that.
Oh, good.
Everyone should demand higher wages.
I know. Well, that's the reason why they're going to hike rates.
Absolutely.
There you go.
There you go. And next on the programme, Phil Camporelli of JP Morgan Wealth Management, Henrietta Trays of Vader Partners, Matthew Whitheiler of Wellington Management, Neil Dutta of Renmac, with a very interesting take on the Kevin Walsh-led Fed. All of that in the second hour of Bloomberg Surveillance.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies.
often talk about that phrase, demand destruction. Does that breathe some life into the sell-off elsewhere?
One chart that really stood out to me from Dan Curtis at Bloomberg TV was that the cost of tokens, the amount that people pay to use some of these large language models, has gone down in tandem with the price of the hyperscaler shares. There is a fear that people don't want to pay for this. Uber pulling back, some of the own hyperscalers themselves saying, look, stop it with the vibe coding. If you're not going to have some sort of actual profitable project, let's not do it. This, to me, is some sort of pushback. I do wonder, though, on the consumer pushback about what you're actually going to see, because so far we haven't seen nearly as much demand destruction with higher prices as people expected.
Futures down this morning with negative 1.3 on the S&P, negative 2.7 on the Nasdaq. Coming up this hour, we'll catch up with Phil Camporelli of JP Morgan, with tech dragging down equities, Matthew Whitheiler of Wellington Management on a 3-day route for SpaceX, and Neil Dutta of Renmac warning the Kevin Walsh-led Fed could pose a left tail risk to investors. We begin this hour with stocks sliding as the latest rotation out of big tech weighs on markets. Phil Camporelli of JP Morgan Wealth Management writing S&P 500 and Infotech multiples are both trading below December levels. It would make sense to see more cyclical sectors take part in the second half of the year if we move away from geopolitics. Phil joins us now for more. Phil, good morning. Good to see you, buddy.
Good morning. Good to see you.
What do you make of the nervousness around the tech trade just in the last 24 hours?
Yeah, so for us, this is a kind of a normal thing with a market that has been up so much this year. However, as I wrote, it's kind of the opposite of a bubble. A bubble to me means go pay up for these stocks indiscriminate of the fundamental earnings story. And what we're seeing on both the S&P and, as I mentioned, the information tech sectors is that those multiples are lower today than where we were coming into the year. It's been all driven by earnings. John, and I love this stat. I keep thinking about this stat, given what happened in the Kospi overnight. There's a 30% increase in the supply for chips and an 80% increase in the demand for chips. I mean, that was like the story of me trying to get tickets for the Knicks for the finals, right? Like too much demand, not enough supply, and I think that's something that we'll continue to think about. However, the rotation is also front and center. If we're moving away from geopolitics, and if rates, in our opinion, it's a close call, but we don't think the Federal Reserve is going to move policy rates this year. I think that sets up for a nice rotation. Financials for us is a front and center trade driven by really good earnings inflections higher, loan growth based on a resilient consumer, as well as share buybacks and dividends. Like, it's all adding up. And financials through yesterday were negative. That sector was negative year to date compared to some other sectors that obviously
I'm curious where you stand on small caps with regards to the threat of the risk of rate hikes.
Yeah.
We've had a decent rally. Year to date up nicely, outperforming record highs on a Russell at the close as of yesterday. Despite the firming up of rate hike bets in this market, can we carry on standing up in the face of that?
Yeah, so we'd rather the large cap story than the small cap. However, of the view that the Federal Reserve, again, close call, but won't move rates this year, and that we want to be pro-cyclical. I mean, everybody was caught on the 9 of the 18 last week, believed that there should have been a rate hike. I was more impressed with their views on above trend growth for the next couple of years, right? So that's kind of a pro-cyclical story for small caps. And as long as you don't get the Fed rate hikes, it won't be bad. However, we still like the U.S. large cap story versus small cap.
There is a sense, though, that if the hyperscalers keep the capex where it is, and you do have the investment and shares of those names continue to go up, then you're going to see inflationary pressures that are going to worry the Federal Reserve. Yeah. Don't you see that as something of a counterpoint to this rotation?
Yeah, so that's why it's a close call, Lisa. And you know, I keep going back. I totally take your point on the capex, but I keep going back to the labor market of where true inflationary pressures could arise from. And with wages right now below inflation, negative real wages, and the quits rate, I love looking at the quits rate as part of JOLTS. That's, for me, a very important indicator. Do I want to take this job and shove it and go find another job that has a higher wage? That quits rate is at cycle lows right now. So for us, the bargaining power from the U.S. employee just isn't there. That will not allow inflation to stick at these levels. Our view is that we're going to see peak rates and peak inflation in the second quarter of this year, which sets up for a really nice second half of the year.
So, and I'm glad that you don't want to take the job and shove it, because we love having you on, and I hope that you stay for a very long time. There is a sense, though, that there is some pushback from investors starting, right? And a little bit, whether it's just SpaceX or whether it's beyond, that investors are getting a little bit nervous about how much money is getting raised. Does that make you think that maybe we're at an inflection point in terms of, you know, maybe we're not going to lend you $20 million to go to the moon? $20 billion.
Yeah. So that's where the rotation comes in, Lisa. So put it this way. We write about AI on the 6 months ahead, the 3 years ahead, and the 10 years ahead, right? We believe in this trade. That's a structural, generational trade. At the same time, though, the rotation trade is front and center for right now. So yes, again, that SpaceX, for example, was 4 or 5 times oversubscribed. There's still $22.5 trillion sitting in checking accounts, savings accounts, and money market funds. Liquidity is everywhere. Okay, so and then you add on top of that the share buybacks, and I don't think there's an oversupply of either IPO or even debt issuance right now. So I don't think that's a technical problem. However, you have to rotate to places that have underperformed. And again, that's where kind of that financials trade comes in for us.
Phil, what do you make of the fact that Austin Goolsbee yesterday was talking about some inflation may be coming off when it comes to the tariff hit, when it comes to gasoline now is under $4 a gallon across the United States. But he pointed to services. The fact that we've seen it in services, which historically is pretty persistent, is a little more disturbing. Yeah, so I would call that a high-class problem, right? It comes from the fact that you have a consumer that's more resilient. And I keep going back to that top 20% of earners. The top 20% of earners in this country do roughly 50% of the spending. And they only spend, 2.5% of their income on gas, oil, and electric. So I think that's where it's coming from, kind of that top-end, high-end consumer that's keeping consumption strong. And I just don't believe that service sector inflation is a problem. I mean, we're talking about 1 or 2 hikes being priced in. That's like lowercase hawkish, right? That's like tinkering. Like I don't see that as a problem. So you think inflation is only an issue for the upper cohort of society?
No, I think service sector inflation by itself is a symptom of an economy that's actually pretty strong and a consumer that's pretty strong, which will then lead to the earnings story, right? Nominal growth drives earnings, real GDP plus inflation. So I think that's actually an okay problem.
So at this point, do you think that the market is pushing back in any way, shape, or form? Because right now it seems like the market is cheering the idea of rate hikes in the face of inflation. You've seen lower end rates come down. You've seen this idea of stocks continuing to rally, the rotation still intact. Yeah. Where's the pushback? Why wouldn't they want to hike rates? Because right now the market is saying this is a good thing. And frankly, this is actually going to ease financial conditions for the people who need it the most.
Yeah, so so the question is, why wouldn't they want to hike rates at this point? You know, I think policy error is still front of mind, right? Either way, I don't think that this economy needs a rate cut for sure, but I think a rate hike at this point would be of the belief that inflation was going to continue to increase into the third and fourth quarter, which we don't agree with. I think it's more of a Fed on hold. I think that's where they want to be. Remember where we came into this year. There was 3 easings priced in. So I think the fact that we're now at a hold is a really good sign for the economy that it could withstand it. And again, this all kind of goes back to the fundamental story of growth and inflation. It's not just inflation. The growth plus inflation story, I think, is going to drive some pretty nice earnings.
You know, in this seat, I say this as someone with the luxury of not having to make a call. Yeah. But I'm trying to stay open-minded about the Kevin Walsh Fed. There are some people making a call that maybe they hike as soon as July. We've got no forward guidance, so people are filling in the gaps, the space on what they think the Kevin Walsh Fed now stands for. When I think back to the use of forward guidance, had a lot of benefits for different central banks. If I go back to the Bank of England under Governor Carney, when he talked about the benefits of forward guidance, I think at the time they had threshold-based forward guidance, whatever. He said that it helped to bind the hands of the committee so that you didn't get that kind of dissent. And I just wonder if that's the same reason we've got all these task forces. That if you put all these task forces together, you can't really make a call to move policy until the task force is complete. Now, as things stand, a week on, I don't know who leads which task force. I don't know how long those task forces go on for. And I find it difficult to imagine a committee that is aggressive about hiking interest rates before those task forces are even complete through the summer.
That's why I have the end of August circled in my calendar, because at Jackson Hole, they're going to come out and likely have enough time to have some sort of conclusion from those task force. The actual time frame sets it up perfectly, because they said they're going to move quickly and certainly by the end of the year, probably by September, have some conclusion. So if you think about where this is lining up, that's the reason why people are looking at September as the potential for a rate hike.
Neil Dutta joins us in about 30 minutes. He's going to have his own views on all of this, but it's a question we've asked repeatedly in the last week. Are we confusing the lack of guidance for hawkishness? Do you think we might be?
And I think, too, again, the headlines last week with 9 of the 18 wanted some sort of move higher in rates. But I go back to the 12, like the 12 voting members. And I'm not sure how many of those 12 really want a rate hike. And again, if we're sitting here 3 or 6 months from now and oil prices are where they are and is shaving off elements, and Anne-Marie, maybe it's a service sector story, who knows, that could be more sticky. But if that headline PCE number is coming down because oil prices are coming down, I just don't know why they would want to move rates higher. That's not obvious to me.
We'll see. Phil, it's good to see you. Thank you, buddy. Thank you. Phil Camprodi there of JP Morgan Wealth Management. With yields this morning down 3 basis points, 419 on twos. With an update on stories worldwide this morning with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Iran is trying to sell oil to Asia's largest buyers as a U.S. sanctions waiver takes effect. Tehran is eager to find a wider range of buyers and to clear oil currently in tankers, with at least 80% of the volume on the water not having a clear destination. South Korea's Kospi tumbled into the close Tuesday, triggering circuit breakers twice. The index ended about 10% lower, marked its worst day since March 4th. The benchmark chips giants, SK Hynix and Samsung, led the broad sell-off, both declining at least 11%. Apollo is once again limiting withdrawal requests from its largest non-traded private credit fund. The firm capping withdrawals at 5% of outstanding shares after investors asked to redeem nearly 17%. Apollo reporting most requests came from offshore investors. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, championing economic strength.
The way we're doing it, we have the opposite of a depression. We're doing really well. We're setting records. We have the strongest economy we've ever had.
Up next on the programme, Henrietta Treyz of Vader Partners, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Stocks down across the board. The follow-on from Asia into Europe, into the US session. We're down by 1.3% on the S&P. On the Nasdaq, we're down by 2.8%. 1.7. If you check out the bond market, 2s, 10s and 30s rallying so far this morning. On the session, we're down by 3 basis points on 2s to 419, on 10s just south of 450. And if we finish on crude doing the White House a bit of a favour here. We're down to 77 on Brent, 73 on WTI. Under surveillance this morning, championing economic growth.
The way we're doing it, we have the opposite of a depression. We're doing really well. The numbers are incredible. The oil is at a level that nobody's ever seen before. Oil prices are way down. I think they're very comparable to what they were. We're setting records. We have the strongest economy we've ever had.
So here's the latest this morning. The president aiming to further his message of economic strength in a battleground district in Pennsylvania today, as voters see rising prices going into the midterms. Bloomberg's Tyler Kendall joins us now from Washington with more. Hey, Tyler.
Hey, John. Well, this will mark President Trump's first public event outside of Washington since the ceasefire was extended over the weekend. As you heard President Trump there, the conflict in the Middle East has only supercharged the conversation around the economy, which does still remain, of course, the top issue for voters as we head into November. We are expecting President Trump to say that a potential resolution to the war will help bring down costs and also tout his domestic manufacturing push as he's set to visit a key industrial base and a Mack truck facility. But a new Fox News poll underscores the headwinds that the president is facing, with only 12% of U.S. voters saying that they feel that they are getting ahead financially. Now, historically, polling data typically shows us that Democrats have trailed Republicans when it comes to trust in handling the economy, but the recent numbers and trends show that Republicans are indeed losing ground. And perhaps the urgency is being underscored by the fact that this will mark President Trump's 5th visit to the key battleground of Pennsylvania, and this is a very key district with a vulnerable Republican incumbent. Now, John, we have seen some moves recently here in Washington to tackle affordability issues. Just yesterday, the Senate finally passed what was considered to be a long-awaited bipartisan bill geared towards housing affordability and housing supply. It is going to be an issue that both parties try to claim stake to as we head into November.
Tyler Kendall with the latest. Tyler, thank you. Down in Washington, to build on that, Henrietta Trace of Veda Partners writing, the time is ripe for 2028 presidential hopefuls to start distancing themselves from the Trump administration's second term and the Iran war. Henrietta joins us now for more. Henrietta, welcome to the programme. We've learned that's not helpful in primaries. Is it helpful on the international, or rather the national stage, in a general?
The Iran war is universally unpopular, even amongst Republicans. It polls at what is very low for President Trump amongst his very devoted base at 70%. The majority of Americans, I think that the last number I saw was 69% of Americans writ large disapprove of the war. And that includes 78% of independents. And those are, of course, the core voters that you're going after in any kind of election cycle, the midterms, a presidential. And so you see Republican presidential hopefuls. I'd point to Ted Cruz in particular as members who are trying to stake a claim down a lane that isn't directly descendant from President Trump, like a J.D. Vance or a Marco Rubio. If you're not in the administration, the Iran war is uniquely unpopular with the American public. It's a great opportunity to start to differentiate yourself from your other, contenders.
Henrietta, if you're J.D. Vance, though, do you want to be the face of the negotiations that end the war? Or do you think potentially he should have maybe suggested the Secretary of State, Marco Rubio, to handle that?
Yeah, this is really making lemonade out of lemons. The war hasn't been popular from the jump. It has only gotten less popular, which is very normal. But both Iran and Pakistan and, of course, the president did himself a huge favor by getting J.D. Vance, who has historically been opposed to war, opposed to forever wars, and a very vocal opponent of specifically going to war with Iran. Now he is the one in Switzerland doing the negotiations at the front lines. So it's, I think, a very savvy tactic on the part of President Trump to get J.D. Vance in here. It's going to be a problem for him later on down the line.
What's going to be the response from Congress as Iran is saying that $12 billion of its frozen funds were set to be released, and the United States released this oil waiver where Iranian crude could trade on the international market legally?
Yeah, it's amazing. I used to think that the most incredible about face for the Republican conference was going from being pro-free trade and anti-tariff to now supportive of a effectively global tariff regime. And this is, I would say, pretty much on par with that. The Republican conference has voted for Iranian sanctions for decades, and they have passed legislation, including under administrations going 3 or 4 back, saying we want these sanctions, we want to squeeze Iran. They are a state sponsor of terrorism. We will give them no ground. And here you have the Treasury Secretary signing his name on the line, giving a general license for immediate waivers on exactly what Republicans have tried to prevent for the last several decades. So this goes back to sort of the presidential argument. You're getting every presidential contender, Rubio, Treasury Secretary Bessent, J.D. Vance, on the record saying, not only do we support sanctions, but we're going to make them go through before we even debate the nuclear file, while Israel is at war in Lebanon. I mean, it's pretty astounding.
Henrietta, when you take a look at the top three macro risks, and it speaks to what you're talking about with the Middle East, the unpopularity there, as well as some of the way that the White House has navigated it, and that's related to the inflation risk. Torsten Slok put out its Middle East, its inflation outlook, and its artificial intelligence. It comes at a time where the U.S. administration is increasingly investing directly in AI-related companies, quantum computing being the latest target spot. How is that playing with voters as well as potential candidates trying to get to the Republican ticket?
You know, I think if you were able to tie this into how am I going to benefit? How does this help me? You know, I like to hear the idea that America is making so much money off of an Intel stake, but I do not like that I'm paying close to $4 in gas, and I was paying $2.81 at the beginning of the war. So it's very abstract for the average American voter, and that's why you see the president's approval rating on his handling of the economy is at 33%. Those are astronomically low numbers. So you get this directive. It's kind of like the stock market is booming. Well, that's awesome, unless I'm part of the 50% of the American economy that's not invested in the stock market. You know, so it really is hard to sell to the average voter. And when I think of Republicans going into this election cycle, or any candidate, you don't want to pay attention to sort of the campaign contributions unless they're low dollar figures. Show me the individual voters who are out here supporting my campaign, not the big macro, hey, I just got $10 billion from Intel. It doesn't mean anything to the average voter.
Henrietta, we're just hearing from the president on a range of issues with regards to Iran, one on the nuclear effort to make sure they never have a weapon, the other on shipping, and the third point on frozen funds. I'm just going to read some of it to our audience. Iran has fully and completely agreed to the highest level nuclear inspections long into the future. This will ensure nuclear honesty. If they did not agree to this, there would be no further negotiations. Based on this and other major concessions being made by Iran, I've agreed to allow the Hormuz Strait to remain open with no further naval blockade. However, all ships remaining in place should be necessary to reinstitute the blockade, which seems at this point highly unlikely. So that is the nuclear effort and that is shipping. This is the frozen funds point. The money and/or sanctions the U.S. Treasury is releasing goes into escrow, controlled by the USA, and will be used for the purchase of food and medical supplies exclusively from the United States, including corn, wheat and soybeans from our great American farmers. These are things that are desperately needed by Iran. This is a humanitarian crisis. Henrietta, just briefly on that point, the third point on the frozen funds. What have we heard from Iran about that?
We have not heard the same language or verbiage around that. Indeed, they have said the $12 billion is coming in two different baskets, $6 billion at a time. As is very normal with trade negotiations, you get a different read from one side to the other. We've watched it how many times with China. I would say pay attention to what the president is saying here, and Vice President Vance echoed it yesterday, which is farmers. The farmers are in an extraordinarily bad way in the United States economy. That's why the president has taken down tariffs on agricultural inputs. Anything that uses steel or aluminum, a Caterpillar, Deere, big tractor, anything like that, got a tariff rebate on July 8th. And that's because the farmers are in very high bankruptcy levels. They're dealing with the tariffs and the closure of the Strait of Hormuz, extraordinarily high input costs for fertilizer, urea, potash, all that stuff. And it's a result of not just the war, but also Liberation Day. So the president is looking at a state like Iowa, where the Democratic candidate is ahead of the Republican candidate. You got a problem. So for the president to focus on Iran and dovetail it with farmers is very, again, astute, but it points to a political weakness.
Henrietta, appreciate it as always. Henrietta Trace there of Vader Partners. The president talking about the amount of energy that's moving through the Strait of Hormuz. That's brought down crude prices more recently. The effort to unfreeze some of those funds, those frozen Iranian funds, controversial. We'll spend some more time on that in just a moment. Coming up on the programme, we'll also catch up with Matthew Wittheiler of Wellington Management on a 3-day route for SpaceX.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Stocks down this morning with negative 1.3% on the S&P 500. On the NASDAQ, some negative follow-through from the session in Asia. South Korean equities, the Kospi down by close to 10% at the close. On the NASDAQ, we're down by close to 3%, negative 2.75. In the bond market, 2s, 10s and 30s rallying so far this morning on the session at the front end of the curve, down 3. We are negative 3 basis points to 419 and coming off the highs of the year at the front end of the yield curve as these rate hike calls continue to build from the likes of Deutsche Bank, Bank of America, BNP Paribas, and others.
Yeah, and not just for one rate hike, by multiple, with Bank of America calling for 3 later this year. Key question here is how much is this offset by some of the oil prices that have been coming down, and how much is this really just the fundamental strength in the U.S. economy that's shifting up the growth rate and our start? And increasingly, that's the discussion, something that Fed officials are not pushing back on.
A bit more of the latter, I think, because these rate hike bets are firming up even as this move in crude fades. Crude this morning almost taking out basically the whole rally post-war. WTI this morning trading around 73, Brent at 77. Remember, crude was trading in the high 60s before this war started, and here we are at 73 on WTI. And the president just moments ago talking about the amount of barrels that have moved through the Strait in just the last 24 hours.
Yeah, he's talking about 19 million barrels of oil flowed out of the Strait of Hormuz yesterday. He's calling this an all-time record, and oil prices are tumbling down. You have to look at what is actually happening, almost less than the president says. The fact of the matter is, to this market, barrels are moving, and it's not just vessels that have been trapped that are international vessels. This administration is giving a waiver to allow Iranian crude to flow normally on the international market. We could see a scenario, it would be very weird, but we could see a scenario where legally a U.S. refiner could buy Iranian cargoes.
Which is unthinkable to think about. As you've suggested, probably won't happen, but unthinkable. 2 hours away from the cash open, the opening bout just around the corner with some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. The tech sell-off is punishing some of the market's high flyers of the year the most this morning, with chip and memory names like Micron, Marvell, and AMD all sharply lower in the pre-market, and it mirrors what we saw over in South Korea overnight, with the Kospi down nearly 10%, as you said, and it was the memory names leading the sell-off, particularly SK Hynix, after this report came out that it may be slowing production of its AI memory business, shifting toward traditional DRAM chips. That sparked concerns about demand just in time for Micron earnings tomorrow. That name down 7.4% in the pre-market, and this just dramatically raises the stakes for that name. Another tech name selling off is Alphabet, down nearly 2% in the pre-market after it suffered its worst day since May of last year yesterday, with a 5% drop. And that came after 2 high-profile AI leaders left the company in just the past 2 weeks. One left for Anthropic, the other for OpenAI, and it raises questions about whether Alphabet can stay one of the leaders in AI that the market has rewarded when top leaders in that area are leaving the company. And I managed to find one bright spot, and that is IBM. Shares are rising 4.6% in the pre-market on a trio of positive catalysts. First, you have the company announcing this partnership, a cybersecurity partnership with OpenAI. It picked up an upgrade from analysts over at JP Morgan, and President Trump singing its CEO high praises yesterday at a White House event. John?
Yahara, that's happened to stop. We'll catch up with you in the next hour. Yahara, thank you. On our radar this morning, the story just breaking just moments ago. President Donald Trump saying funds from lifted sanctions on Iran will go into escrow. The president posting on social media that the money will be used exclusively to purchase U.S. agricultural goods for the people of Iran.
So even if that is true, it does mean the regime has more access to funds so they can move money around. If they're going to use their escrow money for humanitarian, they can use the remainder of the funds they have within their control to rebuild their military and send this money to proxies. The proxy issue was a red line for this administration, for this president for years, and it is not addressed in the MOU. And now the regime is getting more money. As you mentioned, this was a huge talking point. The Republicans would push back on Democratic administrations when they said they were giving money to the regime from escrow for humanitarian purposes. Well, they just move money around and they still have more money left to use on nefarious issues.
I feel like I've seen this movie before. It's just the president had a different name in the White House.
This is turning into something of the same kind of quagmire when it comes to political and geopolitical strategists. A lot of this is how do you make a deal palatable that on one hand is sort of back to the future when it comes to some of the sticking points in the past, but at the same time did get national gasoline prices on average down to $3.93 from as high as $4.56. And really this is the key stimulus going into the midterm elections that the president is trying to effectuate. So this is the end goal. Question is, how do you sell it on the way in?
I think you can make the case this morning that elements of Operation Epic Fury were successful to degrade the military capability of Iran, to ensure that we have this focus on ensuring they never have a nuclear weapon in the way that the president describes. Good things. Some people might argue we were close to that already before. We are where we are. Operation Economic Fury, which is something the Treasury has touted repeatedly, I think you can make the argument that that has totally failed. We talked about a blinking contest between the Iranians and the US. And based on the commentary coming from the president, the US blinked first with this quote: "I didn't want to see economic catastrophe. If you kept this going, that could have happened." And I think that tells you a lot. That statement's very loaded about the way they viewed current negotiations and the prospect of things get a lot worse for the rest of the world from here.
Right. And you think of a carrot and stick approach. Right now, we are front-loading the carrot when it comes to these nuclear negotiations. We are in the middle of nuclear negotiations, and up front, we are giving Iran economic levers to use when it comes to not just the money in escrow, $12 billion reported today from these funds going to Iran, but also the fact that they can now just ship their crude for market pricing, not having to degrade their pricing to China because it's sanctioned, market pricing using our financial system till the end of August.
Might not be a good idea to have a blinking contest economically with a dictatorship versus a democracy. Just going to throw that out there.
Well said. And for markets right now, markets do not care. And we've used this word agnostic repeatedly. Markets could not care less what the contours of the deal are, what the MOU looks like. They're following the barrels are moving. That's good news. Crude's back in the 70s. Let's move on and talk about tech. SpaceX. The Elon Musk-led company shedding roughly $400 billion in Monday's session alone, the second largest single session drop in market value on record. Matt Whitheiler of Wellington Management writing it's unique in that it's one of the few companies that can talk about a future that doesn't exist and get credit for it in their price. This is exactly how Tesla stock behaves. Matt joins us now for more. Matt, good morning. Good to see you.
Good morning. Thanks for having me.
Does that make it difficult to bet against Elon Musk?
It definitely makes it difficult to bet against Elon Musk. When I think about the companies out there that can go public and be trading at a $2 trillion plus market cap, there are very few that could do it with the current financial stats that SpaceX is delivering.
You're tracking this story. How close are we to the reusable technology, the advancements that we need to justify this market cap?
You know, I'm not a huge SpaceX expert, but what I think they have delivered is reusable rockets at scale. And I think they've proven a lot of that, which is in fulfillment of the vision, which the next step being vision of having orbital data centers. And when you look at the analyst reports and you look at how SpaceX is trading, obviously a lot of embedded value in that orbital data center story.
Masayoshi Son of SoftBank came out overnight and was talking about how he doesn't see data centers in space as the likely path of travel. He said it's really about the next couple of years and who wins the data center build out on Earth. As an investor in Anthropic, as someone who has been a participant in this whole space, in this race for AI, do you agree with him?
I do think there is a question around the long-term viability of orbital data centers, and I am not an expert when it comes to the physics, the math, and the numbers of getting these things up in the sky. But I think that the SoftBank point is right, which is today we are in a compute-constrained environment for inference. There is more demand for this inference compute for AI analysis and AI workloads than there is supply of that. And that ultimately is what's driven a lot of the performance in the market today, as we've seen the chip makers rally, as we've seen companies in the AI space in the public market like NVIDIA, like Microsoft, like Facebook.
Yeah, but is there starting to be some pushback in terms of the cost of that build-out of capacity? Torsten Slok, I was mentioning him earlier, of Apollo, talked about AI as a risk and says, what happens if companies start limiting their token budgets meaningfully because they're only seeing weak return on investment? And this is something that people are pointing to, the idea that tokens are getting restricted. How much is this a risk factor for you as an investor in some of these top names?
I mean, it's definitely something we think about, but ultimately, I think you have to look at two things. The first thing you have to look at is what the companies purchasing and spending this capital are saying. And whether it's SpaceX with their recent bond issue and their IPO, or Google with their recent equity raise, these companies are saying that there is ROI here. It is sufficient for me to raise additional funds to go do these build-outs. And that's not because they are necessarily fueling others. It's also they see internal demand for this. So I think that's one thing you have to look at. And I think the second thing you have to think about is perhaps they're overspending in tokens today? Almost certainly. But does that mean that AI does not deliver ROI across a wide variety of use cases? I definitely don't think so. And I think that the proof will be in the years that play out, does Anthropic end up going from, I don't know, 2,000% year-over-year growth like they've been tracking today to, 500 or 700%?
But Microsoft just recently tapped DeepSeek, Chinese models, to try to offset some of the cost. Why is that not the path of travel for a lot of these companies?
I think that when you think about how the economics will flow in the model builders themselves, I think it's our opinion, or certainly my opinion, that the frontier models, the OpenAI, the Anthropics, the leading models out there will capture a lot of the revenue. But does that mean that everything needs to run at the frontier model level? Absolutely not. Is there a role for DeepSeek? Is there a role for open source? Absolutely. And I think that's how the market will bifurcate, is there'll be a lot of value in the large language models at the bleeding edge, and there'll also be value accrued to the open source and Chinese models.
When you look at SpaceX, who's really their competitor right now? Is it the Anthropics or is it the Blue Origins?
I think it's probably more the Blue Origins. And if you actually look at the economics of the business today and you look at how much capital the company is bringing in, a lot of their competition is actually the CoreWeave and hyperscalers of the world. If you look at their economic agreements with Anthropic and with Google, that accounts for almost $24 billion of annualized revenue that is coming from just leasing out their data center compute.
Matt, just finally, you're an investor in Anthropic. Can I get your reaction to how you'd characterize the messaging coming from leadership at Anthropic, which some people just say is AI doomerism and is not helpful to the whole landscape right now? What's your take on it?
My take on that is that it may be perceived as doomerism, but if you look at how this administration is acting, and if you look at some of the reports that came out yesterday, perhaps the doomerism isn't as extreme as people had thought. I think there was reporting yesterday that perhaps the latest Anthropic model was able to breach some classified systems, and that is what resulted in the administration putting a lockdown on the Fable release that Anthropic had.
Now, I imagine when this goes public, you'll be selling the stock, right? Is that fair to say? You hold Anthropic now. When the stock goes public, will you hold Anthropic still?
We as a firm, as a $1.3 trillion asset manager, have lots of different pockets of capital, some of which may be selling Anthropic, some of which may be buying more.
Okay, so complicated.
Complicated.
I'm trying to understand how you think about this in the future, because clearly now in private markets, it's got a great valuation. It's coming public. There's a lot of stories, a lot of hype around it. And what helps the hype sometimes are these kind of declarations that it's going to wipe out 30% of white-collar work. You don't have to deal with the regulatory response just now, because they've created so much value in private markets. You've been a part of that value creation. How are you thinking about the prospect of regulation down the road? Is that a story you want to navigate with that company, or something you want to take your hands away and say, you're on your own now, thanks for the ride?
Well, I think it's definitely a complicated piece of the mosaic across all the AI landscape. And I think the trade-off ultimately comes down to how much regulatory flex does the government want to have in this space versus how much free market and leadership position we want to take. And I think that's the tension we're seeing today. And if you look back a week ago, I think there was some reporting that perhaps the U.S. government may start taking positions in some of these these companies like they did at Intel. And I think that potentially could be a route, although I don't know.
Do political realities in your mind dictate one or the other? Is it easier to say in China, we're going to be market leaders and focus on that? And in the US, you just have to face the political reality that you need to control this thing? Because the people that are voting are the people that are losing their jobs.
Well, I think that if you contrast the China approach versus the U.S. approach, I think you can mandate that we're going to be a leader and that we are going to win there, but that doesn't mean that you deliver on being the winner in leading there. And I think that's what makes the U.S. development of AI quite unique, is that we have multiple free market economy participants trying to build the best models. And so far, that has resulted in us having a lead in the model space.
Matt, this was thoughtful. We appreciate your time. Thank you,
so
sir.
much.
Appreciate it. Matthew Whitheiler there of Wellington Management on Anthropic and SpaceX.
Some people say that regulation will actually create some benefits for the existing models because it creates a moat around them. When it comes to the Mythos and Fable iterations, though, this is an increasing concern. How do companies catch up? And their spend is only increasing as they try to catch up quickly so they don't become vulnerable to potentially some of the incursions from some of this technology. A really complicated puzzle right now.
You need the ability to raise a lot of capital and raise it very quickly, both in equity and in debt markets. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. President Trump posting on Truth Social about negotiations with Iran, saying he is allowing the Strait of Hormuz to stay open, but ships remain in place in case another blockade is needed. The president also said Iran funds being released will go into escrow and be controlled by the U.S. Chicago Fed President Austin Goolsbee remaining concerned about inflation and questioning whether the factors driving up prices are truly temporary. Goolsbee calling a rise in services prices, quote, disturbing, and saying pressures there can often be more persistent. Airspace Intelligence winning a U.S. government contract to deploy AI air traffic control tools. The company has developed the tools to map out flight trajectories and identify potential congestion areas. The FAA plans to roll out the tech in the fall. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. More from Vonnie in the next hour in about 30 minutes' time. Up next on the programme, doubling down on price stability.
We've got some work to do on the price stability front. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability. To be clear, the Fed will deliver price stability.
Up next, Neil Datta of Renmac.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Some negative follow-through from the Asian session out of South Korea. Kospi down 10%. Those two names getting absolutely hammered. We're down by 1.2% on the S&P. On the Nasdaq, we're down by 2.6%. In the bond market, a focus on these Fed rate hike bets. Yields pulling back this morning, down by 3 basis points. The 2-year, 4.19, 10s around 4.50. Under surveillance this morning, doubling down on price stability.
We've got some work to do on the price stability front. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability. We have the capability and commitment to deliver on our price stability objective of 2%. To be clear, the Fed will deliver price stability.
It's the latest this morning. The start of the Kevin Warsh era has a clear path, with the new Fed chair expressing his goals for lowering prices. Neil Datra of Renmag warning that Warsh's hawkish tone could pose a risk to investors, writing, "I don't view Warsh's communication strategy thus far as a positive development. Rarely have I thought of the Fed as a potential left-tail risk to markets and the economy. Now I might have to start." Neil joins us now for more. Neil, welcome to the program, buddy. It's good to catch up. What was it about the communication, the news conference specifically, that changed your mind about how this Fed might be operating in the future?
Well, I think a lot of the defenders of the strategy are, sort of making the critique that, forward guidance is out of favor. People want to be spoon-fed the next meeting. I mean, that's not what this is about. It seems to me that people are making, or sort of blurring the lines between forward guidance and just having a reaction function, right? I mean, I think people are, we need to know exactly sort of how they think about the data and how that will update their sort of distribution around rates policy. No one's asking for them to kind of pre-commit to a policy one way or the other. That's not what this is about. So I think Warsh, Chairman Warsh, sort of blurred the lines between those two things. They're not, in fact, the same thing. And, the risk, of course, with that approach is that we're not going to know the reaction function until the policy itself is announced. And the further the gap is between the markets and the Fed, the bigger the potential sort of market, gyrations could be when they do make those decisions.
So now let's talk about the prospect of those decisions happening this summer. I've seen the rate hike bets, you've seen them too. I've seen the calls come from several economists as well, including the likes of BNP Paribas. This is the point that BNP made. The emphasis on the results of the task force appear intended as soft forward guidance for the FOMC to wait until later this year before making a major policy adjustment. Do you see it the same way?
I don't. I mean, a lot of people are trying to do John, what seems to me to be like these, mental gymnastics, mental jujitsu in terms of trying to rationalize everything that came out of that press conference. I mean, I guess my concern is if the press conferences are meant to deliver some kind of dovish guidance later, the damage would have already been done in the near term, because it's pretty clear to me that by allowing this kind of information void to develop, that information, the hawks on the FOMC kind of fill that void. And the markets latched on to the next best thing, which was the dots plot. And by the time those task forces come to any conclusion, you may have already seen the Fed hike by September. So I don't really buy too much into that. I think that there's a lot of also chatter about how these are sort of pretenses for the Fed to move policy in a more dovish direction. I mean, that's not immediately clear to me either. I mean, if we're talking about adopting more of a, sort of an inflation data approach that kind of incorporates things like median and trim mean inflation, that's not necessarily dovish per se. There's no dovish bias persistently in those data points. So
Neil,
I don't really put too much stock in that either.
You said that the damage is already done. Where's the damage?
Well, I mean, the damage. Well, I mean, I said. What do you mean by that? I mean, I would just say
in terms of the rate hike. I mean, right now we're pricing in a rate hike, and the 10-year yield is below where it was on the day of the Fed meeting, and we haven't seen stocks massively sell off.
I don't know. The dollar strengthened. You talked about how financial conditions have tightened since then. Maybe that was the goal. But I do think the release valve of the dollar is quite interesting to me. The fact that the Fed appears to be getting a bit more hawkish while the rest of the world is not, that's putting upward pressure in the broad dollar exchange rate.
And that's
But I wouldn't say. I mean, look, the damage. I mean, these things don't happen right away. But at the margin, I don't think it's a particularly controversial thing to say that financial conditions have tightened since the FOMC meeting.
Yeah, there's also this concern, and you yourself have talked about how are we using the right inflation metric to really assess the inflationary pressures in the market. A lot of what people are focusing on is the task forces. That's all we got in terms of forward guidance, is that there are going to be task forces that are going to analyze these things. Do you welcome some of the reassessment of some of the benchmarks of the Fed's lodestar, which is the data?
Yeah, of course you welcome it. I mean, there's something to the idea about, the data are revised consistently and all the time, and they give you like very different messages about, maybe after the fact. But I also think a lot of that's well known, right? So to me, do we think that the Fed's not doing some of that already? I mean, this is an institution with loads of economists that are looking at all different sorts of data sets and cutting the data sets and analyzing the data sets every which way. So I definitely think it's worth updating, how you think about the data sets that you use. But I would just say that a lot of these private sector data sets, whether it's something like Revelio or ADP, I mean, that is not a great substitute. It's a great complement to the BLS data, but it's not necessarily a substitute.
And just finally, just to wrap it up, did that news conference make you bearish on this market?
No, not by itself. I mean, I just think it made me, I would just say, to me, it's a revealed preference, right? I mean, going in, there was this sort of view that Warsh was this dove. I don't really know what he is right now, and I think it's okay to kind of admit that. But to me, it's a revealed preference. By allowing that information vacuum to develop, who filled the vacuum? The hawks. And the hawks are squawking, and they're ascendant in the committee at some level. I mean, you must have known something like that was going to happen if you wanted to be so circumspect around your own views. So I think perhaps by not putting in a dot himself, he may be able to potentially absolve himself of the decision the committee ultimately makes, which is a rate hike in September.
Neil, thank you, buddy. Neil Dutta of RenMac. We've talked about that a few times. If you're not going to offer guidance, someone else will offer guidance for you. You're outsourcing communication to someone else, and to Neil's point, that someone else is the Hawks right now. Up next on the programme, we'll catch up with Kate Moore of City Wealth, Ted Mortensen of Baird, the former White House senior advisor, Amos Hochstein, and Brent Schutte of Northwestern Mutual.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The key story is tech boom, and that's going to be the most important.
The market can still go up.
I can't just tell you to sit here and hold your nose and sell.
The question mark around potential bubble euphoria does continue to build up.
We have to be wary that it's not going to last forever.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And your price action, the scores look like this. We're down by 1.2% on the S&P 500. On the Nasdaq, we're down by 2.5. On the Russell, coming off record highs, we're down by 1.2 following this move. Overnight in Asia, South Korea, the Kospi getting hammered, plunging by close to 10%. SK Hynix down by 13. Samsung down by 12.9. A rough session over in Asia, setting the tone for the market this morning.
Some concern on reports, local media reporting the SK Hynix is shifting to more DRAM, which is used in everyday consumer electronics, versus the more expensive, highly profitable AI memory components, in part because maybe that's where they see demand. Ultimately, the thought here is, why wouldn't they double down on the highest profit margin types of products? Well, the answer could be some of the anxiety that people have about how much capacity some of the hyperscalers have to keep spending the way that they have, given that the cost seems to just be getting higher and higher.
There's a concern that all of this is just overheating. I go back to Pierre Ferragu, though, the idea that potentially what Apple is doing in terms of raising their prices because of unsustainable demand for the memory chips basically means we might get demand destruction. And potentially is that some of what we're seeing right now play out in financial markets?
Elisa's talked about this countless times. The next big data point for this story is Micron earnings, and it comes after the closing bell tomorrow. On from that, a little bit later this week, you'll get PCE data on Thursday. In the bond market at the moment, twos running this morning, yields are lower, but twos are near the highs of the year at 420. In fact, twos are near the highest level we've seen in more than 12 months as we really firm up those rate hike bets at this Federal Reserve.
The reason why, when people say demand destruction, I am skeptical is because people have said that when it comes to oil prices, didn't see it. People said that when it came to airline prices, airline ticket prices going up, we didn't see that. When it comes to just basic consumer goods, that's the reason why inflation rates have been higher than a lot of people expected and going in the wrong direction, as Austin Goolsbee said of the Chicago Fed yesterday. It is because people have absorbed those higher prices. You haven't seen the demand destruction that you normally would with higher prices. So to me, that's the big question. How much heat is there in the economy to absorb higher prices rather than simply to have people
I'm
stay
only
home.
slightly laughing because when we talked about this, you said you're going out and buying all the products now before the price hikes come. So maybe it's hoarding.
At least it went to Apple.
Yeah.
That's what happened.
I did.
Right?
I just didn't want to like end up
Demand
with the
destruction
higher
for
prices.
the 18, but I'm going to buy the older models.
Okay, well, look. We can move on, but the point being, it
to
wasn't
stay on
demand
this.
destruction, it was demand acceleration.
Yes, which is what happens in inflationary spirals.
Correct, because
people want to get ahead of the price.
Exactly, so they buy more. It's sort of like toilet paper.
Textbook, absolutely.
Exactly.
Just like toilet paper. Where did that come from?
Pandemic.
Okay, yeah, yeah.
It's like hoarding.
I got long toilet paper.
Yeah.
I had tons. I should have sold.
I know, you actually did really
know.
well with that, so I've got...
It's
I'm
kind
not
of sad that markets ripped through that whole period, and the greatest trade I made was stockpiling toilet paper.
Well, we all
right.
have our claims to fame.
There we go. Coming up on the programme, Kate Moore of Citi Wealth with stocks hit by a global tech sell-off. Ted Mortensen of Baird with SpaceX whipsawed by volatility. And a former White House senior advisor, Amos Hochstein, as the US greenlights Iranian oil sales. We begin this hour with stocks falling as the tech-fueled slide intensifies. Kate Moore of Citi writing, holding excess cash during inflationary periods carries a real cost. So any market pullback could create an opportunity to deploy capital. Kate joins us now for more. Kate, welcome to the programme. Is this morning that kind of opportunity?
It might be, but let me tell you something I'm kind of focused on. We've been watching very closely the speed at which all of these rebounds have happened over the last number of years, and particularly over the last, period post the pandemic. And the days of the rebound are getting shorter and shorter and shorter. So we're finding people step in even when they don't have great news, simply because they have that fear of missing out, and because they're being conditioned over the last 5 or 6 years that you maybe at most you have 10 or 11 trading days to get back in when there's been a bit of a pullback. So I think I'll watch to see what happens over the next few days, but I would suggest that if you want to be longer risk, you can't wait too long, and the rest of the market has been trained to jump in very quickly.
So, Kate, the essence of the call, what underpins it, the epicenter, if you will, is this inflationary push on investors right now. They need to deploy capital. Why is that capital going to find its way to the US equity market specifically? Where are the other opportunities?
Well, I think we know the story that equities in general tend to hold their value better in an inflationary environment. But I think the very important point here is that aside from the demand destruction, I think we should come back to that point that may or may not happen as prices rise for all of the components and everything related to the AI and tech trade. The really critical point here is that most of what's driving the equity market we know is kind of more secular in nature and not necessarily just cyclical, even as some cyclical parts of the market have performed well. And I say this because even if there is some demand destruction in parts of the consumer, which of course we are not seeing at this point, or in terms of machinery and equipment orders and things that are affecting the industrial sectors, we still believe that most of what's powering the market is going to be earnings. And that's certainly what we've seen in the first almost 6 months of this year.
So, Kate, are you also going to the Apple store and buying up as much as you can ahead of price hikes? Or are you waiting for the price hikes, then you're still going to buy? I mean, how much do you see demand destruction as actually a thing versus people who are absorbing the prices?
Yeah, I'm not doing a ton of pre-purchasing. Full disclosure, though, at the start of the tariffs last year, was it just last year? It's pretty hard to kind of figure that out at this point. I did buy a couple extra pairs of running shoes in anticipation of challenges getting things over to the U.S. And the truth of this story is that I'm not as much of an Apple enthusiast as some other folks. I'm a big Google enthusiast, so it would be buying another Pixel. But I don't know that we're going to need to buy much in advance. But I am watching, though, there was a bit of an acceleration in terms of same-store sales over the course of 2026. We were kind of flagging this in a note that we're putting out this week, that we started off January and February at a very fast clip, much faster than the 2024 and 2025 experience, and it accelerated post the beginning of the Iran war, which is opposite of what most people would have expected. They would have said, hey, in the face of a conflict that's going to be causing broader inflationary pressures, consumers are going to pull back, and that's not what's happened. At the same time, we're seeing small businesses continue to raise wages. I think it was a net 31% of businesses surveyed in the NFIB survey, basically saying that they raised wages or compensation over the course of May, and that many more were expecting to have to do that over the course of the summer. So, that's kind of the pressure I'm focused on, is that, in this inflationary environment, in the kind of competition for skilled labor, do we end up getting a margin squeeze for companies that are very labor intensive and who have not switched to AI agents as part of their workforce?
Kate, does it make you a little less concerned about inflation and a little bit more in favor of buying long-term bonds, given the hawkish tilt that we heard from the Federal Reserve, or at least that is perceived by the market?
I mean, I feel a little bit better than I did last week, especially given some of the yield movements. But I'm still not a buyer of duration, Lisa. I just have to say, I think you're going to get much better total return from other parts of your portfolio, particularly kind of risk assets, than you will from adding duration at this point. The hawkish tilt that we experienced last week from the FOMC, I think I read a bazillion notes on this and had many conversations with our own economists. We all agree was a little bit more than most of us expected. But I think it was also warranted because we've been flagging the breadth of inflationary pressures for some time, the percentage of PCE components, the percentage of CPI components that we're tracking at above 3% or 5% annualized rates. So I think it was warranted, even if it was a bit surprising, but it does not lead me to think that, the end is near in terms of inflationary pressure and that we should be buying the long end.
Do you feel more at ease given what we've seen in terms of oil prices and obviously gas prices now below $4 a gallon across the U.S.?
Well, I think it's certainly going to relieve a little bit of pressure as we go into the summer driving season. But we know that gasoline spend as a percentage of total spend has not been growing dramatically over recent years. I'll be interested to see if that lower gasoline prices lends additional support for some of that retail sales and consumer spend activity we were just talking about. But I will tell you that we see very little pockets of significant weakness in the U.S. consumer. And so it's more broad-based strength. And I think that's going to help to power, a sustained growth trajectory in the second half of 26.
Okay, we need to talk about this debt offering, the amount of supply we're getting. Just bear with me. Getting some news coming from SpaceX. The longest maturity I can see coming from this planned debt offering, we've reported on it, could be as much as $20 billion. Lisa, a 30-year offering coming from SpaceX. Multi-part offering, but a 30-year piece in the offering we're getting later today.
Yeah, 30-year space debt at a time when the promises are long-term. I'm looking right now that the discussion is around 200 basis points over benchmark rates, at least that is the talk right now, versus the average of 73 basis points. So, yeah, you are demanding a premium, although if you take a look at the maturities and you take a look at some of the other investment grade, the lowest tier of the investment grade universe, that's sort of in line. A question here about what the demand picture is going to look like, right? Are you going to start to get pushback? Because remember, us bond guys are bean counters. We want our money back with interest. We don't want to shoot for the moon, literally, because ultimately we have a cap on how much we can earn back. So at a certain point, do you start seeing skepticism about a company that hasn't shown the numbers yet and has promised quite a bit?
So BBB rated, just about investment grade. And I was going through the Moody's report that came out alongside that rating. And within that, they talk about the risk factors. And it reads as follows. Execution risk is further elevated by dependence on Starship V3. Technical setbacks or delays in achieving full reusability or ramping launch cadence would constrain the company's ability to expand network capacity, thereby pressuring long-term revenue growth, margin expansion, and the overall credit profile. Of course, that would be a risk for the credit ratings. That comes from Moody's. The problem that you have with the risk factor, to your exact point, which I think is the most important point with regards to this debt, is that if they are successful doing all of those things, you don't get the upside of the debt, you get the upside of the equity. And if they're not successful, you get all the downside in the debt market. So you've got to make sure that whatever yield you get on this debt, even if it is investment grade, it's right there at BBB, you've got to make sure it compensates you for that risk.
Yeah, not all BBB companies are the same, especially if the business model is somewhat speculative. And I know a number of credit investors who have said to me, look, I would rather own tech equities than the tech debt, given the potential upside versus the potential downside. Again, you're talking a pretty long time, 3 decades. I mean, in 3 decades, we might all be living on Mars.
Yeah, it could be a very different world.
I mean, maybe it'll be the best bet out there, but we just don't know.
Maybe he'll prove all the doubters wrong, but you're going to see the upside, to your point, in the stock. Also worth pointing out what the money's going to be used for. It's going to be used to repay the outstanding borrowings under a bridge loan facility in full. We kind of knew that, so that's not news, but it's worth considering, because this isn't new money to go after new investments. That's important because there are people that follow this debt, particularly in the investment grade market, that will say this is not the same as Alphabet. It's not the same as the hyperscalers would say at AA credit. They have capacity to issue a lot of debt here before they worry about becoming junk. SpaceX isn't in the same place right now, which is why a lot of people think if you see more capital raising, you're going to see it come from the equity side of things, maybe more than from the debt side.
Yeah, and the equity side of things gives it a cushion. So you can say if you're a debt investor, look, at least you've got that cushion to absorb. But like you said, it's not tied to specific projects that potentially could be profitable in and of themselves. Also unclear whether it's secured by anything in particular. You can secure a lot of assets behind the hyperscalers that could potentially be sold to recoup some of your investment. So it's not exactly the same. And even then, you had some investors saying, if I'm going to invest in technology, I'm going to do it on the equity side.
Okay, we wanted to spare you so you didn't have to talk about a single name, a specific company. But there's some of the dynamics right now on the supply side of things, in equity, in debt. When you look at the amount of supply we could see, the amount of paper being issued, the amount of capital being raised to fund these projects, is that a threat to this equity market?
I think it's something for us to be aware of. I'm not going to say it's an outright threat at this moment, but it is absolutely true that all of these companies that have been on rocket ships, and I say that really tongue-in-cheek, are being opportunistic about how they can raise capital right now, whether it's in equity issuance or in debt issuance. And that's generally a prudent thing to do. When your sector, your industry is hot, and when there's a tremendous amount of investor attention, like now is the time to strike. The one thing that we do have to recognize, though, of course, is that we've had a phenomenal run, and some of these names, and I'm not talking specifically about SpaceX, which is very new to the market, over the course of the last couple of years. And our experience is that clients are feeling and investors are feeling a little bit anxious about the concentration that they have in these names in their equity portfolio. So when we think about whether or not they're going to be adding significantly on the debt side as well, they have to say, do I want to take that much sector concentration risk on both the equity and the debt side of my exposure? And that, I think, is a question left to be had, or left to be answered, and something that we've been talking to a lot of clients about, especially as some of the well-known technology companies are appearing to be larger parts of the IG issuance.
It's becoming a bigger and bigger debate, that's for sure. Kate, thank you. It's good to see you, as always. Kate Moore there of Citi, with an update on stories worldwide, stories elsewhere, with your morning brief, your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. President Trump posting on Truth Social about negotiations with Iran, saying he is allowing the Strait of Hormuz to stay open, but ships remain in place in case other blockades are needed. The president also said Iran funds being released will go into escrow and be controlled by the United States. Andy Burnham is under pressure to outline an economic plan for the UK. He's front-runner to replace Keir Starmer, who stepped down as Prime Minister yesterday, or announced it at least. The BBC reporting 2 Labour MPs are considering challenging Burnham. The Senate passing a bill aimed at curbing Wall Street's influence on the housing market. The House will consider the measure today. The bill would block large investors from purchasing additional single-family properties. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, the Morning Calls, plus Ted Mordenson of Baird, with the tech sector rocked by major volatility in the last 24 hours. From New York City this morning, good morning.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The initial reaction of the market was very positive. There was like a lot of demand for the stock. Everybody wants to participate to this dream. What a beautiful story. I think investors are concerned. They are hearing about companies like blowing up their token budget and reining back on AI spending. Investors know that most of the valuation is a very, very long-term story.
That was Pierre Fadagu of New Street Research on SpaceX. SpaceX, a 3-day route, looking to arrest some of that move a little bit later this morning at the opening. That stock turning positive in the last hour or so. Equity futures still negative. We're down 1.3 on the S&P, down 2.8 on the NASDAQ. That's the price action. Here's some of your morning calls this morning. First up, Susquehanna initiating coverage on SpaceX with a neutral rating and 170 price target, citing strong growth prospects and demanding valuation. Second call from Bank of America, raising its price target on Qualcomm to 195, saying the company is re-entering a fast-growing but hyper-competitive AI market. That stock is down by 6.5%. And your third and final call from JP Morgan, upgrading IBM to overweight, seeing greater confidence in software acceleration in the second half. That stock is up this morning for different reasons. It's up by 5% in the pre-market. Let's stick with tech. SpaceX turning positive this morning, looking to snap a 3-day losing streak of raising $600 billion in market cap. Mandeep Singh of Bloomberg Intelligence joins us now for more. Mandeep, it's early days. I don't know whether to make too much of this or not. Where's the pressure coming from for this stock?
I mean, we knew, with the roadshow that there was a lot of retail interest. And look, this company hasn't even reported a quarter, and it's trading at this kind of valuation. And my sense is every time there will be a successful launch from SpaceX, that's going to change the narrative, drive enthusiasm. Same thing with an AI model release that they are going to have on the Grok side or Cursor side. So it will be very volatile, for anyone who is an owner of the stock, simply because this company doesn't have the sort of balance sheet that your hyperscalers have. And, a lot of the revenue is further out. So it's contingent upon these two things really going, in the right direction. And that's where there's a lot of uncertainty.
It does have the equity cushion that other hyperscalers have, Mandeep. What are your thoughts on how they're using it?
I think the Cursor acquisition was a great one just because it gave them a lot of credibility, around the coding agent market, which is among the most successful use cases of generative AI. And the fact that they can scale Cursor and really, deploy it with their compute, because Cursor didn't have the compute. So to my mind, that definitely was headed in the right direction, and that is why people got really excited. But there is no doubt that space launches and, the orbital data centers, that is where they have to show continuous progress. And there's a lot of steps that have to go right for them.
Mandeep, it's good to see you. It always is. Thank you, sir. Mandeep Singh there of Bloomberg Intelligence. To build on this, Ted Mortensen of Baird joins us now for more. Ted, welcome back to the programme, sir. It's good to see you. You say we're now in a game of duck, duck, goose. Can you translate for us? What does that mean for this stock?
So if you look at the last person in the pool, on the tech pool, we're now to the point where I don't think you can squeeze anybody more into the pool. And what I mean by duck, duck, goose, nobody wants to be the last guy without a chair. The exposures across both the hedge funds, the mutual funds, and the speculation and retail, and I've been doing this for too long, probably 35 years or so, it's pretty heady. So we're just in this cycle, I think, where we're massively overbought.
Overbought for which specific names? You're talking about SpaceX more specifically, or are you talking more broadly about the hyperscaler and tech trade?
I think if you look at the IGV, Lisa, the IGV is up 106%, the SOX is up 106%. The IGV, which is the software index, is off 17%. So when we talk about crowded trades, Micron up 325%, Marvell up 262%, ARM up 273%. I can go on and on. There's about 12 of these that are, I would say, on average up about 250%. That's a good decade of returns. And most of those returns have been attained since April 7th. So in 2 months, we've seen a historic melt up on a pull in of infrastructure into that cloud infrastructure area.
Ted, tomorrow Micron reports earnings after the bell. Could they do anything to make you think that it isn't necessarily an overbought name, given the fact that it alone is up 880% over the past 12 months?
The expectations are very, very high. And where my clients are really focused is we've never seen gross margins where they guided at 81%. I mean, back in September of 25, they were at 45% gross margins. I mean, it's almost a historic move on the model on not only pricing leverage, and I think to your previous comments, we're starting to bump up against enterprise elasticity of demand. These price increases of over, call it 20% plus, are impacting IT budgets. I mean, IT budgets are only up 4% year over year. They're getting killed by infrastructure, whether it be networking, storage, or memory cost. There isn't a lot of pixie dust out there to increase IT budgets just on a blink of an eye. So I think we've had a massive pull-in of infrastructure in the first half, and people trying to get in front of price increases and insulate themselves if there are any shortages on the supply side. They pulled in a lot of spend, and this is very indicative of what the cloud titan CapEx looks like.
So, Ted, do you think we see a bounce back from this, given the fact that potentially some of the drawdown we're seeing, what's happening in Korea, is because maybe individuals are concerned about demand destruction?
Korea is a different market. It's very speculative. The retail investors leveraged through the roof. It reminds me of Bitcoin in the U.S. when the retail investor at the top was very leveraged. I think everybody in Korea on the retail side has leveraged their own internal balance sheet to play SK Hynix. So I think that's a special situation. I think where our checks are picking up at least a little bit of disturbance in the force on the hyperscale side is token costs are through the roof. And there is a lot of debate on the traditional foundation models, and I'm talking more about Grok, I'm talking more about Anthropic and OpenAI. What we need to watch if to lower costs, if a lot of these next generation AI companies move to open source models, specifically coming out of China to reduce token costs. Token costs are a real big issue out there.
Ted, appreciate it. Really well framed. As always, Ted Mortensen there of Baird. If you're wondering what's happening in this equity market right now, to understand the concerns that the bears have about some of the pricing, then you've got a decent clinic just there in the last 5 minutes.
Yeah, right now, it's just how many years of advancement are you pricing in at the same time? CapEx budgets are getting a little constrained at some of these companies.
The cost be becoming a bit of a casino, right? A bit of a leverage casino.
Bit is sort of an understatement.
10% move overnight, 10% lower. Coming up on this program, the former White House senior advisor Amos Hochstein with Iran set to restart its oil sales around the world.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
60 minutes out from the cash open, the opening bout just around the corner. Equity futures trading lower. We're down by 1.4% on the S&P, hanging in here. Even as we get closer and closer to the cash open, we've got the Nasdaq down by close to 3%, negative by 2.9% so far this morning.
Yeah, how much is this coming because of what we saw in the casino that is the South Korean stock market for the Kospi? How much is this coming because there truly is anxiety about people's ability to pay for some of these really ambitious goals? How much is this partly because we have seen a tightening of the financial conditions? And to Neil Dutta's point, the fact that we are anticipating rate hikes starting to crimp some of the expected returns in equities. So how much of these things kind of came together?
Some better news in the bond market, if you will. Small glimpse of hope, maybe. Got a rally and offset, at least, in fixed income. Yields are lower by 3 basis points on twos to 419.83. Some better news also in the oil market. We're moving barrels. Forget the chit-chat. Forget the politics. All this market cares about in the short term is that energy's moving through the strait, and that's what you're getting. We're down by 0.75% on Brent, 77. WTI at 73. And really, really close to wiping out the post-war rally on the price of crude.
Yeah, and you nailed it. What are people doing instead of what are they saying? Not only is the Strait of Hormuz starting to reopen and some of those vessels that were stuck are getting out, but this administration is allowing Iranian crude to hit the market legally with those waivers we saw from the Treasury Department yesterday, at least while they negotiate the nuclear portfolio. So until the end of August, you can see Iranian crude showing up almost anywhere. Now, do we think that's actually going to happen? No, but I mean, it would be almost legal for a refiner in the United States to take an Iranian cargo.
Energy's moving. For markets, that's good news. What it took to get the energy to move, we'll spend some time on that in just a moment. 1 hour away from the cash open. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. SpaceX is trying to stage a comeback this morning, trimming its losses, now down just 1% after it turned positive just earlier in the pre-market. But this is after yesterday's sharp sell-off that wiped out nearly $400 billion of market value off the stock. The positive sentiment coming as we're learning more about the company's first ever investment grade bond offering. It is looking to borrow across maturities ranging from 5 to 30 years because, you know, rockets are expensive. Turning to the rest of the tech sell-off, we are continuing to see selling in Micron, AMD, and the NeoCloud CoreWeave, and it's mirroring what happened in South Korea with memory leading the declines, with the Kospi down nearly 10%, particularly because of SK Hynix. There was this report that came out that it was may slow expansion of its AI memory business, shifting its focus to traditional DRAM chips, and that caused that sparked concerns about demand, just as Micron is set to report earnings tomorrow. And we end on AMC. The company had some positive news out yesterday that it had its busiest weekend so far this year, but shares are plunging 23% after it announced plans to raise roughly $200 million through a stock sale. The cash will help to pay down AMC's debt and help its balance sheet. Still, it is a diluting event that even Woody and Buzz Lightyear cannot save. John.
Yara, thank you. Appreciate it. The name is down by more than 20% this morning on SpaceX. Robert Schiffman of Bloomberg Intelligence with a classic dad joke this morning. How do you organise a space party? You plan it.
I love it. Thank you. I know. You think it's terrible. I welcome the
You were reading this at the same time as me,
I think it's great.
you?
Yeah, but I went straight to a point that he was making, which I thought was really interesting.
You got to the actual substance.
Yeah,
Good.
yeah. But I appreciate a good dad joke. Don't get me wrong. But talking about how this actually could be the template for what we can expect from Anthropic and OpenAI. The idea of coming out, getting a cushion of liquidity underneath you from the equity offering, and then quickly raising as much money as you can in the debt markets before people lose faith. Because ultimately, it is a race, and they need to win.
Yeah, it's not the space race, it's the race for capital.
Correct.
Ed Ludlow's talked about it repeatedly. Any opportunity you've got anywhere, any currency, any asset class, they're taking that opportunity right now. Let's talk about a different asset class. Let's talk about crude. The president announcing funds from lifted Iranian sanctions will be put in escrow to be used exclusively to buy U.S. goods.
If the sanctions go out, money's going to be put into this country. All that money's coming back in the form of purchases of food, which they desperately need.
Can you ensure that the Iranians won't use profits from oil sales to rebuild their military?
Well, they're not supposed to be doing that, so we'll see. But they're supposed to use money to buy food for their people.
Iran now has 60 days to sell oil on the international market. Crude this morning, 77 on Brent, 73 on WTI. Joining us now to discuss, the former White House senior advisor and partner at TWG Group, Amos Hochstein. Amos, we'll start broadly and we can get into details. What's your reaction been to how this has played out over the last week?
Well, quite remarkable because the MOU in itself is little more than really, I mean, it's almost like a surrender. I mean, if you think about where we started a few months ago and what policy has been for the last several decades and where we are today, we have basically said for 60 days we are removing massive amounts of sanctions off oil, gas, and petrochemicals and refined products. You can sell it anywhere in dollars. We haven't done that in many, many years. They can also get some access to unfrozen, their own unfrozen assets, $6 to $12 billion, depending on which report you hear. They get other benefits, and all they had to do was to open the straits and agree to talk. So we haven't actually agreed to anything on the nuclear, but we have agreed that ballistic missile program and support for proxy terrorist groups in the region are not on the table and not part of the negotiations. And we've given them the huge political win of now being the decision makers in Lebanon, which is quite astonishing. So this is what we've done. We've given them this whole document is incentives and agreements to give Iran things with the hope that we'll get something out of it some point during the 60 days. And the clip that you showed a little bit earlier with the president talking about buying food and medicine, I think he's confusing two different types of revenues. The food and medicine is really, I think, what they're trying to do with the unfrozen assets in Qatar, the $6 to $12 billion. The oil revenues, they can sell and do with that revenue whatever they want.
When it comes to that oil revenue, Amos, where do you think the Iranian crude will be going? Does this just legitimize the Chinese buyers, or will they actually find new customers?
I assume that at first it will just be the Chinese customers with legitimacy and probably Indian consumers as well. And then the rest of the market will wait and see, and to see how long this lasts, because the worst thing is you unsanction something, the Americans and the Iranians get into some tiff, a week from now, 3 weeks from now, 5 weeks from now, and suddenly what you bought that was unsanctioned is suddenly sanctioned again. So I think people will take some time to figure that out, except, of course, some trading houses that will buy a whole bunch of Iranian crude and blend it, and then they'll be able to sell wherever they want. So I think you're going to see sort of a broadening, but it'll be a gradual broadening.
I know they're not a monolith, but do you have an understanding of where the GCC is on this, given the fact that it is pretty remarkable, as you said, to see this U-turn from this administration to allow Iranian oil to legally hit the market? Well, we haven't seen this in 4 decades.
Yeah, this is, again, I think that you're right. The Gulf is not a monolith. Clearly, the political winner in the Gulf is Qatar, where they are setting, to some degree, setting American policy. They're in charge of American Middle East policy right now. in quite an extraordinary way. They are quite gifted at this. And I think that there are others in the Gulf who are looking at this and saying, wait a minute, we don't really like Qatar foreign policy, and now it's running American foreign policy. Iran was a threat to us. The United States convinced us to join them in conflict. Now they're emerging stronger politically at home, right? I mean, you can't imagine anybody going out and demonstrating against the regime right now. Help is definitely not on the way. And so they're left with a neighbor next door that is angry and vengeful and is going to be very well funded. And if they are very well funded, if you talk about their sales on oil sales alone and petrochemicals, you're probably talking about revenues of about $1 billion a week. So those countries in the Gulf are looking at this with great concern and are going to have to invest in their own defense in the long term, thinking that the United States has become extremely short-term thinking. You know, that's kind of how they view us at the moment.
Amos, we're looking at oil prices because that's what the market is looking at. And they're somewhat agnostic, as John has mentioned many times, about exactly how oil is getting from one place to another and the potential geopolitical implications, at least in the short term, saying, look, at least barrels of oil are going through the Strait of Hormuz. Do you think that this is an accurate reflection of the potential risk of an additional closure? Because if there is true control by Iran over the Strait of Hormuz, should there be a higher premium to potentially offset against the risk of something like this happening again?
Look, I think if we were talking about this 5 years ago, 10 years ago, yes, you would talk about risk premiums and so on. But the market at the moment is basically saying, I have a lot of news that I want to look at on the tech side, how much CapEx is coming in on AI and data centers and blockbuster IPOs and space. That's what I want to focus on. So energy really is judged as, is this something that's going to drag me down or not? If it's not going to drag me down, I don't want to talk about it and everything is fine. I don't want to hear people tell me about risk premiums. And so that's where we are reality-wise in the market. Do we have a risk in the market? Of course, because the one thing that's come out of this conflict is Iran, as I said on your show a few weeks ago, before this agreement, no matter how this war ends, no matter what agreement we reach, Iran sees it as they control the straits. And control of the straits does not necessarily mean a toll. It could just as well mean I decide that tankers need to give me 48 hours notice. I can decide that I don't like a certain company, your tankers are not going through, those kinds of things. So yes, there's a risk, but I don't think the market is there to look at it. The second piece of that is, while oil prices are coming down, they're still at, Brent's still at 77, WTI at 73. In December of this, this past year, December, January, before the winds of war started blowing, we were at $56 to $60. So we're still trading at a significant premium to where we were before the winds of war in December. So I think if the prices start coming down further, which I think they will, at some point you'll start saying, okay, can they really go back to where they were in December? And that's where we'll see probably a $5, $10 risk premium that will be put into the market.
Even Amos managed to get the tech trade in there. You notice that?
Well, I think that there's a bit of frustration, at least when people look at the geopolitics, saying this actually matters tremendously, but they can't get anyone to care because everyone's saying, ooh, space.
Amos, I'd love a final word with you on that. There was some discussion that the rebuild effort would be so costly, so expensive for nations across the Gulf that they'd be distracted from spending all this money on tech, on AI, when there has been some excitement, particularly over the last year, about sovereign AI and the amount of investment that would come from that particular part of the world. What should we be tracking now? Where's the money going? Where isn't it going?
So I never agreed with that notion. I think countries like UAE and Saudi and others are really looking at tech as a long-term diversification away from oil in their national economy and budgets. That has become more acute, not less. They're going to be spending money, one, on diversification of their energy sector away from the Strait of Hormuz, so building out infrastructure, which sounds expensive but really isn't. It's a few $1 billion here and there to build out this infrastructure. And the second piece is to double down on their investments in tech, and most of that is going to be in the United States, because where else are you going to invest? There's a ceiling for them in how much they can invest in China. They're continuing to invest there, but there's a ceiling. Europe is non-existent, or there's a little bit of play here and there, but it's really small amounts of dollars. And so the bulk of it will have to come to the United States. And I got to say, I've been to UAE and Saudi. The build out that's happening there is going to continue to expand. The question will be not how much they want to spend, but will companies, American companies, European companies, want to build data centers in the Gulf, or will they be more hesitant as a result of this? But I think you're going to see more money coming in to invest in this sector. And I think it's going to be mostly in the tech sector, some of it in healthcare and other in sports and other entertainment sectors around the world, but mostly, again, I think in the United States.
And not in golf, apparently, for now. Amos, it's good to see you. Thank you, sir. Amos Hochstein, the former White House senior advisor. Looking at equities as we have this conversation, making new session lows. We're down by close to 1.5% on the S&P, down by close to 3% on the NASDAQ 100. With an update on stories worldwide with your Bloomberg Brief, is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Trump is signing 2 executive orders to fast-track the development of quantum computing, including the development of a quantum computer for scientific research by 2028. The move is seen as a national priority and is expected to lift stocks in the quantum sector. Qualcomm is in advanced talks to acquire AI chip startup Modular in a transaction valuing the company about $4 billion. Qualcomm is trying to pad out its product line to better compete with market leader NVIDIA. A transaction could be announced in the coming weeks. And in sports, Lionel Messi is now the all-time leading goal scorer in World Cup history. After missing a penalty shot against Austria, Messi scored twice to power Argentina to a 2-0 victory. He now has 5 goals in 2 games so far in the tournament and 18 all-time in his World Cup career. And that is your Bloomberg Brief. John.
Vonnie, thank you. Over to you, Cristiano Ronaldo. Portugal playing Uzbekistan a little bit later this afternoon. England playing too.
Yeah, look, I think nobody wants to be put up against Lionel Messi because he's also so likable. I mean, honestly, he is such a likable character, and he's almost 39, and he's playing at that level.
It's pretty incredible,
It is
isn't it?
absolutely unbelievable, and absolutely the leader of his team. It is really fun to watch.
Truly phenomenal. Amazing. Up next on the programme, we'll set you up for the day ahead. Plus, Brent Schutte of Northwestern Mutual on the changing nature of AI investment. A conversation up next with equities near session lows.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is a kind of a normal thing with a market that has been up so much this year. However, it's kind of the opposite of a bubble. What we're seeing on both the S&P and, as I mentioned, the information tech sectors is that those multiples are lower today than where we were coming into the year. It's been all driven by earnings.
The earnings have been fantastic. We've heard that point repeatedly. We heard it again this morning from Phil Camproni of JP Morgan Wealth Management. But we've had a massive move in this market, and now we're taking some back. We're down by 1.4% on the S&P. On the NASDAQ, we're down by close to 3%. The opening bell about 41 minutes away. Going into that cash open, just a note of a few things you need to look for through today and through the week. At 9:45 Eastern Time, PMI data. Look out for a read on the US economy. Later on, we'll hear from the president. Worth looking out for any headlines you might get around this deal with Iran and the amount of energy that's moving through the Strait. Then also later, we'll get earnings from FedEx, so look out for that too. And then at 7 p.m., we'll hear from the US Treasury Secretary. He's speaking at the Economic Club of New York. Always worth a listen to Scott Bessent. That takes place later. Tomorrow, probably the main event on the earnings side. Really is the main event on the earnings side. Micron after the bell tomorrow. Massive run-up in that name. Given the moves we've seen today, a lot of weight on the shoulders of that stock.
Yeah, how high are expectations? How high is the bar for this name, given 880% gains over the past 12 months? And how much can they lean into the idea that they are producing that much more of the most expensive AI tools, some of the biggest memory chips that go into these large language models and the data centers, to rebut what we've heard over at SK Hynix?
So let's get to the sell-off. You see it in South Korea, spills over into Europe, into the US. Equity futures down across the board on the S&P. On the NASDAQ, we're down by close to 3%. The global tech sell-off gaining some steam going into the opening bell. Brent Schutte of Northwestern Mutual writing the following. We believe the nature of AI investment is changing. While capital markets remain open and funding is still available, that dynamic could change if financial conditions tighten further. Brent joins us now for more. Brent, welcome to the program. Obviously, we've had a big run-up. And this is a small move lower in the context of that massive run-up. But do you see signs right now that this could be the start of something bigger?
I think you hit the nail on the head with my opening comments, so thank you. This is where I think AI has moved from being funded out of cash flow, which I think everyone knows, to now being subject to lots of debt, lots of equity, just given the expensiveness to bring it to life. And that changes the ballgame a bit, and that makes it more economically sensitive, which comes at a period of time when the Federal Reserve is contemplating raising interest rates, which could pull capital markets back or make them less friendly. And that's where I think the narrative has changed a bit. I hear the comment quite a bit in the opening about earnings and this being different this time. I think people have to think about the sustainability of those earnings. Think about a company that you just mentioned that's more of a commodity type of a product they produce. I've heard the word insatiable demand, but capitalism has a way of satiating demand. And that's where I think you're seeing improvements in technology. And this is where I think the question is, what is the sustainability? And it's not just all earnings based. There are companies out there, plenty of them, that are trading based upon the what ifs of the future. You've seen non-profitable tech companies move up, and that's just where I think there's quite a bit more risk in the market today than there were 6, 9, 12 months ago.
Brent, there's a lot to pick apart there. How much do you think what we're seeing right now is truly a realization in equities that the Fed could raise rates?
I think a bit, although the market's not pricing in the reality that they're going to need to raise rates probably more than 25 basis points. So I think that's the question. And there remains an open question about whether a Warsh-led Fed would actually, cut rates or raise rates enough to actually pull the economy back. I think the reality that investors are opening their eyes to is that over the past couple of years, the Fed has cut rates. They've done so because the labor market has been weak. And they've done so even though the other side of their mandate was failing also, which now that the labor market appears to be healing, the question, I think, is do they actually raise rates because that mandate hasn't been met? And that's where I think the bar is really low still for investors to kind of realize they may have to cut or raise rates by more than 25 basis points, which could bring that economic cycle into a bit more jeopardy in the future.
So, Brent, this is important because we caught up with Kate Moore of Citi earlier on this morning, and she said the inflation pressure would actually put pressure on investors to deploy capital into any pullbacks in the equity market. Are you countering that with concern about inflation leading to higher rates?
This is where, look, the reality is that the consumer, which is a large part of the U.S. economy, has slowed quite a bit over the past couple of quarters, and the economy's been held up right now by AI. You've seen information processing equipment and intellectual property products drive GDP, all of it, for the last 2 quarters. And that's where I think the big question is, what do higher rates do to the consumer? What does higher inflation do to the consumer? And that's where you've seen that consumer slow quite a bit. Because of the reality that real wages have been negative. Throw in the reality that a lot of spending has been done from stock market gains. And that's where you have this circular risk, kind of like similar to the circular risk that you have in some of those financing deals that are happening in tech. And that's where, the economy is somewhat beholden right now to what happens in equity markets, just given the fact that the markets are so much bigger than the economy and people are spending out of their equity gains. And that's where they've been funding those from.
True. For many people, at least. Brent, thank you, sir. Appreciate it. Brent Schutte there of Northwestern Mutual on this equity market. As we're having this conversation, reflecting on an upgrade, a price target upgrade coming from the team over at Barclays. Vinod Krishna and the team did this back in March, of course, in the depths of the war. It's the right call. We had a massive rally off the low around that time. They've upgraded the price target again on the S&P 500 to 7,800 from 7,650. But if you read through the note, the quotes I'm seeing from Barclays are not overwhelmingly bullish. They're acknowledging some of the risk out there. For this to gain steam, to get a bigger move in this equity market, you're depending on other things.
Yeah, this is a show me the money moment, and that's really what we're going to see from Micron tomorrow. Barclays coming out and saying the equity bull case remains intact, but earnings and AI capex visibility must do more of the work as Fed support fades and positioning is less able to absorb disappointment. That's certainly what we're seeing today with respect to even a disappointing report out of a local media outlet in South Korea, potentially triggering what we're seeing in terms of skepticism.
And to your point, Jonathan, this doesn't feel overwhelmingly bullish. He's talking about the macro backdrop of U.S. equities is complex. It's not off to the races. A lot of things need to go right. And also it makes it a little bit harder given the Federal Reserve and the fact that the market has hikes now baked in.
I give Vinny so much pressure, so much credit, under massive pressure in March. Everyone was talking about how earnings were great, like in April. But in March, the team over at Barclays were like, look, forget the Iran thing. I don't think it's that important. I know that became fashionable in the weeks after that, but they were very early with regards to this rally we saw off the low in the equity market.
One of the key edges was they understood stockpiles, and they understood how long it would take for those stockpiles and the floating oil.
It was a cushion.
It was a cushion, and at that point, that was why they could get bullish. The idea that you have to show me the money, though, again, how high is that bar given some of the skepticism?
And he was one of the first people to say these stocks will do well, maybe because of what is going on in Iran. But I remember when he made that call that my eyes were almost popping out of my head because you have a serious kinetic war.
I think he almost threw something
now.
at him. I remember the conversation.
Yeah, and he said if he was wrong, he'd come back on. But, he was right. Good for you.
He can come back on. Are you feeling better about things now? A little bit more settled? You sorted out your differences over baseball?
Oh, well, I mean, you didn't have to, trigger me to start the show.
It was a Dan Ives quote.
He didn't put it in his
he might be coming on tomorrow.
I'm pleased we addressed that. OK. Coming up tomorrow, Tom Becker of BlackRock, Dan Stuyven of Goldman Sachs, Lily Cantrell of PIMCO, Francis Dollard of RBC. From New York City, for our audience worldwide, thank you for choosing Bloomberg TV.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
a poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good Tuesday morning, 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, from Seoul to Wall Street, global stocks get a reality check as tech shares slide again.
Adding to that, SpaceX tries to shake off 3 days of losses and defend its $2 trillion valuation.
Beyond tech, currency traders are on high alert as the risk of yen intervention rises.
A lot of pain in today's market, especially if you're one of those retail traders in Korea. Circuit breakers down 10%. But it kind of flows through to today's session. Let me show you pre-market some of the big tech names. NVIDIA down 2.6%. Micron, we're going to get earnings from them this week, down another 9.4%. And SpaceX is also down. So they're selling gains, the AI on the AI trade, that huge slide in Korea's Kospi exchange. SpaceX stock has been fluctuating this morning, but now decidedly lower. So it's in danger of opening below $2 trillion.
Yeah, fourth day of drops for SpaceX stocks. IBM among the few big tech gainers today as it joins the OpenAI Daybreak Cyber Partner Program, and JP Morgan also upgrading the stock to an overweight. So Big Blue gaining 4.25%.
So outside of IBM, let's discuss the broader sell-off. Joining us now is Bloomberg macro strategist Michael Ball. Michael, when you look at something like the Kospi, hitting circuit breakers, selling off 10%, does this seem to suggest that what's going on today is more technical, or was this rally always in danger of unwinding itself?
Yeah, both. It's positioning. People got ahead of themselves. I mean, they're really YOLO cowboys over there. They're totally leveraged up. They're chasing after two names. They got a fundamental story that makes sense. And funny enough, the valuations aren't quite as crazy as you'd think, given the price moves. But overall, when it's built on this much leverage, this much option buying, it has to eventually correct because the implied vol, or how much you need to get basically compensated by, is just unreachable.
Why not just borrow yen to buy this stuff? I mean, it only gets weaker, right?
Yeah, well, that's another worry now. As a macro catalyst, people are watching for yen intervention. So to your point, the sort of FX world, although the vol has come quite in, is still sort of percolating back as a risk because obviously we want to see some stability there as well.
But dude, how much intervention would they have to do to actually move the market? The market doesn't buy it. So they're just throwing billions and tens of billions and potentially hundreds of billions of dollars at this problem.
Until we see a really credible path to higher rates there, which funny enough would probably ease pressure off the back end of the yield curve and funny enough, obviously support the yen. This, to your point, you're throwing money at the wall and only some of it's going to stick and the market's going to continue to call it out.
I just say it feels like an overall really jumpy market, and how much of that hinges on a Micron earnings this Wednesday?
Yeah, so that's obviously going to set somewhat of a tone. We still have a decent price there, meaning when we look at how much, the valuation is there, it's not expensive, and it's also not this cyclical play anymore. There's a longer-term story with AI, but as we saw from SK Hynix, there's memory shortages elsewhere, so it can't all be about AI. We're actually having electronics and other sort of production now be impaired by a lack of chips for just your standard off-the-shelf kind of stuff. So this is what the market, again, is trying to figure out. How capacity constrained is the AI trade? Obviously, the memory stuff in front and forth for the last 24 hours. But overall, when you have this much leverage and this much price action as far as we rallied, it has to come off sometimes. It's just unsustainable. So that's what it seems like.
What's going on with the ETF stuff? Like those levered ETFs all of a sudden don't have enough stock that they can actually put in them?
Yeah, so the assets under management have grown like exponentially for a lot of these ETFs. So for the SK Hynix one, for example, they were having trouble sort of replicating the exposure they needed with what they were getting in as far as flows. So they were having, so dealers and everyone was kind of turning away some of these ETFs and saying, we're not really willing to take the other side of this trade.
All right, so a lot going on. You're all over it. Your team is all over it. Check out Michael's work and the work of his colleagues by typing MLIVGO on your Bloomberg terminal. Now, SpaceX shares are fluctuating amid a broader AI sell-off. They were down most of the pre-market, jumped up for a bit, and have now dropped again off, as you can see, 2.7%. Bloomberg tech host Ed Ludlow here to talk to us about, I guess, stock fall is what we could call this, as they also launch a capsule into space and try to recover it.
Yeah, it's psychological, right? Because $150 a share is the opening trade of Friday, June 12th, the debut trade for the biggest IPO in history. And I think, a lot of focus on like, well, that would put the market cap at or just below $2 trillion. That's part of the mechanics of the post-IPO trade. And like we've done a lot on this program about the history of how IPOs at that level, though this somewhat precedented, gone to trade. Probably a part of it is linked to the 5-part debt deal, maybe, and this idea that you either are, from a credit perspective, pretty calm about SpaceX's IG rating and ability to borrow, or from the equity perspective, thinking like, oh my goodness, this is a company where there's not going to be positive cash flow for a very long time, and they're still raising more and more money.
Ed, elsewhere, we learned that Oracle has cut 21,000 jobs in 12 months. That sounds like a lot. Is that a lot for this company that's trying to deal again with lots of spending and in some corners of this market, skeptical investors?
It is a lot, and it's outside of Oracle's historic patterns. So that's about a 13% reduction in workforce over a 12-month period. But the point of the regulatory firing, the story within it is that while Oracle's trying to balance funding data center build out, and we've talked a lot again about them swinging into negative free cash flow because of their capital expenditure commitment, they are outlining in this regulatory filing that AI has helped them internally for efficiency and its operating abilities. Basically, AI has impacted some roles in terms of displacement. So, that was kind of the core key takeaway. But historically, Oracle's kind of spattered little job cuts here and there, even though in aggregate it's a lot. They've never done this kind of big trim in a calendar year. But the filing's worth reading for the AI commentary, really.
Well, now they're replacing labor with capital at a level that maybe we've never seen before. And the question is, does saving a couple billion on jobs, on human jobs, actually make up for the tens of billions or hundreds of billions that they're going to have to invest in compute?
Yeah, so what you're referring to is literally the restructuring cost, right? Which is at almost $2 billion, reflecting the reduction in force of 20,000 jobs. I don't know the answer to that insofar as like the capital expenditure outlook is to grow every single year. And so, there's still a workforce of 140,000 people there or thereabouts. Will they continue to cut that? It's an analogous story with Meta, right, where it was like, hold on, does trimming the wage bill stack up against the massive multi-year capex commitment? And really, I don't know that the street's buying that kind of line of view, which is why the emphasis on the impact of AI on jobs is an important story. And it's probably why on the Bloomberg Terminal and .com, so many people are clicking on it this morning.
Ed, thank you very much for that. Looking forward to Bloomberg Tech at 11 a.m. Tech host Ed Ludlow. Now to the Middle East. Brent is holding below $78 a barrel. U.S.-Iran talks are continuing. Iran says that $12 billion in frozen funds could soon be released, with the U.S. also waiving sanctions on Iranian oil exports. President Trump spoke yesterday, saying Iran should use the money only to purchase American goods.
If the sanctions go out, money's going to be put into this country. All that money's coming back in the form of purchases of food, which they desperately need.
Can you ensure that the Iranians won't use profits from oil sales to rebuild their military?
Well, they're not supposed to be doing that, so we'll see. But they're supposed to use money to buy food for their people.
Joining us now is Bloomberg Washington correspondent Tyler Kendall at the White House. Tyler, what is the latest?
Hey, Danny. Well, this is expected to be welcome financial relief for Iran as the country maintains it's not going to let up its leverage when it comes to the Strait of Hormuz. We are watching very closely a meeting happening today between Iran's top negotiators and officials in Oman as the countries released a joint statement earlier today seeming to confirm an intent to release a fee structure related to the Strait of Hormuz for what is being called navigational services after the 60-day ceasefire extension. We did hear President Trump comment on the Strait earlier today in a pair of posts on Truth Social, saying in part that 19 million barrels were able to safely transit through yesterday, and doubled down on this idea that you mentioned, that any unfrozen assets would go towards the purchase of U.S. agricultural goods. Now, Iran is disputing that notion, saying that it will be able to use any of the assets, quote, freely. And we should say that in the actual text of the Memorandum of Understanding, it does stipulate that the Iranian central bank will be able to designate any beneficiaries of these assets. Now, this is all being done, of course, in a bid to try to make progress when it comes to potential curbs on Iran's nuclear program. As President Trump earlier today in a post on Truth Social reiterated something that we heard from the vice president yesterday, that in part, quote, Iran has fully and completely agreed to the highest level of nuclear inspections. But that was something also disputed by Iran's foreign minister earlier today.
Tyler, we also saw President Trump sign executive orders around quantum computing. He was standing with Ruth Porat, the president at Google, and IBM CEO, the IBM CEO Arvind Krishna as well. What's the story with these, I guess, quantum and cyber defense executive orders?
Right. So, Matt, this actually coincides with a push from the administration just last month for $2 billion in investment and taking an equity stake in 9 quantum computing companies. This White House is saying that they're trying to stay at the forefront of competition when it comes to quantum computing. The simplified idea here is that quantum computers, which are capable of solving problems much faster than traditional ones, coincide and complement with the advances that we're seeing in artificial intelligence. One of these orders directs federal agencies to work with the private sector to essentially build a supercomputer that can conduct scientific research by 2028. And the other executive order has to do with bolstering the U.S.'s capabilities when it comes to cyber attacks. It is something that the White House has tried to put forward at the forefront, that this is an area where they can help bolster U.S. national security, but also importantly, Matt and Danny, compete when it comes to China.
All right, Bloomberg's Tyler Kendall there at the White House. Hopefully this technology can also solve the reflecting pool issues. A check on markets right now. We see a sell-off underway. S&P futures down 1.5%. NASDAQ futures down more than 3%. Just less than 20 minutes away from the opening bell. You can see the 10-year yield holding steady at under 450. Brent crude holding steady at under $78 a barrel, but essentially a sell-off that started yesterday and then got hot in Korea is hitting the U.S. again this morning.
Yeah, it's all those chip makers selling off a lot. Elsewhere, FedEx, they released their first earnings after the bell since a spinoff of its freight business earlier this month, somewhat caught up in the market-wide sell-off.
ServiceNow was given an overweight rating by J.P. Morgan with a $145 price target. You can see the shares up 2.5% in the pre-market.
And Netflix bouncing back this morning after hitting its lowest level since 2024 on news yesterday that Meta is exploring TV for social media.
All right, coming up, SpaceX prepares to launch its first in-space manufacturing mission. It's already, I believe, shot some capsules up into the atmosphere as the head of SoftBank says Elon Musk's data center in space ambitions are unrealistic, or at least less useful for winning the AI race. This is Bloomberg Open Interest.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Let's get now to high interest. Look what's making headlines around the world. The CFA Institute says just 39% of candidates passed the level 1 exam in May. That's down from 45% in February and below the 10-year average as well. Over 31,000 people took the test. It's the largest cohort since before the pandemic, highlighting continued demand for the credential, or just the fact that people have nothing else to do. Goldman Sachs is barreling toward another record-breaking quarter, with equities trading revenue expected to top $5 billion and possibly eclipse its all-time high that was just set 3 months ago. A global AI trading frenzy, booming activity in Asia, and Wall Street buzz around SpaceX's blockbuster IPO are powering the surge. And SoftBank founder Masayoshi Son is rejecting Elon Musk's vision of orbital data centers, saying AI will be won by computing power here on Earth. Son argues electricity is only a small part of data center costs, while launching and maintaining equipment in space would be far more expensive. SoftBank plans to keep investing heavily in terrestrial AI infrastructure for now. Danny saying that the race will be won in the first few years, not decades later.
Well, let's talk more about SpaceX, considering it is in the throes of a multi-day sell-off. Bloomberg chief aviation correspondent Sid Phillip joins us. Sid, it always has sounded like fantasy that we'd get data centers in space. Does Masayoshi Son have a point? I mean, this seems like a really difficult thing to do.
I mean, it is an arms race to get data centers built, and Elon Musk is sort of betting on being able to leverage the multiple sort of strands that SpaceX is sort of following with their space business, with the data center business, and sort of merge them all into this giant data center in space idea. But there are sort of costs associated with transporting things to space, using space infrastructure to like power data centers, and electricity is one of the few costs there. So it is one of the challenges for SpaceX to actually sort of prove the viability of data centers in space. And Masayoshi-san, talking to shareholders, talked about how chips will be the sort of biggest stumbling block for data centers, and that's sort of, I mean, SoftBank obviously has a play in that space. So.
I mean, he's talking about the here and now, right?
Exactly.
Chips are the biggest costs, and he's saying that the race will be won in the first few years. And the way I read it, I think he allows for Elon Musk, you know, having the right idea a decade on.
Exactly.
But he says by then there will already be winners and losers.
Exactly, and sort of the now is the more important part of the AI data center play rather than what happens in a decade from now. And I think that's the key.
By the way, SpaceX, we know, has been able to borrow pretty cheaply in this market. It has an investment grade rating, and there's multiple stories out today, basically with skeptics coming out saying, is it really worth that, given, yes, it has access to liquidity, but misses some of the other hallmarks. I go back to Bill Ackman arguing on X that the value of SpaceX is the fact that it's valuable and has a cheap cost of capital. What changes for this company if this sell-off picks up steam?
I mean, for SpaceX, I mean, obviously they're looking to raise more cash. They're looking to sort of scale up their various businesses, and being unable to sort of do that would, and sort of serve people losing faith in the company's ability to actually continue sort of borrowing that cash cheaply and starting deploying it for its various business ventures. That will be something that investors will be looking at to see if it has a continued ability to do that.
Just a minute left here, Sid, but I think SpaceX has already put one of its Starfall capsules you know, into orbit. I think 6:55 this morning they launched one, and they can hold like 2,200 pounds, right? 1 metric ton of stuff in these capsules, and they want to be able to do manufacturing in these capsules and then bring it back to Earth. What are they going to make in these things in space that, you know, is going to be beneficial that they couldn't do here on Earth?
So for SpaceX, I mean, they're talking about how the Starfall capsule can be used to manufacture things that need microgravity environments, that need sort of specific sort of pharmaceuticals that need to be manufactured in with those high radiation levels in space. And so they're looking at very specific niches, and they're talking about how these capsules can be reused and cheaply sort of brought back to Earth, and that could also facilitate Earth-to-Earth transportation without having to have any infrastructure in terms of being able to launch in space and bring back to space. So they're looking at various ways of this is a reusable vessel that could be sent to space and brought back to Earth, and various components could be done in space, including sort of using space factories. I mean, it's still unclear what those factories will do, but they're offering that service.
It's pretty fun. All right, it's pretty fun to talk about, but maybe not fun to invest in. You can see SpaceX shares right now down 3%. Bloomberg Chief Aviation Correspondent Sid Phillip, thank you so much for joining us. Coming up, Maria Waitman talks the sudden shift in sentiment around AI sustainability. This is Bloomberg Open Interest.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
When you look at it, the chip names, have done a great deal of the heavy lifting. You will need a refreshed attitude towards the Mag 7. There have been certain periods of time where essentially earnings and price have, caught up to each other. And we think that's one of these periods in these larger names, and that you will have price start to advance.
Evercore's Julian Emanuel on surveillance. Let's bring in State Street Global Markets Head of Equity Research, Maria Waitman. Maria, great to see you this morning. Look, I wonder if some of the sell-off, specifically in these AI names, goes further than just high valuations. And I present to you evidence A. We have a chart basically tracking the price of tokens and the hyperscalers, and they're almost perfectly tracking each other. As the price of tokens goes down, which is that blue data there, you've seen the hyperscalers in white also drop. I wonder, Maria, are we starting to bump against this idea that what the hyperscalers can charge their customers has kind of reached its zenith, that there is this pushback and it's upsetting the entirety of the AI narrative?
Yeah, hello. And I'm very glad that in addition to the two lines you kind of talked about, you put the price of semiconductors, which is continue to push higher. So the semi stocks at least are not upset by that trend. But I mean, that's a reality. And we kind of always assume that at some point the price of tokens will come down. And that was actually for a while a part of the narrative that as kind of AI will get cheaper, more and more clients, customers will come in, and that will push demand. And so I think market kind of picking and choosing its narratives. But I mean, for now, we're still seeing quite a strong institutional investor commitment to the sector. So,
I mean, how much more will we see in this drop? Do you think we could see a correction? Do we need to see a correction? Because I'm sure you're bullish for the year.
Yeah, no, of course, I'm bullish. And I mean, the idea for me about tech sector in general is those stocks are still providing very, very, very strong earnings. And it is earnings corrections that we are looking for in terms of kind of broadening of equity behavior. Can we see other sectors produce stronger earnings? And for quite a few years, the answer was no. Majority of earnings were coming from tech sector. I mean, we're getting closer to earnings season, so we're good 3 weeks away. And still, majority of earnings, I think at least two-thirds of earnings growth in Q2 are expected to come from tech sector. Energy is supposed to kind of contribute to growth. We know that, but probably that's the last time last quarters they do it. And everything else is actually really uninspiring. So in a way, do I want to rotate out of tech? Yes, only when you see better earnings, and we're not there yet.
All right, Maria, you're going to stick with us through the opening bell. Maria Waitman there from State Street. We are looking at a NASDAQ futures drop, NASDAQ 100 futures falling more than 3%. The opening bell on the other side of this break.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them. You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at big drops in futures. S&P futures off 1.5%. NASDAQ futures are down more than 3% as a sell-off that spread from the U.S. to Asia and then intensified there comes back to smack us on a Tuesday morning. Ringing the bell at the New York Stock Exchange is Twilio to celebrate its 10th anniversary. Over the last 10 years, the stock is up 422%. So if you got in then, you're good. Over the last 5 years, they've lost about 43% of their value. So hopefully you didn't buy the stock in 2021. GitLab is ringing the bell at the NASDAQ market site. Over the last, since October of 2021, they've lost about 66% of their value. So I'm not sure what they're celebrating there, but
they're allowed. I guess they're still allowed to celebrate even if their stock's down, right?
A group of gits in the lab.
Oh, yes. Is that what a group of
That's
nerds
a British
is called?
expression that we don't have here in the U.S. But I think
I don't even know it, despite living in London for 6 years. I've never heard that. No.
You've never heard someone called a
No, what
git?
is it? What is it?
I think it's like a nasty. It's a pejorative term.
Okay, cool. Well, don't explain fully what it is. Maybe then. I am looking at the tech sell-off this morning. Matt, you pointed this out, just how poorly the NASDAQ is doing. We've had really big gains, so maybe this is just selling that on the AI trade. Also not helping was that big slide in the Kospi today in Korea's exchange. A lot of retail traders and speculators on that. It fell, had a circuit breaker, so NVIDIA, Micron both down 12.7% for Micron, and SpaceX down for yet another day, now trading, I believe, below the $2 trillion market cap.
Don't worry about Micron.
Why not?
I'm worried. I mean, it's still up. Let's see. Over the past 5 years, Micron is still up 1,254%.
But isn't this still like the pillar of the AI chips trade, and all the earnings upgrades have been because of Micron? So if this thing...
with a 12% drop, it's still up 776% over the past 12 months.
It's pretty good.
So it's done quite well. IBM is among the few big tech stocks, or I guess used to be a big tech stock, and hopes that it will one day return to that status. That's up today, gaining 2.5% as it joins what's called the OpenAI Daybreak Cyber Partner Program.
Of course.
But also JP Morgan, out with a slew of upgrades this morning, has included Big Blue. That's what we used to call it, Danny, back in the day. Big Blue, because at the time it was like the biggest of blue chip stocks. Now it's worth less than $250 billion.
That's like one day of Tesla trading.
Yeah, I mean, it's worth less than half of Intel.
Wow, that's tough. Well, the president called it out with the CEO at the White House yesterday, so maybe that gives him a boost.
Oh, he likes the stock?
He likes the stock, and he wants to include them in his quantum executive orders. So
cool. Hey, let's bring back in State Street Global Markets head of equity research, Maria Waitman. Maria, I wanted to ask first about, because you mentioned earnings, and there are a lot of these companies we were talking about. Oracle, for example, replacing labor with capital, firing like 21,000 people, but investing still tens of billions of dollars in the data center build out. We talk about SpaceX a lot, especially over the past couple of weeks, and they're going to be negative free cash flow like as far out as the eye can see, right? A lot of these companies are making no money at all, and yet investors are willing to give them the benefit of the doubt. Like we did with companies laying fiber in the dot-com era, or companies building railroad tracks before even you and I were born. Does that worry you at all?
I mean, on individual company names, absolutely. So there are a few companies, like you mentioned, Matt, that are cash flow negative. But I mean, if you look at tech sector overall, and that's kind of where we are focusing, is that overall, those kind of astronomical capex numbers, they still come mostly from operating cash flow for the sector overall, and probably like half of operating cash flow. So companies have money. It's, I mean, there are some specifics, but overall, I mean, we're not kind of at the same level of kind of spend that compared to operating cash flow as we've seen during bubbles, previous bubbles.
Still, some of these big tech spenders are spending more, and they're seeing their cash flows diminish. I mean, let's take SpaceX as the poster child that has negative free cash flow right now. Looking at SpaceX dropping, you can see it on your screen, down 1.5%, not as bad as right at the open, which was near 4%. Is this indicative to anything to you, the way that SpaceX is trading right now, the fact that it gained like 20% in 2 consecutive days and then it has started to sell off? Does it say anything about the wider equity market mood, or do you look at this thing with all of the strangeness around supply and demand and kind of put that to one side?
I mean, SpaceX is very, very special case. And I mean, we know that IPO was kind of targeted toward retail investors. So what we do at State Street, we focus on what large institutional investors doing. So that usually kind of the long-term trend. So that was the people putting money. And I mean, it's really astonishing that since the start of the war in Iran, tech was the only sector where institutional investors have put money. They increased the size of the benchmark allocation almost threefold, taking money out of every other sector, particularly like healthcare. And actually, it's both cyclical, so it's defensive. So industrials, materials, kind of on cyclical demand destruction. They're taking money out of healthcare and staples and kind of margin compression, and they put all this money into tech. So I think large institutional investors are very kind of supportive of tech sector. SpaceX, obviously, like single stock name and huge retail participation. So I think those two things kind of can coexist.
I love the, I've always loved the term rhino. You know, it used to be Republican in name only. Now almost all Republicans are rhinos. But you say rally in name only because it's been completely powered and totally concentrated by the, I guess, IT or hyperscalers components of the index since the beginning of the war in Iran. Do you see that turning around? Because we talk about this rotation all the time. Is it actually happening?
Yeah, I mean, as I was saying, this rotation, and thank you very much for picking up Rhino. I think that's a funny acronym. But in terms of rotation, what you need for the rotation, you need better earnings somewhere else. So I keep kind of hammering this message is, where do I see earnings? I 100% agree with anyone who will say that tech is expensive and tech is very, very crowded. But for now, we don't have better place to put money in. When, I mean, yield curve is flattening, not great to buy financials. Margins are getting squeezed, not great to buy staples and healthcare. Industrial kind of complex is struggling with demand destruction. So it is very, very difficult to find somewhere else to put money. And overall, there are plenty of money still around the system. Liquidity is ample, and they're all going into tech sector. So that's your kind of definition of rhinos. That's money going all the money that they are going to through very narrow bottleneck. And I think that creates conditions for the days like we're seeing right now, is that, okay, there is volatility in the market because those positions are really extended, because returns have been astronomical. So people taking profits, people readjusting. But until we see a better place to put money in, I think we'll have those very concentrated portfolios in tech sector.
Relatedly, and I hate to pick on him because he's not here to defend himself, but Phil Camporelli of JP Morgan Wealth was on both Surveillance and Surveillance Radio earlier. And on radio, I heard him say something like, understanding the consumer right now is so important. If you understand the consumer, you can get your portfolio right. Maria, I just wonder, given what you're saying, is the consumer really as important anymore for markets? Again, we're in this day and age where the rally all feels based on AI. So can we kind of ignore the health of the consumer right now?
I mean, I don't want to be caught on record saying you don't have to pay to pay attention to consumer, but stock market is driven by very, very large companies who cater for like very kind of higher end businesses and consumers. So that's kind of the wealth effect where it is, and that's what's powering the earnings at the moment. So yes, consumers, there are areas where consumer is struggling, and it's really detrimental for those companies. I mean, my favorite example is BMW, one of the better European companies, has slashed its guidance on margins to 1%. So yes, demand is important, but is it important for the overall market level? Probably not, but for concentration, absolutely.
All right, Maria, thank you very much. That's State Street Global Head of Equity Research, Maria Waitman. Always a pleasure to have you on. About 10 minutes into your cash equity trade, let's get a check on markets, and they are decisively lower, down 1.4%. It's even worse if you look at the NASDAQ. The good news is Mag 7 has spent yesterday, and a lot of this year, to be fair, selling off while the entirety of the index has been doing better, but you get a little bit of a reprieve on that today. So it's kind of just a momentum sell-off and a momentum flip today, that you get Microsoft doing well, which has been the worst performer, I believe, in the Mag 7. Amazon and Meta also having good days. Walmart is up there, has a new deal over nuclear energy. And IBM, Matt mentioned this, they get an upgrade from JP Morgan and a call out from the president. On the downside, we're flipping back and forth between what's the bigger drag to this index, between NVIDIA and Micron. Both are subtracting at least 18 points from the S&P 500, which is down 101 points so far today. And then the rest, it's all the chip stocks, AMD, Lam Research, Applied Materials, SanDisk, Tesla's in here, which is SpaceX is not in the S&P, so I guess sell Tesla if you're part of that. Again, carrying on from that really, really ugly sell-off in South Korea. So Infotech down decisively because of that. Will Micron earnings save us on Wednesday? That remains yet to be seen. So again, it's a flip of what you usually see. Staples, healthcare, real estate doing well, when usually staples are the less loved sector, along with healthcare, Matt.
That's interesting, and that's a snapshot of the industry groups moving around today. Maria Waitman was talking about her new acronym, RHINO, rally in name only. And so I pulled up the relative rotation graph on the Bloomberg terminal. I've put it behind you. Beautiful. Check it out. So this is one of those, the business matrix that you learn about in, Econ 101 or whatever. And so you've got your cash cows and your dogs and your shooting stars. And just look, over the last 12 weeks, which is what I've got here, IT is really the only one that's gone from improving into leading. Everybody else is going from weakening to lagging.
Yeah, so that's that green arrow right here. This is the Infotech. And everything else looks bad. Energy is down there, healthcare, utilities, consumer, financials. Everything looks bad, even financials, despite the fact Goldman Sachs just reporting, we're reporting that they're likely to get another record equity haul. And they had a really big deals haul. You talked about that, too. So interesting financials. Can't keep track.
Yeah, I just love the RRG screen on the Bloomberg terminal. Coming up, the chip rally takes a turn as investors around the world lock in recent gains and reassess the sustainability of the AI trade. Mandeep Singh joins us next. He runs our tech coverage at BI. This is Bloomberg OI, Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
All right, let's get you some top calls and hear from the sell side this morning. First up, Wolf Research. They've upgraded Target and name it a top pick. They say execution is improving with new management. That's changing the playbook. And store resets help make Target a destination again. Shares up 3%. I've always loved Target, always been a destination for me. Nike also getting downgraded by Evercore. They say the turnaround is still running into problems. There's a weak innovation pipeline, apparently, execution issues, warning that Nike may need to cut expectations again as business trends remain under pressure. And IBM, they get a boost after JP Morgan has upgraded the stock. That is JP Morgan, though, not IBM.
JP Morgan is down.
JP Morgan is decidedly down. If we were looking at IBM, you'd see that IBM shares are up because not only did they get a JP Morgan upgrade, but
4%.
They also 4%. There you go. IBM up 4%, and they've also joined an open AI partnership program, basically a cybersecurity initiative focused on AI-powered threat detection.
Let's look briefly at IBM. Yes, in the screen behind you also, but I want to talk about the stock. Just briefly with Bloomberg Intelligence, head of global tech coverage, Mandeep Singh, just to reminisce about Big Blue, Mandeep. You know, back when it was one of the most important chip stocks, one of the most important stocks at all on the Dow, right? When the Dow mattered so much. Is there going to be an IBM renaissance? Can it come back? I mean, it's only worth $250 million, which today it's like almost a third of Intel, so...
I mean, it feels
$250 billion. Sorry.
It feels like they are positioning themselves for, you know, both participating in this AI growth, which they're not at the infrastructure level, more at the application level, and also with quantum, they're trying to get there early in terms of establishing their leadership and, you know, being among the early players to scale this up. I just feel when it comes to infrastructure, we're still so early with quantum. And given the amount of spend we are talking about, you know, with that AI infrastructure build out, I just can't be bullish on, you know, quantum, at least for the next 2-3 years.
And I also feel like every day there's new quantum IPO or like something out there, which, like, okay, everybody slow your roll.
The scale is so different.
I gotta say, you know, they're in Armonk, New York, right? So I ride up there all the time, and I will stop at the cafes and chat with like engineers who were working on large language models 5 years ago. Like, they have labs on the frontier. Yeah. Why haven't they been a bigger beneficiary of the AI craze?
Well, right now, I mean, I look at the Google news over the past couple of days. They have lost 2 of their top, scientists when it comes to training these models, and the market cap dropped 250 billion. So that's what we are talking about in terms of, companies losing talent to Anthropic or OpenAI, which seem to be getting the top talent right now, and I would say the same holds for IBM as well.
I was reading a Torsten Slok of Apollo note today that basically laid out 3 macro risks. One of them was around AI and what happens if companies start to limit their token spend or shift meaningfully to some of the open source or Chinese models. There's also an information story that says just that. Companies are starting to switch to the DeepSeeks of the world. We also have a chart basically showing that token prices have started to fall and the hyperscalers are tracking them. Is it more than just a risk? Is this something that's truly playing out right now?
I mean, I look at this based on use cases. And to my mind, companies that are at the frontier, like Anthropic, they grew their revenue 5x year to date for a reason, because their model's output is far better than even the Geminis and the Metas of the world. Forget about the open source models. So to my mind, people are willing to pay up for the frontier models if they know the use case, which in this case is coding agent or something to do with document reviews. But if you are experimenting with stuff, yeah.
But isn't like Microsoft trying to switch to DeepSeek?
Well, Microsoft has a different equation altogether. They rely too much on OpenAI. Now OpenAI has gone to Amazon, so they have to figure out how to run Azure in a way where it's not, hurting their gross margin. So Microsoft will support all the models. But in the end, it's the customer who is deciding, do I really want the frontier model, or am I okay using open source with that China aspect, which presents its own security risk? So I'm still not in that camp where you can scale open source in a big way over the near term.
All right, Mandeep, thank you so much for joining us. Always great to have you. Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. Coming up, the yen hasn't been this weak since 1986. More on the possibility of government intervention. That's coming up next. You're watching Open Interest.
Up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hordern in Beijing, China, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Currency traders are on intervention watch after the yen weakened to its lowest level in 40 years. Japan's finance minister said she spoke with Treasury Secretary Scott Bessent, and they agreed that bold action may be needed. Here with more is Bloomberg's Enda Current in Washington, D.C. Enda, do the signs point to some sort of intervention by the MOF?
Well, it sounds like it, Danny. As you mentioned there, the Japanese finance minister overnight making the point that she spoke with her US counterpart, Treasury Secretary Bessent, and she said they're talking about bold moves and how they're both aligned on what actions they might take. Now, the issue is that the yen is under so much pressure because of there's a perception the Bank of Japan isn't raising interest rates fast enough. And, of course, the oil price is also weighing on the yen there, too. We did have some action with the BOJ earlier this year. If you remember, there was that price-checking exercise where they were calling around with some support from the US side on that. There was some reaction to the yen then, but the bigger picture, I think a lot of, in terms of reaction I've seen, Danny, is people are asking, even if Japan does intervene, how effective might it be, given the issue here is dollar strength, and that doesn't seem to be going away anytime soon.
So, I mean, how much, Enda, roughly will the Japanese spend on intervention? Like, what do they spend every few months to support the currency? And, I mean, are they actually trying to reverse the drop or just slow it down?
Well, it's probably more about, typically speaking, finance ministers, Matt, only want to get involved in the currency market if it's disorderly, sell-off, or if it's volatile. It's not necessarily about reversing the trend per se, and I doubt that's what Japan is trying to do here either. I don't know the exact figure that in terms of what they will spend, but typically speaking, they do spend in the tens of billions trying to put a floor under it. But as I mentioned a few moments ago, I think the bigger question is, the perception is that the BOJ isn't raising interest rates fast enough. Intervention won't change that. And then on the other side, you have the dollar strength being where it is. That seems to be on something of a stable trajectory. We had that hawkish tilt from the Fed last week. That doesn't lean into a weaker dollar in the near term either. So there's a lot of skepticism from the reaction I've seen this morning questioning, OK, Japan might go in, they might try and buy their own currency and sell dollars, but people aren't convinced in terms of how long-lasting that might be.
What about the BOJ? Might they push forward a rate hike, Enda, given what's happening to the currency?
Well, they seem to be taking it, one step at a time. The currency is the purview of the Ministry of Finance in Tokyo, in the same way that the Treasury here has the call on the dollar rather than the Fed. So it's not clear if the BOJ would react just to respond to what's happening in FX markets. But I think there is a view that the Bank of Japan seems to be taking things quite slowly, quite cautiously there. More rate hikes are expected in Japan, of course. It's a question of whether or not that's enough to try and to change the perception among currency traders.
All right, Enda, thanks very much. Bloomberg's Enda Curran talking to us about the yen right now trading 161.53 is how much yen you could buy for $1. So getting near as damn it to the lowest level the Japanese has traded at in many, many years. I think the low was almost 162 in 2024. Check on the broader markets. S&P 500 off 1%, a little bit more. NASDAQ falling more than 2.5% right now as Treasuries and Brent hold pretty tight. You can see the SOX index there as well, down 6.2%. Coming up in the next hour, Amanda Agati on the extraordinary run for chip stocks since late March and the sell-off that we're looking at today. Plus, Oklo's Jake DeWitt discusses the fuel needed to run their reactors as part of a new deal with Centrus Energy in the great state of Ohio. This is Bloomberg Open Interest.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
ABC News. I'm Sherry Preston. A rare moment of bipartisanship in Washington. The Senate passing a housing bill aimed at paving the way for more Americans to be able to buy homes. Now it heads to the House. ABC's Elizabeth Schulze has some of the details.
This legislation's key goal is to increase the supply of homes for sale. So right now, there's a shortage of an estimated 3.7 million affordable homes across the U.S. This bill restricts Wall Street investors from buying single-family homes, which has been a priority for the president as he faces record low approval on the economy. The bill also cuts red tape to make it easier to build new homes, and it provides grants to turn vacant buildings into affordable housing.
Expected in the House and Senate soon, a vote on funding the war. The Pentagon says the cost so far is at least $80 billion. Talks on the ceasefire with Iran now being held in Pakistan following discussions in Switzerland that included an agreement to keep the Strait of Hormuz open and allowing nuclear inspectors into the country. ABC's Justin Fischel with more on our daily podcast. Start here.
The gold standard in all this is what's known as SNAP inspections, that can happen at a moment's notice with no warning. That was something that was agreed to in the Obama-era deal. That is not something we know now that they've achieved. You want to be able to catch them by surprise and go in there and say, hey, let's look at this without warning. What do you actually have going on here? No time to clean up.
The reflecting pool, still an algae-filled, paint-peeling mess, says ABC's Rachel Scott.
Just weeks ago, President Trump said the renovations at the reflecting pool would last decades. But now, after $16 million in taxpayer money spent, the president says there will need to be repairs and the reflecting pool will likely need to be drained.
The European heat wave exposing millions of people to exceptionally high temperatures today and through the week. Paris closing the Eiffel Tower in the searing hot weather. You're listening to ABC News. A full court press underway in hopes of stopping the new world screwworm.
So far, 16 animals have been found to be carrying the parasitic larvae. The U.S. government is releasing sterilized parent flies to mate with unsterilized flies to stop the cycle.
We really need 400 million flies so we can cover the whole country.
John Bellinger is the government's lead advisor for New World screwworm readiness. He watched the parasite hit his grandfather's cattle herd in the 1970s.
I remember it well. It's back. We've got to go solve it.
Jim Ryan, ABC News.
Today marks the beginning of Prime Day when Amazon discounts items and shoppers flock to find them. Here's ABC's Mike Dubusky.
When it comes to deals, don't expect dramatically steeper discounts when compared to last year's Prime Day. Adobe anticipates categories like appliances will be discounted about 18% as opposed to 17% last year. Meanwhile, computers will shave 13% off compared to 12% in 2025. Even still, Adobe says these are likely to be the biggest discounts on Amazon until the holiday shopping season kicks off in November. Mike Dubusky, ABC News.
After having taken over Boston and drinking it dry of beer, Scottish World Cup soccer fans are now in Miami Beach. The Tartan Army marched through the streets of downtown on Monday. They went to the Marlins game. Scotland will take on Brazil in a World Cup group stage match tomorrow evening at the Miami Stadium, and the city is promising there will be enough beer. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu and Paul Sweeney here with you for the next 2 hours. This is the Bloomberg Intelligence program. Coming up, we're going to check in with Ed Ludlow, BTech host on SpaceX. The sell-off here, the stock's kind of steadying here today, but we've seen a lot of tech sell-off here. We're off the lows of the day, but we'll talk to Ed Ludlow about what's happening in the world of tech. Marvin Lowe, senior global macro strategist at State Street, will get his thoughts on these markets. And then Robert Schiffman, senior tech credit analyst for Bloomberg Intelligence, I want to talk to him about this SpaceX bond offering coming to market today. It's being marketed today. Get his thoughts on SpaceX as a creditor, as well as just the tech issuance in the bond market. Coming fast and furious. Tyler Kendall, Bloomberg Washington correspondent, will give us the latest reporting on the negotiations between the U.S. and Iran. Lee Klaskow, he covers all the shipping stuff for Bloomberg Intelligence. FedEx is going to report after the close today, so we'll get a little bit of a preview there. So a lot going on over the next 2 hours. Right now, let's head down to Washington, D.C. Nathan Hager with a Bloomberg Business Flash.
And the flash is brought to you, Paul, by IBKR. For the past 3 years, Interactive Brokers individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. The performance today is lower with a tech-led sell-off continuing. Right now, the S&P 500 is down 0.9%, so off the session lows about a half hour into trading, down 64 points. The S&P 500 is back above the 7,400 level now. The Dow Jones Industrial Average is down just 0.1% now, but the tech-heavy NASDAQ 100 is leading declines, down 2.3%. So mega-cap tech may be dragging the broader market lower still, but Evercore ISI chief equity strategist Julian Emanuel says earnings will catch up to the valuations.
When you look at it, the chip names, have done a great deal of the heavy lifting. You will need a refreshed attitude towards the Mag 7. There have been certain periods of time where essentially earnings and price have, caught up to each other. And we think that's one of these periods in these larger names, and that you will have price start to advance.
Right now, though, those large names are moving lower. The Philadelphia Semiconductor Index right now is down 6%. The biggest decliner in the S&P 500 is SanDisk. Those shares down 12%. Micron Technology is lower by 9% before it reports earnings tomorrow. Looking at the bond space, the 10-year Treasury is up 8/30 seconds. The yield down 3 basis points to 4.47%. Yield on the 2-year is at 4.18. NYMEX crude is down 1.5%, trading below 73 $73 a barrel. Brent is down 1.5% at about 76.75. Business activity expanded at the fastest pace in 5 months on the S&P Global Purchasing Managers Index. It's up to 52.2. Of course, anything above 50 does indicate expansion. We continue to watch shares of SpaceX. They are up right now, up 1.4%, trading above their initial price after the IPO of $150. Right now, it's trading at $157. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Paul and Scarlett.
Nathan Hager, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio in New York City. We're streaming live on YouTube and Bloomberg.com. Here's Nathan just reporting stocks are in the red today, but they are well off the lows. It was ugly there at the open, but we're starting to climb our way back a little bit.
You saw what happened in Korea, which is the world's best performing stock market. I mean, talk about a big sell-off.
That set the tone for the futures. Absolutely. The SOX index was down 7-8% at the open, kind of clawing its way back here. But let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Judy LeGroux. Judy, what are you looking at?
Good morning, Paul. I'm looking at NVIDIA. So, Scarlett, to add to what you had mentioned about South Korea, the tech-heavy Kospi index fell about 10%. And that really impacted a lot of semiconductor, AI, memory stock companies, but NVIDIA certainly has taken a hit as well. It's down as much as 4% on the day. And all other sort of AI chip makers, memory stocks are also falling in sympathy. So we've got, in addition to NVIDIA, ticker NVDA, we also have Marvell Technology, ticker MRVL, Qualcomm, QCOM, and SanDisk, SNDK, also falling in sympathy. So.
All right, so a lot of red in that big tech sector. Next up is something not necessarily in entertainment, but definitely a member of the meme stock club.
Absolutely. So AMC Entertainment is falling as much as 30% in trading today, and that's on track for the largest intraday drop since May 2024. And this is coming amid news of an equity sale of 95 million shares for proceeds of around $200 million. And the company is primarily looking to deleverage a bit of their debt. But Bloomberg Intelligence analysts are noting that this move puts dilution concerns at the forefront, suggesting there is close to a 15% dilution effect for common shareholders. So definitely an area to watch here for AMC Entertainment.
Yeah, if I were a shareholder, I'd not be happy. This is a cheesy move, I think. But it happens. But Roth Capital Management did the deal, so that also tells you something. But again, some dilution there. But when your stock had that run, why not take some money here? All right, what else you got?
Sure. Lastly, I've got Carnival Corp, the cruise line operator. They released their earnings earlier this morning, and the stock is now down as much as 11% on the day, and it is now on track for its largest intraday drop in about 3 months. And so while the company's revenue fell short of analyst expectations, it is at a record for the company themselves. And also, we noted that Carnival cut its full-year net yield outlook. And so it's really interesting to us as a litmus for the impact of tumbling oil prices on the cruise and travel industry. So keeping an eye on Carnival Cruise in terms of investor response to their earnings this morning.
All right, good stuff, Judy. Thank you so much. Judy LeGroux is one of our Bloomberg News reporters. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we give you 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Paul, you had mentioned SpaceX. The stock is down today. It IPO'd at $135, and since then, it's now on a 4-day losing streak.
Yeah, it had a really, really good pop there that first day of trading. The IPO price was $135, as you mentioned. The first print was at $150. The thing traded above $200 for a nanosecond, and now it's kind of been drifting down these last 4 trading sessions. In my opinion, I think it's just there's so many shares, and they're just trying to find a home right here.
Trying to find a home, after the initial pop of the stock. But of course, we also got news at the same time. At the end of last week, and it's really, the details are coming out now, that SpaceX is selling a lot of debt. So let's bring in Ed Ludlow. He is the host of B-Tech, and he joins us right now from San Francisco. Ed, do you think there's any linkage? Are people saying there's any linkage between the weakness in SpaceX shares with this announcement of a bond sale?
I don't know what happened, guys, because between the time I ran from my desk and got to set, the stock's now up a percentage point. So somebody's changed their mind, right, out in the markets. You know, the attitude of credit investors and the equity investor is different. You know, the SpaceX has an investment grade rating from the three main agencies. And we were saying, were we not, like in the days just before the IPO and the days that followed, they will return to capital markets straight away. And so this was kind of foretold. The credit investors like really relaxed about SpaceX's ability to manage its debt and to borrow money alongside its very big cash pile, which is above $100 billion already. The equity investor probably focuses a bit more on how long it's going to take for SpaceX to get out of negative free cash flow, like, you know, a long time. And so that's an interesting dynamic. But you guys, I think, nailed it. Right now, the markets... Now, SpaceX is up 1.5%. What is going on? You know, shares are trying to find a home, right? I think that's a really accurate way of putting it.
Ed, you know, I'm just looking at some of the forecasts from some Wall Street analysts about their forecast for capital spending. This company is going to need a lot of money going forward here. So, yeah, I mean, they raised $75 million in equity. It looks like they're going to do $20 million of debt, maybe a little bit more. And this probably won't be the last time we see them in the debt markets.
Well, also because of like how instantaneous the green shoe kicked in, they basically raised more than $80 billion in the end. Good point. But you know, this was again always the story. You know, earlier in the year, I think it was January, when we broke the story that they were going to IPO. It was because they needed to raise money to buy GPUs, the compute, to put into space with orbital data center. So, you know, it's going to be really interesting when they come around to that first ever quarterly earnings. It will probably be the capital expenditures number that jumps out to everyone. But at the same time, what people are finding it really hard to model for is these very sort of sci-fi out of this world business plan that they've got. There are lots of people that I know who are very big holders of the stock that believe that they will actually pull the timeline on orbital data center and a lot of their AI work forward beyond what they stated in the prospectus. So there is a lot of hope that very quickly the economics of this company change.
Well, I mean, that's part of the Elon canon, right? A lot of hope around everything he says, and the idea that he will execute in a way that no one else can. The other thing, of course, that was a narrative during the SpaceX IPO and the lead up to it is this idea that Tesla and SpaceX would eventually combine. Has there been any developments that would suggest that that is actually something that could happen in the near term?
There has been no specific development in the sense that we've not reported that. We have not reported, for example, that the boards of either company have formally started the process or looked at it. We had reported that prior to SpaceX merging with XAI, that at the board level, and if that means Elon meeting with himself, it's not immediately clear, but they had looked at it. It's being discussed in the open by basically everyone. You know, from retail investors to the largest institutional investors to the VCs that will high up the cap table prior to the offering. You know, everyone believes that it will happen. It's just the discrepancy is timeline, whether it's near, medium, or long term.
Ed, thanks so much for joining us. Appreciate it. As always, Ed Ludlow, BTech co-host. He's out there in our San Francisco office, right smack in the middle of all this AI stuff. That's where, you know, it's interesting. We were out there in San Francisco for that remote, and the common theme was from city officials and the tech companies themselves. The AI companies are all in downtown San Francisco.
Yeah, I mean they are part of the renaissance of San Francisco right now, right? Because they are very much pushing for everyone to go back to work. There's a new mayor who is leading the city, and he's very pro-business. That's the sense. And they're all excited. And I mean, property values have gone sky high. They always were in the suburbs, but it's spread out back to the city once again.
Yeah, I always said to my, usually my friends outside of the U.S., my international friends, San Francisco is one of the all-time best cities, in my opinion. So when you do come to the States, you got to get to the greater Bay Area, spend a few days there. And San Francisco is back, and that's good news in large part, or in certain part, to the growth of
Well, there's
AI
definitely
industry.
A swagger there right now.
Yes, which is good, because they had lost it. They had been really rocked by the pandemic. So we'll see how that goes. Stocks off the list. The Dow's actually positive right now, up 40 points. Go figure. We did have some big declines at the open, but fighting back here. The S&P's down 57 points. That's 0.8%. The Nasdaq's down 300 points. That's 1.2%. Looking at WTI crude oil, it's off more than a buck again here. We're below $73 a barrel. We're getting there. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers studio, I'm Nathan Hager. The tech-led sell-off on Wall Street continues, but we can see a little bit of green at the index level, and the Dow Jones Industrial Average holding on to a 0.1% gain now. But the broader market does remain lower. The S&P 500 is down 0.75% or 56 points. The NASDAQ 100 is down 2.1%. That's a drop of 629 points. 6 of the 11 main industry groups in the S&P 500 are in the green. Consumer staples is the leader, but information technology continues to lead the laggards. The Philadelphia chip index is down 5.5% right now. One of the biggest decliners in chips is Micron Technology. Before it reports earnings tomorrow, those shares are down nearly 8%. Here's your SpaceX update. Those shares are down 0.25%. They've been swinging between gains and losses this morning after 3 straight sessions of declines. SpaceX is now trading above its opening day price of $150. It's at around $154. IBM is bucking the overall tech slide. Those shares are up more than 4%. That company entered a partnership with the OpenAI Daybreak Cyber Partner Program. And the Supreme Court's issued a number of rulings that affect the commerce industry. The High Court put new limits today on lawsuits accusing companies over atrocities abroad, rejecting a case that accused Cisco Systems of complicity in China's torture of adherents of Falun Gong. Cisco shares right now down 1.75%. The High Court also revived a $1 billion lawsuit from ExxonMobil over oil and gas assets that were seized by Cuba's government. ExxonMobil shares are higher by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Nathan Hager, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. Stock trading off their lows. Still a little bit negative there, as Nathan was just reporting here. What we've got here in terms of the global rates market is we've got, I think, a cycle, some tightening here. The ECB tightening, the BOJ tightening, the U.S. Federal Reserve. I guess we got a chairman in there that is hawkish hold. I think that's kind of how we think about it. So now the question is, if that's kind of a cycle thing, if that's a global thing, where do you go here? Marvin Lowe, he thinks about this kind of stuff. Senior global macro strategist at a little shop up in Boston called State Street. Marvin, how do you think about globally opportunities out there, globally markets in a world that seems to be on the margin tightening rates?
Yeah, I mean, certainly we've had a pretty big shift in just the whole interest rate thought process since the beginning of the war, where we went from a broadly dovish kind of view to one where, tightening became a pretty investable theme across a lot of the developed markets. And now we've got kind of an environment where the Fed is catching up, and maybe we got a little bit too aggressive with the other central banks, particularly if this decline in oil continues. So, I do think that there are potential good reasons that you would want to tighten an economy, and some that are a little bit more suspect. In the U.S., in my mind, we are tightening because we've got a growth profile that's, been much stronger than anyone expected. Kind of this AI discussion that everyone talks about, the capex associated with it, is still out there. And the Fed is acknowledging that the U.S. economy and the jobs market is performing better than anyone expected, especially given the theoretical headwinds from the war. Now, you kind of look at some of the other economies globally, they still do have headwinds. Inflation's going to not be as bad as maybe the worst case, but their economies are nowhere near as strong. And I think that theme is how you kind of get around investments.
So here in the U.S., especially following Kevin Warsh's first meeting as Fed chair, we saw a flattening yield curve. The 2s10 spread is now at about 28 basis points, but it was as recently as early February at 72 basis points. Is a flattening yield curve the path forward here?
You know what? Probably. I think that there are a lot of things to unpack when we look at that flattening curve. One is that the short end, the kind of the 2-year part of the curve, if you will, rates have increased more than kind of the 10-year, if you want to look at from a 2s10s perspective. That 2-year is an acknowledgement that growth is stronger. Demand for capital is one of those concepts that drive interest rates, and we know that the demand for capital has been really, really strong, particularly from the tech companies. At the other end of it, I would be concerned if a tightening of financial conditions didn't result in at least a view that the long end was going to be maintained, because that would indicate that there was concerns about credibility and or the inflation fighting will of the Fed. So I think that Warsh is probably somewhat happy that the market is responding positively on the long end and really taking kind of this hawkish Fed credibility pivot at the short end seriously.
Marvin, given that backdrop here, how do you think about the U.S. versus non-U.S.? There was a time when, when these tariffs came out that people were saying, we need to think about our exposure to the U.S. here. We might be overexposed, and there was some flight of capital out of the U.S. It feels like that's kind of reversed to some degree. How do you guys think about U.S. versus rest of the world?
Yeah, kind of this dollar dominance story is certainly something that's been thematic in the market for the last year, if not for the last 10 years. I do think that the deficit is something that we should be concerned about in terms of how investable all U.S. assets are. And that's certainly something that continues to be an issue, particularly in Washington. But we've seen just the strength in the U.S. economy elsewhere, that there's a pivot. And, to a certain degree, equity market strength does come on the heels of potential, less desire to own long-term treasuries. And you kind of parse all of that out. The dollar does get caught up in that. It might not have the same degree of correlations that it has in the past. A dollar smile is something that we often talk about in terms of one of the investable aspects of the dollar. It might not smile as much, but in terms of the rest of the world abandoning the dollar, I think that for the most part the markets and the data is showing that that's not the case.
We had reports today that currency traders are on high alert for further intervention, and we've already seen perhaps some evidence of intervention by Japanese authorities into the yen because the yen is so weak. We know that Scott Bessent, the current Treasury Secretary, has had a lot of experience in the FX market from his hedge fund days. How do you think about the yen's move and Japan's U.S. Treasury holdings?
Yeah, I mean, certainly it is a challenging currency to invest in. Once we get into this 160, above 160 level, we always start talking about intervention. The way around it ultimately is that the BOJ needs to increase rates. They need to hike rates. We could go through this, back and forth on the intervention side of things. It does create a headwind for U.S. securities if they intervene and they wind up selling treasuries in order to do it. I'm sure that was part of the conversation between the BOJ and the U.S. Treasury. But we're going to wind up with a weak yen until they really address the fact that their interest rate differentials and their inflation profile is very different now than it was going into the pandemic. And it'll be a difficult currency to invest in because you'll have that volatility whenever we get around these levels.
Marvin, we've got oil continuing to trade lower with the expectation that we're kind of getting to some type of truce there with Iran. How do you think about the overall or the underlying inflation story for the U.S. here? Yeah, so the pass-through of oil into the U.S. economy has been much more muted than what a lot of us expected ultimately, and I'll put myself in that camp. We haven't seen the pass-through to prices as aggressively as we could have seen, and we certainly have not seen the U.S. consumer crater under $4+ gas. I think as it comes down, we're going to have additional spending that's going to come along with it. And I think that that's a theme that we're going to see in the summer with regard to a consumer that really was resilient and will appear even more resilient. The rest of the world is a little bit of a different situation, more economic headwinds as a result of that energy price. But the inflation
impulse into a lot of these other economies was a little bit greater also. So you'll probably have their inflation expectations come down a little bit more. You wind up with kind of that interest rate differential type of discussion where U.S. rates are going to hold up better than maybe particularly some of the Eurozone interest rates. And you know, the view that growth is going to slow significantly, particularly in Europe, and energy importers is probably a little bit less, but those economies were weaker kind of going into this ceasefire. So I think that's a theme that remains out there.
Marvin, how closely are you monitoring the political events in the UK now that Keir Starmer has said he will step down as Prime Minister, and we have kind of presumptive Prime Minister, coming in presumably before September? Are we going to get another bond market tantrum?
You know what? I don't think so. I think at this point, the politicians have learned that you can't really go against the bond market the way prior governments tried to do. The response was quick, the response was visceral, and it was clear that investors wanted fiscal responsibility to be part of that discussion. At this point, we're probably a bit more comfortable that maybe some of the political uncertainty is finally waning. The UK economy remains somewhat challenged, but in terms of a visceral reaction, the way we saw a few years ago, we're probably not going to get that.
Marvin, thanks so much for joining us. Appreciate it. As always, Marvin Lowe, Senior Global Macro Strategist for State Street. Some sports news out there.
Yes, please.
PGA Tour, major restructuring here. Starting, I think, in 2028. They're going to create effectively two parallel tours. One is going to be the PGA Tour Championship Series with the top golfers. And then
it's like the elite group.
Yes. And then the second would be the PGA Tour Challenger Series.
The wannabes.
They're going to run concurrently, and they're going to have their own schedule and sponsors and all that kind of stuff. And so it's basically, I think what they're trying to do is we need to create a better elite product here where the elite players play more often in more prestigious events for more money. And then everybody else, you got to earn your way onto it. And this is the way you do it through the second tour. And what's really interesting to me is the Tour Championship, which is the last tournament of the year, usually played at East Lake in Atlanta, which is a great course. They're going to rotate it after 2028. And they're talking about some of these elite courses that no one even sees, like Pine Valley in New Jersey. You can't nobody's even seen that course, and it's ranked #1 in the world.
And does that make it more accessible to viewers, to
yes,
fans?
And it's going to be like anybody who's a golf fan is going to tune in because they've never seen Pine Valley.
I see.
Same thing for Cypress Point out in Monterey Peninsula. Very small membership. Nobody ever plays it. Nobody even sees it. Seminole down in Florida. So that's a cool little wrinkle, but they're just trying to raise
Do you think that this lesser tour, the Challenger Series that they're calling it, is going to get any attention? Will people watch that?
It's similar to the Corn Ferry Tour, which is effectively the lesser tour, the JV Tour. And if you do well on the Corn Ferry Tour,
I like that, varsity versus JV.
Yeah, so we'll see how it plays out. This Independence Day, join Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid, right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and Bloomberg Business App Saturday, July 4th, starting at 7 a.m. Eastern. How cool is that? The Intrepid, great place to visit when you're in New York City. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers studio, I'm Nathan Hager. The tech-led sell-off continues, though it's off session lows. We check markets all day long on Bloomberg. Right now, the S&P 500 is down nearly 1%, about 70 points lower. 7401 is the S&P level. The Dow Jones Industrial Average is now little change to lower, down about 30 points. The NASDAQ 100 continues to lead declines, down 2.5%, or 767 points. Right now, 7 of the main 11 industry groups in the S&P 500 are on the rise, but information technology is leading decliners, down 2.6%. After the bull run we've seen in tech in recent months and all the headlines coming out of the Middle East as well, Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets, says investors could use a breather.
I've been joking with people lately. It's been a long year and it's only June. And if you see some of the reactions I see across the table when I make that statement, I really do seem to be striking a nerve with that. I do also think if you look at the rate of upward revisions for S&P 500 companies, we hit around 89% a few weeks ago, which is basically peak earnings sentiment. That indicator tends to top out in the 90 to 94% range. And on our last update, it had already receded to 86%. So still very good upward revisions, but just coming off the boil a little bit in here.
Lori Calvasina of RBC Capital. The tech earnings story continues tomorrow when we get results from Micron Technology. Ahead of that, the shares are lower by 10%. Philadelphia Semiconductor Index is down 6.6%. 10-year Treasury is up 6/30 seconds. The yield down about 2.5 basis points to 4.48%. The 2 years at 4.19. West Texas Intermediate's down 0.8% now, I guess we'll call it, at 73.25 a barrel. Brent is down almost 1% at 77.16. SpaceX shares are back up by 1.6% after the 3-day slide, so SpaceX is trading above its $150 opening day price. Carnival Cruise Line down 6.4%. They reported earnings today that beat, but said the Iran war hit third quarter bookings. And Amazon Prime Day is underway. Adobe expects the 4-day promotion. It's going to drum up $26.3 billion in online sales, but more than 7 in 10 Prime customers say they need to see at least 30% discounts to feel like they got a deal over the next 4 days. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That is your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, Nathan, from Washington, D.C. We've been talking all morning and really for the last few days, Paul, about SpaceX and where this stock has been moving. It's currently up, so that 4-day decline did not come to pass. It has stopped at 3 days for now, but it was a painful 3-day slump, down about 22%, if I recall correctly. So, definitely a repricing of the initial euphoria following the IPO.
Yeah, having done a bunch of these equity deals, it just felt like the stock was trying to find a home here, and that's maybe like who really wants to own this thing long term, and who's just playing the deal a little bit. So here we are.
All right, and of course we know that at the same time, SpaceX, the company, has announced a big bond sale as well, getting ready to sell investment-grade bonds for the first time to refinance a bridge loan, but also, let's face it, to fund this AI build-out as well. So for that, of course, we need to bring in our in-house expert on tech and bonds, and that is Robert Schiffman. He's our senior tech credit analyst here for Bloomberg Intelligence. Rob, what will you be watching for and listening for the next couple of hours here when it comes to this SpaceX bond debut?
I think I already know the story. Bondholders are going to welcome SpaceX with arms wide open. Nobody owns this deal, right? There's hundreds of billions of AI-related tech bonds that have been issued this year. There's hundreds of billions of tech bonds outstanding. But this is an inaugural offering, so everyone's going to want a little piece. And quite frankly, the difference between how SpaceX is going to trade in the bond market versus the equity market couldn't be much different. The valuations from the equity side may seem really, really lofty. I think it's the reverse for the credit markets. These bonds are going to come wildly wide to where comparably rated investment grade names trade. And I think that's going to attract a lot of attention.
Did it surprise you that it got investment grade ratings, even though it doesn't have much of a track record, almost no track record as a publicly traded company. I mean, one of our Bloomberg News stories or other reporters have pointed out that NVIDIA was given the same rating, and NVIDIA had a much longer track record as a publicly traded company than SpaceX does at the moment.
No, I wasn't surprised. Quite frankly, I think the plans for the build-out have been reasonably well known. So for people who are looking at the SpaceX equity IPO, they had a really good understanding of how much money was going to be spent over the next handful of years. And quite frankly, you can't have negative free cash flow that's $20, $30, $40 billion annually without access to low-cost, cheap capital. A big pool of that was equities. They raised $85 billion of equity, but they're probably going to need another $100 billion of debt. So if you had plans to borrow that much and thought you can do it in the junk markets, you'd be thought of as crazy. So I think this is pretty well understood. I do get it why people say, how are these ratings so high? And I think you just need to look into the future a little bit and look at the past. One is they're sitting on $100 billion of cash. Two is they're committed to IG ratings and reasonably low leverage. Three is their liquidity profile looks fantastic. They have access to huge pools of both equity and debt capital, and their burn rate, it's going to take them 3 or 4 years to even get through the amount of capital that they have today. So do you want to question where this company might be in 5 years and what leverage is going to look like, and are they going to be successful? I think it's a good debate, and I think when you're comping, are they an aerospace and defense company, are they a communications company, are they an AI tech company, that all of that creates, I think, more opportunity for bondholders because the bond deal gets priced probably wider than inherently it should.
There's definitely an Elon factor, a positive Elon factor in the equity markets. Is this such a thing with you credit guys who are a little bit more sober?
I hear so much about how everyone, in the AI world would rather just invest in equity because if they're right, there's huge upside. And with bonds, if you're right, you get paid back par, and if you're wrong, you get crushed. That's actually silly. Every basis point in the fixed income markets make a huge difference. And if you're coming at spreads that are 100 basis points wide to peers, that pays for the Elon Musk risk. I would actually argue there's Elon Musk reward. I know this, some people have cringed at this, but I think, Elon Musk is to today's generation what Warren Buffett was to the prior generation in terms of value creation. I think the future that he sees is a lot different than what a lot of other people see. I think his ability to execute is much higher than what people are giving credit for. Quite frankly, he does get a lot of credit. It's a $2 trillion equity market cap. So, for everyone who wants to poo-poo all the risk, people are riding the Elon wave.
Okay, so the bond market is giving Elon Musk the benefit of the doubt, it sounds like. Does the bond market give any other CEO, founder, company that same level of benefit?
Well, the difference between SpaceX and the rest of these other AI companies, we've said this so many times before, is the other names are basically the Mount Rushmore credits. So, they're AA's and AAA's. So they inherently have built-in credibility because they have so much financial flexibility. So what if Amazon borrows another $100 billion, or if Alphabet borrows, $150 billion? The balance sheet's going to be fine. Here, you're starting with a company that doesn't have a lot of EBITDA. It's big negative free cash flow, doesn't have this long track record of success. So ultimately what happens? Listen, spreads are at historically tight levels. Everyone is looking for the next basis point to outperform. If you price something right, it's going to sell. These bonds look like they're going to be priced dramatically wide to BBB alternatives. So even if the long term, you think there's real question marks, in the short term, you're going to try to get bonds. You're going to buy bonds now and ask questions later. And I think that's going to support this deal.
There you go. He's done it once or twice before. You've heard that? You hear it in his voice? He's had that phone call.
He knows a thing or two about a thing or two?
He's had that phone call with buy-side investors in the past. Rob, thanks so much for joining us. Appreciate it. Rob Schiffman, Senior Tech Credit Analyst at Bloomberg Intelligence. Looking for SpaceX to price a $20 billion deal. Don't be surprised if they upsize it. That's another little trick they have in their books as well. And you look at all the CapEx they need, as Rob was mentioning, they're going to be coming back to the debt markets.
And the equity market.
Yeah, probably. So we'll see how that plays out. Markets kind of red and green on the screen here today. The S&P's down 75 points. That's about 1%. The Dow is unchanged, and the Nasdaq's down 390. That's 1.5%. I'll note the Nasdaq 100, again, even more tech-laden, is down even more, down 2.6%. But again, well off the lows of the morning. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So check us out there. World Cup, it's a thing.
Did you get home okay yesterday? Were you affected at all by yesterday's game?
No, I left early. I left early to avoid it, but it was still crazy. The Norwegians were taking over the Penn Station. They were everywhere with their chants and everything. But some companies are even saying we have to adjust our hours maybe to kind of let people.
And these are the companies that had made everyone come back into the office, made a big point of saying, you know, you're in the office 5 days a week, but maybe not during the World Cup.
Yeah, maybe you can stay home and watch the World Cup. There's actually a story out there, believe it or not. Maria Clara Cobo, she joins us, crypto reporter for Bloomberg News. She joins us here in our studio, but she is based in Mexico City. Maria, companies are allowing, maybe being a little bit flexible about work hours and structures to allow people to watch games. Is that what we're seeing?
You know, I wish that would be the case, Paul, but no, I think it's primarily about logistics. I think cities like Mexico City, for instance, that are known for having really heavy traffic, World Cup matches are bringing hundreds of thousands of people to the cities, and areas are really packed, traffic is congested, public transportation is practically impossible to take. So I think employers are really telling people to stay at home, not necessarily because they changed their views about remote work or because they want them to watch the matches, but I think it's mostly because they want to avoid a loss of productivity out of long commutes and like transportation disruption. So yeah, I think that's practically why.
And Maria Clara, you were in Mexico City when the inaugural game took place. You weren't at the game itself, but just give us a sense of what it was like in the city and how well the city functioned given the influx of people?
You know, there was a bit of uncertainty around what would happen the day of the match, but a few days before the match, President Claudia Sheinbaum urged people to stay at home. So public employers had to work from home. Private employers, it was mostly up to them, but it was encouraged for people to stay at home. But it wasn't only companies, it was also schools that were forced to cancel classes. So there was a lot of stillness in the streets until minutes after Mexico won the match. The people flooded the streets and it was very chaotic.
So you're right in Mexico City, right in the heart of it. What's the country like with their team in the World Cup?
There's a lot of spirit. I think soccer is a huge aspect of Latin American culture, and Mexico has had a history of hosting World Cup matches before, but this is the first time that Mexico won the inaugural one. So there was a huge deal around it. I think there's also a lot of pride to be hosting the World Cup alongside the US and Canada. And there are a lot of tourists coming to the country. I think Mexico, this is what I'm hearing, that Mexico is the one that has the most tourists and the one whose economy has been the most booming the most out of the US and Canada. So there definitely is a sense of soccer spirit and pride to be in Mexico right now.
And the visitors who are flooding into Mexico, are they from Latin America or are they from all over the world? What do we know about the profile of these folks?
That's a great question. Mexico is hosting matches with countries that are not close to Mexico itself, like South Africa, Korea. So fans are coming from all over the world. It can be as far away as these countries, but also from the US, from Latin America. I think it's mostly, it's people from all over.
I guess we have to go down this road here. You're from Ecuador.
I am.
What is your team known as? Do they have like a name? Like the Socceroos are from Australia?
No, we don't have a mascot.
Okay.
We have a condor. Condors
Okay.
are like the biggest Indian birds, and that's like part of our shield. So that's mostly, you can see a lot of condors in the stadium, like people dressed like that. But we're known for.
Did you dress like that because you went to a game?
I went to a game. I drew the Ecuadorian flag on my cheek.
Okay.
But I didn't dress up.
So how is Ecuador doing in this World Cup?
Unfortunately, I think it's been a bit of a disappointment for Ecuadorians. We had a really high expectation for our team. We have 3 really strong players who play in Ecuadorian, in European leagues, such as like Paris Saint-Germain, Chelsea, Arsenal. So we had really high hopes, and I think we have a really strong defense. But unfortunately, scoring goals has been tough for my team.
No.
The game that you did go to, the match, Ecuador, how did they do?
So they unfortunately lost at the 90th minute to Ivory Coast. And the stadium was yellow. It was all Ecuadorian fans. So as soon as that goal was scored, I think the spirit really, and the energy was really bummed.
But the companies are realizing that the logistics are just tough in a lot of these cities. So are we getting a break? Do we get a break here? No.
No. Well, we're in Midtown, so we don't have to go anywhere. I mean, with the exception of those who have to go through New Jersey Transit.
Yep.
It doesn't
They
so much
closed
affect
down
us.
34th Street between 6th and 7th, which is the street I walked down from the subway. Closed it off, and they had like places to kind of herd people to get into Penn Station. So it's a big deal. And I got like 30,000 people to and from the stadium the last game.
I feel like the Knicks game and the Knicks parade was probably a bigger deal for logistics issues here in Midtown Manhattan.
Yeah, maybe they learned something because I think New Jersey Transit and NYPD and everybody at the Garden are doing a good job. That's what I'm hearing.
I mean, so far so good, right? There haven't been any big problems.
No, and I just saw something. You could get, from the stadium back to Penn Station in 65 minutes. Yeah, the last game. That's pretty darn good.
Impressive.
That's pretty darn good. Maria, thanks so much for this story. Maria Clara-Cobo, crypto reporter for Bloomberg News. She's got a cool story here on kind of, some companies having a little bit ease on the logistics here. So we'll see how that
Safe travels back to Ecuador.
Absolutely.
Or Mexico City, excuse me.
Mexico City. Thank you. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We are looking at stocks in the red. If you are looking at the S&P and the NASDAQ, the Dow Industrial is just modestly higher here on this Tuesday morning. As we look at the news of the day, right now we're focused on what's happening in Iran. It says $12 billion will be unfrozen ahead of Marco Rubio's tour of the Gulf Coast, not Gulf Coast, the Persian Gulf, that is.
Gulf, yep.
Yes. Tyler Kendall, our Bloomberg Washington correspondent, will be joining us remotely from the White House with more on that. Lee Klaskow, our senior transport logistics and shipping analyst, will give us a preview of FedEx's results, that company reporting earnings after today's market close. Alex Giuliano is chief investment officer at Resonate Wealth Partners. He'll join us to give us his outlook for the markets, which features SpaceX rising for the first time in 4 days and also announcing a big bond sale. And we're also going to check in with our global tech research head here at Bloomberg Intelligence, Mandeep Singh, on the tech sell-off that is currently underway and what Meta and Google are doing and all the latest on the hyperscalers. All that is coming up, but first let's go over to Nathan Hagar for more on our Amy Morris for our Bloomberg Business Flash. Hi, Amy.
Hi, Scarlett. Yep, Nathan's done now. It's my turn. There's been a sell-off in big tech companies. It spread from Asia back to the U.S., pulling the NASDAQ composite down. Growing likelihood of interest rate hikes coming up this year, helping to deflate the massive run-up in AI-related stocks in recent days. Traders worrying that the higher rates could hamper economic growth, so we've been watching all of that for you. Let's look at SpaceX now. Those shares erased an initial decline. It would have represented a fourth straight day of losses for the company, which is looking to raise at least $20 billion from a bond offering to fund its AI ambitions in a planned note issue that is highly unusual in the high-grade bond market. Mandeep Singh is with Bloomberg Intelligence.
This company hasn't even reported a quarter, and it's trading at this kind of valuation. And my sense is every time there will be a successful launch from SpaceX, that's going to change the narrative, drive enthusiasm.
Mandeep Singh with Bloomberg Intelligence. SpaceX shares clawing back those losses from earlier this morning, now nearly 3% higher. We do check markets for you all day long here at Bloomberg. The S&P 500 down 1%, NASDAQ down 1.6%. The Dow is little changed on the upside. 10-year Treasury yield at 4.48%, the 2-year yield at 4.19%. Let's check oil now. WTI crude oil around $73 a barrel, and Brent crude near $77 per barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. It's just looking at the NASDAQ 100, which is really geared towards those big tech names, down 2.7% today. And then I look at Bitcoin, off 3% today, so highly correlated there. So on the risky side of the market here. But as we just heard from Amy, we've got red and green on the screen here. But let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Jordan Fitzgerald. Jordan, what are you looking at?
I mean, I think we have to start with the elephant in the room over the past few weeks and turn straight to SpaceX. SpaceX is in the green now, opened lower initially. We thought we were going to have a fourth straight decline for SpaceX, even took us below that opening price of $150 earlier, but that really pulled back. We're back in the green. It seems like the market's not quite ready for SpaceX to break through that $150 level, even with all of this bond sale news that we've been getting. I also think it's important to note that for some, SpaceX going lower could be beneficial. I've heard some analysts say that if you really do want to see a Tesla-SpaceX merger, in order to make that appealing for Tesla holders, SpaceX is going to have to take some of that premium off.
All right. Oh, great context there, especially as we look for any kind of news on that front. All right, let's take a look at another stock on your list.
While we're in tech, let's turn to IBM. IBM is a bit of an oasis in this big rout in tech stocks today. The whole quantum space is up after some executive orders from Trump yesterday, Important to note, IBM's CEO was there in the White House with Trump, and IBM is investing billions of dollars to advance their leadership in the quantum space over the next 5 years. And so it really stands to benefit from any sort of support from the White House. We also got a price target boost on that stock from Morgan Stanley.
Okay, and final stock.
Earnings. Who could forget earnings? We've got Carnival Cruise Line down as much as 10.6% today after reporting results before the bell. Third quarter EPS forecast did disappoint analysts. And, you know, we have had a bit of a tough year for the cruise sector already. You know, with the war in Iran and everything going on with fuel prices, the cruise stocks have kind of gotten hit over and over and over, and today's no exception. We did see Norwegian, Royal, and Viking all lower following these numbers from Carnival.
All right, Jordan Fitzgerald, thank you so much. We appreciate that. Jordan Fitzgerald, equities reporter for Bloomberg News. For more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's take a look at get the latest reporting on what's happening over in the Middle East. We have the U.S. and Iran presumably having technical negotiations between the two sides.
What does that mean, technical negotiations?
I'm not sure. It doesn't. It feels like it's not, you know, Vice President Vance against a senior level person from Iran, maybe a little bit lower level, getting some of the details together.
Gotcha. Well, isn't it all about the details at the end of the day?
I think so. Or maybe you just need a 1.5-page memorandum of understanding, and that'll get it done for you. Tyler Kendall, Bloomberg Washington correspondent, joins us. Tyler, what do we know about the latest status of these talks?
Well, Paul, there's a few different threads that we're following today, including some conflicting remarks from both sides when it comes to these negotiations. Perhaps most notably, we are tracking what financial relief is going to look like when it comes to Iran, as Iranian state media says that the U.S. is set to unfreeze about $12 billion in assets that would be released in two separate $6 billion installments. Now, we haven't gotten that confirmation from the U.S. when it comes to the actual dollar amount, but it is significant because earlier today, President Trump took to Truth Social to reiterate an idea that appeared to first be floated by the vice president yesterday, that any unfreezing of these assets would go towards the purchase of U.S. agricultural goods. Now, we heard from Iran's foreign minister earlier today seeming to dispute that, saying that Iran will be able to, quote, freely use the funds as they wish. And the actual text of the memorandum of understanding does stipulate that the Iranian central bank will be able to designate the beneficiaries of this money. So that's one of the areas that we are watching very closely. And then the other is the future of what nuclear inspections are going to look like. The U.S. came out yesterday saying that it did yield what is considered to be a substantial concession from Iran, that they could let inspectors into their nuclear sites as soon as this week. But an update again from the Iranian foreign minister seemed to dispute that. Earlier today, President Trump, though, maintaining that those comments from Iran do not align with the agreement that was reached in Switzerland over the weekend. And he says that these inspections will be, quote, fully and completely agreed to the highest level going forward.
All right, thank you for that summary. It's a lot to get your head around. We also note that the Secretary of State, Marco Rubio, who's also the acting national security advisor, but that's a separate job, that he is wearing the hat for as well. He is expected to land in the UAE today. What is on his agenda?
So, Scarlett, this is part of a regional tour where the Secretary of State will be in the UAE, also Kuwait and Bahrain, in a bid to talk and touch base with our regional allies about how these talks are going and what regional assistance and cooperation is going to look like going forward, including when it comes to the Strait of Hormuz, because while we have the U.S. Secretary of State touching down in the Middle East, that is an important meeting to watch, but we're also watching another critical meeting that is happening today between Iran's top diplomats and negotiators and officials in Oman as they meet about the future of the Strait of Hormuz. And earlier today, we got a joint statement from the two countries seeming to confirm that they are working on a fee structure for what they are saying will be navigating navigational services supplied in the Strait of Hormuz after this 60-day ceasefire extension. We know that this is something that the U.S. doesn't want to see actually put into place. I asked President Trump about it directly last week at the G7, and he told me that the idea of the U.S. striking Iran would serve as enough deterrence against them imposing some sort of fees in the strait. But as of now, it seems like those two countries are moving forward with it. So, Paul and Scarlett, I would expect the Secretary of State to talk to our regional allies about this too, because analysis after analysis has showed us that if tolls or fees are imposed, they would actually, the brunt of them would be paid by those Gulf Arab states.
And that's kind of, I guess, probably one of the initial things that really, really has to be nailed down is how open is the Strait of Hormuz? Will they, and I think it's going to come down to the insurance companies. They're going to tell you whether they're going to insure these vessels or not. What do we know about the Strait of Hormuz? And there have been some reports that there's been some pretty good traffic making its way through.
Yeah, we are listening to the president earlier today posting on True Social, Paul. He said that 19 million barrels made it safely through the strait yesterday. That actually is in line with pre-conflict levels that we're seeing about 20 million barrels of oil transit through per day. But the risk of escalation definitely still remains, though these numbers would seem to indicate that there is a growing assurance from commercial shippers that they feel comfortable moving through the strait. But just over the weekend, we had Iran threatening to shut down the waterway amid another threat from President Trump to strike if Hezbollah didn't stop hitting Israel. So there definitely is this room that this could, spiral again out of control. And as I mentioned, we are seeing again Iran move today with its partner Oman to potentially look at some sort of fee structure going forward, which no doubt will pose some questions after the 60-day ceasefire extension is over.
Right, but that would only be after the 60 days, and presumably a lot would be discussed over that pending period. Tyler, thank you so much. Tyler Kendall is our Bloomberg Washington correspondent, reporting live from just outside the White House on the latest in the U.S.-Iran peace talks. We know that J.D. Vance, the vice president, had been in Switzerland negotiating technical negotiations and whatnot, and Secretary of State Marco Rubio is making his way right now to the Persian Gulf.
Yep, so there we go.
All right, oil prices are lower as well, with WTI off by 0.9% at 73.23. All right, let's get back to earnings because FedEx will be reporting results after the close. And of course, FedEx very much affected by those oil prices that had surged and now have come off those high levels. Let's bring in Lee Klaskow, our senior transport logistics and shipping analyst, to talk a little bit more. Lee, with oil prices coming down off those highs, that will be a positive talking point for FedEx management, won't it?
Definitely will be positive for their outlook. Obviously, it'll lower their overall costs. They're able to mitigate those costs with fuel surcharges, but more importantly, a lower fuel equals a more resilient consumer, and consumers will drive some of the volume that goes through their network. So, from a volume standpoint, it is an incremental positive as well.
What's the summary? All I can call it is a tariff story. What's the tariff story these days with FedEx and UPS and what's the story these days?
The tariff story changes every day, every week, every month.
Yep.
So it creates a lot of lumpiness. We've seen actually shippers pulling forward demand in peak season, which usually starts in mid-October. And they just were doing that just because they really want to make sure that the freight that they want on the shelves is here.